Yes, sir. Very happy morning to all. Sir, this is a very quick marathon on the first part A of the DT, which is income from salary and income from house property. If you see, our subject has been classified into 5 parts. Number 1, salary and house property is the part A. PGBP is part N. IFOS and capital gain is part M. Clubbing, set off carry forward, chapter 6A reduction are part C, and basics residential status scope of total income, filing return of income, TDS, TCS and advance tax are the part A. So we will be recalling the entire subject in 5 parts. We are going to have a quick revision of income from salary. For the starting, chapter salary classified into 5 categories. Number 1, basics. Number 2, exemptions or retirement benefits. Number 3, allowances. Number 4, perquisites. Number 5, deductions. Sir, basics is very simple. In that basics, you should understand that there should be employer-employee relationship. So, 2 parties should be there. One is employer and other is employee. And employee should get income from the employer to provide the services. Then that income will be taxable under the head income from salary is what the introduction we need now. These are the exemptions or retirement benefits. That means from the employer, employee may get lot of benefits such as 10.5, 10.10, 10.10A, 10.10AA, 10.10B, 10.10C, 10.10CC, 10.11, 10.12, 10.30, 10.13A and 10.14. Sir, what is 10.5? Leave travel concession or leave travel assistance. Leave travel concession or leave travel. What this section is saying that sometimes employee may go for a tour. That tour expenses may be reimbursed by the employer. There are certain conditions for the tour, such as tour should be performed in India. An employee should go for tour with his family. And if that expense has been met by the employer, then that will not be treated as perquisite in the hands of the employee under section 10 subsection 5. So it is fully exempted. But the important point to be taken care is this exemption under 10.5 is applicable only under the optional tax regime. This is applicable only under the. That means if an employee is traveling through the default tax regime, LTC will be fully taxable. So there is no such exemption under 10.5 for the what tax regime? Default tax regime. So what this section is saying, quickly we will go through. It exempts the leave travel concession received by whom? Employee. From their whom? Employers. For proceeding to any place in India. Either on leave, so they can take leave and go for tour. Or after retirement from service, they can go for tour. Or after termination of his service, they can go for tour. Sir, in what and all ways they can go? Either in aeroplane or train or roadways, whatever may be the mode of transport, they have to go, sir, in the shortest route. Are you really with me? These are the general notes you should be recalling with regard to 10.5. Exemption will be available for respect of how many journey? 2 journey in a block of 4 calendar years. Out of the 4 calendar years, 2 journey can be go. And that calendar year will start from 1986. Are you really with me? And if the employee is not able to go for a tour, sir, then it can be what forward? Carry forward. So where such travel concession or assistance is not availed by the individual, during any block of 4 calendar years, one such unavailed LTC will be carried forward to the immediately succeeding block of and will be eligible for what? Exemption. And exemption will be available for journey performed either by the employee or by his. So, employee can go for tour or family can go for tour. Sir, what is family includes? Family includes individual, that is employee himself, or spouse, or children, or parents, or brothers, or sisters of the individual, or any of them, wholly or mainly dependent on the individual. That means these people should be dependent on the what? Individual. And this is very important condition they will always test in exam. Exemption shall not be available to more than 2 surviving child. That means first birth 1 child man, then second birth 2 child means, sir, for the second birth, employee is not entitled for exemption. Sir, entitled for exemption, exemption will be available. But first birth 2 child, sir, then itself employee should stop. Sir, second delivery will not be considered. Look at here, Exemption shall not be available for more than how many? 2 surviving children of an individual on or after 1998. This restriction shall not apply in respect of children born before 1st October 1998. 1st October 1998, we will not see the date at all, sir, number at all. But now that date is not relevant for us. For us, sir, only 2 children will be available. Are you all really with me? The most important takeaway is this section 10 subsection 5. Exemption will be available only under the optional tax regime, and there is no such section at all under the default tax regime. That's what 10 subsection 5, leave travel concession or leave travel assistance. Are you already with me? Coming to the second section called as section 1010 gratuity. What section 1010 gratuity is saying that sometimes employee may work for a very long time under an employer. So as a gratuity, love and affection, employer may say that keep this 10 lakhs or 20 lakhs with you. Are you already with me? Actually, it is an expense for the employer that will be debited to the what account? P&L account. Sir, that will be allowed as a deduction under the head profits and gains of business or profession in the hands of the employer. Under section 36, subsection 1, clause 5, employer's contribution to the approved gratuity fund. But from the angle of the employee, it is an income. It has to be taxed under the head income from salary. But what Income Tax Act is saying that when you tax that income, my dear lovable students, don't tax the entire income. Some portion you can claim it as exemption. To what extent I can claim it as exemption? That is what explained in section 1010 gratuity. So have you all understood what is gratuity? It is a voluntary payment made by whom? Employer. In appreciation of the service rendered by whom? Yes, you have worked so much under me. Please keep this because of your sweat only I have earned this much of money. And in India, we are having payment of gratuity act, shortly called as POGA. POGA Act 1972 is a statutory recognition of the concept of what? Gratuity. Okay, fine. So who will pay the gratuity? Employer. Who will receive the gratuity? Employee. Right. That employee may be a government employee or non-government employee. If the employee received the gratuity is a government employee, that means during his life, for whom he would have done the work? For the government. So government only paid the gratuity. Now, if gratuity has to be included in the gross salary, for that gratuity, employee is liable to pay tax. For whom? To the same government. So Income Tax Act is saying that if any gratuity has been received by a government employee, it is fully exempted because it will lead to double taxation, unnecessary taxation. But if the employee is a what government employee? Non-government employee. We are ready to provide you some exemption. For example, if you are getting 10 lakh as gratuity, don't include 10 lakh as gross total income. You can reduce either 4 lakh or 6 lakh or 5 lakh. That amount we will tell you. That is based upon whether you are covered under the Payment of Gratuity Act 1972 or not covered under the Payment of Gratuity Act. If you are covered under the Payment of Gratuity Act 1972, you are a brilliant employee, fantastic employee because you are covered under some act. Then exemption will be least of the 3. Exemption will be statutory limit of 20 lakh. This is statutory limit. This limit has been fixed by the act. Are you all really with me? And actual gratuity received, whatever gratuity you are receiving, then 15 by 26 into last drawn salary into completed year of service. Sir, the same employee is not covered under the Payment of Gratuity Act 1972, then exemption is least of the 3, same statute limit of actual gratuity 1 by 2 into average of last 10 months salary immediately preceding the month of retirement into completed year of service. My dear lovable students, if you are covered employee or you may be non-covered employee, actually as per the act, who should have more benefit? Covered employee should have more benefit, right? That's why they are saying that in a month 30 days are there generally. Out of the 30 days, how many Sundays are there? 4 Sundays. So 30 minus 4 comes to 26. That's why 15 by 26. Otherwise, it will be 15 by 30. 15 by 30 is equal to, that's why 1 by 2 into. Because if an employee is not covered, Sunday benefit will not be available. If an employee is covered, Sunday benefit will be available. That is why 15 by 26. Into what drawn salary? Last drawn salary. Question arises, sir, what is salary? If an employee is covered means salary means basic salary plus DA. Whether your DA form part of retirement benefit does not form part of retirement benefits does not matter, because you are covered under the payment of act. But if you are not covered under the payment of act, we will be strict. That is basic salary plus DA only provided in terms of and commission as a fixed percentage of turnover. Are you able to appreciate, sir? Yes, sir. Fantastic, sir. And completed year of service, my dear lovable students. What do you mean by completed year of service? If an employee is covered means in excess of 6 months has to be considered as 1 year, because that is a benefit. If an employee is not covered means fraction should be ignored. Are you able to appreciate, sir? So basically, sir, can we quickly recall gratuity? Gratuity can be received either by government employee or any gratuity received by government employee fully exempted. Any gratuity received by non-government employee, exemption is based upon whether it's covered under the Payment of Gratuity Act 1972 or not covered under the Payment of Gratuity Act 1972. If an employee is covered under the Payment of Gratuity Act 1972, exemption is least of the three. Statute limit of 20 lakh. Actual gratuity received 15 by 26 into last on salary into completed year of service. If an employee is not covered under the Payment of Gratuity Act 1972, exemption is least of the three. Statute limit of 20 lakh. Actual gratuity received 1 by 2 into average of last 10 months salary immediately preceding the month of retirement into completed year of service. Are you really with me? In exam, we will get a point where they will say that gratuity received during the service is what? Fully taxable. You have to check that whether the employee is a working employee or the retired employee. Only for retired employee, provisions of 1010 will be applicable. Are you really with me? For a working employee, any gratuity received now fully fantastic to the core. Sir, sometimes, sir, if a gratuity is received from 2 or more employers, we know that sometimes during the year, financial year, he may work under employer number 1 and employer number 2. For employer number 1, he would have received some gratuity, and employer number 2 also you would have received some gratuity in the same previous year. Then aggregate amount of gratuity exempt should not exceed 20 lakh. That means employer number 1 plus employer number 2 should not exceed 20 lakh. And where the gratuity is received in any earlier what year? Previous year. Already I received 5 lakh rupees gratuity from employer number 1 2 years back or 3 years back. Then current year you should not say that statute limit is 20 lakh. Current year you should say that statute limit is only 15 lakh. Because out of 20 lakh already 5 lakh exhausted. Are you all really with me? So, where any gratuity is received in any what year? Previous year. From what employer? Former employer. And again received from another employer in the later previous year, the limit of 20 lakh will be reduced by the amount of gratuity exempt earlier. Are you able to appreciate? Note number 4 we already covered actually. It is important to note the difference in the definition of what? Salary and manner of computation of the third limit in case of employee covered under the Payment of Gratuity Act. Because salary definition is different. If an employee is covered, salary means basic salary plus DA. If an employee is not covered, salary means basic salary plus DA if provided in terms of employment plus commission as a fixed percentage of. And this is a very common note. Exemption under section 1010 will be applicable whether an employee is traveling through the default tax regime or optional tax regime. That means it is not like 10 subsection 5. 10.5 leave travel concession or leave travel assistance will be available or applicable only under the optional tax regime and will not be available under the, we have done with added one more section called as section 1010. 10.5 leave travel concession or leave travel assistance. What is section 1010? Gratuity. Coming to the next benefit, 1010A, pension. Okay, my dear lovable students, I was working under a particular employer for so long year, like 20 year, 30 year and all. At the time of retirement, my lovely employer gave me a lump sum amount saying that you worked only for me. Keep this 20 lakh, 10 lakh, 15 lakh. That is called as what? Gratuity. I asked a very simple question. That's our last 25, 30 years was very good in my life. Because every month I used to draw salary from you. But now I have retired. Now I am only having tension. Because monthly I will not get my salary. Are you all really with me? Employer is saying to that employee that don't have tension, have some pension. Are you all really with me? After the retirement, I will give you monthly some amount, my dear lovable students. Don't worry at all. Take this monthly. So pension means what payment? Periodic payment. After your retirement, monthly you will be getting some amount. Made especially either by government or company or other employer to employee in consideration of past service after his what? Retirement. So after retirement only, you will get the pension. don't have tension. Are you all really with me? That pension will be of two categories. One is uncommuted pension or commuted pension. It is not commuted, it is commuted. There are two pensions are there, uncommuted pension and, for example, at the time of retirement, you are having a daughter who are going to get married. For that marriage, you need lot of money like 5 lakh, 10 lakh. You are saying to employer that, sir, this is my sole dream. I have to get her married. So I need bulk amount. So give me 10 lakh rupees now. That is called as commutation. That is called as, so refer to the pension, sir. Commutation means what change? Interchange. You are saying that, sir, I don't want monthly pension. Please, sir, aggregate it and give it as a lump sum amount. So, commutation means what change? Interchange. Commutation means lump sum amount taken by commuting either the whole or part of the pension. Are you really with me? No, sir, I don't have daughter, sir. I don't have any specific expenses, sir. Give me, sir, monthly itself. That is called as what pension? Sir, refer to pension receive how? Periodically. It is fully taxable both in the hands of what employee and what employee? Government employee and, are you able to appreciate? So there are two type of pensions are there. Understand that one is commuted pension and other is uncommuted pension. Uncommuted pension means monthly pension. That will be taxable both in the hands of government and non-government employee. Whereas commuted pension will be taxable, sir, only in the hands of certain employee. We are going to check. So pension classified into how many category? Two category. Commuted pension and uncommuted pension. Sir, this commuted pension, is it, sir, monthly or lump sum? Lump sum. Maybe received by what employee? So who is paying the commuted pension? Government. If it has been included as income, automatically that employee have to pay tax to the government itself. It will be like a double taxation, correct? Hence it is fully exempted. Comfortable. No, sir, I am a dash government employee. I commuted the pension. Then Act is asking you a question. Are you receiving gratuity? Not receiving gratuity. If you are receiving what? Gratuity. Already you got gratuity. Now you are getting what also? Pension also. Then you are having double income. You are having, that means you are not a chota wala. You are a bada wala. If you are a bada wala, we will not give you more exemption. We will not give you. That means commuted pension received. For example, 3 lakh rupees is the what received? Commuted pension received. Lump sum amount received. Question is saying that this 3 lakh is 60% commutation. This 3 lakh is. So my dear lovable students, 3 lakh divided by 60% comes to 5 lakh is the total pension. Correct? On that, 1 by 3 of the what pension? Total pension. That means 5 lakhs divided by 3 comes to 1,66,667 is the exemption you are entitled to get. So from 3 lakh, if 1,66,667 goes means 1,33,333 will be the what pension? Taxable pension. Assume with these figures. Are you all really with me? The same 3 lakh has been received by a person who are not receiving what? Gratuity. That means I am having, sir, I don't have gratuity. I am having only, that means I am a beggar. I don't have much money. So please don't tax me more. Tax me less. That means I need more exemption. That's a logic. Are you able to appreciate? Then 1 by 2 of the what pension? Total pension. What is the total pension? 5 lakh. 5 lakh into 1 by 2, 2,50,000. So from 3 lakh, if 2,50,000 goes means 50,000 will be the taxable pension. Because this guy does not have the gratuity. So taxable pension should not be high. Taxable pension should be less. That's why 50,000 is taxable. Are you able to appreciate? Now, general notes. Sir, exemption under section 1010A, sir, in respect of commuted pension is available to an assessee irrespective of the regime under which he pay tax. Sir, why they are talking only about commuted pension? Because uncommuted pension is taxable both in the hands of what and what employee? For uncommuted pension, there is no concept of 1010A at all. 1010A is applicable only for the commuted pension. Are you really with me? Why, sir, uncommuted pension is taxable? Let me ask you a simple logical question. If you are a government employee, if you are getting monthly salary, is that salary taxable or exempted in the hands of the government employee? Generally, for a government employee, monthly salary taxable or exempted? Taxable. The same way pension is also taxable. Because pension, salary means before retirement. Pension means what? after retirement. So if you are getting monthly, whether you are a government employee or non-government employee, it is fully taxable. And there is no connectivity between uncommuted pension and section 1010A. 1010A cover only what pension? Commuted pension. Whether you travel through the what route or what route? Optional tax regime or default tax regime, my dear lovable students, you are entitled to, sir, claims the 1010A benefit. And judges of Supreme Court and High Court will be entitled to exemption of commuted pension. Even if you are a judge of Supreme Court, High Court, still you are entitled to claim pension under 1010A, deduction under 1010A. You know one thing, we have done with section 10.5, which is leave travel concession or leave travel assistance, section 1010A. 1010 gratuity and section 1010A pension. Can I add one more to our list? Section 1010AA, what salary? Sometimes, my dear lovable students, if you are working in an organization, sometimes they will say that you are entitled for paid leave. You can take leave. 15 days every year you are entitled to take leave. 30 days every year you are entitled to take leave. Are you all really with me? Sometimes without taking leave, we will go and work. If we go and work means I am entitled to get the leave salary. Correct? Certain employees will encash that leave salary immediately. That day evening itself, he will say that I came for work. Actually, today is leave. Give me the salary. Because tomorrow I have to go to Dragon Film. Are you really with me? For that purpose only, you would have gone for the work. That is fully taxable. Are you really with me? Certain people will say that, no, I will accumulate this leave salary and I will withdraw at the time of my retirement. Then provisions of section 1010AA will be applicable. So first understand what is leave salary. Employees are allowed leave during the what of service, period of service. Employee may avail such leave. Either they may take leave and take rest, aram se. Or in case leaves are not available, if they don't take the leave may either be lapsed. Certain company will say that swaha. Or accumulated for future. Certain company will say that, okay, this year 15 days leave you are entitled. Next year 30 days leave you take. Are you really with me? Or to be encashed what year? Every year. Certain company will say that this year end you have came for work. Encash it. Or at the time of what or what? Termination or retirement. If that encashment is happening at the time of termination or retirement, my dear lovable students, then provisions of section 1010AA will be the payment received on account of encashed on unavailed leave would form part of the salary generally. On an year-by-year basis, encash means it will form part of salary. So leave salary can be received either by government employee or what employee? Non-government employee. If any leave salary has been received by government employee, it is fully exempted. Why? Because without taking leave, the employee has worked for the government. So government is only paying the leave salary. So no need to include again in the salary because the salary will shoot up. Again is liable to pay more tax to the government. Government is saying that it is fully exempted. But if you are a non-government employee, statutory limit of 25 lakh. This is an amendment not now in the last act. Statutory limit of 25 lakh. Statute limit of an actual leave salary received last 10 months salary immediately preceding the month of retirement. Cash equivalent of leave credit calculated at the rate of 30 days per annum for every completed year of service. As you all know that statute limit is a limit fixed by government. So statute limit of 25 lakh. Actual leave salary received means whatever amount you received because least of the four only will be allowed as deduction. Correct? What government is saying that, sir, for example, at the time of retirement, my dear lovable students, for example, you retired in the month of February. Leave February. What is it? Just before month? January. Sir, you take the last 10 months of retirement. You take the last 10 months of retirement. In this last, how much month? 10 month. What is your salary you calculate? This is the maximum amount you should withdraw as what salary? Leave salary at the time of retirement. That's what last, how much month salary? 10 months salary. Immediately preceding the month of retirement. So leave the month of retirement. Before that, take how much month? 10 months. You calculate the salary for that. You may ask a question, sir, what is the definition of salary? Simple definition. Salary means basic salary plus DA. If provided in terms of employment plus commission as a fixed percentage of, then you will be getting some value for the last how much month? 10 months. Government is saying that your leave salary should not exceed this figure. Last how much month salary? 10 months salary. Then, sir, for example, every month you are entitled for 30 days leave. You assume. How many days leave? You have worked for example, 25 years in a company. So 25 into 30 means totally 750 days you are entitled for leave. Entire 750 days you won't come for work. Really you will go take some leave. For that and all, you won't get what salary? Leave salary. Are you able to appreciate? Out of this 750 days, assume that you have taken, my dear lovable students, 250 days leave. That means 750 minus 250 means how many days? This is called as leave credit. This is called as what? That means how many days balance I am having is called as what credit? Leave credit. For example, have you valued your last 10 months salary? Yes, sir. Which is nothing but basic salary plus DA if provided in terms of employment plus commission as a fixed percentage of turnover. Are you all really with me what I am talking to you? Assume that this you got as 1 lakh. The answer you got it as 1 lakh. That means, sir, what is the per month salary? 10,000 rupees is the per month salary. Because last 10 months salary comes to 1 lakh. If that is the case, every month the salary comes to 10,000. Now, how many days you are entitled to leave? 500 days. So, 500 divided by 30 days comes to how much months more or less? It is 16.67 months. Are you all really with me? That means 16.67 months you have gone for the work without taking leave. So, for this 16.67 months, are you liable to get the leave salary? For every month, how much is the leave? 10,000 rupees is the salary at the time of retirement. That means 1,66,667 is the amount you are entitled to get it as what salary? Leave salary. Now you read it, sir, dash equivalent, cash equivalent. How much equal to cash? This is what equal to cash. Cash equivalent of what? What credit? Leave credit. What is leave credit? How much leave eligible for me minus leave taken will give me the what credit? But that should be calculated at how much days per annum? 30 days per annum. Sometimes employer may say that, question may say that you are entitled for 45 days in a year. Income Tax Act is saying that we will not allow that. In a year, maximum how many days per annum? 30 days per annum. For every what of service? Completed year of service. For every, here fraction and all should not be considered like gratuity. Only in gratuity covered means, sir, in excess of 6 months should be treated as comfortable. That's what, man. So, leave salary can be received either by the government employee or non-government employee. Any leave salary received by government employee, fully exempted. Any leave salary received by non-government employee, least of the 4. Statute limit of 25 lakh. Actual leave salary received. Last 10 months salary immediately preceding the month of retirement. Cash equivalent of leave credit calculated at the rate of 30 days per annum for every completed year of service. Are you already with me? The same notes will follow like other things. Sir, where the leave salary is received from 2 or more employees in the same previous year. For example, you are getting leave salary from employer number 1 and employer number 2. Sir, the aggregate of the standard deduction should not exceed how much lakhs? 25 lakh. Or, sir, in the immediately preceding any of the years, I already received, for example, 10 lakh rupees as what salary? Leave salary. So, from 25 lakh, reduce that 10 lakh. Then the statute limit will be come down to 15 lakhs. Are you already with me? Average salary will be determined on the basis of salary drawn during the period of how much months? 10 months. Immediately preceding the date of his retirement, whether on superannuation or otherwise. And exemption under 10AA will be available both under the optional tax regime and also under the default tax regime. Are you able to appreciate what I am talking to you? That's it, my dear lovable students. 10.5 done. Leave travel concession or leave travel assistance. 10.10 gratuity. 10.10A pension. 10.10AA leave salary. Coming to next 2 section, which is section 10.10B and 10.10C. 10.10B is retrenchment compensation. 10.10B is what? Sometimes what will happen in an industry or organization, sometimes because of huge number of employees, they may downsize or they may turn around. They may, sir, cut short, internal reconstruction, all those things will be happen. So 100 employees may be sent out because of huge number of employees. So these employees will ask the employer that, sir, suddenly if you send me out, I will be on street. My family will be on street. So please compensate me because I need some time to get the new job. That is called as retrenchment compensation. What compensation? It means the compensation paid under the Industrial Disputes Act 1947 or under any rule or act or order or notification issued under any law. It also includes compensation paid on transfer of employment under 25F or closing down of an undertaking under 25F of the Industrial Disputes Act. That means if an employer immediately close down an organization, send out an employee, he will be in street. At that time, he is saying that keep this for next 3 months you can survive. Within 3 months, please find out good job. Please go and join. Take care of your family. Are you all really with me? In this, what government is saying that, sir, least of the three will be exempted. Balance will be taxable. Statutory limit of how much lakh? 5 lakh. Number 2, actual retrenchment compensation received or amount calculated as per the Industrial Disputes Act 1947. So there is a dispute between employer and employee. Correct? So there is an act for the computation, Industrial Disputes Act 1947. What Industrial Disputes Act 1947 is saying that if the amount calculated as per the Industrial Disputes Act has not been given in the question, sometimes it will not be given, then you have to take 15 by 26. Again, gratuity covered POGA benefit is coming because their payment of gratuity act 1972. Here Industrial Disputes Act 1947. There also one act is covered. Here also. So wherever act is covered, we are ready to provide Sunday benefit. Are you all really with me? That's why 15 by into average of last how much month salary. Like leave salary, we will not take the last 10 months salary and all. We will take only the into completed year of service and part thereof in excess of how much month? 6 months. Because this is the second place where in excess of 6 months, we are ready to take it as 1 year. Because why? Logic symbol. Here also one act is covered like our POGA 1972. Comfortable, sir? The above limit do not apply if the compensation is paid under a central government approved scheme or a special protection of workers act and all. Then it will be fully exempted generally. Because if government paid all those stuffs means no need to see any other thing. Are you all really with me? These and all NSR things. Simple man. Exemption under 1010B is available irrespective of the what regime? Tax regime. That is whether you are traveling through the default tax regime or optional tax regime, you are entitled to claim exemption under section 1010B, which is technically least of the three. Number 1, statutory limit of 5 lakh. Actual retrenchment compensation received. Amount calculated as per the Industrial Disputes Act 1947. If amount calculated as per the Industrial Disputes Act 1947 has not been given in the question, then we have to work it as 15 by 26 into average of last 3 months salary into completed year of service or in excess of 6 months. Can I proceed, sir? Sir, we have done with, sir, 10-5 leave travel concession or 10-10 gratuity, 10-10A pension, 10-10AA leave salary, 10-10B retrenchment compensation, 10-10C coming to VRS. Sir, why are you shutting down the business? I am shutting my job. Are you really with me? Employee is coming and saying to the what that? Employer that, sir, now my age is 50 years, sir. I am having service till 65 years. If I work till 65 years, I will become an old piece. Are you really with me? I will not be active. I will come and sleep only. I am ready to take VRS. If you are giving me 20 lakh rupees now, it's like a, sir, good deal for the employer. Because if that old employee leaves that place means employer can appoint a surusurupana young, correct? Then he will work more and from that young employee, employer will get more potential. Are you all really with me? So by that way, he can make more profit. Then that 20 lakh can be compensated. Are you all really with me? So lump sum payment or otherwise received by an employee at the time of VRS, voluntary retirement, will be taxable as profit in lieu of salary. Profit in lieu of salary. It's like a profit to the employee because he's not earning that amount by completing the job. He's getting a compensation because of terminating the job. So that is a profit. That profit will not be taxable under PGBP. That profit will be taxable under the head salary, my dear lovable students. Here also, exemption is least of the 4. Statutory limit of how much lakh? 5 lakh. What government is saying that maximum you get only how much lakh? 5 lakh. Actual VRS received and last drawn salary into 3 into completed year of service. Last drawn salary into remaining. Look at here, my dear lovable students. If you are going to take a VRS, it's based upon how much years you have worked, how much years you have left. Are you all really with me? That means I experienced a person. I told one example. My service limit is 65 years, but I have retired on the age of 50 years. That means last drawn salary into 3 into completed year of service. Last drawn salary means at the time of taking VRS, what salary I have drawn. What government is saying that you take 3 times of that. You take maximum 3 times of that into what year of service? Completed year of service. This is your experience. How many years? 50 years. Or last drawn salary into remaining months of service. What is the last drawn salary you have made? Into what extreme you have to complete from here if you work. If I work, I will be work for next 15 years. Correct? So that That's why they are saying either the third limb is already completed, fourth limb is to be completed. Are you really with me? So my dear lovable students, statute limit of 5 lakh, actual VRS received, last drawn salary into 3 into completed year of service, last drawn salary into remaining months of service. Comfortable? Simple. Sir, if it is retrenchment compensation, employer is sending out to the employee. If it is VRS, employee is going out. Whatever may be the case, employee will say Tata, bye bye. Sir, Tata, show the Tata, because statute limit is 5 lakh. Are you really with me? Whether it is 1010B retrenchment compensation, statute limit is 5 lakh. 1010C VRS, statute limit is how much lakh? 5 lakh. Are you really with me? Only if you are taking VRS from these places, you are entitled to enjoy 1010C. Like central government, state government, or what authority? Local authority. Or all companies, statutory corporation and authorities, cooperative society, university establishment incorporate under a central or a provisional act, including IIT or IIM. If you are taking VRS from these places, you are entitled for exemption under section 1010C is what the discussion. Are you really with me? And this exemption restriction, this exemption is only one time during the what of the SSC? Lifetime. In lifetime, you can enjoy only 1010C once. If already taken a VRS, that's it. Next time you are going you are joining somewhere and you are saying that I am taking again VRS and I am getting compensation, paid fully tax. Are you agree with me? And no exemption if relief is allowed under section what? 89. If you claim relief under section 89, you are not entitled to claim exemption under section 1010C, and this 1010C will be available both under the default tax regime and also under the optional tax regime. Till now, only one different section we have studied called as 10.5, leave travel concession or leave travel assistance. That you will be get only under the, not under the default tax regime. Are you able to appreciate? Yes, sir. Now we are going to talk about 1010CC, which is tax on non-monetary perquisite. Tax on, sometimes employer is there and employee is there. My dear lovable students, employer will provide perquisite to the employee. Like he may give motor car, he may give rent-free accommodation, he may give medical facility, etc., etc. Are you all really with me? It is a benefit which has been extended by the employer to the what? Employee. Employee may feel that, sir, please don't give all these benefits to me, because if you give all these benefits, this will be treated as perquisite and this will be included in my gross salary. Automatically my gross salary will include and I am liable to pay more tax. Correct? So what employer will say that, don't worry man, I will give the car and even the car for tax also I will pay. So actually this has to be treated as what? Perquisite. And this has to be included in the what salary? Gross salary. Then automatically gross salary of the employee increases. Employee is the person liable to pay tax. Comfortable? But if an employer pays tax on behalf of the employee, that tax will be treated again as a perquisite. Not this part. That tax will be treated again as a perquisite. Hello, sir. What 1010CC is saying that tax paid on non-monetary perquisite will not be treated again as a benefit in the hands of the employee. Not these perquisite, my dear lovable students. Actually, who is supposed to pay tax? Employee is supposed to pay. Who is paying? Employer is paying. Whose tax? For example, when you do salary, you would have learned that professional tax paid by the employer, 2000 rupees. Like that, have you undergone? So what we will do first, sir, professional tax paid by the employer, we will include in the what salary? Actually, this professional tax paid by the employer is a perquisite. The same way, tax on non-monetary perquisite paid by the employer is a perquisite. How you are including the professional tax paid by the employer, like that don't include the tax paid on non-monetary perquisite in the what salary? Gross salary, as per section 1010CC. So salary paid tax-free means the employer bears the burden of tax on the salary of the employee. In such a case, income from salary in the hands of employee will consist of his salary income and also the tax on his salary paid by the employer. However, as per what section? 1010CC. Income tax paid by whom? Employer. On what? Non-monetary perquisite. On behalf of whom? Would be exempted in the hands of the employee. That means if an employer pays any tax on behalf of the employee for non-monetary perquisite, it will be fully exempted under section 1010CC. What is 10.5? Leave travel concession or leave travel assistance. What is section 1010? Gratuity. What is section 1010A? Pension. 1010 AA. Leave salary. What is section 1010B? Retrenchment compensation. What is 1010C? VRS. What is section 1010CC? Tax on non-monetary perquisite. Coming to the next very important concept, man, provident fund. We are having 4 types of provident fund: statutory provident fund, public provident fund, recognized provident fund, and unrecognized provident fund. These are like bucket. Bucket in the sense means we are having 4 bucket before us, man. Number 1 is statutory provident fund or public provident fund, recognized provident fund, and unrecognized provident fund. That means during your journey of employment, when you get salary, you can put your money in this bucket. For what purpose, you know? At the time of retirement. At the time of retirement, you can withdraw in one shot. So this is like a savings bank account. Sir, instead of the savings bank account is holded by the bank, this bucket is holded by the government. That is the only difference. Are you all with me? So every bucket is recognized by some act. Provident Fund Act 1925, Public Provident Fund Act 1968, EPF and Miscellaneous Provisions Act 1952. It is not recognized by PCAT or CAT. That is why unrecognized what fund? Provident fund. Sir, if employee is getting 1 lakh rupees salary, for example, out of this 1 lakh rupees, 10,000 rupees he will be putting in any of the provident fund. Are you all really with me? Because it is his savings. At the time of retirement, in one shot, he will withdraw. So, what employer will say that, hey, you are working only for me, no. So, if you are contributing 10,000, even myself also will contribute 10,000 for you. Even though it is an expense for me, don't worry. I will pay you 1 lakh rupees salary. In addition to that, for your benefit, I will contribute 10,000 rupees for the what fund also? Provident fund also. I know that that is an expense for me, that I will debit to my P&L account, and that I will claim it as a deduction while calculating the profits and gains of business or profession. Are you really with me? So my cost will not be 1 lakh rupees salary. My cost will be 1 lakh 10,000 rupees salary. Are you able to appreciate? So to this bucket, employees 10,000 will come and fall, and also employers 10,000 will come and fall. Are you really with me? This bucket owner is employee and bucket owner is not the employer. Are you really with me? Come on, man. So who and all will contribute? Employer and employee. This is public provident fund. Generally, employer will not contribute. That's why any SSC. And recognized provident fund means employer and employee. And even for unrecognized provident fund will be contributed by the employer and employee. Are you able to appreciate? How many bucket? 4 bucket. Number 1, statutory provident fund, public provident fund, recognized provident fund, unrecognized provident fund. Right, sir? Who and all will contribute, sir? Employer and employee will contribute. Any SSC will contribute. Employer and employee will contribute. Employer and employee will contribute. Right, sir? Now, we are going to talk about the first employees 10K. Employee would have deposited 10K, no? Sir, employees contribution, deduction under section 80C, chapter 6A deduction. Only if you are traveling through the optional tax regime. Because if you are traveling through the default tax regime, there is no concept of chapter 6A at all. Are you all really with me? And deduction under 80C for if you are traveling under the optional tax regime. Deduction under 80C only for if you are traveling through the optional tax regime. Here no income tax benefit. That means 80C deduction will not be available. Are you all really with me? Next one, my dear lovable students, who contributed? Employer also put another 10K in this bucket. Actually, this is a perquisite. This is a benefit to whom? Employee. Are you all really with me? Actually, when you are calculating the what salary? Gross salary. Basic salary you will be taking. DA you will be taking. Commission you will be taking. Sir, bonus you will be taking. The next element should be employer's contribution to provident fund. Because this should also be included in the gross salary. But what Income Tax Act is saying that if the employer is contributed to a what provident fund? Statutory provident fund. It is not taxable in the hands of the employee. What Income Tax Act is saying that let him put in that bucket. You don't worry. Who don't worry? Employee don't worry. Don't treat it as a perquisite. Don't treat it as an income. Here not applicable. Generally, employer will not contribute to the public provident fund. Are you all really with me? And here, amount exceeding how much percent of salary is taxable? That means employer can contribute up to 12%. Sir, if he is contributing 14%, that 2% will be treated as perquisite. Are you all really with me? Then we have to include in the gross salary. Here, not taxable at the time of contribution. Because this is HSAL concept. What concept? Let him put now. Because if he is putting now, the amount will be very small. We are not going to tax it now. Let it accumulate. Then we will be taxing at the time of withdrawal. Lump sum. Sir, are you all really with me? Now, sir, in this bucket, whose money is there? Whose money is there? Employer's money is there. Employee's money is there. Kattayama kutti potru illaya. Interest credited on the whose contribution? Employee's contribution. First, sir, fully exempted. It is fully. So, on this 10,000, if you are getting any interest means it is fully exempted. Super fantastic, sir. Here also fully what? Exempted. Here exempt up to how much % per annum? Any excess is taxable under 17 subsection 1. That means there is a limit. Can employer contribute any amount to RPF? No. He can contribute only up to 12% of salary. On that 12% of salary, interest amount should not exceed 9.5%. Are you able to appreciate, sir? And this will be taxable under the head what? IFOS. Whose contribution? Employee's contribution. That year taxable under the head IFOS. Now, whose 10,000 are also there? Employer's 10,000. That will also give interest. Interest credited on employer's contribution. It is fully exempted because this is what provident fund? Statutory provident fund. Generally, statutory provident fund will be applicable to government employees. And private employees, recognized provident fund will be applicable. Are you all really with me? And this bucket is held by government. So, instead of you putting the contribution in some other place, employees are putting the paisa in with the government. That means government is getting the benefit. So, government is saying that we are only paying the interest. So, it is fully exempted. Are you all really with me? If you don't contribute to provident fund, we have to go and borrow somewhere. That means we have to pay what? Interest. Now, since you contributed and accumulated money with us during your tenure of service, we have certain fund to work the India. Are you all really with me? So, we no need to borrow money from outside India or India. So, we are not liable to pay interest. Since you saved interest for us, we are saving tax for you. Are you all really with me? That's why statutory provident fund is fully exempted. Clarity? Generally, my dear lovable students, employer will not contribute to public provident fund. Now, exempt up to how much % per annum? 9.5% per annum. Any excess is taxable under 17 subsection 1. That means in the recognized provident fund, this is recognized. What man? Recognized. So, this is generally followed by the private employees. So, you will go and take permission from the sir, EPF and Miscellaneous Provisions Act. You will get the recognition from the Commissioner of Income Tax, Principal Commissioner of Income Tax. And he will say that employer can contribute up to 12% of salary. Even employee can also contribute. But on that contribution, interest amount should not exceed 9.5%. Both on the employee's contribution and also on the employer's contribution. Are you all really with me? Now, sir, in the unrecognized provident fund, actually unrecognized provident fund, you are not supposed to put the money at all. Correct? If employee put the money, for that no ATC. On that, if the employee got interest, that will be taxable under IFOS. If the employer put, it's a HCL concept. And for that employer's contribution also, you will get interest. That will not be taxable at the time of credit because this is what CL concept. Now, fine, fantastic to the core. Employee is going to retire. At the time of retirement, whatever money he contributed, whatever interest on his NSR depositing, and whatever money employer contributed, and on that he will get the interest. All the 4 components he will be withdrawing. Are you all really with me? Withdrawal at the time of resignation or what? Termination. It is fully exempted under section 1011. It is fully exempted under section 1011. Sir, it is fully exempted under section what? 1011. Are you all really with me? The next one, exempt under section what? 1012. Subject to certain condition detailed in the chart below. If you are withdrawing from recognized provident fund, it is exempted under section 1012, but you have to satisfy certain condition. If you satisfy certain condition, then it will be exempted. Otherwise, it will be taxable. But here, 2 people contribution will be there inside the URPF. Can you say whose and whose? Employee's contribution and employer's contribution. 4 components will be there. Employee contribution, employee interest, employer contribution. Idhila employee contribution, employee interest would have already taxed. So, employee contribution and interest is not taxable at the time of withdrawal. If you are taxing now, it will lead to double taxation. Are you able to appreciate? Anna, we are following what is AL concept? Which is AL concept? For whose contribution? That is employer contribution and interest is taxable as profit in lieu of salary. Are you able to appreciate, sir? As we discussed that in the recognized provident fund, employer can contribute only up to maximum what % of salary? 12% of salary. Sir, is there any definition for salary? Yes. Basic salary plus DA provided in terms of employment plus commission as a fixed percentage of turnover. Are you all really with me? So, to the URPF, I am having a graph. Quick graph, man. Who and all will contribute to URPF? Employee will contribute, and also employee's actual contribution is not taxable. Why, sir, not taxable? My dear lovable students, here look at it. So assume I am an employee. I am contributing to a URPF. Sir, if I am contributing, I will be contributing only from basic salary. Yeah? If I am contributing from what salary? Basic salary. No need to again include in the gross salary that. Whose contribution? Employee's contribution to the unrecognized provident fund. Are you all really with me? Because I would have contributed from the what salary? Entire basic salary I have included in the gross salary. So double showing of income is not required. And for this, I am not entitled to claim deduction under what C? 80C. Now you are getting interest. Interest from the contribution. Okay. It will be taxable under what OS? That's it. Now whose contribution? Actual contribution. Taxable under the salary when? In the year of receipt. Because it is a what sale concept. But interest on contribution will be taxable in the year of receipt. So employer's contribution and interest on employer's contribution will be taxable in the year of withdrawal, not in the year of contribution. Can I proceed? Okay, man. Sir, we talked about section 1011 and we talked about section 1012. What is 1011? Statutory provident fund or public provident fund. Is there any condition for statutory provident fund or public provident fund? No. You can withdraw and it will be fully exempt under section 1011. Whereas if you are withdrawing from section 10 subsection 12, that is recognized provident fund, these conditions should be satisfied. What condition? You know, employee render continuous service of at least how many years? Check that. Have the employee worked under a particular employer for at least how many years? Answer may be yes or no. If it is exempted, it is fully exempt under section 10 subsection 12. That is the only basic condition you are supposed to be satisfied. That means in the recognized provident fund, money should be there for at least. No, sir. Then you check this, man. Are his service terminated due to 1, 2, 3 condition? Is it because of his ill health? Ama, sir, is not well, sir. That's why he stopped, sir. Or contraction or discontinuance of employer's business, whether because of employer stopped the business or any other cause beyond the control of the employee. If yes, still no problem. Exempt under section 10 subsection 12. No means ask 2 questions. Question number 1 and question number 2. Question number 1. Is his entire balance standing to the credit of the employee transferred to individual account in any RPF remained with the what employer? New employer. From the old employer, have he moved to the what employer? New employer. When he moved from the what employer to what employer? Old employer to new employer. Whether he shifted the what also? RPF also. If that is the case, my dear lovable students, it is exempted under section 10 subsection 12. Yes means exempt under 1012. No means it is taxable. Comfortable? No, sir. Is the entire balance credit to the employee transferred to his NPS account referred under section 80 CCD, notified pension scheme under section 80 CCD. That means till now the balance was there in the recognized what fund? Provident fund. Now it has been transferred to notified pension scheme under section 80. If that is the case, it is exempt under section 10 subsection 12. Otherwise, it will be taxable. Are you all really with me? Taxable RPF withdrawal, recognized provident fund. Income is calculated as if fund had been an unrecognized from the start. That means, sir, you have put in the recognized provident fund. In the recognized provident fund, who and all will contribute? Employer will contribute and also employee will contribute. Are you all really with me? My dear lovable students, employer's contribution will not be taxable at the time of contribution. Will be taxable only at the time of withdrawal. But employees to the recognized provident fund. Sorry, sir. Recognized provident fund, not unrecognized. Recognized provident fund. Up to 12% of salary is exempted, right, sir? Only in excess of 12% of salary is taxable. But you have not kept the fund in the recognized provident fund for how many years? You have withdrawn. Whether it is taxable or exempted? Taxable. You cannot enjoy 10 subsection 12 benefit. Are you able to appreciate? Then, if that is the cases, the consequence are up to 12% you would have been exempted. That will also be taxable in the year of withdrawal. That's what they are saying. Taxable RPF withdrawal. Income is calculated as if fund had been a dash provident fund, unrecognized provident fund. That means even you can't enjoy up to how much percentage? 12% of salary. If the employee joins a new employer and transfer the accumulated recognized provident fund balance to the new employer's RPF, the balance remain exempt. That means if you are moving from old employer to the new employer, if you are going to the new employer, you take even the RPF account also. fully exempted under section 10 subsection 12. Service period with the previous employer count towards the 5-year requirement for exemption. That means you have to provide service at least for how many years? 5 years. In that, old employer plus new employer should be how many years? Means 5 years. Are you able to appreciate or understand what I am talking to you? That means, my dear lovable students, they have created a lot of confusion recently. What they are saying that I will consolidate this and I am moving into that discussion. There are 4 types of provident fund are there. Number 1, statutory provident fund, public provident fund, recognized provident fund, and unrecognized provident fund. Right, sir? Statutory provident fund, for everything it is act is there. In the statutory provident fund, both employer and employee will contribute. In the public provident fund, generally, sir, general assessee will contribute. In the recognized provident fund, employer and employee will contribute. Unrecognized provident fund, actually you are not supposed to contribute, but employer and employee may contribute. Right, sir? We are going to see one by one. Employees contribution. You are entitled to claim deduction under 80C. 80C. But, sir, if you are contributing to a URPF, you are not entitled to claim deduction under 80C. Right, sir? Employers contribution, my dear lovable students, generally it has to be treated as perquisite. But what Income Tax Act is saying that it will not be treated as what? Perquisite. It is not taxable, not applicable. Amount exceeding how much percent? 12% of salary will be treated as only perquisite. And employer is contributing to an unrecognized provident fund. In the year of contribution, it will not be treated as income. At the year of withdrawal, we will take care. Are you really with me? Now interest will come. Sir, what government is saying that from the statutory provident fund fully exempted, public provident fund fully exempted, and the recognized provident fund, we need, sir, if the interest is up to 9.5%, no problem. But it exceeds 9.5%, we need tax. But in the unrecognized provident fund, employees' contribution interest will be taxable under IFOS. Employers' contribution interest will be followed with HCL concept. Are you really with me? And at the time of withdrawal, generally 1011 fully exempted. 1011 fully exempted. RPF, we will check that. Have you serviced for minimum 5 years? If yes, it is fully exempted. If no, we will check that whether you have satisfied all the conditions or not. If yes, it is exempted. Otherwise, it will become taxable. Once it becomes taxable, it will be treated RPF as URPF. Are you really with me? And if you are withdrawing from what? URPF. Then we will check that employees contribution, interest on employees contribution, employers contribution, interest on employers contribution. Employee and interest will not be taxable because already we have taxed it. But employers contribution and interest will be taxable because we have not taxed it earlier. This is the first time. This was the stand of government till now. But they have, sir, recently amended the entire stand from April 1, 2021. From April 1, 2021, they are asking a question that why we have to give exemption for provident fund? Because, sir, instead of if you are putting money in the bank, if you get FD, that FD interest is taxable under IFOS. But since you are giving money to us, we are giving interest to you, and that interest is fully exempted under 1011. That interest is fully exempted under 1012. We are having loss. So government said that we are going to set a benchmark. We are going to set a new limitations. Sir, you have to be very careful this area. If an employee's annual contribution to the PF is exceeding how much, man? 2,50,000. Then the interest earned on such excess contribution is what? Taxable. Assume, think, you are an employee. You are contributing to the provident fund more than 2,50,000. For example, 4 lakh rupees you contributed. Contribution classified into 2 categories. 2.5 lakhs and 1.5 lakhs. You are getting interest for this 2.5 lakhs. My dear lovable students, fully exempted. Fully. But you will be getting interest for this 1.5 lakhs. It is fully taxable. Are you all really with me? If the contribution is made without any employer contribution, that is to the statutory provident fund or public provident fund or recognized provident fund, who has not contributed? Employer has not contributed. Only who has contributed? Employee has contributed. Then the annual limit is how much lakh? That means up to 5 lakh, we will not tax the interest. But if you are contributing 6 lakh, 5 lakh will be exempted. Interest on 1 lakh will be taxable. Are you able to appreciate? That is, interest earned on contribution below this limit is exempt from tax. And further interest accrued on contribution made before March 31, 2021, because all this amendment came from April 1, 2021, is fully exempted. So before this cutoff date, whatever interest you are getting will be fully exempted, because this limit will be applicable from 1st of April 2021. Right? Without any monetary limit for contribution, even it is accrued after this date. In simple words, one line. Rupees 5 lakh, if there is no, whose contribution? Employer's contribution. Employer is not contributing to PF. Only who is contributing? Employee is contributing. You have to check that how much he contributed annually. Sir, the limit is how much lakh? 5 lakh. For example, he contributed only how much lakh? 4 lakh. And he is getting interest, fully exempted. Sir, he contributed 7 lakh. On 5 lakh, he will be getting interest. That will be fully exempted. On 2 lakh, he will be getting interest. That will be taxable. Are you really with me? No, sir. Myself is contributing and also employer is contributing. Then the limit will not be 5 lakh. Limit will only be, because you are having more benefit. If you are having more benefit, pay more tax. Then the slab will be 2,50,000. Up to 2,50,000, whatever interest you are earning, we will not tax it. Over and above 2,50,000, we will tax it. And 2,50,000, if the fund has contribution from both employee and the employer. That means, assume a situation where, sir, as an employee, I am only contributing. Who is not contributing? Employer is contributing. What is the limit? 5 lakh. Sir, myself and employer are also contributing. What is the limit? 2,50,000. Then what government will do? No. If I, for example, myself and employer are also contributing and we are both contributing how much lakh? 4 lakh. Then 2.5 lakhs up to 2.5 lakhs interest accrued is exempted. Yes, sir. That amount they will credit in the non-taxable contribution account. A new account they will open. Up to 2.5 lakhs or up to 5 lakh, they will credit that fund in a non-taxable contribution account. Because any interest generated from that 2.5 lakh or 5 lakh rupees is fully exempted. And over and above the threshold limit applicable will be credited to taxable contribution account. Are you able to appreciate? So includes contribution and interest that are within the exempt limit and contributions within the yearly threshold on or after 1st April. Here taxable contribution means includes contribution exceed the yearly threshold limit. What is the yearly threshold limit? Either 2,50,000 or, and interest earned on this excess amount will be taxable. Are you able to appreciate or understand? So one line summary of the PF. Sir, if it is statutory provident fund, what provident fund, man? Statutory provident fund, sex provisions of section 1011 will be applicable. There are only two circumstances will come. Employer also contribute or only employee will be contributing. Are you all really with me? If employer also contribute, then the interest earned from the statutory provident fund will be taxable. Correct? The checkpoint, the cutoff is up to how much lakh? 2.5 lakhs. Sir, this 2.5 lakhs will go and sit in the non-taxable contribution account. And any interest generated on that 2.5 lakh will be fully exempted. Appreciate Pandriya. And over and above the 2.5 lakhs will be credited to the taxable contribution account. And that will be fully taxable. No, sir. My employer is Kanji, sir. Kanjan, sir. He is not contributing, sir. Only myself is contributing, sir. Then what government is saying that up to 5 lakh rupees per annum, we will credit to the non-taxable contribution account. Any interest accrued up to 5 lakh rupees is exempted. Sir, in excess of 5 lakh rupees will be fully taxable. I am not talking about, for example, 6 lakhs if an employee contribute 5 lakh and 1 lakh. This 1 lakh is not taxable. I am not talking about the 1 lakh. Interest generated on the 1 lakh is taxable. This is all our interest provision. Are you able to appreciate, sir? Now, recognized provident fund. Why, sir? Because to the public provident fund, anyway, employer generally will not contribute. Are you all really with me? Yes, sir. Recognized provident fund. Here, double benefit is, double checking is there. You have to understand clearly what is double checking. Assume who also contribute? Employer also contribute. What is the threshold limit? 2.5 lakhs. For example, 4 lakh rupees contributor. Classified into two category. 2.5 lakhs and 1.5 lakhs. This 2.5 lakhs will be credited to which account? Non-taxable contribution account, and this will be taxable contribution account. Any interest accrued or arise on this 2.5 lakhs will be fully exempted. Like that, you should not think, because this is what account? That interest should not exceed 9.5% per annum. That is what you are supposed to do is, sir, on first 2.5 lakhs is there, interest is there. For example, if it is 10%, now that 0.5% will be taxable. But in excess of 2.5 lakhs, how much lakh rupees? 1.5 lakhs. Even from base 1%, it will be fully taxable. Their 9.5% benefit will not be available. Are you able to appreciate? Whereas own contribution, who only contributing? Employee only contributing. Up to how much lakhs per annum? 5 lakhs per annum is fully exempted, subject to a 9.5%. If that is 12% interest, then 2.5% interest will be taxable. And the balance over and above 5 lakh, irrespective of 9.5%, it is fully taxable. Are you able to appreciate what I am talking to you? That's it, my dear lovable students. 10.11 and 10.12 comes to an end. What is 10.5? Leave travel concession or leave travel assistance. What is section 1010? Gratuity. What is section 1010A? Pension. 1010AA. Leave salary. What is section 1010B? Retrenchment compensation. What is section 1010C? VRS. What is section 1010CC? Tax on non-monetary perquisite. What is section 1011? Statutory Provident Fund or Public Provident Fund. What is section 1012? Recognized Provident Fund. What is section 1013? Superannuation Fund. How you have deposited your money in the PF account. The another account is the superannuation fund account. What account? Nothing. You are withdrawing from the superannuation fund account. Any payment received by an employee from the approved what fund? Superannuation shall be exempt if the payment is made on the death of the beneficiary. You died, you got money, then it is fully exempted under section 10 subsection 13. Or payment received by employee in place of or commutation of annuity when they retire at a specified age or become incapacitated before retirement. That means I retire. At the time of retirement, I withdraw money from the superannuation fund because at the time of retirement, I need money. For that only I deposited money in the superannuation fund. Then it will be fully exempted under section 10 subsection. If a refund of contribution is made up to the death of beneficiary, it is what exempted? Tax exempted. I died, but my beneficiaries got the money. It is fully exempted. Payment transfer to notified pension scheme under section 80CCD is also fully. This is a one-line summary, man. Sir, even to the approved what fund? Superannuation fund. Who will contribute money? Both employee and employer will contribute money. Yeah. Employee's contribution. You can claim deduction under what? C. If you are traveling through the optional tax regime, are you really with me? Employer's contribution is exempt. Is what? Up to how much lakhs? 7.5 lakhs. That means how to recognize provident fund, an employer can contribute up to how much percent of salary? 12% of salary. The same way to an approved superannuation fund, employer can contribute up to 7.5 lakhs. Interest on employee's contribution fully exempted. Interest on employer's contribution fully exempted. At the time of withdrawal, fully exempted under section 10 subsection 13. But instead of contributing to an approved superannuation fund, if an employee and employer is contributing to an unapproved superannuation fund, it will be treated as unrecognized provident fund. Taxability same as unrecognized provident fund. That means employer's contribution will not be taxable in the year of contribution. It will be taxable at the time of withdrawal because which is a L concept. Comfortable. My dear lovable students, sir, section 1013 HRA. Section 1013 is what? House rent allowance. This is another area where this will be applicable only under the what tax regime. And this will be fully taxable in the default tax regime. There is no concept of HRA under the default tax regime. So, two people we got. Number one, section 10.5, leave travel concession, or section 1013A, which is what? HRA. Are you really with me? These two are applicable only under the optional tax regime. Will not be applicable under the. That means what government is saying that we have put it to tour. Are you really with me? That means we have put it tour. We will not give exemption. Come on. What is HRA? HRA is a special element specifically granted to an employee by his employer towards payment of rent for residence of his employee. Sometimes I may be from Palakkad, Kerala. I may be coming and working in Chennai. For that I have rented a house, taken a rented house. For that I have to pay monthly rent. What employer is saying that keep this amount for payment of rent? Are you really with me? What government is saying that is a perquisite. That is a benefit employee is getting. That will be taxable. But least of the following can be claimed as exemption. Rent paid in excess of how much percent of salary? First you have to take the salary. Salary means what salary? Basic salary. For example, some amount, 1 lakh. Sir, add DA if provided in terms of employment. For example, 50,000 rupees. Add commission as a fixed percentage of turnover. For example, another 50,000 rupees. So what is the total salary? 2 lakh. On this 2 lakh, calculate 10%. How much you will be getting? 20,000. Check how much is the rent you are paying. For example, 25,000 rupees is the rent I am paying. What is the difference? That is a rent paid. What is the rent paid? 25,000 in excess of 10% of salary. So first you calculate salary multiplied by 10%. You will get 10% of salary. Compare the salary with the rent paid. Limp will be the first one. Hello, sir. Number 2 is actual HRA received. How much amount you have received from the employer? 50% of salary in metropolitan cities like Mumbai, Calcutta, Delhi, Chennai. And 40% in what places, man? Other places. Are you living in metropolitan cities like Mumbai, Calcutta, Delhi, Chennai? Then rentals will be high. That's why 50% of salary. If you are living in normal places, then 40% of salary. That means HRA least of the 3. Rent paid in excess of 10% of salary. Actual HRA received 50% of salary in metropolitan cities like Mumbai, Calcutta, Delhi, Chennai, and 40% in. But this concept is not there in the default tax regime. HRA is fully taxable. Exemption is not available to an assessee who lives in own house. Yes, if you are living in your own house, why you are going to pay rent? Then HRA concept itself will not be. Or in a house for which he has not incurred the expenditure of rent. He is, sir, staying in Mamanaru house. Then he is not supposed to pay any rent. Then why are you claiming 1013 HRA? Relevant period means the period during which the said accommodation was occupied by assessee during the previous year. For how much time you have paid the rent. That's what relevant period. Because, my dear lovable students, rent paid in excess of 10% of salary. This exemption will be applicable only for the relevant period. What period? Relevant period means how much time you have paid that will matters a lot. Are you all really with me? Come on, we are going to complete this part. What is section 10.5? Leave travel concession or leave travel assistance. What is section 10.10? Gratuity. What is section 10.10A? Pension. 10.10AA. Leave salary. 10.10B. Retrenchment compensation. 10.10C. VRS. 10.10CC. Tax on non-monetary perquisite. What is section 10.11? Statutory Provident Fund or Public Provident Fund. What is section 10.12? Recognized Provident Fund. What is section 10.12? Recognized Provident Fund. What is section 10.13? Superannuation Fund. What is section 10.13A? HRA. And the last one, 10.14, special allowance. What allowance, man? Special allowance are of two types. Number one, fully exempt allowance and partly exempt and partly taxable allowance. Are you really with me? There are 6 allowance which are fully exempted. Number one, helper allowance, academic allowance, traveling allowance, daily allowance, uniform allowance, and shortly we call it as hat duck. Tell me what duck? Helper allowance, academic allowance, traveling allowance, daily allowance, uniform allowance, and these 6 allowances are for official purpose. These 6 allowances are for if an employer gives this 6 allowance to the employee. For example, 1000 rupees has been given by employer to the employee. Out of that, if the employee spent the entire 1000 rupees, nothing will be taxable. But out of 1000 rupees, only 600 has been spent, means 400 rupees will be taxable. So even this hat deduct will be taxable, provided if you spend 100%, nothing will be taxable. Otherwise, you are liable to pay tax to the extent which has not been spent. Are you all really with me? The next one, these allowances are for personal purpose. So, 2 type of allowance employer will give. Number one, official allowance and personal allowance. What are the official allowance? Helper allowance, academic allowance, traveling allowance, daily allowance, uniform allowance, and conveyance allowance. If you spend 100% for official purpose, fully exempted. Otherwise, to the extent you have not spent, will be taxable. But this children education allowance, to this particular limit, it will be exempted. The balance will be taxable. Children education allowance, man. My dear lovable students, 100 per month up to a maximum of 2 children. Per month, 100 rupees is the limit. Maximum, you can have only 2 children. Sir, hostel expenditure allowance, 300 per month up to a maximum of running allowance, 70% of such allowance or 10,000 per month, whichever is what. For example, if you are working in the transport sector, then 70% of such allowance or 10,000 per month, whichever is lower. Transport allowance, this is only applicable to blind. For blind people, 3,200 per month is applicable. Are you all really with me? Then composite hill compensatory allowance. Composite hill, if you are working in notified hilly areas, 300 per month will be exempted. Tribal area allowance, if you are working in tribal area, 200 per month will be exempted. Sir, counter insurgency allowance, if you are working in armed forces, 3,900 per month will be exempted. Underground allowance, if you are working in underground mine, then 800 per month will be exempted. Sir, for armed forces, man, 4,200 per month will be exempted. Compensatory modified field area allowance, 1,000 rupees per month will be exempted. How we used to, sir, remember this means children, how much per month? 100 per month up to a maximum of. Hostel expenditure allowance, 300 per month up to a maximum of 2 children. Running allowance, sir, we are having 2 technical terms. Running is working for what employee? Transport employee. Correct, sir? For meeting personal expenditure, 70% or 10,000 per month, whichever is what, lower. If you see, technically we are having, here, look at here, man, traveling allowance is there and conveyance allowance is there. So we are having lot of things. Look at, clearly understand the difference. Traveling allowance means, sir, should be used by employee to meet the cost of what tour? Official tour. For example, sir, I am working in Chennai. I am going to Bangalore for my office tour. From Chennai to Bangalore, I have to go, fly, come back, stay, eat, food, everything. This is called as what allowance? Traveling allowance. For that purpose, if employer gave 10,000, I spend entire 10,000, it is fully exempted. Comfortable? Whereas conveyance allowance means should be used by employee to meet the expenditure on conveyance in performance of what duty? For example, I came to the office, man. I will leave the office only by 5 p.m. Till that, I have to roam here and there within Chennai itself. For that, I need some money. That is called as what allowance? Conveyance allowance. So, if I go for an official tour, I have to travel. That is called as, after I reach the office from Nungambakam, I have to go to T Nagar. That is called as conveyance allowance. Are you all really with me? Sir, now what is transport allowance, sir? It is to meet the employee expenditure for traveling for his residence to office and back. That means I have not even reached the office. My office is here. This is my residence, my dear lovable students. From residence to coming to office, and office I have to go to residence. Are you all really with me? Yes, sir. You will come in Ola, Uber, etc. That's why for general people, there is no exemption. For blind people, they will be suffering to come to the office and go back to the home. That's why Income Tax Act is saying that we are ready to provide exemption only for the blind people. So you should understand what is the terms. Sir, transport allowance means, my dear lovable students, coming from home and also home to office and office to home. I reach office. I'm going to Bangalore for my office duty. That is called as traveling allowance. I am not going to Bangalore. I am in and around Chennai only, man. Then I will be getting the... Are you all really with me? Sir, I am working in a transport sector. For example, Suryamsam Sarthukumar. Then Devayani should come and give some food in tiffin carrier. Correct? At that time, sometimes if bus started in Chennai, I will stop only in Coimbatore. And if I have to come back from Coimbatore to what? During that time, snacks, tea and all, I will stop during night time. For that, only 70% of such allowance or 10,000 rupees per month, whichever is lower. Come on. Sir, we are talking about allowances. Leave the word allowance. Composite, ill, compensatory. How many words are there? That's why 300 per month. Are you really with me? Leave the allowance. Tribal area. How many words are there? That's why 200 per month. Are you really with me? Counter insurgency allowance. Everyone is fighting to get 40 mark in examination. But in order to counter the result, ICAI will give only 39 mark. Are you really with me? That's why counter insurgency allowance is 3,900. Are you all really with me? Now in the new scheme, we are having only, my dear lovable students, 6 subjects. They are saying 6. No, actually 8 is there. Because, sir, we are having advanced accountancy, we are having law, DT is there and IDT is there. They are calling it as only one subject. And the same way, sir, we are having costing, we are having audit, we are having FM and SM is there. Are you all really with me? By studying this 8th subject, not the 6th subject, underground, another underground allowance is 800 per month. Are you all really with me? Then armed force allowance. Even for army people also don't think that, sir, they are having 4 legs and 4 hands. They are also human being like us only. Sir, 4 legs and 4 hands are not there. They are also having 2 legs and 2 hands. That's why 4,200. Compensatory modified. Modi Nale number 1. That's why 1,000 per month. Are you really with me? Simple man. Other allowances just has been added. This will not be tested in examination because they themselves don't know how much rupees per month. They have given a lot of limits has been given. Somewhere leave it. Sir, high altitude island duty allowance and all. Are you all really with me what I am talking to you? But under the default tax regime under 115 BAC, we are having hat deck, helper allowance, academic allowance, traveling allowance, daily allowance, uniform allowance and conveyance allowance. What the default tax regime is asking that, why you need a helper? Then what work, why, for what purpose you are coming? Hello sir. Then academic allowance. Then what you have done during your study time? Assignment they are asking. But traveling allowance, okay, fine. You need to go to, sir, Bangalore. That we can't do anything. Are you all really with me? Then daily allowance, okay. Daily morning to evening, you should have tea, snacks and all. That is allowed. Uniform allowance. Sir, you don't wear uniform and all. Wear normal dress. That itself is good. There are 1980 uniform that for that no allowance. Conveyance allowance is allowed. That means what the default tax regime is saying that don't have helper. Helper is not allowed. Study properly at your study time itself. Not after you join the job. And don't wear what and all? Uniform and all. Are you really with me? That's what. So traveling allowance, daily allowance and conveyance allowance. This is allowed under the default tax regime. Whereas, sir, helper allowance, academic allowance and uniform allowance are fully taxable. How is taxable? Are you all really with me? And the remaining are fully exempted with the same condition, same copy paste. Hello, sir. The default tax regime said that, sir, don't have children at all. Children education allowance is not allowed. If children, you are having children only, that children has to get educated. Then only you will put the children in the hostel expenditure, correct? That is fully taxable. And if children has put in hostel, they will run with someone. So that running allowance is also fully taxable. Are you all really with me? And the next one, 4th one is the transport allowance is fully taxable. Every allowance is taxable. But for blind people, we don't want to, sir, disturb them. Blind 3,200 per month will be exempted under both what and what, man? Optional and default tax regime. Are you all really with me what I am talking to you? That's it with regard to exemption, man. In that, we have added one last list called as 10 subsection 6, exemption for NRI. For example, a non-resident Indian is coming and sitting in India. A remuneration of officials of foreign embassies. Sir, near to Nungambakam, you would have heard about Australian embassy and all, right? In that, foreign people will be working. They will be getting remuneration, salary. That is fully exempted under section 10, subsection 6, clause 2. That is foreign people working in India, earning salary in India, fully provided. Remuneration received by official of embassy, high commission, legation, commission, consulate or trade representation of foreign state is exempted. Provided remuneration of our corresponding officials in foreign country must have similar exemption. So our officials will be working in Australia. If Australia is saying that any Indian person receives salary in Australia is exempted, then Australian person receives salary in India is also exempted. Are you really with me? The above official must be subject of respective countries and not engage in any other business or profession. They should not do business or profession in India. They should do only act as officials in that embassies to provide visa, etc., etc. Are you all really with me? Next one, remuneration from foreign enterprises for what in India? For example, there is a company, ANM Incorporation. They are foreign enterprise. Sir, one of that person has came to India to provide some service in India. During that time, he got salary. That is fully exempted. Remuneration of foreign nationals, employee of foreign enterprise for service rendered by him during their stay in India is exempted. Number one, foreign enterprise must not engage in what in India? Business in India. For example, that ANM Incorporation sold a planter machinery in India. That planter machinery is not working. One of the official from foreign country came to India, worked for some number of days. Now planter machinery is working. For that work, he got some remuneration. Exempted. Are you really with me? Employees stay in India should not exceed how many days? 90 days. You should come to India, tak job over, tak you should go out. And remuneration must not be deductible from employer's income under the act. That means he is the employer. Where the employer is situated? Outside India. That amount of salary paid by the employer to this employee should not be debited to the P&L account. Are you already with me? It should not be claimed as a deduction under the head, under the income tax. And salary for employment of what ship? Foreign ship. Sometimes an Australian ship may come to India and that ship may stay in India for 50-60 days. And after that only it will leave. So during this 50-60 days, the crew members will get salary in India. What income tax act is saying that it is fully exempted in India. Salary income of non-citizen, non-resident for service rendered on foreign ship is exempt, provided their stay in India does not exceed how many days? 90 days. For the last one, man, remuneration for what? Training. Remuneration received by a foreign government employees during the training in India. Foreign government employee, Australian government employees coming to India to train in India. And during that time, they are getting some salary. It is exempt from tax, provided the training has been given by either what government. For example, sometimes army people of foreign country will come to train the Indian army because they are feeling that Indian army is the best army. Are you all really with me? Sir, number two, government company or statutory corporation or any society which is wholly financed by the central government. The last one, allowance payable where? Outside India. Allowance or perquisite, paid or allowed as such outside India by the government to a citizen of India. Our citizen is going and working in foreign country. Okay, and he is getting allowances or perquisite. That is fully exempted under section 10 subsection 7, my dear lovable students. And 10.6 and 10.7 would be available to an assessee irrespective of the route in which he is traveling. Whether he is traveled through the default tax regime and also the... So my dear lovable students, our salary chapter classified into 5 category. Number 1, basics. In that basics, the only thing what you are supposed to be taken care is there should be employer and employee relationship. If there is employer and employee relationship, such income will be taxable under the head salary. Then exemptions or retirement benefits. All section 10 we have tabulated one place. 10.5, 10.10, 10.10A, 10.10A, 10.10B, 10.10C, 10.10CC, 10.11, 10.12, 10.13, 10.13A, 10.14. Are you all really with me? 10.5, leave travel concession or leave travel assistance. 10.10, gratuity. 10.10A, 10.10AA, leave salary. 10.10B, retrenchment compensation. 10.10C, VRS. 10.10CC, tax on non-monetary perquisite. Section 10.11, statutory provident fund or provident fund. Section 10.12, recognized provident fund. Section 10.13, superannuation fund. Section 10.14, 10.13A, HRA. And section 10.14, special allowances. That's it. The next topic to be taken care is the allowances. What's the next topic, man? Allowances. Yes, sir. The next area of discussion is the allowances. As we all know that, my dear lovable students, allowances mainly classified into three categories. Fully taxable, fully exempted, partly taxable, partly exempted. Sir, in that fully taxable under both the regimes, these allowances, whether it is default tax regime or optional tax regime, it is fully taxable. These are fully taxable under the default tax regime, partly exempted under the optional tax regime. And these are fully exempted under the optional tax regime. Okay, fine. I will quickly tell you a shortcut how to study the allowances. Simple, man. These are fully exempted. These are fully exempted. Foreign allowance under section 10.7. Just now we saw what is 10.7. That is, if an Indian employee is working outside India and if he is getting any allowances or perquisite, it is fully exempted under section 10.7. Sumptuary allowance granted to High Court or Supreme Court judge. If any High Court or Supreme Court judge is getting anything, then that is fully exempted. Salary and allowances pension paid by UNO. If United Nations organization paid any salary, allowances, pension, it is fully exempted. And allowances to High Court judges are fully exempted. So, my dear lovable students, once you become FCAs, that is foreign allowance, then compensatory allowances. What man? Compensatory allowance. Allowances paid by UNO and sumptuary allowance are fully exempted. Whereas, under the default tax regime, only foreign allowance under section 10.7 is exempted. So, what is the one line summary? There are four allowances are there. Foreign allowance, compensatory allowance, allowances paid by UNO and sumptuary allowance. Are you really with me? These are exempt under the optional tax regime. Whereas, only foreign allowance under 10.7 are exempt under the default tax regime. Then sumptuary allowance, compensatory allowance and allowance paid by UNO are taxable under the default tax regime. Next one, HRA under section 10.13, it is exempted under the optional tax regime, whereas it is fully taxable under the default tax regime. Special allowance under section 10.14 are fully taxable under the default tax regime, but we are having certain exception. The exceptions are traveling allowance, daily allowance, conveyance allowance and transport allowance to blind, deaf, dumb, 3,200 per month. Are you really with me? These four things are allowable under the default tax regime. But under the optional tax regime, hard deck is exempted. Helper allowance, academic allowance, traveling allowance, daily allowance, uniform allowance and conveyance allowance. There are 10 personal allowances are exempted. But under the default tax regime, only 4 things are exempted. Travel is allowed. From Chennai, you can go to Bangalore. Daily, you can have tea, snacks, etc. And from your home, you can come to the office. Sir, within the office, sir, you can travel, conveyance allowance and transport allowance for the blind people. Only these 4 are exempted under the default tax regime. Are you able to appreciate, sir? Sir, if an allowance is not falling under this category, it is fully taxable. Let me ask you a question. Interim allowance, fully taxable under both the regimes. Servant allowance, fully taxable. Project allowance, fully taxable. Tiffin allowance, fully taxable. Any other cash allowance, fully taxable. Ward allowance, fully taxable. Sir, city compensatory allowance, fully taxable. DA, fully taxable. Overtime allowance, fully taxable. So, how we have to study the allowances, man? Very simple, man. Allowances classified into 3 categories. Number 1 is fully taxable under both the regime. Are you really with me? Next one, sir, partly taxable, partly exempted. Correct? Partly taxable, partly exempted and fully exempted. Fully exempted under both the regime classified into 2 categories. One is optional tax regime and what? Default tax regime. Under optional tax regime participate fully exempted are FCS. F stands for foreign allowance under section 10 subsection 7. Then compensatory allowance. Then allowances paid by UNO and sumptuary allowance. Right, sir? Under default tax regime, 10.7 can be claimed, but these 3 cannot be claimed. That means these 3 are taxable. Comfortable? Partly taxable, partly exempted. Sir, we are having optional tax regime under the default tax regime. Under optional tax regime, hat deck is exempted. Are you all really with me? And under default optional tax regime, children education allowance, hostel expenditure allowance, running allowance, transport allowance, city compensatory, composite hill compensatory allowance, tribal area allowance, sir, underground allowance, armed force allowance, modified field area allowance, counter insurgency allowance, sir, like that it goes. Are you all really with me? Whereas under the what tax regime? Default tax regime, out of this H, why are you having helper? Helper is not allowed. Correct? Why you don't study properly? Academic is not allowed. Correct? but you can travel, you can have daily, you should not have uniform, and you can have conveyance. Are you all with me? And out of all these 10 allowance, only for the blind people, one allowance is allowed. What is that? Transport allowance. Sir, transport allowance is allowed. Up to how much rupees? 3,200 per month or part of the month. All other allowances, irrespective of the route, whether it is optional tax regime or default tax regime, it is fully taxable. That's it. With regard to the allowances part comes to an end. Are you ready with me? That's what I have summarized here. Sir, optional tax regime, fully taxable. Optional tax regime. Okay. City compensatory allowance, entertainment allowance, overtime allowance, fixed medical allowance, interim allowance. Able to appreciate. Fully exempted FCS, foreign allowance, sumptuary allowance, allowance paid by UNO, compensatory allowance received by judge. Partly taxable and partly exempted. Two things are there. HRA and special allowance under section 1014. Right, sir? Under the default tax regime, in that FCA, only foreign allowance is exempted. In that partly taxable, partly exempted, under section 1014, transport allowance is allowed. In that hat duck, H&A is not allowed. TUC is allowed. That means TDC is allowed. Are you all really with me? All the remaining fully taxable, remaining all are fully taxable. Are you able to appreciate the allowances part, sir? Chapter salary classified into 5 categories. Number 1, basics. Number 2, allowances. Number 3, perquisites. Correct, sir? Sir, in that perquisite, my dear lovable students, romba simple, sir. I am going to discuss section 17 through perquisite. Actually, 3 sections are relevant for the salary chapter. 17 subsection 1, 17 subsection 2, 17 subsection 3. 17.1 is talking about salary. 17.2 is talking about perquisite. And 17.3 is talking about profit in lieu of salary. For example, what and all will comprise of salary? Salary means what? Will bonus or commission form part of salary? Yes, sir. So, salary under 17 subsection 1 includes the following. Salary includes wages. That means when I say salary, if you get any wages, that is also what? Salary only. Any annuity or what? Pension. That is also form part of salary. Any gratuity received is also form part of salary. Any fees, commission, perquisite or profit in lieu or in addition to any salary or wages is also form part of salary. If you are getting any advance of salary, that is also a salary. If you are getting leave salary or leave encashment, that is also part of salary. And from Provident Fund, just now we discussed about Provident Fund. There are 4 Provident Fund are there. Statutory Provident Fund, Public Provident Fund, Recognized Provident Fund, and the portion of the annual accretion in any previous year to the balance to the credit of employee participated in a Recognized Provident Fund to the extent it is taxable. For example, employer can contribute to Recognized Provident Fund. Yeah. He can contribute up to how much percent of salary? 12% of salary. If he is contributing 14% of salary, that extra 2% will be taxable as salary. Are you all really with me? And transferred balance in the RPF to the extent it is taxable. To the RPF, you can contribute either 2.5 lakhs or 5 lakh rupees as the case may be. Over and above the 2,50,000 rupees and 5 lakh rupees, any interest accrued means that will also be treated as salary. And contribution made by what government? Central government. For example, for an employee, central government is contributing on behalf of the employee or any other employer in the previous year on account of employee under the notified pension scheme under section 80. For example, to notified pension scheme under section 80 CCD, one of the employer is contributing. One of the employer is what? Contributing. That will be treated as salary. The contribution made by central government in the previous year to the Agniveer Corpus Fund under 80 CCH. Sir, we would have heard about Agnipath scheme, correct? To the Agnipath scheme, employer will be contributing. That means what 17 subsection 1 basically saying that, romba simple, sir. Sir, what is the definition of salary? What and all comprises of salary? Sir, in a house means a lot of bricks will be there. Like that, salary means that. First one, salary means basic salary. There is no doubt about it. In addition to that, as per 17.1, this and all should be treated as salary. Number 1, any wages received is also a salary. Any annuity or pension is a salary. Any gratuity is a salary. But if that gratuity has been received at the time of retirement, it is subject to 1010. Are you all really with me? Sir, any fees, commission, perquisite or profit in lieu or in addition to any salary or wages. Sir, salary you are getting as advance, that is also will be treated as salary. You are getting leave salary or leave encashment. But if that leave salary or leave encashment you got at the time of retirement, then it is subject to 1010 AA. Are you all really with me? Sir, from Provident Fund, up to 12% of the employer's contribution will not be treated as salary. But over and above, how much percentage? 12% will be treated as salary. Sir, up to 9.5% of the interest will not be treated as salary, but over and above 9.5% from a recognized provident fund will be treated as salary. If an employer is contributing to a notified pension scheme under section 80 CCD, first it has to be included in the definition of what salary? Gross salary. Like எப்படி தெரியுமா? Employer's contribution to notified pension scheme under section 80 CCD. First, whose contribution? Employer's contribution. It has to be included in the what salary? Gross salary. So automatically gross salary will increase. Then you have to claim chapter 6A deduction, less deduction under section 80 CCD subsection 2. Are you all really with me? And sometimes if an employer may contribute to the Agnipath scheme, correct? First it has to be treated as a salary as per 17 subsection 1. Then it can be claimed as a chapter 6A deduction under 80 CCH subsection 2. Both 80 CCD subsection 2 and 80 CCH subsection 2, you can claim it as deduction irrespective of the route in which you are traveling, whether it is default tax regime or optional tax regime. Are you able to appreciate what I am talking to you? We have talked about contribution to NPS and what Agnipath scheme. What is this all about, sir? Sir, employer's contribution to NPS account is taxed, sir, employee's salary under section 17 subsection 1. So two people will be there. One is employer and other is what? Employee. Employer may contribute on behalf of the employee. It is a benefit to the employee. What 17 subsection 1 is saying that benefit you don't treat it as perquisite. That benefit you treat it as salary. Because if it is perquisite, it is fall under 17.2. It will not fall under 17.1. However, a deduction under 80 CCD is allowed for both the employer's contribution and employee's contribution when calculating the employee's total income. So first it included in the gross salary as per 17 subsection 1. Then you claim chapter 6A deduction as per 80 CCH subsection 2 and 80 CCD subsection 2. You are entitled to claim it as a deduction. Can I proceed? Contribution by central government to Agniveer Corpus Fund. That means if you are going to, sir, Agniveer, sir, army, they will start a fund. Are you really with me? Called as, sir, Agniveer what fund? Corpus Fund. So employee has to contribute 30% of salary to that fund. Similar contribution will be made by the employer also. First, it has to be treated as a salary as per 17 subsection 1. That's what central government contribution to Agniveer Corpus Fund would be taxable as salary under 17 subsection 1. 80 CCH allow a deduction for both the Agniveer and government contribution to Agniveer Corpus Fund when calculating the what income? Total income. That means one line summary of the entire discussion is simple. Long story short, employer may contribute to the notified pension scheme under section 80 CCD, Agniveer Corpus Fund under section 80 CCD, CCH, sorry. Are you really with me? Both has to be first treated as salary as per 17 subsection 1. That's it. 17.1, sir, comes to an end. I am coming to the second one, 17 subsection 2, perquisite. Sir, what is difference between allowance and a perquisite, sir? For example, sir, employer is giving 500 rupees per month to the employee, saying that with this cash of 500 rupees per month, you take care of the children education allowance or hostel expenditure allowance. This is called as, sir, allowances. This is called as, sir, perquisite in the sense means non-monetary. Sir, he is giving cars, sir. He is giving rent-free accommodation, sir. He is giving, sir, concessional loan, sir. That is called as perquisite. It is, sir, some benefit. Perquisite indicates some extra benefit in addition to the amount that may be legally due by way of contract for service rendered. Actually, for the job what I am doing under you, I am entitled to get only 50,000 rupees per month salary. But in addition to 50,000 as an employee, I am getting car, I am getting weed, I am getting fridge, I am getting, sir, television. All these are additional benefit I am getting. That is called as perquisite. That is called as what? That perquisite may be even in cash or in what? Kind, like RFA. Are you really with me? So that perquisite, very important, classified into 3 categories. Taxable in the hands of all employees. Whether you are specified employee or you are non-specified employee, this many perquisite, rather 8 perquisite will be taxable in the hands of all employees. Number 1, 17 subsection 2 class 1 is RFA, rent-free accommodation. My dear lovable students, 17.1 is the definition of salary. Whereas 17.2 is talking about perquisite. In that 17 subsection 2 class 1 is talking about RFA, rent-free accommodation. 17 subsection 2 class 2 is concessional rent. What rent? 17 subsection 2 class 3 is not there here. That means it will not be taxable in the hands of all the employee. It will be taxable only in the hands of, sir, either it will be exempted in the hands of all employee or it will be taxable only in the hands of specified employee. That list we will be checking now itself. Don't worry at all. So that's why 17 subsection 2 class 3 is missing. Able to appreciate. Then 17 subsection 2 class 4, which is payment by employer in respect of what of an employee? Obligation of an employee. It is a responsibility of the employee. But who is paying? Employer is paying on behalf of the employee. Then it will be treated as a perquisite in the hands of the employee. And 17 subsection 2 class 5. For the employee, employer is paying life insurance, my dear lovable students. Amount payable as an employer directly or indirectly to effect an assurance on the what of the assessee, life of the assessee. 17 subsection 2 class 6. Sir, employer is giving sweat equity share. Employer is giving what? Sweat equity share. Or 17 subsection 2 class 7. Amount or aggregate of amount, any contribution made to account, which is RPF, 80 CCD and approved superannuation fund, exceeds 7,50,000. That will be treated as perquisite. And 17 subsection 2 class 7A, annual accretion to recognized provident fund. And 17 subsection 2 class 8, other perquisite. I will be discussing one by one in detail. Understand the structure, then the act will be very easy. 17.1 is talking about salary. 17 subsection 2 is talking about perquisite. That perquisite classified into 3 categories. Number 1, taxable in the hands of all employees. There are 8 perquisite are there which are taxable in the hands of all employees. Comfortable? I am starting with 17 subsection 2 class 1 and 17 subsection 2 class 2. Romba simple, understand very clearly. Which is talking about rent-free accommodation and concessional rent. Are you really with me? For example, sir, you are working under an employer. Actually, employer is entitled to pay you only salary. But employer is giving you accommodation also. So this is a benefit you are getting. This benefit is called as what? Perquisite. Are you really with me? What type of accommodation employer can give? Employer may give only a accommodation like this. This is called as unfurnished accommodation. What accommodation? That means inside the house there is no fridge, there is no TV, there is no sofa, there is no nothing is there. Sir, or the second category is the what accommodation? Furnished accommodation. Or he may provide house plus inside that fridge, TV, washing machine, etc. also can be provided. Are you all really with me? So rent-free accommodation can be either unfurnished accommodation or, okay, you tell me, is this at the time of retirement or during the service? These benefits are during the, so whether you are government employee or non-government employee, there is no exemption like 1010 gratuity. Are you able to appreciate? So my dear lovable students, unfurnished accommodation. What they are saying that if the accommodation is a dash accommodation, unfurnished accommodation, you have to check that whether that accommodation has been received by government employee or other than government employee. If it is government employee, generally government employee will stay in quarters, government quarters. Are you heard about it? Then license fee determined by the government will be the value of perquisite. They themselves say that for this quarters, 3,500 rupees per month is the license fee. So 3,500 into 12 or for how much period they have stayed in that quarters, that will be the NSR amount of the perquisite. Sir, but if the employee is other than what employee? Government employee, you have to check that where the employee is staying. For example, is this accommodation owned by the employer? Owned by the, or accommodation taken on lease? Accommodation taken on, or accommodation provided in hotel? Accommodation provided in. If the accommodation is owned by the employer, hello sir, you have to check that where that flat is situated. Where the flat is, whether that flat is situated in an area where population is less than 15 lakh. That means Kugramam. Are you all really with me? Then 5% of salary for the relevant period. For how much time he stayed, how much percentage? 5%. As per the new Finance Act, this is an amendment. As you all know that the rates has undergone a change. Are you all really with me? In the last time we are having first 7 months, then 5 months concept and all was there. Now it has been removed. So you will be getting a question from RFA. Are you all really with me? And if that house property or apartment is situated in a place where population is more than 15 lakh, but up to 40 lakh, then 7.5% of salary for the relevant period. And population above 40 lakhs means 10% of salary for the relevant period. So the maximum perquisite now is only how much percentage? 10%. That is why If you have taken on lease, actual lease rent paid or payable, or 10% of salary, whichever is lower. This has undergone a change as compared to last time. Comfortable? Sir, if it is on hotel, you tell me, sir, which type of employees you will accommodate in hotel? Only CEO, CFO, top class. Are you really with me? That's why actual hotel rent paid or payable, or 24% of salary, whichever is, automatically the perquisite value will be more. Are you really with me? So can we, sir, consolidate the first perquisite, number 117 subsection 2, class 1 we are talking about, correct? Which is, sir, rent-free accommodation. Rent-free accommodation classified into two categories, unfurnished accommodation and I have not talked about furnished accommodation. We are talking about unfurnished accommodation can be provided to a government employee or non-government employee. Sir, unfurnished accommodation provided to a government employee, license be determined by the government. To a non-government employee, you have to check that whether the accommodation is owned by the employer, taken on lease, provided in hotel. Are you all really with me? If it is owned by the employer, you have to check that where he is owning, where the flat is. That is, it depends upon the population. Population may be less than 5 lakhs, less than 15 lakh, more than 15 lakh, up to 40 lakh, more than 40 lakhs. Comfortable? If the population is less than 15 lakh, then 5% of the salary for the relevant period will be the value of the perquisite. If the population is more than 15 lakh, up to 40 lakh, 7.5% of the salary for the relevant period. Sir, if the population is above 40 lakh, then the 10% of salary for the relevant period. Comfortable? My dear lovable students, sir, you are talking about salary. What is the definition of salary? This is the definition of salary. Salary means basic salary plus DA provided in terms of employment, plus bonus, plus commission, plus all taxable allowances. Plus all taxable. That means, my dear lovable students, here you should be very careful in examination. Sometimes they will say that, sir, children education allowance will be given. 500 rupees per month has been given by the employer to the employee. How much is exempted? 100 per month, up to a maximum of 2 children. So 100 into 2, assume that 2 children are there. So 200 rupees is exempted. That means how much rupees is taxable? This 300 per month should be counted for all taxable allowances. So in that allowances, what portion is taxable should be counted for the RFA calculation. I hope that you will take care of this point. So better calculate RFA at the end in the question. As a last point, you calculate RFA whenever you are doing salary, because this we have to finalize all the terms. Then only we can calculate the RFA. Comfortable, sir? Fine, sir. I understood, sir, what is the value for this unfurnished accommodation. Now, inside this, I am having cot, I am having fridge, I am having AC, I am having TV, I am having washing machine. All those things are there. Are you really with me? That's what, sir, furnished accommodation. First, just now we finalize value of the unfurnished accommodation, correct? Check that. Is this AC, TV, washing machine are owned by the employer or taken on lease? If it is owned by the employer, 10% of the original cost of the furniture. 10% of the, if it is taken on lease, means actual lease rent paid or payable, you will get the value of the what accommodation? Furnished accommodation. That's it. This, by here, my dear lovable students, 17 subsection 2 class 1 comes to an end, because this is rent-free accommodation. You will be getting some answer. Assume if the employee is paying 1000 rupees per month for the use of this furnished accommodation, then that should be reduced less any amount recovered from the, then you will get the taxable value as per 17 subsection 2 class 2, because it will become concessional rent, not rent-free accommodation. That is, if employee is not paying anything to the employer, it is an RFA. When employee is paying something, then it will become concessional rent as per 17 subsection 2 class 2. Comfortable, sir? Now, accommodation provided on account of transfer. For example, one employee is transferring from one place to another. At that time, some accommodation has been given by the employer. If an employee is provided with accommodation at the new place of posting, while retaining accommodation at the previous location due to what? Transfer. For example, from Chennai, I have transferred to Trichy. So, I already having a rent-free accommodation at Chennai. Now, I am in Trichy. I got a accommodation in where? Trichy also. I don't know whether Trichy will set for me or not. Are you all really with me? First 90 days, perquisite value will be based on the lower of the NSR2 accommodation. First 90 days, what they are saying that either we will take this accommodation in Chennai or we will take this accommodation in Trichy. Whichever is lower will be taxable amount. Are you all really with me? Even after 90 days, if you are holding both the accommodation, after 90 days, perquisite will be charged for both the accommodation. Otherwise, you have to leave one place because you said that you have transferred to Trichia. You should only be in Trichy. You should not have accommodation in Chennai. If you are having, it both will be taxable. Sir, this concept, newly added concept, indexation benefit for RFA, like our capital gain. Even in salary chapter also, indexation benefit has been introduced. If the accommodation is continued to be provided to the what employee? So there is an accommodation, my dear lovable students. This accommodation last year we provided, even next year also to the same employee we are providing. Sir, for more than 1 year, perquisite value of the subsequent year shall not exceed. That means in year number 2. Okay, the value of perquisite should not exceed the value of the first previous year. That is last year, what was the RFA amount? Divided by CAI of the first year into CAI of the current previous year. I will tell you what will happen. Sometimes in the first year, my taxable perquisite may be 10,000 rupees RFA. But in second year, I would have promoted. I would have got good job. My salary would have been shoot up like anything. Are you really with me? Because of that, 10% of salary will be huge. What government is saying that we don't want that much as perquisite. We will take last year, how much was the perquisite? 10,000. Divided by CAI of the last year into CAI of the current year will be the taxable perquisite. So you have to calculate actual perquisite in the current year or indexed perquisite based on the last year. Whichever is lower will be the taxable perquisite in the second year. Are you able to appreciate? First year means previous year 23-24 because our year is 24-25. Last year is the first year or the previous year in which the accommodation was provided to the employee, whichever is later. So if an employee got RFA in our previous year 24-25, then that is the first year. First year, whatever we have to calculate, that is the answer. But if he is continuing that, then 25-26, you have to calculate the actual calculation, sir, as per the provisions, or you have to index it based on 24-25, whichever is lower. Are you all really with me? That's it with regard to RFA, my dear lovable students. We have done with both RFA and the furnished accommodation. Can I quickly have a recall of this, what we have discussed? We are, sir, revising perquisites. Perquisite classified into 3 categories. Taxable in case of all employee, exempted in the hands of all employee, taxable only in the hands of specified employee. Now look at the table, you will be having a better understanding, man. 17 subsection 2 class 1 is rent-free accommodation. Comfortable? Yes, sir. 17 subsection 2 class 2 is what rent? Concessional rent. That's what we have done now, right? 17 subsection, that's why I have given that rent-free accommodation or concessional rent. Classified into 2 categories, unfurnished accommodation and furnished accommodation. Right, sir? Unfurnished accommodation can be provided either to a government employee or other than government employee. If it is to a government employee, license be determined by the government. Other than government employee, classified into 3 categories. Accommodation owned by the employer, taken on lease, provided in hotel. Accommodation is owned by the employer. You have to check where it is owning, whether the population is less than 15 lakh, more than 15 lakh, up to 40 lakh, more than 40 lakh. If it is less than 15 lakh, 5% of the salary, 7.5% of the salary, and 10% of the salary for the relevant period. Are you all really with me? If it is taken on lease means actual lease and paid or payable, or 10% of the salary, whichever is lower. If it is taken on a hotel means actual hotel and paid or payable, or 24% of the salary, whichever is lower. Then what is the definition of salary? Salary means basic salary plus DA, provided in terms of employee plus commission plus bonus plus all taxable allowances. Are you all really with me? That's it. We finalize the value of the unfurnished accommodation. Now I'm coming to the value of the furnished accommodation. For that furnished accommodation, you have to check that value of the unfurnished accommodation you already calculated. Now inside the house furniture is there. You have to check that whether that furniture is owned by the employer or taken on. If it is owned by the employer, 10% of the original cost of the asset. Here you should be very careful. In examination, they will give the WDV. Don't take the WDV. Are you all really with me? Then add actual lease rent paid or payable. You will get the value of the furnished accommodation less any amount recovered from the employee. Then it will become concessional rent. You will be getting the value of the taxable perquisite. Are you all really with me? That's it with regard to the second perquisite. Also, I'm moving into the third one, man. Sir, actually 17 subsection 2 class 3 is not taxable in the hands of all employee. It is fully exempted in the hands of all employee. That I will be covering in the next area. So coming to obligation of an employee. What of an employee? For example, my dear lovable students, amount paid by an employer in respect of any obligation which otherwise would have been payable by the employee. For example, in your home, you are appointed a domestic servant. You appointed a staff for your household purpose. Actually, you appointed. I have not appointed. So you are the person who are supposed to pay the salary. But that salary I have paid. Then you are a specified employee or non-specified employee. It will be treated as a perquisite. So, amount paid by whom? Employer. In respect of any obligation which otherwise would have been payable by employee. If I don't pay that maid salary, you are supposed to pay. Otherwise, maid will kill you. Correct? then it is your obligation, but I paid. So your employee's obligation has been paid by will be treated as perquisite in the hands of the. So if a domestic servant is engaged by employee and employer reimburses the salary paid to servant, it become an obligation which the employee would have discharged even if the employer did not reimburse the same. This perquisite will be covered by 17 subsection 2 class 4 and will be taxable in the hands of all employees, whether you are specified employee or non-specified employee. Now, sir, your life insurance premium I am paying. Whose life insurance? Employee's life insurance premium. Sir, I can pay the medical insurance premium, not the life insurance premium. So, assurance on the what of the assessee, then it will be treated as perquisite in the hands of the. So, amount payable by an employer directly or indirectly to effect an assurance on the life of the assessee or effect to a contract other than. That means these and all are allowed. These and all are allowed. This and all will not be treated as perquisite. Payment made to RPF. Yes, you can contribute to RPF up to 12% of salary. Do you know what? Approved superannuation fund. That is allowed. Are you really with me? 1013 at the time of withdrawal. Deposit linked insurance fund established under the Coal Mine Provident Fund and Miscellaneous Provisions Act. Employee Provident Fund and Miscellaneous Provisions Act. To these places and all employer can contribute. But employer cannot pay life insurance premium of the employee. If that is the case, it will be treated as perquisite in the hands of the. But these and all allowed. Look at exception, man. There are schemes like group annuity scheme or employee state insurance or fidelity insurance scheme. On this and all, if an employer contribute, means it will not be treated as perquisite. Such payment are not regarded as perquisite. Are you all really with me? Next one, man. Sweat equity shares. That is next perquisite. I am the employer. You are the employee. I may give sweat equity share. Sir, sweat equity share will be given to the existing employee. If you have to go and purchase from market, you are supposed to pay 500 rupees, my dear lovable students. But since I am giving you sweat equity share, only 200 rupees you are liable to be paid. So there is a benefit of 300 rupees. Look at here. Specified security or sweat equity allotted or transferred by whom? Employer to the employee. The value of any specified security or sweat equity allotted or transferred directly or indirectly by the employer or former employer free of cost or at a concessional rate to the assessee. So because of the sweat equity share, if you are getting any benefit, that difference will be treated as perquisite. You have to check what is the fair market value. For example, for one share, 500 rupees is the fair market value. But you have only 200 rupees to the employer. That means 300 rupees will be the value of taxable perquisite. Comfortable? To value that, we are having Rule 3 sub Rule 8, which is saying that valuation of the specified security or what equity share, sweat equity share. That is, you have to check that employer has given share to you. Is that share has been listed on stock exchange or not listed on stock exchange? You have to check. You have to check that whether it is listed on stock exchange or not listed on. If it is listed on stock exchange, you have to check that whether it is listed only in single exchange or multiple exchange. Only in one stock exchange it is listed. Simple. You have to take the average of the opening and the closing price. Are you really with me? No, sir. Multiple stock exchange it has been listed, sir. Then average of the opening and closing of the exchange with the what volume? So out of 5 stock exchange, you check that in which stock exchange highest volume is there. Okay, fine. Idoda opening and closing divided by 2, average you have to take. Sir, it is listed, sir, but it has not been trading, sir. That particular share or security is not traded, sir. Then I can't take the average on a particular day. Then if it is on a single exchange, my dear lovable students, closing price on the immediately preceding date. Closing price on the multiple exchange means same. Closing price on the immediately preceding date with what volume? Highest volume. Are you all really with me? Sir, share is not at all listed on the recognized stock exchange, sir. How fair market value I will calculate, sir? Nothing. Value of share determined by the what banker? You appoint merchant banker and ask him to save on fair market value. That you have to take as the fair market value. Or on the specified date. What is specified date, sir? Nothing, man. The date of either exercising the option. Either on the day of exercising the option. Or date up to 180 days prior to exercising the option. Sir, if this is the exercising the option, you can go back how many days? 180 days. So one line summary. Rule 3 sub Rule 8 is saying that is the sweat equity shares are listed equity shares or unlisted equity shares. If it is unlisted means straight away call the merchant banker on the what date, man? Specified date. Ask him to find out the fair market value. Otherwise, sir, you have to check that whether it is trading or not trading. If it is trading, you have to check that whether it is on single exchange or multiple exchange. If it is single exchange, average of opening and closing. If it is on multiple exchange, average of opening and closing with if it is non-trading, my dear lovable students, again check that, sir, whether it is single exchange or multiple exchange. If it is single exchange, closing selling price on the immediately preceding previous day. Sir, multiple exchange means closing selling price on the immediately preceding previous day with a high volume. Are you all really with me? This is what with regard to sweat equity share. If you go through this question, you will be having wonderful control over that. Come on. Sir, now valuation of specified security not being a what share in a company. I got sweat equity, but not the, sir, shares. I am having specified security. I am having what, man? Simple. If you got specified security other than shares, like debenture you got, see, you call merchant banker on the what date, man? Specified date. Second option. Sir, what is the specified date? Date of either exercising the option or any day up to 180 days prior to exercising the, and this will be taxable. The tax of perquisite of specified security and sweat equity is payable in the year if the option is exercised. When you are exercising the option in that year, the difference between 500 minus 300, the difference of 200 will be treated as perquisite. Are you all really with me? But if you are an eligible startup, if the shares or security are allotted by whom? Eligible startup, perquisite is taxable at the earliest of the following. That means after how much months? 48 months from the end of the relevant assessment year. That means no, don't tax in the year of exercise. After the end of the relevant what year? Assessment year. Within how much months? 48 months. In which sale of such security, but within this 48 months you sold the security. Or employee ceased to be employed by the employer. Within 48 months you quit the job. Then whichever occurs first at that time taxability. General, simple. Generally, sweat equity share will be treated as perquisite in the year of exercising the option. But if the assessee is a eligible startup, then romba simple. Just now I started. If I include it as a perquisite, I don't have money to pay the tax. So government said that defer it. You can take a leverage of 48 months from the end of the relevant assessment year. But if that employee stopped the job within 48 months, that day the perquisite will accrue. Or you sold the share itself, then that day perquisite will accrue. Whichever is earlier is what the taxability. Are you all really with me? That's it with regard to 17 subsection 2 class 6. So we are talking about perquisite, my dear lovable students. Perquisite classified into 3 categories. Taxable in the hands of all employee, exempted in the hands of all employee, taxable only in the hands of specified employee. Sir, first one. First we are talking about it is taxable in the hands of what employee? All employee. Whether you are specified employee, non-specified employee, these 8 items will be taxable. Number 1, rent-free accommodation. Are you comfortable? As per 17 subsection 2 class 1. Then 17 subsection 2 class 2. What rent? Concessional rent. 17 subsection 2 class 4. It is actually the obligation of the employee met by the employer. And 17 subsection 2 class 5. Class 5 life insurance of the employee paid by the, and 17 subsection to class 6 either specified security or what equity share? Sweat equity share. Sir, sweat equity share means listed, unlisted. Unlisted means merchant banker. Specified security always merchant banker. Are you all really with me? Coming to the next one, man. Very important 2 parts, my dear lovable students. 17 subsection to class 7 and 17 subsection to class 7A. Actually, government is having so much gand. That's why they have introduced these 2 sections into the act. I will tell you. To the recognized provident fund, sir, can employer can contribute? Yes, sir. To a, sir, first one recognized provident fund, then statutory provident fund, then public provident fund. Sir, can an employer contribute to statutory provident fund? Yes, sir. How much an employer can contribute to statutory provident fund? How much an employer can contribute to statutory provident fund? Limit, I am asking. Sorry. To the recognized provident fund, how much an employer can contribute? 12% of salary. Like that, no limit is there for recognized provident fund. Correct? Even employer can contribute 100% of salary to the recognized provident fund. Correct? Yes, sir. And it will be fully exempted. It will not be treated as perquisite in the hands of the employee. It will not be treated as salary as per 17 subsection 1. So this loophole, people start utilizing it. Employer started contributing to recognized provident fund without limit. So government came with the overall cap. They are saying that if an employer is contributing to a recognized provident fund, that's what recognized provident fund, or notified pension scheme under section 80 CCD plus approved superannuation fund under section 1013. If the total employer's contribution, to this fund exceeds 7,50,000 in a year, then that extra will be treated as perquisite. That is, shall be exempt up to a maximum of 7.5 lakhs per annum. Any excess shall be taxable as perquisite under the head salary. So, employer can contribute to the recognized provident fund, to the notified pension scheme under section 80 CCD and approved superannuation fund under section 1013. But RPF plus NPS plus SAF should not exceed 7,50,000. Are you all really with me? Further, annual accretion, sir, earned on such contribution in excess of how much lakhs also? Taxable portion shall also be taxed as perquisite in the hands of employees. That means, for example, totally 9 lakh has been contributed by the employer to all the three funds. Classified in the how many category? Two category. 7.5 lakhs and 1.5 lakhs. This 7.5 lakhs, no perquisite. But over and this 1.5 lakhs, this 1.5 lakhs will be perquisite. This 1.5 lakhs will be, and also this 7,50,000 will give interest, correct? That will not be treated as perquisite. But this 1.5 lakhs will generate interest. That will also be treated as perquisite. Are you all really with me? So, over and above 7.5 lakhs, both principal will be treated as perquisite and interest portion also will be treated as perquisite. Now, sir, I want summary, sir, because their RPF terms are now changing. Because when I study the table, you said that employer can contribute to only up to 12% of salary, you said. Now you are saying that percentage should not exceed 12%. Hello, sir. And also the amount should not exceed 7 lakh. I want a conjoined reading, sir. Look at here, man. Employer's contribution. Who is also contributing? Employer also contributing. Then is actual contribution. That is the first contribution. If the contribution is within up to how much lakhs per annum? 7.5 per annum, which is sum total of recognized provident fund, approved superannuation fund and notified pension scheme should not exceed 7,50,000. Are you all really with me? This is the total amount check. Now percentage check, it will be exempt up to how much percent of salary. Any excess contribution will be taxable as perquisite. That means employer's contribution overall should not exceed 7,50,000 and also percentage wise it should not exceed 12% of salary. Now from this employer's contribution interest will come. If the contribution is falls up to how much lakhs? 7.5 lakhs, then exempt up to how much percentage per annum? 9.5% per annum of the interest. Any excess shall be taxable. That means practically think you are an employer. You are contributing to recognized provident fund for an employee. Hello, sir. Put together recognized provident fund plus approved superannuation fund plus notified pension scheme. You have contributed only how much? 7,50,000. Correct? No problem. It is allowed. You check or you ask a question that inside this how much rupees is the amount contributed to RPF. You are saying that 3 lakh. Okay, sir. Fine, sir. Allowed, sir. Hello, sir. Ensure that this how much lakh? 3 lakh does not exceed 12% of salary. Does not exceed? For example, if the 12% of salary comes to only 2,80,000 rupees, how much extra contributed? 20,000. This will be taxable. Are you able to appreciate what I am talking? Now, sir, if you, my dear lovable students, employer contributed 9 lakh to the RPF, that's itself, there itself gone. That is, this 9 lakh should be classified into two categories, 7.5 lakhs and 1.5 lakhs. This 1.5 lakhs will be taxable. And this 7.5 lakhs, check, sir, in this aggregate of 7.5 lakhs, how much he contributed to RPF? You got the answer as 3 lakh. So, check, is this 3 lakh exceed 12% of salary? No, sir. 12% of salary only coming to 2.8 lakh. Then this 20,000 will be taxable. Are you all really with me? Now, sir, from that RPF, this 7.5 lakhs will generate interest, and also 1.5 lakhs will generate interest. This 1.5 lakh interest will be fully taxable. Comfortable. If this 7.5 lakh generated interest of 12%, up to 9.5% is exempted. And over and above 9.5%, come to 2.5% is taxable. So, limit kulle limit, current ke current. Are you all really with me? Able to appreciate what I am talking to you? Coming to the own contribution. Okay, sir, I have done with the employer's contribution. Now, I am going to talk about my own contribution. Simple. If I contribute, it can be allowed as a deduction under 80C if I travel through the optional tax regime, subject to a maximum of 1,50,000, because under ATC maximum deduction only 1,50,000, right sir? Now I am getting interest from the contribution. If the interest is up to 2.5 lakhs or what, 5 lakh, as the what may be, then exempt up to 5% per annum, and any interest acceptable is taxable. You have to check that whether only employer is contributing or employee also contributing. Only employee contributing, limit is 5 lakhs. Are you really with me? Employer also contributing, limit is 2.5 lakhs. Are you remembering the discussion? If for example 6 lakhs contributed, only employee contributing, up to 5 lakh rupees interest is fully exempted, provided that interest percent is up to 9.5%. Any interest accrued or arisen on the extra 5 lakh rupees, that is 1 lakh rupees, is fully taxable, comfortable. That's it, my dear lovable students. 17 subsection to clause 7A, annual accretion. Now, that extra taxable portion will be taxable. For example, 6 lakh rupees employee contributed, 1 lakh rupees interest will be taxable. How to find out that? That will be TP is equal to PC by 2 into R plus PC1 plus TP1 into R. This is a ICAI illustration which is there in question number 1. This I am not revising in the marathon part. If you want, I can update the detailed full discussion of this video in the YouTube, because this will take time to revise, my dear lovable students. I have done perfectly in my regular lectures. If you want, I can upload that as a separate video. Coming to the next one, man, sir, concessional loan to the employee as per Rule 3, Sub-Rule 7, Clause 1. Sometimes employer can give, sir, concessional loan to the what? Employee. If an employee is going and taking loan at SBI, he is supposed to pay 10%. But employer has given the loan at 6%. What is the gap? 4%. This will be treated as perquisite in the hands of the... So, concessional loan, my dear lovable students, housing or vehicle loan, and what loan? Other loan. Sir, these are the calculation. When you are calculating, the gross value of perquisite is calculated equal to the interest applied to the maximum outstanding monthly balance. That means you have to check how much is the maximum outstanding what balance, man. Only on the maximum outstanding monthly balance, we have to calculate the perquisite. Are you all really with me? If the interest is less than SBI rate, that is SBI is charging 10%, but the employer charged only 6%. So, employer rate is less than the, then interest at SBI rate on maximum monthly outstanding balance. Less interest paid by the employee shall be the perquisite. But this will not be applicable for exception 1, exception 2 and exception 3. Medical loan for disease specified under Rule 3. Loan itself taken by employee for some medical purpose. Leave it. Loan does not exceed 20,000. Loan amount does not exceed 20,000. Leave it. If interest charged by the employer is equal to, that means employer is also charging 10%. Or employer is charging 12%, then it is not a taxable perquisite. Are you comfortable? That's it. You can go through the questions for your understanding. Now, free transportation accommodation, the next perquisite. Employer is giving free transportation. You can go from one place to another. Travel and accommodation. Then, when an employer incurred the holiday expense other than leave travel concession. Leave travel concession, 10 subsection 5 provisions will be applicable. Correct? Of an employee and their family, it is considered as taxable perquisite. Because, sir, employer is giving some benefit to the employee. Right, sir? Sir, from here onwards, it is very simple, sir. Because it is nothing, man. Any expense incurred by the employer, less any amount recovered from the, will be the value of the perquisite. The name alone will change. Facility to particular employee. If facility is maintained by employer and is not available to all the employee, gross value of perquisite shall be value of such facility offered by other agency to the public. For example, I am giving this benefit only to particular class of employee. Then you have to check that, sir, employer is providing, if any other agency is providing at what rate to general public, the same will be treated as perquisite in the hands of the employee. So, transportation of goods or passenger free or concessional rate provided by employer in that business other than railway and airline, value at which it is offered to public. You have to check that at what value it is offered to the, less any amount recovered from the employee. Are you all really with me? Sometimes employee may go for official tour. It is not a perquisite because it is on account of employment. Expense for any family member traveling with employee on official tour will be a taxable perquisite. Official tour means only employee should travel, not employee, wife and what kids. If wife and kids are also traveling, their transportation cost is incurred by the employer, then it will be treated as perquisite. If an official tour extend into a what? Holiday, only the expense for the extended stay are taxed. Sir, what is the one line summary of the entire discussion for all the remaining perquisite. One line summary is amount incurred by the employer or value offered to the what? Public. Less any amount recovered from the employee will be the value of the taxable perquisite. Now from here onwards, name will change. Now free meals during what hours? Office hours. Employer is providing free meals. Food and non-alcoholic beverage provided to employee by the employer are typically taxable generally. But this is one exception, man. Actual cost to the employer not taxable up to how much per meal? In a day, 1 day, 50 per meal, it is not taxable. Less any amount recovered from the employee will be the value of perquisite. Right, sir? Sir, meals served at remote work site or offshore installation is fully exempted. Remote work site means 50 per day and all. Don't check. Fully what? Exempt. Very important point. Students will make mistake here. This 50 per meal is applicable only for optional tax regime. Food and non-alcoholic beverage provided to employee during office hours is fully taxable under the, if it is default tax regime, 50 per day concept will not be applicable. Are you all really with me? Next one, gift. Very important, most repetitive part in examination. Sir, if any gift, voucher, token or other gift in cash or convertible into money has been given by the employer, and if the value of the gift exceeds 5,000, then it is fully taxable. Sir, if the aggregate value of gift during the previous year is less than 5,000, then it is fully exempted. In excess of 5,000, then it is fully taxable. In exam, how question will come? No, they will say that 10,000 rupees gift has been given by employer to the employee. This entire 10,000 is taxable. And ICAI, in notes, they are writing that alternate view. Only in excess of 5,000 is taxable. So 10,000 minus 5,000, only 5,000 is taxable. So in the main answer, write the entire 10,000. And in the sub answer, write the only 5,000. Are you all really with me? Credit card expenses. Sir, employee's credit card payment. Who is paying? Employer is paying. It's a benefit to the employee. Yeah. Then actual cost to the employer less amount recovered from employee incurred solely for official purpose will be the taxable perquisite. Are you all really with me? Club expenses. Employee is going for club for koothadikkaradhukaga. For that, employer is incurring the cost. So actual cost to the employer less any amount recovered from the employee will be the taxable perquisite. But it is having exception. Club membership provided exclusively for office purpose are not taxable. Just for office purpose, club facility has been provided. Or initial fee paid for acquiring corporate membership in a club is not taxable in the hands of the employee. First time to get the corporate membership means it will be in the name of the company, not in the name of the employee. So it will not be treated as perquisite in the hands of the employee. Are you all really with me? Now, movable asset is provided by the employer to the employee. Movable asset can be provided either for usage or for what? Transfer. If it is for usage, means 10% of the actual cost of such asset or higher charges paid by the employer. You have to check that. For example, there is a bike, that bike or TV or sir, laptop, mobile phone, some asset the employer is giving for usage to whom? Employee. You have to check that that asset is owned by the employer or sir, taken on higher charges. If it is owned by the employer means 10% of the actual cost of such asset. If it is taken on lease, higher charges paid by the employer. But this provision not applicable to laptop, computer and mobile phone will be tested in examination at various places. They will say that employer give laptop, employer give computer, employer give mobile phone to the employee. Sir, usage provision will not be. Then very important part, transfer provision will be tested in examination, man. Sir, sometimes, sir, employer may sell the asset, which may be motor car, which may be computer and other electronic gadgets, which may be other asset. If it is motor car, 20% WDV. If it is computer and other electronic gadgets, 50% WDV. And if it is other asset, 10% SLM. What you are supposed to do now? Sir, this asset would have been purchased by employer. You have to see the cost of the asset. You have to see the original cost of the asset. From that, reduce the depreciation for the completed years. From that, reduce the depreciation for the at the percentage of either 20% WDV, 50% WDV or so 20% WDV or 50% WDV or 10% SL. Based on this, my dear lovable students, you have to reduce the depreciation. Then you will get the value of the asset. Value of the, you check that whether this value has been paid by the employee or not. If employee has not paid this value, for example, 1,60,000 rupees answer you are getting here. But employee has paid only 1,20,000. What is the difference? 40,000. This will be treated as taxable perquisite. You have to understand one thing. The key point for your examination is depreciation will be provided only for the completed years. What years, man? That's it. With regard to the dash and the dash usage and transfer. Usage means you have to check that 10% of the original cost of the asset or higher charges paid by the employer. If it is transfer, sir, you have to check that what asset has been transferred, whether it is motor car, computer and other electronic gadgets, other asset. If it is motor car, 20% WDV, computer and other electronic gadgets, 50% WDV, other asset, 10% SLM. Are you all really with me? Coming to any other perquisite not mentioned above, not like a club, not like a credit card, not like gym, fitness, any other thing. One line summaries, actual cost to the employer less any amount recovered from the employee will be the value of the taxable perquisite. That's it. The biggest list comes to an end. If you want, we can go through once again the list and confirm that whether you understand one thing. Sir, we are talking about what perquisite are. Perquisite is covered under 17 subsection 2A, which is classified into 3 categories. Taxable in case of, exempted in hands of, taxable only in the hands of, taxable in the hands of all employees, my dear lovable students. 17 subsection 2 class 1, which is RFA. Are you clear? 17 subsection 2 class 2 concessional rent. From the RFA, reduce any amount recovered from the employee, you will get the answer. Are you able to appreciate? 17 subsection 2 class 4, sir, any employee's obligation met by the employer. 17 subsection 2 class 5, any life insurance paid by the employer. 17 subsection 2 class 6, specified security or sweat equity shares. That valuation we have gone through. 17 subsection 2 class 7, sir, employer's contribution to the recognized provident fund, approved superannuation fund or notified pension scheme under section 80 CCD exceeds 7,50,000, that excess principal will be taxable. 17 subsection 2 class 7A, not only that excess contribution but also the interest on the excess contribution will also be treated as perquisite. 17 subsection 2 class 8, interest free or concessional loan we discussed. Traveling, touring and accommodation we discussed. Free or concessional food and non-alcoholic beverage we discussed. Gift voucher, what is the limit for gift voucher? 5,000. Then free or concessional food 50 per meal, only under optional tax regime, not under credit card expense we discuss, club expenditure we discuss, use of movable asset we discuss, transfer of movable asset, use of movable asset either 10% of the original cost of the asset or higher charges paid by the employer. Transfer of movable asset depends upon the asset, whether that asset is a motor car, computer and other electronic gadgets, other asset. Motor car 20% WDV, computer and other electronic gadgets 50% WDV, other asset 10% SLM, and other benefit or amenity means which is not covered above. With this, the first part, taxable in the hands of all employees, comes to an to exempted in the hands of all employees. There are certain perquisite, my dear lovable students, which are exempted in the hands of all employees. Whether you are a specified employee, non-specified employee, whoever it may be, this will be exempted. Number 1, my dear lovable students, this is the list of exempted. Big list is there, but not this much depth and all there. Just you have to understand that these and all are exempted. Number 1, telephone. This provision will not be applicable to telephone, computer and laptop. Sir, telephone or mobile service provided at the employee's residence are tax free, but telephone allowance is always taxable. Telephone allowance means giving cash, but telephone means giving the phone to the employee. Are you understanding? Next one, transport facility. Transport facility provided by an employer involved in passenger of what? Goods or transport is exempted. For example, I am having bus. I am providing bus service to an employee. Exempted. Perquisite allowed outside India by government. We already discussed 10.7. 10.7. Foreign allowance. Basically, it is exempted. Employer's contribution to staff group insurance scheme. For 10 people, for entire 10 people, I am paying group insurance scheme. It is exempted. Personal accident insurance. Employer is not paying the life insurance. Employer is paying the personal accident insurance. It is exempted. Employer is incurring refreshment, not free meals. Tea, coffee is giving, fully exempted. Subsidized lunch, we already discussed. Subsidized meals up to how much per meal? If the employee opt out of default tax regime, that means under default tax regime, this 50 rupees concept is not there. Are you all really with me? Recreational facility, enjoy, like what? General recreation or club facility provided to employees are exempted, provided they are not restricted to few selected employees. That means in my Office itself, one play area is there. If you are bored by doing work, go and have some chess, half an hour, come back. It will not be treated as perquisite. The amount spent on the training of the employee, because it is related to employment, hence it will not be treated as perquisite. Sum payable by employer to a RPF or approved what fund? Superannuation fund. It is exempted up to 7.5 lakhs. Correct? That's what they are saying. Contribution to RPF, superannuation fund or deposit linked fund are tax free up to what limit? Specified limit. Leave travel concession are exempted provided if it is covered under 10 subsection 5. Medical facility within specified limit are exempted because amount prescribed by RBI are exempted. That will be discussing. Are you really with me? Rent-free official residence. For example, judges of High Court and Supreme Court enjoy exemption for official residence under certain conditions. If you are judge of High Court or Supreme Court, if you are getting residence, it is exempted. Conveyance facility to High Court or Supreme Court judge. For High Court or Supreme Court judge will come and go. Conveyance, that is fully exempted. Comfortable, sir? These are, sir, fully exempted perquisite, whether you are specified employee or. But in that one detailed discussion, we have to make medical benefit. Sometimes employer may provide medical facility to the what employee. Medical benefit means medical treatment may be either in India or outside India. You have to check, right? If the medical treatment is in India, that is, I am an employer man, I am providing to employee man. Hello, sir. What medical treatment I am providing? That medical treatment can be provided either in India or, if it is in India, you check whether it is 3 places. Like employer hospital, that means hospital itself is owned by the employer, then it is fully exempted. Government hospital, that means employer is providing medical facility in a government hospital, fully exempt. Or CIT, Commissioner of Income Tax approved hospital, it is fully exempted. Other than 3 places, fully taxable. But medical facility is provided where? Outside India. That means in order to go outside India, you have to spend a travel cost. There you have to stay. Sir, not for seeing film you are going there. For treatment only you are going there. That's what treatment cost. To go there, travel cost will come. And to stay there, stay cost will come. Sir, travel cost is fully exempted if the gross total income is less than or equal to. If your gross total income exceed 2 lakh, travel cost is fully taxable. If the gross total income is less than 2 lakh, fully exempted. Are you really with me? Whereas these two costs, stay cost and the treatment cost, is exempted up to an amount permitted by RBI. You spend 75k. Sir, but RBI said that 65k is exempted. Then the remaining 10,000 is taxable. Are you all really with me? Yes, sir. That's it with regard to that. Sir, for whom and all, employer can provide medical facility either for the employee or for the family. What is family? Spouse and children will form part of family. Wholly what or not. Whether they are dependent or not. But part 2, parents, brothers and sisters will be treated as family if they are wholly dependent. That means employer cannot pay life insurance, but employer can pay, sir, medical insurance. These are tax free. Group medical insurance is tax free. Medical insurance premium paid under 80D is tax free. Premium on accident insurance policy, because it is a responsibility of the employer to take care of the employee. That and all are tax free. Are you all really with me? This is what the second, sir, category of the discussion. My dear lovable students, we are moving into the last slot, which is taxable only in the hands of specified employee. Yes, as we discussed that, perquisite classified into 3 categories, which are the number 1, taxable in the hands of all employees. Number 2, exempted in the hands of all employees. We are moving to the third part, man. Taxable only in the hands of all specified employees. That means these perquisite like motor car, sweeper, gardener, watchman or personal attendant, or facility of gas, electricity, water provided by employer, or free or concessional education facility, free or concessional ticket. These 5 perquisite will be taxable only in the hands of specified employee. Question arises. First, who is specified employee, sir? Director of a company is a specified employee. Any employee who is having a voting power of more than 20% is a specified employee. If your monetary salary per annum is 50,000 more, then you are a specified employee. Only these guys are specified employee. Generally, for the time being, every employee is a specified employee, because in a year, everyone will be getting more than Now the first perquisite I'm moving is motor car, which is rule 3 sub rule 2. Number 1. We are having 3 circumstances. Quickly go through all the cases. Number 1. Car is owned by the employer. Who's owning the car? Employer. And expense also met by the employer. That means full it is by the employer. It is used only for what purpose? Official purpose. There is no perquisite at all because there is no personal benefit to the employee. Come on. Car is owned by the employer and expenses are also met by the employer, and that car is only used for the personal purpose. Full perquisite is there. Correct? Since a car is owned by the employer, it has not been taken on higher charges. 10% of the original cost. 10% of the. If it is a rented car, then actual rent paid or payable by the employer will be the perquisite. And he has to put petrol. That's called as running expenses. Add actual expenses incurred by the employer. That means if the car is owned, then 10% of the original cost of the car. Or actual rent paid by the employer. Add actual expenses or running expenses incurred by the employer, you will get the total cost. Correct? From that, less any amount recovered from the employee will be the value of perquisite. Are you able to appreciate? Third circumstance, man. Car is owned by the employer. Expenses are also met by the employer, but it is used for both official and personal. Then you have to check that whether the car is a small car or a big car. Sir, when you say a car is a small car, up to 1600 cc is called a small car. More than 1600 cc is called as big car. If the car is a small car, 1800 per month or part of the month. If the car is a big car, 2400 per month or part of the month. And if driver is there, irrespective of the car is a small car or big car, 900 per month for the chauffeur. Are you all really with me? Case number 4 we are going to discuss. Car is owned by the employer. Expenses are met by the employee. Till now, it was employer, right? And it was fully official, fully personal, partly official, partly personal. And now I'm changing the situation. It is employer and employee. If expenses are met by the employee, my dear lovable students, perquisite is only for car. Correct? If it has been used for both what and what, official and personal, you have to check that whether the car is a small car or, just now we said that up to 1600 cc small car and more than 1600 cc is. Then if it is a small car, 600 per month or part of the month, sir, or 900 per month if the chauffeur is provided. Basically 600 plus 900. If the car is a big car, 900 per month or part of the month and 900 rupees for chauffeur. That means for this car, only perquisite will come. You have to check that whether the car is a small car or big car. Small car means 600 plus 900. Big car means 900 plus 900. Are you all really with me? Next one, car itself is owned by the employee, but expenses are met by the employer. Expenses are met by the employer. Correct? So, perquisite will only for expenses. Correct? And if it is only official means, is there any perquisite? Because employer is putting the petrol. And that petrol has been used only for the no taxable perquisite. Next one. Car is owned by the employee. Expenses are met by the employer. Only what? Personal. Only perquisite will be car or expense. Expense. So the perquisite will be running expense reimbursed by the employer. Next one. Car is owned by the employee and expense by the employer. Petrol employer is putting both what and what? Personal and. Perquisite is actual expenses reimbursed. Actual expenses. Sir, amount. From that you have to reduce minus deemed value for what purpose? Official purpose. For example, 5000 rupees sir, petrol has been put by the employer. From that, if it is a small car, 1800 per month. And if it's a big car, 2400 should be reduced. Should be what? That means 1800 should be reduced. You will get some answer. That answer is the value of perquisite. Here, in the above case, look at here, man. Sir, if the car is owned by the employer and expenses are met by the employer, if it is official and personal, 1800 per month is the perquisite. 2400 per month is the perquisite. Correct? But here, if the car is owned by the employee, our expenses are only met by the employer. From the expenses incurred, you have to reduce 800. You have to reduce 2400. Then you will get some answer. That answer is the perquisite. Answer is there. Are you able to appreciate the difference? Yes, sir. And 900 per month if the driver is provided, chauffeur is provided. Are you all really with me, my dear lovable students? This is what car is all about. The next one, sir, service of sweeper, gardener, watchman, personal attendant, and expense are met by the employer. That means, sir, for these people and all, employer is paying the salary. That means actual expenses incurred by the employer less any amount paid by the employee will be the value of the what man taxable perquisite. You have to check that in the question whether these people has been appointed by the employer or appointed by the employer. If these people has been appointed by the employee, it is taxable both in the hands of specified employee because it is the obligation of the employee to pay those people, correct? If it has been appointed by the employer, because I am employer, you are employee, I appointed a sweeper in your house, then employer only appointed, no, then it is taxable only in the hands of what employee? It will not be taxable in the hands of all employee. That question will take care. Are you all really with me? Now, supply of gas to your house. I am supplying gas, electricity, water for household consumption met by employer, but connection in the name of the what? Employee. If connection is in your name, it is your obligation to make the payment. I am making the payment. Then you have to check that whether that gas and all procured from outside agency. Now, what amount has been paid by employer for that will be the taxable. If the resource are owned by employer himself, I myself are producing gas, then manufacturing cost per unit less any amount recovered from the employee. Only outside na actual expenditure incurred by employer. If it is inside na manufacturing cost per unit minus any amount recovered from the employee. Next one, what facility? Education facility. Sir, education allowance is different. Education facility is different. Education allowance 100 per month up to a maximum of 2 children. This is education facility. Case number 1, free or concessional education facility to members or household of expense met by the employer. Nothing, man. How much cost has been incurred by the employer? Less any amount recovered from the. This is common in all perquisite. Only one point you should note. If cost of education per child does not exceed how much per month? It is not taxable. That means 1000 per month per child is exempted. Hello, sir? If it exceeds 1000, it is fully taxable. And in ICAI, you are having alternate view also. For example, 1200 is there. First, they are treating entire 1200 is taxable. Then 200 is taxable. As note, you have to write in the answer. In other schools means simple cost of education, the similar institution, less, sir, any amount recovered from the employee. Are you all really with me? That means if any education facility has been provided by the employer, for employee, it is fully. For children, not taxable. If education provided in the employer's own school or tie-up institution or cost of education is less than or equal to how much per month? 1000 per month per child. Else it is fully. For other family members means cost incurred by any other person for similar education institution is taxable, no exemption. Only for children it is exempted. For wife, spouse, brother, sister and all it is taxable. Are you able to appreciate, sir? Sir, free or concessional tickets are providing by the employer. Then free or concessional ticket provided by employer engage in carriage of passenger or goods for personal journey will be considered as a benefit. What is the value of the benefit? Nothing. What is the value you are offered to the public? Let's say any amount recovered from the employee. But this provision is not applicable to airline or railway. Are you all really with me? These are the 5 perquisite which are taxable in the hands of the all type of employer, specified employer. That's it. Section 17 classified into 3 categories. 17.1, 17.2, 17.3. What is 17.1? Definition of salary. What is 17.2? Perquisite. That is classified into 3 categories. Number 1, perquisite taxable in the hands of all employee. Perquisite tax exempted in the hands of all employee. Perquisite taxable only in the hands of specified employees. Clarity with the topic? Coming to the last one, man, profit in lieu of salary. Actually, this income should be taxable under the head IFRS or PGBP. But what 17.3 is saying that this should be taxable under the head what? Compensation or termination. Any amount due or received on termination of employment. For example, suddenly you stopped your employment. Your employer have gave you 10 lakh rupees. Should be taxable under the head what? Salary. Compensation for changing employment terms. Sir, Munadi, the employment terms was something different. Sir, but after 1 or 2 years, you have changed the employment terms. For that, employer has given you some compensation. That will be taxable. It's a profit, no. If you are stopping your job, You are getting something. It's a profit in lieu of salary. Correct? You are changing the employment. That is a profit in lieu of salary. Payment from unrecognized fund. For example, payment from an employer or former employer from a provident or other fund are generally taxable to the extent does not consist of employee's contribution or interest on such contribution. This clause does not cover. If you are getting any unrecognized provident fund, we are having 4 provident fund. Number 1, statutory provident fund, public provident fund, recognized provident fund. Stop. If you are getting from these 3 places, this is not profit in lieu of salary. But if you are getting the money from the URPF, which is HSAL concept, correct? At the time of HSAL, it will be taxable under the head salary as profit in lieu of salary. That's what they are clearly mentioning. This clause does not cover. Are you getting gratuity? That is not profit in lieu of salary. Are you getting pension? That is not profit in lieu of salary. That are retirement benefits. Are you all with me? Are you getting retrenchment compensation under section 1010B? That is not profit in lieu of salary. Are you getting payment from PF or provident fund or public provident fund? Sir, it is not profit in lieu of salary. Payment from RPF, it is not approved superannuation fund. It is not HRA. It is not. That means if you are getting any amount from URPF, it is profit in lieu of salary. Sir, any sum from a keyman insurance policy received by an employee is considered part of salary income and it is fully taxable. If you are an employee, if you get any keyman insurance policy receipt, will be treated as salary income, and any other lump sum sum payment, any lump sum amount you received from an employer will be treated as profit in lieu of. That's what any lump sum received from employer either before beginning the employment or after its conclusion is taxable as salary income. Are you all really with me? Chapter salary classified into how many categories? Number 1, simple. Number 2, exemptions or retirement benefits. Section 10.5, 10.10, 10.10A, 10.10A, 10.10B, 10.10C, 10.10CC, 10.11, 10.12, 10.13, 10.13A, 10.14. Correct, sir? Next one, sir. Allowances. Actually classified into 3 categories. Fully taxable, fully exempted, partly taxable, partly exempted. Comfortable? That have to be again further classified into default tax regime and optional tax regime. Right. The next one. Perquisite. Classified into 3 categories, which are taxable in the hands of all the employee, exempted in the hands of all the employee, taxable in the hands of the specified employees. And the next category is the deduction. The last category we are going to talk. Sir, this again classified into 2 categories, optional tax regime and the, we are having 3 deduction, my dear lovable students: standard deduction, entertainment allowance and the what tax? Professional tax. If you are having income from salary as per 16 subsection 1A, the standard deduction statutory limit of 50,000, statutory limit of or amount of gross salary, whichever is lower, will be provided to employees. For example, if I am having 70k rupees gross salary, 50,000 can be claimed as standard deduction. If I am having 40k rupees gross salary, 40k can be claimed as standard deduction. This is under what tax regime? Because amendment they have made that under 16 subsection 1, a standard deduction of 75,000 will be allowed under the default tax regime. Very important point for this attempt, will be tested in the salary question. Are you all really with me? If you are doing salary question, sir, with regard to the default tax regime, my dear lovable students, a standard deduction of 75,000. So 16(1)(a) is changing for optional tax regime, and for optional tax regime it is 50,000 and default tax regime it is. Entertainment allowance cannot be claimed as deduction at all under the default tax regime. Professional tax cannot be claimed as deduction at all under the default tax regime. What is entertainment allowance? Entertainment allowance is applicable only to government employees. If you are a government employee, my dear lovable students, sir, you may get entertainment allowance. First, it has to be included in the gross salary. Then, statutory limit of 5,000, actual entertainment allowance received, 20% of the basic salary, whichever is lower, will be allowed as a deduction. Are you all with me? Now, professional tax under 16 subsection 3. Sir, professional tax on employment paid by employee levied under state tax shall be allowed as a. For example, sir, you will be getting gross salary, nothing. 17 subsection 1 elements are there. Like basic salary will be there, then DA is there, then pension is there, then gratuity is there. All that if you add means you will be getting gross salary. Yeah. From that gross salary, you can claim 16(1)(a). What? Standard deduction. Either 50,000 or 75,000 as there. Then 16 subsection 2, entertainment allowance, that is applicable only under the optional tax regime, not applicable under the, that too only for what employee? Then 16 subsection 3 comes to professional tax. Fine. Such deduction is available only on an actual payment basis. If you don't pay professional tax, don't claim it as a deduction. If it is payable, no deduction. And if employer pays professional tax on behalf of employee, then it will be first included in the salary as a and then allowed as a deduction. This is what the game of the optional tax regime. But coming to the default tax regime, my dear, standard deduction fully allowed up to 75,000 as per the amendment. Are you all really with me? Whereas entertainment allowance fully taxable and professional tax is fully taxable. This is a new amendment. Sir, in the standard deduction, instead of 50,000, you can claim 75,000. Are you all really with me? That's it, my dear lovable students. Chapter salary classified into how many category? This is what the one-line summary for your examination. Sir, deduction not allowed under default tax regime. This will be really helpful for you in exam. For example, sir, allowance for judges, salary and pension paid by UNO. Are you remembering FCAs? F stands for foreign allowance. It is allowed both under the default tax regime and the, whereas CAs are allowed only under the optional tax regime, will not be applicable under the, that's what they are saying, allowance for judges, compensatory allowance, allowance paid by UNO and the sumptuary allowance, rent-free office residence to judges, RFA to judges, leave travel concession 10.5, am I right, sir? HRA under section 1013A will be available only under the special allowance for 1014 except transport allowance for disabled people 3,200 per month. Are you remembering? Entertainment allowance and professional tax 16.2 and 16.3 are allowed only under the optional tax regime, will not be allowed under the 50 per meal, that is food 50 per meal will be allowed only under the, will not be allowed under the default tax regime. Chapter salary classified into 5 category. Number 1, number 2, exemptions or retirement benefits. Number 3, number 4, number 5, deduction. Number 5, deduction. Right, sir? 16 subsection 1A, 16 subsection 2, 16 subsection 3. In that 16 subsection 1A, 50 or 75,000 as the right, sir. Then 16 subsection 2, entertainment allowance which are applicable only under the optional tax regime, that too to the government employee, which is least of the 3. Statute limit of 5,000. Actual entertainment allowance received 1/5 of the basic salary. Are you all with me? 20% means 1/5. Both are one and the same. 20% or 1/5 of the basic salary. Whereas professional tax will be allowed as deduction only under the optional tax regime and will not be allowed under the, provided if you paid, really paid. But if employer has paid on behalf of the employee, first it has to be included as, then it can be claimed as a comfortable. Yes, man. After the quick revision of the salary, we will quickly try 3 questions from the past examinations. Mr. Balaji, employed as production manager in Beta Limited, furnishes you the following information for the year under 31/3/2025. Basic salary up to 10 for 50,000 rupees per month. So April, May, June, July, August, September, October. How many months? 7 months. So 50,000 into 7 comes to 3,50,000. Basic salary from 11. That means obviously if 7, this would be 5. Correct? Into 60,000. So 60,000 into 5 comes to. So the total basic salary should be 6,50,000. Comfortable? That's what basic salary 6,50,000. Can I proceed, sir? Salary is due and paid on the last day of every month. As per section 15 of the Income Tax Act, salary should be taxable at due or receipt, whichever is earlier. So since it is on the last day of every month, it will be taxable at the appropriate time. DA 40% of the what salary? Basic salary. What is the total basic salary? So 6,50,000 into 40% comes to 2,60,000 is the DA we have done with the second part. Bonus equal to 1 month salary paid in October. October means number? No, number, month number 10. On 10th, what is the monthly salary? 50,000. Plus, sir, DA applicable for that month. Throughout the year, DA is 40% only. Correct? So, it is a 40% of 50,000. 20,000. So, 50 plus 20,000 comes to 70,000 is the bonus. Are you all really with me? Contribution of employer to RPF. Can employer contribute to RPF? On employee at 16% of basic salary. No. He can contribute only. That means salary means basic salary plus DA if provided in terms of employment plus commission as a fixed percentage of turnover. Correct, sir? My dear lovable students, sir, basic salary is 6,50,000. Is there DA? Yes, sir. 40%. Question did not say that. It is forming part of the retirement benefit. So put a dash. There is no commission. So 50,000. So we can understand that salary is equal to basic salary. Simple. Then the employer can contribute only 12%, but he contributes 60 extra, 4% extra. So 6,50,000 into 4% comes to 26,000 will be treated as salary as per 17 subsection 1. Are you all really with me? That's what, my dear lovable students, 26,000 employers contribution to RPF in excess of 12.5% of 12% of salary, which come to 4% of 6,50,000. Can I proceed, sir? Professional tax paid 2,500, of which 2,000 was paid by the employer. First, that 2,000 has to be treated as perquisite. That's what professional tax paid by the employer is 2,000. Then, if you are traveling through the optional tax regime, you are entitled to claim deduction under 16 subsection 3. Correct? Compute the salary income chargeable tax in the Mr. Balaji. For the assessment year 25-26, assume he has not opted for the provision of 115 BAC. That means he is traveling through the. So 16 subsection 3, 2,500, it can be claimed as a deduction. Facility of laptop, computer was provided to Balaji for both official and personal use. This is usage provision. This provision is not applicable to computer, laptop and mobile. Are you remembering? Cost of laptop, nothing will be taxable. Computer, nothing will be taxable. So facility of laptop and mobile, nothing will be there. No taxability. Can I proceed? Motor car owned by the employer. Cubic capacity exceeds 1.6 liter. Small car, big car. Provided to employee from 111. 111 means 11, 12, 1, 2, 3. So the relevant period is only for both official and personal. Repair and running expense put on dustbin, not required, were fully met by the employer. That is relevant. That is, car is owned by the employer. Expense are also met by the employer. The motor car was self-driven by the employer. Means there is no chauffeur. Since the car is a big car, 2,400 per month will be the perquisite. So 2,400 into 5 comes to 12,000 will be the value of motor car perquisite. Are you able to place the provision? Leave travel concession given to employee, that is 10.5, which is applicable only under the optional tax regime. Yes, he is traveling through his wife and 3 children. One daughter aged 7 and twin son aged 3. Only in second delivery twins allowed. Cost of air ticket economy class reimbursed by employer is 30,000 for adult and 45,000 for 3 children. Balaji is eligible for availing exemption this year. To the extent is permissible in law, because in a block of 4 calendar year, 2 trips are allowed. They are saying that it all is within the condition. So entire amount is exempted under section 10 subsection 5. Compute the salary income. That's it. Game over. You have to take the gross salary, whether it's traveling through the default or optional. So standard deduction will only be. Otherwise, he is entitled to 75,000. That's it. Note, you have to read it. Are you really with me? Coming to illustration number 2, and this question is a MTP October 21 question. You are required to compute the income from salary of Mr. Raja under default tax regime. They themselves said that it is default. From the following particulars for the year ending 31/3/2025. He retired on 31/12/2024. That means he has worked for 9 months. Are you really with me? So this is how you have to take on the things, man. 9 months is pre-retirement and 3 months is post-retirement. The year ended 31/3/2025 at the age of 60. After putting 25 years and 9 months of service from a private company at Delhi. That means he's not a government employee, he's a non-government employee. He was paid salary of 25,000 per month. That means 25,000 into 9 will be the salary. Correct? So 25,000 into 9 comes to 2,25,000 will be the salary, basic salary, comfortable. And HRA 6,000 per month. So 6,000 into 9 comes to 54,000 will be the HRA. But HRA will be available only under the optional tax regime. But this guy is traveling through the. So don't apply the provision of 1013A. Are you able to place it? He paid rent of 6,500 per month. No deduction. Done. On retirement, he was paid a gratuity of 3,50,000. Have you got gratuity? Yeah. 1010 provisions will be applicable. That will be applicable under both the regime. He was covered by POGA and he has not received any other gratuity at any point of time earlier other than this gratuity. Means still the statute limit of 20 lakhs will be. So we have to apply the provisions for finding out the gratuity. Easier. Actual gratuity received is 3,50,000 is the actual gratuity received. Least of the 3. Statute limit of there is no reduction because of the earlier receipt. Number 2 is what? Actual gratuity received is 3,50,000. Comfortable? Number 3 is 15 by 26 into last drawn salary into completed year of service. 15 by 26 is Sunday effect. Correct? Into, sir, what is the last month salary? 25,000 is the last drawn salary, because salary means basic salary plus DA. Whether that DA is forming part or not. But DA has not been given in the, that's why I am taking only 25,000. Comfortable? Into how much completed year? 25 and in excess of 6 months should be treated as 1 year. So 26 years. Comfortable? So 25,000 into 15 by 26 into, sir, 26 comes to 3,75,000. But least of the 3 is, so nothing, no gratuity will be taxable. Actually, employer cheated because he is supposed to give gratuity of 3 lakh. But he gave only a gratuity of 3,50,000. So nothing will be taxable. Gratuity should be nil. Are you able to appreciate? Coming to the next point, man. He had accumulated leave of how many days per annum? During the period of his service. Sir, how many completed year? 25 years. So 25 years into 15 days. Correct? How much days leave accumulation are there? 375 days leave accumulation are there. Correct? This was encashed by him at the time of retirement. Only at the time of retirement he encashed, not year on year. If it is year on year, it is fully taxable. A sum of 3,15,000 was received by him in this regard. So he got leave salary of 3,15,000. Employer allowed how many days leave? Yes, because cash equivalent of leave credit calculated at the rate of 30 days per annum. 30 days per annum is allowed. Are you all really with me? So the leave credit is equal to 375 days. Because accumulated leaves of 15 days per annum. So my dear lovable students, I am calculating the leave salary. You tell me what is the actual leave salary received. 3,15,000 is the actual leave salary received. Correct? Let's say, sir, least of the 4. Number 1, statute limit of 25 lakh. Number 2, actual leave salary received. 3 lakh. Last 10 months salary. Sir, there is a definition for salary. Basic salary plus DA provided in terms of employment plus commission as a fixed percentage of only basic salary is that. Nothing more is there. What is the basic salary? So 25,000 into 10 comes to, but every year 15 days leave has been accumulated. That means how many completed year? 25 years. So 375 days. So 375 divided by 30 days means 12.5 months leave credit are there. Correct? For last 10 months, 2,50,000. Now 1 month, 25,000. So cash equivalent of what credit? Calculated at the rate of 30 days per annum for every completed year of service. Am I right, sir? My dear lovable students, then 25,000 into 12.5 months comes to 3,12,000. You have to see the least. 2,50,000 is the least. Correct? So 3,15,000 minus 2,50,000 comes to 65,000 is the taxable leave salary. 65,000 is the taxable leave salary. Are you able to appreciate? Coming to the next one, man. He is receiving 5,000 as pension. Fine. On 1/2/2025, commuted how much percent of his pension? And received 3 lakh as his what pension? Commuted pension. Comfortable? So classified into 2 category, man. Commuted pension and uncommuted pension. Are you all really with me? Actual commuted pension received is how much lakh? 3 lakh. Let's say, sir, is he getting gratuity? Yes, just now we saw that he is having gratuity. Then 1/3 of the total pension. This 3 lakh is 60%. Up 3 lakh divided by 60% means 5 lakh is the total pension. 5 lakh into 1/3 1/2 1/3 comes to 1,66,667. Comfortable? Then 1,33,333 is the taxable pension. Comfortable? My dear lovable students, when he retired on December he retired. Then you are having 3 months. One is Jan, then February and March. For Jan, 5,000 rupees uncommuted pension will come. Correct? For February and March, 5,000 into 40% will come because 60% already commuted. Remaining balance only 40% is there. For how much month? 2 months. Clarity? So 5,000 into 40% into 2 comes to 4,000 rupees. Then 5,000 plus 4,000 comes to, sir, 9,000 plus 1,33,333 comes to 1,37,333 is the taxable total pension. Look at here, man. 1,33,333 separately for commuter pension and 9,000 for uncommuted pension. Able to appreciate? I'm continuing with the question, man. Is there any other point? I'm checking. Yes. Company presented him a gift voucher of what? 5,000. Amount does not exceed. Fully exempted. His colleagues also gifted him a mobile phone worth 50,000. Colleague and the employee does not have employer-employee relationship. Such income will not be taxable under salary. It may taxable under IFOS. For that, this should be a capital asset. Mobile phone is not a capital asset. Hence, it will even not taxable under IFOS also. From their own contribution, so nothing will be taxable. Gift voucher, since does not exceed 5,000, nothing will be taxable. Mobile phone, it is not a capital asset and there is no employer-employee relationship. Neither taxable under salary nor taxable under IFOS. Nothing will be taxable. So gross salary will be this much. Easy traveling through default tax regime, standard deduction will be, and there is no question of entertainment allowance and the professional tax. You will get the taxable salary. Are you able to appreciate or understand? Are you able to apply to the discussion what we have made? We'll be moving into question number M, the last question, illustration number 3. Mr. Akansha Shukansha, a salaried employee, furnishes the following details for the financial year 24-25. Basic salary they themselves given. Just we have to write copy paste. Right, sir? DA they themselves given. So DA is that, but they have not mentioned anything about the whether DA is form part of retirement benefits or not. Commission they themselves given. Entertainment allowance they have given. Medical expense reimbursed by employer, fully taxable. Correct? Professional tax of this 50% paid by employer means 2,000. So that 2,000 first has to be included as perquisite. But whether I can claim this 4,000 or not based upon what route I am going to travel. Comfortable? Health insurance premium paid by employer. Health insurance is allowed. Life insurance is not allowed. Correct? This will not be treated as perquisite. Gift voucher given by employer 10,000. Since it exceeds 5,000, entire 10K is taxable. An alternate view, you have to write that only in excess of 5,000 is taxable. Life insurance premium of Akansha. This is 17 subsection 2 class 5. Just now we discussed it will be treated as perquisite. Then laptop provider for use. This provision will not be applicable to computer, laptop and mobile phone. Employer company owns a Maruti Suzuki Swift car which was provided to assessee both for official and personal. Driver was also provided. Engine cubic capacity more than 1.6 liter. That means big car. All expenses are met by the employer. That means 2,400 per month plus 900 per month into 12. Annual credit card fee paid by the employer. Card is not exclusively used for official purpose. That means employee spend personal purpose. For that card has been used by employee. But credit card payment has been made by employer will be fully taxable. You are required to compute the income chargeable under the salary for the assessment year 25-26. If she pays tax under default tax regime, nothing. Basic salary copy paste. How much? 6,20,000. DA commission copy paste. 4,20,000 and 75,000. Comfortable. Entertainment allowance 9,000 fully taxable. Correct? Medical expenses reimbursement fully taxable 18,000. Correct? Sir, professional tax how much employer paid? 2,000. And since they are traveling through the default tax regime, 16 subsection 3 provisions will not be applicable. Health insurance is allowed. Employer can pay health insurance premium, but employer should not pay. That's what key life insurance premium is fully taxable as per 17 subsection 2 class 5. Just now we discussed, correct? Gift voucher, since it exceeds 5,000, it is fully taxable. Alternate view you have to write. Then laptop provider for usage. This provision will not be applicable to laptop, computer and mobile phone. Hence it is nil. Provision of motor car. Sir, 2,400 plus 900 is the perquisite value. Into 12 means 39,600. Comfortable. Annual credit card expenses. It is personal in nature, not official in nature. Will be treated as perquisite. If you add, you will get the gross salary, less deduction under 16, standard deduction 16, 1A. Since assessee is traveling through the default tax regime, 75,000 amended limit will be applicable. You will get the income chargeable under the head salary. With this, the salary marathon for our coming examination comes to an end. Sir, very happy afternoon to all. Sir, this is a very quick marathon for the second head of income, that is income from house property. As we all know that, one of the easiest head of income. The chapter is starting like this, my dear lovable students. When we start salary, we taught about 10.5, 10.10, 10.10A, 10.10A, 10.10B, 10.10C, 10.11, 10.12, 10.13, 10.13A, 10.14. That is exemptions or retirement benefits. The same way, chapter income from house property is saying that if you are having income for these people, then it is fully exempted. For example, income from any farmhouse, farming part of agriculture income. If you are having any income from house property from the farmhouse, it is fully exempted under section 10(1). Because in India, agriculture income is fully exempted. Next one, annual value of any place in occupation of ex-ruler. That is, ex-ruler, like king or someone, their place you are letting out and you are getting some rental income, that is fully exempted under section 10(19)(a). Income from property, house property of a local authority. For example, there is a local authority, Chennai, Greater Chennai Corporation. If they are having any house property income, that is fully exempted for them under section 10(20). Then income from house property for an approved scientific association, section 35, expenditure on scientific research. Such people got any IFHP income, that is fully exempted for them under 10(21). Sir, property income of university, education institutions, etc. Those people are called as 1023C series organization. And if you are a registered trade union, then for that trade union, if they are having any income from house property, that is fully exempted under section 1024. And if there is a political party like BJP, if they are having any house property, that is fully exempted under section 13(a). So if these people are having income from house property, it is fully exempted under section 10. So what we are supposed to understand, section 10 is exemption, which is applicable for every heads of income. 10(10) gratuity. But the only thing is, gratuity, it is not fully exempted. A part is exempted and part is taxable. But here, no such part and all. It is fully exempted. For example, political parties getting house property income, or local authorities getting house property income, or ex-ruler is getting any house property income, or registered trade union is getting, sir, house property income. Come on. Sir, in order to tax an income under the head income from house property, what are the conditions to be satisfied? That is called as chargeability. Every head of income is having a charging section. For example, salary section 15 is the charging section. House property section 22 is the charging section. PGBP section 28 is the charging section. Capital gain section 45 is the charging section. And IFOS section 56 is the charging section. The duty or the role of the charging section is that section will tell what are the income to be taxed under the respective head of income. Are you all really with me? What section 22 of the income from house property is saying that in order to tax an income under the head income from house property, first of all, assessee should be the owner of the property. Assessee should be the, you should be the owner of the property. Number two, property should not be used for assessee's business or profession. It should not be used for the assessee's business or profession. And that property should consist of any land or building appertaining thereto. That means it should not be a bare land. If you are renting a bare land, that rental income will be taxable under IFOS, not under IFHP, because this is income from house property. On that land, property or building should be there. And property held as stock in trade and during the pendency of sale property let out, then such income will also be taxed under income from house property. For example, Casa Grande is there. Casa Grande constructed a big building having 25 flats, but there is a, now they are thinking that market is not good. So they are thinking that we will sell after 2 years. In between the cycle gap, they are letting out this property. Even though for Casa Grande, that building 25 flat is a stock in trade, if you generally sell or if you get any income from stock in trade, that will be taxable under PGBP. But even though it is a stock in trade, that rental income will be taxable under the head IFHP. This is what the 4 conditions are all about. So number 1, assessee should be the owner of the property. Assessee should not use the property for his or her own business or profession. And property should consist of any building or land appertaining thereto, or property held as stock in trade and during the pendency of sale. Property let out, then such rental income will be taxable under the head IFHP. Generally, this is a very easiest to the easiest head of income. Generally, it is a 5-step approach. Generally, it is a gross annual value. Step number 1 is what? Gross annual value means the income what you are declaring. For example, gross salary, we are saying in salary chapter. The same way, gross annual value. Sir, from that gross annual value, LT bar MT, local tax or municipal tax, paid by the owner. 2 things you should be taken care of. First of all, this is on cash basis, my dear lovable students, and this should be paid by the owner. In exam, two adjustments they will be asking. Sometimes LT bar MT will be payable, no deduction. Or sometimes it would have been paid by the tenant, no deduction. You should be taken care of that adjustment. Are you really with me? You will get the net annual value. So from the gross annual value less LT bar paid by the owner, you will get the net annual value. From that you can reduce deduction under section 24A and deduction under section 24B. If it is salary, we are having 3 deduction, 16 subsection 1A, 16 subsection 2, 16 subsection 3. The same way house property is having only 2 deduction, 24A and 24B. 24A is 30% of the net annual value and 24B is interest on borrowed capital. You will get the answer as income from house property. So technically, my dear lovable students, sir, gross annual value is the income. From there you can reduce LT bar MT. LT means local tax, MTB municipal tax. This local tax or municipal tax will be collected by the state government and this gross annual value is for the central government. So central government is saying that we are going to collect income tax. So if any tax has been paid to the state government which is directly attributable to a property, can we claim it as a deduction? Are you all really with me? You will get the net annual value. From that net annual value, reduce 30% of the net annual value because for property, painting, insurance, repairs, all will be incurred. Whether you incurred or not, irrespective of that, on an ad hoc basis, you can claim 30%. Don't reduce any other expenses. The question will be tempting you to give lot of other information. Don't reduce that and all. And interest on borrowed capital. This is accrual basis, whereas LT bar MT is cash basis. Even though you have not paid the interest, still you can claim it as a deduction under section 24B. This is the difference between LT bar MT and also the interest on borrowed capital. Can I proceed, sir? I'm moving into much detail with regard to income from house property. Property classified into 2 categories. One is SOAP, other is LOP. There are 2 types of property are there. One is self-occupied property and other is let out property. Right, sir? Assume you are having a house property with you, my dear lovable students. With that house property, as per Income Tax Act, you can only do 6 things with that house property. You can do only number 1, fully self-occupied. For the entire 12 months in a year, you can fully self-occupy the property. Are you all really with me? Or fully let out property. Fully let out means the entire 12 months you can let out the property. Then let out property with vacancy. Sir, entire 12 months I am ready to let out, but tenant has not came. Are you all really with me? Partly self-occupied and partly let out. For the 6 months, first 6 months it was a let out property. For the next 6 months it became a self-occupied property. Or self-occupied property, then let out property. Portion self-occupied, portion let out. In the sense means ground floor is self-occupied, whereas first floor is let out property and deemed to be let out property. Actually, I have not let out the property. But what Income Tax Act is saying that you have to assume it as a let out property. So with one property, only 6 possibilities are there. Number 1, fully self-occupied, fully let out. Let out property with vacancy, partly self-occupied, partly let out. Portion self-occupied, portion let out, deemed to be let out property. Now we are going to talk about if a property is fully self-occupied property. If you are having own house, my dear lovable students, if you are staying in that house, I am talking about that house. Sir, if it is fully self-occupied property, can you let out that property? No. So there will not be any GAV. There will not be any. Since you are not declaring the GAV, what government is saying that even though you will pay LT bar MT by the owner, cannot be claimed as a deduction. Because what Income Tax Act is saying that you have not offered income. Then why are you asking deduction? Logic. That's it. Then automatically the NAV will be 0. Net annual value will be 0. Less deduction under section 24A. Since the NAV is 0, 0 into 30% will be 0. You will be not applicable. Are you able to appreciate? Then 24B, interest on what capital? Borrowed capital. What, sir? If the property is a self-occupied property, either you can claim 30,000 or you can claim 2 lakh as the case may be. So the maximum loss under the head income from house property will be 30,000 or 2 lakh as the case may be. There are 2 limits are there, lower limit of 30,000 and higher limit of 2 lakh. So in order to claim a higher deduction of how much lakh? 2 lakh, assessee should satisfy 3 conditions. Loan should be taken on or after 1/4/1999. That is a cut-off date. If the loan is taken on or after 1/4/1999, and number 2, such loan should be used for the purpose of CA, construction or acquisition of the property. That means with that loan, you are not supposed to do repair. you should do either construction or acquisition. Such construction or acquisition should be completed within a period of how many years? From the end of the financial year in which the loan has been sanctioned. That means if these three conditions has been satisfied, if loan has been taken on or after 1/4/1999, loan should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been taken. If that is the case, my dear lovable students, you are entitled to claim higher deduction of 2 lakh. Otherwise, lower deduction of 30,000 will be applicable. Are you all really with me? A very important concept called as interest on borrowed capital, prior period interest. What period interest? I'll just explain this prior period interest with a small chart. Try to understand and picturize, my dear lovable students. Sometimes I would have taken loan on this date. On date, for example, sir, on 15/8 of 2021. From the date of taking loan, I would have started construction the house. But in 21-22, construction of house would not have been completed. In 22-23, construction would not have been completed. In 23-24, construction would not have been completed. On 15/9/2024, that's what our financial year for our examination. On this day, sometimes you would have completed the construction. Point number 1. First check in what financial year you completed the construction. 24. Then what Income Tax Act is saying that if you analyze 24-25, actually from 1st of April till 15th of 9/2024, it is pre-construction period only as per accounts, correct? But Income Tax Act is saying that if the construction has been completed in previous year 24-25, then from the start of the previous year itself, it should be treated as current year. It should be treated as, that means always the prior period interest should start from the date of taking loan. From the date of taking loan means when I taken loan, 15/8/2021 is the date of taking loan. Till, my dear lovable students, I have completed the construction on 15/9/2024. That falls in our previous year 24-25. What Income Tax Act is saying that always finish the prior period interest on 31/3/2024. 31/3/2000. So always starting point will be date of taking loan and always ending point will be 31st March of the immediately preceding previous year in which the construction has been completed. Immediately preceding previous year in which the construction has been, that means for 21-22, for 22-23 and 23-24. Total how many years? This 3 years actually property was under construction. That means 3 years I would have paid interest to the bank, but that interest cannot be claimed as deduction under 24B. Because property itself has not come into existence. In order to claim, sir, anything under IFHP as per section 22, 4 conditions should be satisfied. Assessee should be the owner of the property. Where is the owner man? It is under construction, correct? Then there is no question of ownership at all. Then if you claim actually in 24-25 our financial year you completed the construction, comfortable. Then my dear lovable students, if the entire 3-year interest, which is technically called as prior period interest, if you claim as deduction in previous year 24-25, then automatically 24-25's income will be swaha. Correct? So what Income Tax Act is saying that if you are having any prior period interest, don't claim the prior period interest in one stretch. We will not allow to claim the prior period interest to claim it as deduction in one stretch. Claim over 5 years. That is previous year 24-25 you can claim 1/5. Previous year 25-26 you can claim another 1/5. Previous year 26-27 you can claim another 1/5. Previous year 27-28 you can claim another 1/5. And previous year 28-29 you can claim another 1/5, my dear lovable students. Are you all really with me? So, as an assessee, 1/5 can be claimed in the previous year 24-25. And even in 24-25 loan will be going. Assume that no principal has been repaid for our mathematical computation purpose. In 24-25 also you will pay interest. So total interest on what capital is equal to? Borrowed capital is equal to 1/5 of the prior period interest plus 100% of the actually, as per accounts, this is also prior period interest because the construction has been completed only on 15/9. Actually, till this time you have to treat it as prior period interest. But tax is saying that we are not following date concept. We are not following month concept. This is not AS 16 borrowing cost to talk like that. This is income tax which will go as per financial year basis only. So always start the interest on borrowed capital from the date of taking loan. Till 31st March of the immediately preceding previous year in which construction has been completed. With this background, now you go through interest on borrowed capital. Can be classified into two categories. Prior period interest and what interest? Always prior period interest will start from the date of taking loan till 31st March of the immediately preceding previous year in which construction has been. And actually for our example, 3-year interest came, correct? That 3-year interest can be claimed it as a deduction under section 24B in how many equal installment? 5 equal installment. Plus you will be having current year interest. This current year interest will start from 1/4/2024. Am I right, sir? Till 31/3/2025 because actually this period is, sir, pre-construction period as per accounts. But we have considered only till 31st March in tax. Comfortable? So this 12 months will be treated as current year interest and that can be claimed as deduction in one shot on an accrual basis because LT bar MT paid by the owner but IOBC is not paid. Even if it is payable, you are entitled to claim it as a and claim as a deduction in how many installment? So one line summary of the entire discussion is IOBC is equal to 1/5 of the prior period interest plus current year interest. Can I proceed, sir? My dear lovable students, with regard to default tax regime, very important part. If the assessee has opted for what tax regime? Default. Then is not eligible for deduction under 24B, that is interest on what capital? That means if you are traveling through the default tax regime, there is no question of self-occupied property concept at all. Only concept of let-out property. Because under self-occupied property, only one section will be applicable, which is 24B. If 24B deduction cannot be available, we can conclude that under the default tax regime, there is no concept of SOAP. We are having only concept of LOP. Comfortable? I'm continuing, my dear lovable students. These are ICAI charts. You just answer me now from the discussion what we make. Deduction from NAV under the default tax regime. So if an assessee is traveling through the default tax regime, sir, the property may be SOAP or LOP. For SOAP, no deduction is allowable under 24. Under the default tax regime, there is no concept of what at all. Whereas, sir, with regard to LOP, standard deduction under 24A, 30% of NAV can be claimed and interest on borrowed capital 24B is fully allowed. That means if it is a let-out property, 100% can be claimed as a deduction. Are you all really with me? Now, coming to the different angle, deduction from the NAV under the what tax regime? Optional tax regime. That means deduction from NAV. Sir, that means I am traveling through the optional tax regime for self-occupied property. Can I claim 24B? Yes, sir. Interest on borrowed capital under 24B is allowed. Sir, if it is LOP, standard deduction under 24A, which is 30% of the NAV is allowed. And interest on borrowed capital under 24B is fully allowed. Are you all really with me? Now, interest on borrowed capital for 24B from the angle of the SOAP. I am going to check it. 24B, sir, where loan is taken for repair, renewal or reconstruction of the what property? House property. Maximum 30,000 in toto. In toto means total for 1 or 2 self-occupied property. Because you should take the loan on or after 1/4/1999, loan amount should be used for the purpose of construction or acquisition. But if it is for repair, renewal, reconstruction, then you are not entitled to claim 2 lakhs, higher limit of 2 lakh. Sir, where is loan is taken for either acquisition or construction of the house property and acquisition or construction completed within how many year? Within from the end of the financial year in which the capital was borrowed plus certificate from lender specifying interest payable. No, sir, then maximum only how much is allowed? Because you have not completed the construction within 5 years. No, sir, I completed the construction within then 2 lakh in toto for 1 or 2 of the self-occupied property. Are you able to appreciate, sir? That means, my dear lovable students, if the property is a fully self-occupied property, it's a 5-step approach. GAV will be nil. Less LT bar MT paid by the owner, not applicable. NAV will be nil. Less 30% of NAV, not applicable. Less deduction under section 24B, you have to check whether the assessee is traveling through the default tax regime, or if he is traveling through default tax regime, no 24B. If he is traveling through optional tax regime, 24B will be restricted to either 30,000 or 2 lakh as the case may. In order to enjoy 2 lakh, assessee has to satisfy 3 conditions. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been taken. Comfortable. I'm moving to the second set of property called as fully let out property. Fully what? So there is a house property, you have let out the property. Once you let out the property, will you get rent? Yes, sir. So GAV will not be not applicable. GAV will be 3-step approach. GAV will be, that means fair rent or municipal value, whichever is higher. You have to go and see what is the fair rent, what is the municipal value, whichever is. Question arises, what is fair rent? Fair rent means which a similar property in the same locality would fetch. For example, if I am in Nungambakam, Jambulingam Street, I am having a 2-flat. Sir, that is 2 BHK flat. That means, my dear lovable students, this has been rented for 50,000. But the same next building, 2 BHK flat, has been rented for 80,000 means I have reduced that rent. Correct? Really, I would have got 80,000, and to the government, I am saying that I got only. So that's what they are saying, fair rent. You have to see the fair rent, similar property will fetch. Or municipal value. Municipality, the Greater Chennai Corporation would have said that if you rent this property per month, at least you would have get 70,000. So I got only 50,000. But Greater Chennai Corporation is saying that 70,000. Whichever is what? Higher, because it is my mistake. Because the very next person, 50, municipal value, 70, whichever is higher. Sir, if I am having a property, there is a chance that I may kill the tenant by saying that per month 1,50,000 rupees I want rent. Are you really with me? This should not happen in India. For that only we are having Rent Control Act. What act? Rent Control Act. They will fix the standard rent. They will say that at any cost you should not collect more than 60,000. Maximum rent you should collect from this property 60,000 rupees. If an owner asks 90,000 rupees for this property, you can go and give case against that person. Sir, this is the maximum rent he can collect, sir, but he's asking 90,000 rupees, sir. That's why whichever is lower. That's why the step number 1 is fair rent or municipal value, whichever is higher. Whichever is higher or standard rent, whichever is lower. That answer is called as expected. For example, here 50 or 70, whichever is higher, 70. But as per the Rent Control Act, we are supposed to collect only 60,000. So whichever is lower means, so government is expecting maximum 60,000 from this property. That is why its name is 60,000. Are you all really with me? Expected rent. So expected rent or actual rent received or receivable, whichever is. But you are saying to the government that, sir, I got only 40,000, sir. What government is saying? That no problem. Declare GAV as the expected rent. How much? 60,000. That's why, sir, GAV is a 3-step approach. Fair rent or municipal value, whichever is higher or standard rent, whichever is lower. The answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. Are you all really with me? Since you are declaring the income, you can happily reduce LT bar MT paid by the owner. No problem. You will get NAV. No problem. From that NAV, you can reduce 30% of NAV because you are declaring income. Correct? And you can reduce 24B interest on what capital? Borrowed capital. There is no restriction of 30,000 or 2 lakh because that is a picture given by the government to us because the property is a self-occupied property. Here I am declaring the income. If I am declaring the income, I can claim the deduction unlimited because this is a let out property, my dear lovable students. You will get the answer as income from house property. Comfortable? Sir, municipal value means value fixed by the municipal authority. Standard rent means rent fixed by the Rent Control Act. Comfortable, sir? So, 2 types of property we have done, sir. Number 1 is fully self-occupied property. Okay. I will be recalling in between the fully self-occupied property. If it is fully self-occupied property, 5-step approach. gross annual value less LT bar MT paid by the owner, net annual value less deduction under section 24A less deduction under section 24B. You will get answer as income from house property. What will be the GAV for self-occupied? Nil. LT bar MT? Not applicable. NAV? Nil. Less deduction under 24A. But this will be 30K or 2 lakh as the, and loss will be 30K or 2 lakh as the. First of all, in order to enjoy that 30K or 2 lakh, you should travel through the optional tax regime and should not travel through the. Then, in order to enjoy higher limit of 2 lakh, you should satisfy 3 conditions. Loan should taken honor after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property, and such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been. Super, sir. Now coming to the second type of property is fully let out property. In that, again 5-step approach. GAV is a 3-step approach. Are you all really with me? In that 3-step approach, fair rent or municipal value, whichever is higher or standard rent, whichever is lower, that answer is called as expected rent. Compare expected rent or actual rent received or receivable, whichever is. From this GAV, can you reduce LT bar MT? But only condition is it should be paid, and it should be paid by the, that's what the discussion, municipal tax paid. Allowed as deduction only if it is incurred and actually paid by the owner during the relevant previous year. So first of all, it should be paid, and it should be paid by the, and deduction on what basis? But IOBC is deduction on accrual basis. LT bar MT is deduction on, if the tenant bear the municipal tax, no deduction for the owner for such taxes. If the tenant paid the municipal tax, owner cannot claim it as a deduction. That adjustment may be there in the question. Comfortable? If the taxes paid for the property situated outside India, sometimes in house property may be situated outside India, then also in the hands of resident and ordinarily resident, global income is taxable. So GAV will be taxable in India. So even though LT bar MT has been paid outside India, you are entitled to claim deduction. Are you all really with me? That's it. So the next concept is called as treatment of unrealized rent. Treatment of, sometimes I may let out the property. Tenant may be situated in that building. He will not pay the rent. Then we have to check rule number 4. Rule 4 condition. Rule 4 condition. Rule 4 condition. If rules 4 satisfy, then there is no need to include unrealized rent in the what rent? Received or receivable. That means if you satisfying rule number 4, no need to pay tax for the unrealized rent. What is that rule number 4? Tenancy is bona fide. That means, sir, there should be proper agreement between the tenant and the landlord. Number 2, defaulting tenant has vacated. If the tenant is not paying the rent, you should say the stand up, get out man. Or steps has been taken to compel him toward the property. Vacate the property. Rent tarlena. You should take the steps. Or the defaulting tenant is not in occupation of any other property of the what? Assessee. Sir, if you know that if he is not giving you rent, you should not make him occupy in any of the other properties. That's it. Out na out. And assessee has taken all reasonable steps to institute legal proceedings for the recovery of the unpaid rent. You should try your level best to get the unrealized rent. Or you have to satisfy the AO that legal proceedings would be useless. Sir, even if I give police case, such a person is saying that, so even if I go for the legal proceedings, such things will be useless, sir. So if you satisfy this 4 condition, we can say that rule 4 has been satisfied. Once rule 4 has been satisfied, my dear lovable students, then there is no need to include the unrealized rent in the actual rent received or receivable. That means no need to pay tax for the unrealized rent. Are you able to appreciate, sir? That's what fully let out property story. Sometimes that let out property may be situated outside India. That let out property may be situated in India, or that let out property may be situated. If the let out property is situated outside India, you have to check that what is the status of the assessee, whether the assessee is the resident and ordinarily resident. If the assessee or the person who owns the building is resident and ordinarily resident, global income is income from house property located outside India is taxable regardless of whether the income is brought to India or not. But my dear lovable students, if the assessee is a non-resident or assessee is resident but not ordinarily resident, then if that rental income is received in India, then it is taxable in India. Income from property situated outside India is taxable only if it is received in India. Only if it is. Otherwise, it will not be taxable in India. This is what the second scenario is all about. So, what is the first scenario? Fully self-occupied property. So, if a property is fully self-occupied property, can we recall? Sir, GAV, nil, less LT bar MT, not applicable. NAV, less deduction under section 24A, not applicable. Less deduction under section 24B, either 30,000 or 2 lakh as the case may be. So, always you will be having a loss from house property which is a maximum to the extent of 30,000 rupees or 2 lakh as the. There are certain important points to be taken into account. In order to enjoy 24B, you should travel through the optional tax regime. You should not travel through the default tax regime. Okay, fine. If you are traveling through the optional tax regime, in order to enjoy higher limit of 2 lakh, assessee should satisfy 3 conditions. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been. Fantastic to the core. Come on, if the property is fully let out property, it is a how many step approach? 5-step approach. GAV is how many step approach? 3-step approach. Can you reduce LT bar MT paid by the owner? Yes, sir. Will you get the answer as NAV, sir? From that NAV, can you reduce 30% of the NAV, sir? Yes, sir. Sir, can you reduce interest on borrowed capital? Yes, sir. How much? Unlimited. Because since the property is a let out property, there is no restriction. You will be getting the answer as income from house property. The important points to be taken care is this 3-step approach are fair rent or municipal value, whichever is higher, or standard rent, whichever is lower. That answer is called as expected rent or actual rent received or receivable, whichever is higher, is equal to gross annual value. Comfortable, sir? Less LT bar MT. 2 points you should confirm in the question. It should be paid and it should be paid by the owner. Are you all really with me? And 30% of the NAV can be claimed. Interest on borrowed capital can be claimed on an accrual basis. Are you all really with me? That's it. Coming to the third scenario, third type of property, let out property with what? Vacancy. That means I'm having a property and that property I'm ready to let out for the entire 12 months. Sometimes I would have not got good tenant or tenant would have been vacated during the year. Sometimes some problem may happen. So there will be vacancy. There will be what? The problem or in the situation number 3, sir, let out property with vacancy. The main problem is entire 12 months I am not able to let out the property. Then what government is saying that since this is a let out property, you have to take the fair rent or municipal value, whichever is higher, or standard rent, whichever is lower, that is equal to expected rent or actual rent received or receivable, whichever is higher. There is a problem. The main problem what we are facing is this expected rent will be for 12 months. Are you all really with me? But this actual rent received or receivable will be for less than 12 months. So generally, if you put expected rent or actual rent received or receivable, whichever is higher, sir, expected rent will become what? AV, GAV. So you will be having a tuck of war that, sir, why I have to pay, sir, tax on expected rent? Because I have not received that expected rent as my actual rent. Are you really with me? So what Income Tax Act is saying that I will give you a solution. Don't worry. Sir, you take the actual rent received in one hand. You take the actual rent received. There are 2 situations are there, my dear lovable students. You check that. Whether the actual rent received is more than the expected rent. More than the or less than the expected rent. What this act is asking that, for example, if expected rent for 12 months is equal to, I'm saying example, 1,20,000. Okay, you are having a vacancy. That means you have not let out for the entire 12 months. You let out only for 9 months. But by letting out for 9 months itself, you have earned how much? 1,50,000. Are you really with me? That means your actual rent received is more than the what rent expected. If that is the case, my dear lovable students, then GAV is equal to actual rent received. GAV is equal to, because you got 1,50,000 rupees, you are ready to declare 1,50,000 rupees. For us, if you declare 1,20,000 itself, we are very happy. But you are declaring 1,20,000, we are not bothered about vacancy at all. Comfortable. But if you are saying that if the actual rent received is only 90,000 rupees, then we want you to declare GAV as 1,20,000 rupees, correct? But you will declare only 90,000 rupees, correct? So we want to check the genuinity of the vacancy. We want to check the genuinity of the vacancy. What of the vacancy? Okay, sir, we will check the genuinity of the vacancy now. After we check the genuinity of the vacancy, we will get the answer as vacancy is genuine or vacancy is not genuine. The answer may be vacancy is genuine or vacancy is. Sir, shall we check the genuinity of the vacancy? How to check the genuinity of the vacancy? Come on. Take the actual rent received. How much is the actual rent received? 90,000 is the actual rent received. Correct? Add vacancy rent. Is there any vacancy? Yes, sir. Assume that 4 months vacancy are there. 4 months? Sir, if I let out the property for how much months also? 4 months also. Without vacancy, I would have got rent. Assume that rent is 50,000. Some example I am giving. Are you all really with me? That rent is how much? 50,000. Then 90 plus 50,000 comes to 1,40,000. This is called as actual rent receivable. Actual rent receivable. Are you able to appreciate? Now, you compare the actual rent receivable with the expected rent. Compare the actual rent receivable with the. You tell man, sir, is the actual rent receivable is more than the expected rent, less than the expected rent? More than the expected rent, because government is expecting only 1 lakh. If there is no vacancy, I would have recovered 50,000, and my actual rent receivable is 1,40,000. So my actual rent receivable is more than the what rent expected. More than the. So if it is more than the what rent expected rent, vacancy is genuine. Vacancies. Because if there is no vacancy, I would have collected rent. If I would have collected rent, it is more than expected rent. I will give you counter example, man. Assume actual rent received is how much? 90,000. But the vacancy rent is only 20,000. If there is no vacancy, I would have collected only how much? That means 90 plus 20 comes to 1,20,000, 1,10,000. That means even though there is no vacancy, even though I have let out the property for the entire 12 months, I would have collected only. That means my actual rent receivable is less than the expected rent. That means the reason for reduction of actual rent is less than expected rent is not because of vacancy. It's not because of. Because if there is no vacancy, if you have let out the property for the entire, 12 months also, you would have received only 1 lakh. So, vacancy is not genuine. Vacancy is not. That means, even if you have let out the property for 12 months, you would have collected only 1,10,000. So, the problem is not with the vacancy. Problem is with the rent what you have set. You are collecting less monthly rent. For that, what government is asking that if you declare GAV as actual rent received, which comes to 1,10,000, you'll be having a. So, if the vacancy is not genuine, my dear lovable students, we will never allow you to have a loss. You have to declare GAV as what rent? That means if the vacancy is not genuine, GAV is equal to that rent. Are you able to appreciate? But if the vacancy is genuine, I am saying to government that, sir, if there is no vacancy, I would have collected 50,000. If I have collected 50,000, my actual rent receivable would have been 1,40,000, which is much more than the expected rent. So because of the vacancy only, my actual rent receivable comes down. Clarity? So the vacancy is what? Genuine. So government is saying that I am ready to accept your claim. That means the GAV, I don't want expected rent. I want only actual rent received. Actual rent received or receivable. So if the vacancy is genuine, actual rent received or receivable. So I will tell you, consolidate once again, my dear lovable students. We are talking about a particular case called as let out property with vacancy. If let out property with vacancy, you have to check the genuinity of the vacancy. We have to check the, before you check the genuinity of the vacancy, you analyze the situation, whether the actual rent received is more than the expected rent or less than the expected rent. If the actual rent received is more than the expected rent, not even required to check the genuinity of the vacancy. Because government is asking only 1,20,000, but you collected 1,50,000. GAV is equal to actual and received 1,50,000 rupees. Comfortable? But if the actual rent received is less than the expected rent, my dear lovable students, you have to check that whether the vacancy is genuine or vacancy is not genuine. If the vacancy is genuine, that means, in English, that means, yes sir, the reason for reduction of rent is because of the vacancy. If the vacancy is not genuine, means even if there is no vacancy, I will not be able to collect expected rent. Have you understood with the example? If the vacancy is genuine, my dear lovable students, then the GAV is equal to actual rent received or receivable. If the vacancy is not genuine, means GAV is equal to expected rent. How to check the genuinity of the vacancy is the question. Nothing. You take the actual rent received, add vacancy rent. Then you will get the actual rent receivable. Compare that with the expected rent. Check whether it is more than expected rent or less than expected. If it is more than expected rent, sir, your viewpoint is correct. If there is no vacancy, you would have collected more than expected rent. Comfortable? Then don't declare expected rent as GAV. Declare actual rent received as GAV. Able to appreciate. Whereas, my dear lovable students, if the actual rent receivable is less than the expected rent, even if there is no vacancy, your claim is wrong. That means, if you declare only actual rent received as GAV, we are not ready to accept. You have to mandatorily require expected rent as the GAV. I hope that you are having a perfect clarity. Right, sir? So, GAV will be either expected rent or actual rent received or receivable, as the case may be. Since you are declaring GAV, you can reduce less LT bar MT paid by the owner. You will get the answer as net annual. From that net annual value, you can reduce 30% of net annual value. No problem at all. And you can claim IOBC under section 24B as what limited? Unlimited. You will get the answer as income from house property. In case of vacancy, we have to check the genuinity of the vacancy. Am I right? Sir, first you have to take the actual rent received. That actual rent received may be more than the expected rent, or if it is more than the expected rent, GAV is equal to actual rent received or receivable. Comfortable? If it is less than the expected rent, check the genuinity of the, and answer will be vacancy may be genuine or vacancy may not be genuine. If the vacancy is genuine, GAV is equal to actual rent received or receivable. Vacancy is not genuine, GAV is equal to expected rent. Are you able to appreciate? How to check the genuinity of the vacancy? You have to take the actual rent received for the let out period. Add what rent? Vacancy rent. You will get the actual rent receivable. Okay, fine. What I have to do with the actual rent receivable? You have to compare with the expected rent. So the actual rent receivable should be compared with the expected rent. If the actual rent receivable is more than the expected rent, we can say that vacancy is genuine. Then GAV is equal to actual rent received. If the actual rent received is less than the expected rent, we can say that vacancy is not genuine. GAV is equal to expected rent. Are you clear with the third part of the discussion, my dear lovable students? So we can say like this, my dear lovable students. Sir, we are in the let out property with vacancy. If let out property with vacancy, the GAV will be either, sir, expected rent or actual rent received or receivable. Can you reduce LT bar MT? Yes, sir. Will you get NAV? Yes, sir. Sir, can you reduce 30% of the net annual value? Yes, sir. Because it is a let out property. Correct? Can you reduce interest on borrowed capital? Yes, sir. How much? Unlimited. You will get the answer as income from house property. Can I proceed, sir? So, till now, 3 properties has been done. Number 1, fully self-occupied property. Sir, do you have the courage to recall once? Sir, for the fully self-occupied property, you tell me GAV will be nil. Less LT bar MT, not applicable. NAV, nil. Less deduction under section 24A, not applicable. Less deduction under section 24B, 30,000 or 2 lakh as the case may be. Always you will get a loss from house property, which may be exactly equal to IOBC. If it is highest, then 30,000 or 2 lakh as the. Okay, the main important point we should carry in our mind is, in order to enjoy 24B, you should travel through the Optional tax regime. If you are traveling through the default tax regime, section 24B itself will not be. That too, if you are traveling through the optional tax regime, you can claim either 30,000 rupees or 2 lakh as the case may be. In order to claim 2 lakh rupees, assessee has to satisfy. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of a year from the end of the financial year. Loan has been taken. Are you able to appreciate, sir? If the property is fully let out property, it is again a 5-step approach. Sir, GAV will be 3-step approach. Fair end or municipal value, whichever is higher or standard and whichever is lower. That answer is called as expected rent or actual rent received or receivable, whichever is. Can you reduce LT bar MT? Yes, it should be paid and it should be paid by the. You will get answer as NAV. Can you reduce 30% of NAV? Yes, sir. Can you reduce IOBC? Kitana? Unlimited. You will get answer as income from. GAV computation already we discussed, man. Fair rent or municipal value, whichever is higher or standard and whichever is lower. The answer is called as expected rent or actual rent received or receivable, whichever is. Okay, fine. Sir, if there is any vacancy, we have to check the genuinity of the vacancy. Before you check the genuinity of the vacancy, check the situation. Whether the actual rent received is more than the expected rent or less than the. If it is more than the expected rent, leave it. GAV is equal to actual rent received. If it is less than the expected rent, check the genuinity of the vacancy. After you check, you will get an answer that vacancy, genuine vacancy. If vacancy is genuine, GAV is equal to actual rent received. Vacancy not genuine, GAV is equal to. How to check the vacancy, genuinity of the vacancy? Take the actual rent received. Add vacancy rent. You will get the actual rent receivable. You have to compare that with the expected rent. If it is more than the expected rent, then vacancy is genuine. If it is less than the expected rent, then vacancy is not genuine. I hope that you are able to appreciate. Now, I am moving into the next situation, man. The fourth situation called as, sir, let out property for part of the year and self-occupied property for the part of the year. That means there is a property. This is situation number 1. Partly self-occupied and partly let out. Are you already with me? That means if 12 months are there in a year, my dear lovable students, in this 12 months, you are saying that, sir, for the first 4 months, sir, the property was self-occupied property. And for the remaining 8 months, property has become let out property. Are you all really with me? What Income Tax Act is saying that if that is the situation, it has to be treated as a let out property. It has to be treated as a. Then gross annual value will be expected rent for the whole year. Expected rent for the or actual rent received or receivable for the let out period, whichever is higher. Whichever is, that is nothing, man. You have to take the fair rent or you have to take the municipal value, whichever is what? Whichever is higher or standard rent, whichever is lower. This answer is called as expected rent. Always this expected rent will be for the entire 12 months. For the entire 12 months, you have to take the what rent? Expected rent. But I will be taking the actual rent received for the let out period. Actual rent received for the let out period. That is, I will be taking the actual rent received for the let out period. Means only for how much month? 8 months. I will take whichever is what? Higher. Sir, Anyayam, sir. Because expected rent for the 12 months. But actual rent received for the what? Department is saying that you have to declare whichever is what? Less. LT bar MT. Can you reduce, sir? Yes, sir. Sir, you will get the net annual value. Less deduction under section 30%. Can you reduce, sir? Less IOBC. Interest on what capital? Can you reduce, sir? How much? Unlimited. You will get the answer as income from house property. Let me ask you a question, sir. If this property is a self-occupied property, 30% allowed or not allowed? Not allowed. If this property is a self-occupied property, IOBC unlimited or 30k 2 lakh? 30k 2 lakh. Correct? LT bar MT allowed or not allowed? Not allowed. But this property we are treating it as let out property. That is why for you LT bar MT is allowed. That is why for you 30% is allowed. That is why you are, sir, IOBC is allowed. Comfortable? When you are taking this 30%, this 30% is for the entire 12 months or only for 8 months? Or on entire? That means this 30% deduction you claimed 12 months. IOBC you claimed 12 months. Sir, LT bar MT you claimed 12 months. But when you are declaring income itself, you are asking whichever is lower. Are you understanding the Nyayam? That's why government is saying that since all the expenditure you are going to claim for the entire 12 months, income should also be for the 12 months. That is a logic of, sir, expected rent for the whole year or actual rent received or receivable for the let out period, whichever is higher. Clarity? Only this point will be applicable. All the remaining will be treated as what property? Let out property. You can reduce LT bar MT paid by the owner. You will get the answer as net annual value. 30% of net annual value can be reduced. Sir, 24B, interest on what capital? Borrowed capital can be reduced. You will get the answer as income from. Are you able to appreciate what I am talking to you? That's it. That means if the property is partly self-occupied and partly let out, then it has to be treated as a let out property. The only change in that is, sir, expected rent for the whole year. So like this, expected rent for the whole year or actual rent received for the let out period, whichever is higher. That's it. So that's the next one. Next case number 4, which is, sir, partly self-occupied, partly let out. If it is partly self-occupied, partly let out, my dear lovable students, you have to find out the gross annual value. Only change in gross annual value, which is nothing but expected rent for the whole year or actual rent received or receivable, whichever is less LT bar MT. Can you reduce? Yes, sir. Will you get the net annual value? Yes, sir. Can you reduce 30% of NAV? Can you reduce interest on borrowed capital? Kitana? You will get the answer as income from house property. Able to appreciate. 4 circumstance done. Fully self-occupied, fully let out property with vacancy, partly self-occupied. I'm moving into the 5th scenario called as portion let out and portion self-occupied. That means you are having a house property, my dear lovable students. In that, this is ground floor and first floor. Ground floor, you are self-occupying, and first floor, you have let out. Appreciating what Income Tax Act is saying, that if that is the case, prepare a master table, Vijay table. Are you really with me? First, prepare the master table, which is nothing but particulars. You put the total, you put the SOP, and you put the LOP. That means first you put the proportion. First you put the proportion. Always the entire house will be 100%. In that, how much is ground floor, how much is first floor? For example, 2/3 self-occupied property, 1/3 let out property. All the details in the question you have to write, like fair rent, municipal value, standard rent, actual rent received or receivable, interest on borrowed capital, LT bar MT, all such information you tabulate in a table. Are you really with me? Such as fair rent total will be there. Are you really with me? That you write it as 2/3 and what? 1/3. Municipal value total will be given in the question, because municipal value is for the entire house, not for the ground floor. Correct? That has to be, sir, bifurcated into 2/3 and 1/3. Then standard rent will be given for the entire house. That has to be bifurcated between SOP and LOP. Actual rent received will be there. You put a dash in the SOP, because no rent will be attributable to the self-occupied property. You have to write fully for the let out property. Correct? IOBC will be there. That you have to bifurcate between SOP and LOP. LT bar MT will be there. That you have to bifurcate between SOP and LOP. This is called as master table. This is called as what? So this Vijay table is very important, my dear lovable students. Are you already with me? So if a property is a portion self-occupied, portion let out, first prepare the master table. First prepare the, what is the master table? Proportion. Sir, SOP how much? LOP how much? Actual rent received. For SOP it is not applicable, only for the LOP. Municipal value, right total, bifurcate based upon the proportion. Comfortable? Then fair rent, standard rent, LT bar MT, interest on borrowed capital. Then treat SOP as separate property and LOP as separate property. By seeing this table, man, you see this as one question, you see this as one question. That means in this SOP, GA will be nil, LT bar MT not applicable, NA will be nil, 30% not applicable. Sir, check that whether the assessee is traveling through the default tax regime, or if he is traveling through optional tax regime, this IOBC, you claim it as a reduction. Otherwise, this part, put it on dustbin. That's it, game over. Are you really with me? Sir, let out property, anyway we have to take, man. Sir, every data will be available. Then fair rent, see only this column, not the total column. Sir, municipal value, see only this column, not the total column, whichever is higher. Or standard rent, if it is there, whichever is lower. You got the answer as expected rent. Correct? Or actual rent received or receivable will be there only for the let out portion. Then whichever is higher, you finalize the GAV. That's it. Less LT bar MT, you can less it. You will get the NAV. 30% you can less it. IOBC, you can less it. You will get the answer as income from That's what I have taken as, sir, SOAP separately, LOP separately. Nil, 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 nothing, 30,000 or 2 lakh as the case may be. Comfortable? That too if you are traveling only through the optional tax regime. Here, LOP, 3-step approach we have to apply. You can reduce LT bar MT, you will get the answer as NAV. Then you can reduce 30% of the NAV, my dear lovable students. You will get the interest on what capital? Borrowed capital. You will get the answer as income from. That's it with regard to that part also. So we have done with 5 types of house property. We are moving into the last one. What are the 5? Number 1, fully self-occupied property, fully let out property with vacancy, partly self-occupied, partly let out, portion self-occupied, portion let out, deemed to be let out property. What this concept of deemed to be let out property is? For an individual, 2 houses are allowed in India. Are you all really with me? House number 1 and house number 2 for a individual. But if you are having, sir, 3 houses, and if you are saying that all the 3 I am occupying, this is self-occupied property, this is self-occupied property, this is also self-occupied property, then what government is asking that, then when the concept of let out property will come? So it is your istam. You love this house and this house very much. This house, even though it is really self-occupied, it will be deemed that what property? Let out property. Comfortable? At your option. You can, sir, take this as, sir, self-occupied, then LOP. Or take this as LOP, self-occupied. Or this is self-occupied. This is also self-occupied. This as LOP. And every year you can change the decision also. No problem. Are you all really with me? So, what is step number 1? Treat all the 3 houses SOAP. First, treat all the 3 houses. None are LOP. First, all the 3 as SOAP, which is GAV will be nil, 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 nil. Are you all really with me? LT bar MT not applicable, not applicable, not applicable, because all the houses are SOAP. So NA will be nil, 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 nil. Are you all really with me? 30% will be not applicable, not applicable, not applicable. Only IOBC will be available, provided if you are traveling through the optional tax regime, which is 30k or 2 lakh as the case may be. Always it will end up with 30k or 2 lakh as the case may be. Next, step number 2, treat all the 3 houses LOP. Treat all the 3 houses. Assume all the 3 are LOP. That means GAV will be 3-step approach, 3-step approach, 3-step approach. Applicable, sir. Less LT bar MT, you can reduce it, my dear lovable students. You will get the answer as NAV. From the net annual value, reduce 30% of the NAV. And IOBC, you can claim how much? Unlimited. You will get the answer as income from house property. So, I have done 2 working. Step number 1, treating all the houses SOAP, treating all the houses LOP. Are you really with me? Now, I am going to apply the option. How I will apply? SOAP, LOP. Tell me. House 1, I assumed as SOAP. House 2, I assumed as SOAP. House 3, I assumed as LOP. So, since H3 has been declared as LOP, H3 I will never declare as LOP anymore. Are you really with me? In next option, LOP, SOAP. LOP, SOAP. That means house 1 I declared as what? Let out property. And sir, I have not given chance to house number 2. House 2 is let out property, man. So, that's what SOAP, LOP, SOAP. So either SOAP, LOP, SOAP, LOP. Are you all really with me? By this, if you put, you will be getting some income. Sir, in which option you are having the lower income, that option you should take, and that house you should treat it as deemed to be let out property. Are you able to appreciate? This is a 6th type of property, my dear lovable students. So we are having solidly 6 types of property in our syllabus. That is fully self-occupied, fully let out property with vacancy, partly self-occupied, partly let out, portion self-occupied, portion let out, deemed to be let out property. Are you all really with me? Sir, can we one time recall the particulars of that? I will say the question, you have to answer me. Are you all really with me? This is a very quick revision. Already we are doing very quick marathon. Sir, even much faster, man. I am going to talk about fully self-occupied property. Is a how many step approach? 5-step approach. GAV, nil, less LT bar MT. NAV, 30%, 24B, 30,000 or 2 lakh as a case may be. So, always loss from house property will be, in order to claim 30,000 or 2 lakh as should satisfy 3 conditions. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition. Such construction or acquisition should be completed within a period of, from the end of the financial year, which the loan has been. Sir, in income from house property, this is not only for self-occupied property, but also for let out property, whatever may be the property, interest will be classified into 2 categories. One is prior period interest, and always prior period interest will start from the date of taking loan till the 31st March of the immediately preceding previous year in which the loan has been taken. This period interest, you can claim it as a deduction over a period of 5 years. And current year interest, 100% you can claim. That means interest on borrowed capital is equal to 1/5 of the prior period interest plus the current year interest. Comfortable, sir. Now, sir, under section 24B, deduction will be available only if you are traveling through the optional tax regime. You are not entitled to get under the default tax regime. Comfortable. And number 2, if a property is fully let out throughout the entire 12 months, GAV will be a 3-step approach. Fair and or municipal value, whichever is higher or standard and whichever is lower. That answer is called as expected. And expected and or actual rent received or receivable, whichever is. Since you are declaring GAV, can you reduce LT bar MT? Only 2 conditions should be satisfied. It should be paid and it should be paid by the, you will get the answer as NAV. Can you reduce 30%? Can you reduce IOBC? Kitana? Unlimited. You will get the answer as income from. That's what the story of the fully let out property. But let out property with vacancy, sir, you should be very careful, my dear lovable students, because you have to check that whether there is genuinity of vacancy or not. First, you check the situation. Is the actual rent received is more than the expected rent or less than the expected? More than the expected rent, leave it. GAV is equal to actual rent received. If it is less than the expected rent, my dear lovable students, you have to check the genuinity of the vacancy. How to check the genuinity of the vacancy? Take the actual rent received, add vacancy rent, you will get the actual rent receivable. Compare the actual rent receivable with the, if the actual rent receivable is more than the expected rent, then vacancy is genuine, otherwise not genuine. Correct? If vacancy is genuine, GAV is equal to, if vacancy is not genuine, GAV is equal to, are you all really with me? That's it, my dear lovable students, with regard to the genuinity of the vacancy. Then you will get GAV. Technically, GAV will be either expected rent or actual rent received or receivable. Can you reduce LT bar MT? NAV? 30%? Yes, sir. IOBC? Yes, sir. Kitana? Unlimited. You will get the answer as income from. That's it. Fantastic to the core, man. Then coming to the, sir, house property let out for part of the year and house property self-occupied for the, this is time split. What split? 12 months has been split into 5, 7, 7, 5, 10, 2 or 2, 10 like that. That means what department is saying that once you let out a property even for a 1 day, that will be treated as a let out property. Hence, expected rent for the whole year or actual rent received for the let out period, whichever is higher, you have to declare as GAV. Manas konja varthamark sir. Paravalle. You can reduce LT bar MT 100%. You will get the answer as NAV. On that NAV, 100%, 30% can be claimed. Yes, sir. You can claim IOBC. Unlimited you can claim. So we have given so much benefit to you. You just do one benefit to us. GAV you declare full. Are you really with me? You will get the answer as income from house property. And the next category is the portion self-occupied. And this is area split. What split? That is time split. This is area split. Sir, treat it as 2 separate house. Prepare the Vijay table. Are you all really with me? What Vijay table is saying that whatever relevant information in the question given, you tabulate in a table called as master table. Are you really with me? Then use the SOAP column for the SOAP, LOP column for the LOP. Then you can proceed the question. Are you really with me? If an assessee is having more than 2 houses, if he is having only 2 houses, no problem. It is allowed under the act. If he is having 3 houses, then you have to follow 3-step approach. Step number 1, treat all the houses. Treat all the houses. And number 3, apply the option. How you will apply the option, man? SOAP, SOAP, LOP, LOP, SOAP, 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 LOP. We are moving into the next concept of the house property, man, called as, rumba simple, sir, treatment of income from co-owned property. What property? There is one property is there, my dear lovable students, and that property is owned by 2 brothers. For example, brother number 1 and brother number 2. In whose hands income will be taxable. This is covered under section 26. Is covered under section. What section 26 is asking that you have to analyze the property and check that whether it is SOAP or whether it is LOP. If it is SOAP, na, sir, if the property is SOAP, one property is only there, but it is occupied by 2 people, then annual value of property of each co-owner will be nil. That means you have to do like this. If it is SOAP, self-occupied property, then sir, brother 1, brother 2, you have to do the question on an assessee based. What based? Because the IOBC can be claimed separately for brother 1 and brother number 2. Brother 1 can claim 2 lakhs separately and brother 2 can claim 2 lakhs separately. Are you all really with me? And each co-owner shall be entitled to a deduction of 30k or 2 lakh as the what may be on interest on borrowed capital. Are you all really with me? But if the property is a what? LOP, let out property, don't do assessee wise. do property wise. You are having only one property. That is GAV will be 1 GAV, less LT bar MT will be 1 LT bar MT, full LT bar MT. Then you will get the answer as net annual value, reduce 130%, reduce 1 IOBC. Are you all really with me? You will get the answer as income from. The answer what you are getting, you bifurcated into brother number 1 and brother number 2 based upon their share. For example, brother 1 is holding 50% share, income 50% given to brother number 1 and 50% share to brother number 2. Are you comfortable what I am talking? That means what section 26 is asking, that analyze the property that whether it is sopa, lopa. Soapna tani taniya podu. Are you all really with me? Ena sendu poda mudiyadhu soap. Lopna unna potu pirichuko. Are you all really with me? That's what their rule in section 26. So income from such property shall be computed as if property is owned by one owner. So if it is lopna, treat it as one owner and computation once, and after the income so computed shall be appointed among each co-owner as per their specific share. Comfortable what I am talking to you? That's it with regard to the co-owner. Sir, you have to try the questions from the co-owner man. Then we are having only one small topic called as unrealized rent and the what of rent, arrears of rent. Just now we talked about rule number 4, unrealized rent. If 4 conditions are satisfied, rule 4 satisfied, no need to pay tax for the unrealized rent, such as tenancy is bona fide, the defaulting tenant has vacated the property or steps has been taken to vacate him, or the defaulting tenant is occupying any other property of the assessee, or legal proceedings has been initiated, or you have to prove to the assessing officer that even after taking the legal proceedings, it will be useless. Are you able to follow this 4 point? But that guy is saying that since I have not paid the rent to you 3 years back, you said to me that get out. Now I am a billionaire, I am a millionaire. Keep your rent of 2 months or 3 months. Now this is a picture cast for me. Achambar order, appointment order, Mr. Pichumani, keep this rent. Then for me, I got that unrealized rent. What Income Tax Act is saying that since rule 4 has been satisfied at that time, you would have not paid the tax. But now you are recovering the income. So it should be taxable under the head income from house property. And in the year of receipt of the unrealized rent, sometimes you would have sold the property. Sometimes you would have, then capital gain would have came and you would have taxed the capital gain. No problem. As per section 22, in order to tax the income, you should be the owner of the property. But section 25A is saying that even though you are not the owner of the property, in future, if you recovered the unrealized rent or arrears of rent, it should be taxable under the head IFHP. So section 25A provides that a deduction of 30% of arrears of rent or unrealized rent subsequently by the assessee, taxable in the year of receipt or realization. Deduction at 30% will be allowed because this income has not been taxed earlier at all. This is the first time I am going to tax this income, correct? So for this income, you are entitled to get 30% taxable even if assessee is not the owner of the property in the financial year of the receipt or realization. That means this section 25A is overriding section 22. Are you all really with me? So simple. In this current year, if there is any unrealized rent, don't pay tax. But in future, if you realize the unrealized rent, pay the tax after claiming deduction at 30%, not under 24A. That section and all died, but under 25A. That is 24 small a. Under this section, don't claim 30%. Claim deduction under 25A. 25A. Are you able to appreciate what I am talking to you? That's it with regard to taxability of the arrears of rent or unrealized rent. We are having one theory section called as section 27, which is deemed owner. For example, if you are having a house property, you have transferred that house property to your wife because of the love and affection on February 14. And your wife is letting out that property and you are saying that, sir, I gifted to my wife, sir. From here onwards, it is not my rental income. It is my wife's rental income. So section 27 clause 1 is saying that if an individual transfer property to their spouse without adequate consideration, transferor is deemed to be the owner. You only said that you are loving your wife so much. What Income Tax Act is saying that pay the tax also on behalf of your wife. Then you will really love her. Sir, in order to reduce the tax, shift the tax from the husband's and to the wife and only you transfer the house property. Section 27 is saying that still husband is the owner, is the deemed owner. Are you all really with me? Sir, if the transfer is connection to agreement to live apart, it is divorce, sir. Court, High Court, Supreme Court only said that, please give that house property to her. She is only eligible to live in that house. That's why I given that house, sir. Then, sir, the transferee, the spouse, wife or husband will be treated as the owner and income is taxable in their hands. Because after divorce, she is not at all my wife. She is some other person's wife. How it will be deemed owner concept will be applicable? That's it. Next one. Okay, I can't, sir, touch the spouse. Now I am moving into the minor child. I am moving into the, instead of showing love and affection to my wife, sir, Koranda, the papa, come on. Sir, if an individual transfer property to their what child? Minor child. Without adequate consideration, transferor is the deemed owner. But there is exception. If the transfer is to a minor married daughter, then transferor is not the what owner? Deemed owner. Because they are having one family, correct? Don't, I am the deemed owner and all say means, Mapla sometimes talking about your wife. Alright, sir. Even here, clubbing provisions under 64 subsection 1 applicable. I will explain the clubbing at the appropriate time. Hello, sir. If the cash is given to the spouse or minor child to acquire the property, the transferor is not the deemed owner, but clubbing provision would apply. Buddhisaliya, what you are doing, instead of giving the property, you are giving cash. And with that cash, either the spouse or the minor child is buying the property. Then only clubbing provisions will be applicable. Section 27 will not be applicable. Simple if you are having a house property. Without proper consideration, because of love and affection, if you are giving to your spouse or if you are giving to the minor child, still you are the owner. That's what section 27. Holder of a impartible estate. That means one estate or set of property are there which cannot be separated. In that, one of the property you have given to one person, then still you are the owner of the entire chain of property. Holder of impartible estate. What is impartible? Property that cannot be divided. Then it is deemed to be the owner of all the property in the estate. Next one, member of cooperative society or company. For example, you are a member of cooperative society or company or other association or person who is allotted or leased a building or part thereof is deemed to be the owner of the property, even though the society or company is the what owner? Legal owner. Sometimes if you see in Chennai and all, big flats will be there. The 100 flats, the legal owner may be in the name of the society. But in that, I would have purchased only one flat. I will be treated as the deemed owner, even though the papers and all will be there in the society name. Are you all really with me? Person in possession of the property. If you are having any property, sir, having more than, for example, person who takes possession of property in part performance of a contract is deemed to be the owner. Sir, person with rights in property for not less than how many years? You are taking a right in a property. You are taking any property for a lease not less than 12 years. Then you will be treated as the deemed owner. Are you all really with me? That's it with regard to the provisions of the income from house property. My dear lovable students, these are the major provisions we have to discuss. Mainly, property should be classified into how many category? 6 category. Fully self-occupied, fully let out property. Let out property with vacancy, partly self-occupied, partly let out, portion self-occupied, portion let out, and deemed to be let out property. Comfortable. We can start doing Super 3 past examination question before we wind up the marathon of income from house property. So that's it with regard to section 27. Sir, after section 27, we are having section 28, which is the charging section of the profits and gains of business or profession. That section 28, we are having one amendment. That amendment I will tell you at the time of PGBP, but cross-reference is there. What is a cross-reference? If an assessee is engaged in the business of letting out residential houses, not commercial. So, property classified into 2 categories, residential property and the commercial property. If you are letting out a residential property, that may be either for business or profession or other than business or profession. Right? What the amendment is saying that if you are engaged in the business of letting out what property? Residential property. Income generate from letting of residential house or part of the house by the owner shall be chargeable under the head income from house property. That means residential property is equal to house property. That is amendment. Whether one residential house property you are having, you have let out that property, should be taxable under income from house property. I am having 25 residential house property. I am doing business with that. A business itself is letting out of the property. Sir, even though it is business, it will not be taxable under business or profession. It will be taxable under income from. But if the property is a commercial property, then altogether different. If with that commercial property business, then profits and gains of business or profession. So you have to check whether you are in the business of letting out of the residential houses or commercial houses. Are you all really with me? Residential property, whether if you are having one or many, whether you are doing business with that, always taxable under the head income from. So the slogan, one line is residential property is equal to house property. This is the one cross-reference amendment we are having. Actually, this is not an amendment under IFHP. This is actually amendment under PGBP, but I'm giving a cross-reference. That's it, the major provisions of the income from house property. We will be trying 3 brilliant super question from house property. We'll try to apply. This is a MTP April 2023, March 2021 and April 19 question. This first question is little tricky, good question according to me. Be with me till I solve. Mr. Ramesh and Mr. Suresh constructed their house on a piece of land purchased by them at Mumbai. So 2 people are there. That's what they have given. You have to help me with the facts of the question. What is the name of the first person? Mr. Ramesh. What is the name of the second person? Mr. Suresh. Because the facts of the case will change for person to person. Build up area of each house means 2 houses they have manufactured, was 1500 square feet, ground floor and an equal area in the first floor. That means the build up area is equal to 1500 square feet SFT and 1500 SFT. Are you all really with me? Here also 1500 SFT and 1500 SFT. So ground floor 1500 and first floor also 1500. Are you all really with me? Continuing. Ramesh started construction on 1/4/2023 and completed on 1/4/2024. So start of the construction and completion of the construction given. Ramesh, when started man? 1/4/2023 and completed on 1/4/2024. Am I right, sir? Suresh started the construction on 1/4/2023. More or less both of them started on the same date, right? And completed the construction on 30/6/2020. But that guy completed only on 30/6/2000. Okay, fine, fantastic, sir. Ramesh occupied the entire house on 1/4/2023, right? So occupation is 100%. Here Ramesh 100% occupied. Both the 1500 SFT ground floor and 1500 SFT first floor. That means this is a 100% self-occupied property. Comfortable? So treat it as one property. Don't have ground floor, first floor complex and all. Suresh occupied the ground floor on 1/7 and let out the first floor for a rent of how much rupees per month. That means he is having ground floor and first floor. Ground floor he has let out the property as self-occupied. Ground floor is self-occupied property and first floor is let out property with 15,000 per month. Correct? For a rent of, because he started from 1/7. So 7, 8, 9, 10, 11, 12, 1, 2, 3. How much month? 9 months. So 15,000 into 9 comes to 1,35,000 will be the actual rent received or receivable. Are you all really with me? Continuing with the question, man. However, the tenant vacated the house on 31/12/2024. So there is going to be a vacancy. And Suresh occupied the entire house during 1/1/2025 to 31/3/2025. That means from January, February and March, there is vacancy. Correct? So 3 months vacancy. So I can't put 9 months because I received only what? 6 months. Correct? So 15,000 into 6 comes to 90,000. And even I don't know, is there any unrealized rent or not? I don't know. Now I am putting as if no unrealized rent. So 3 months is what? Vacancy. So this 3 months is also self-occupied. Not vacancy, it is self-occupied. Who started? Suresh started occupying the property. Correct? Look at here. However, the tenant vacated house on 31/12. And for January, February and March, sir, it was not vacant. Who started? Suresh started the entire house. That means ground floor and first floor. Following is other information. Fair rent value of each unit, that is ground floor and first floor, is how much lakhs per annum? 1 lakh per annum each unit. That is ground floor 1 lakh, first floor 1 lakh. Municipal value of each unit, ground floor bar first floor, how much rupees per annum? Municipal tax paid, Ramesh, Suresh, total 8,000 and 8,000. Repair and maintenance, put it on dustbins. Correct? Yes, sir. Ramesh has availed a housing loan of how much lakh? 20 lakh. At the rate of, so loan, we have to bifurcate in table, so better for our writing. Loan at the rate of 12%. How much lakh? 20 lakh. Can we write date of taking loan? Date of taking loan is equal to 1/4/2023. I hope on that date only he started the construction. Am I right? Yes, sir. Suresh has availed housing loan of 12 lakhs at the rate of 10%. So, inga vandu loan at the rate of 10% comes to 10 lakhs. Am I right, sir? Yes, sir. At the rate of 10%. 12 lakhs. At the rate of 10%, 12 lakh. Super, sir. Now, tell me, when he started, man, on 1/7/2000 and so date of taking loan, sir, 1/7/2023. Am I right, sir? I'm proceeding, sir. No repayment was made by either of them till 31/3/2000. Compute income from house property for Ramesh and Suresh for the previous year 24/25 is the question. Is the question said that in what route they are traveling, like default or optional tax regime? No, sir. If you see the first person, that is, who's the first person? Ramesh, Mr. Ramesh. The entire house is a self-occupied property. Are you really with me? That means GAV will be nil. Less LT bar MT cannot be claimed as a deduction. NAV will be nil. 30% of NAV cannot be claimed as a deduction. IOBC, sir, the loan 20 lakh rupees is a loan. Correct? Yes, sir. He has taken loan from 1/4/2023. 23 means 23/24. And he completed the construction on 1/4/2024. So there is a prior period interest. So my dear lovable students, interest on what capital? Borrowed capital. For the first person, classified into two category. Number one, prior period interest and the current year interest. Are you all really with me? Prior period interest will be from the date of taking loan, which is 1/4/2023 till always it will end on 31/3/2023. 23 or 24 20 on 1/4/2024 they have completed. So 31/3/2024 should be the right date. Correct? So 23/24 only 1 year is there. So prior period is, what is the loan, my dear lovable students? 20 lakhs. 20 lakhs into how much percent? 20 lakh into 12% comes to, but this cannot be claimed in one shot. Correct? This can claim it in, so 1/5 of the prior period interest is equal to 2,40,000 divided by 5 comes to 48,000 is the share of the prior period interest. Can I proceed? My dear lovable students, coming to current year interest. Current year is nothing but the current year. Correct? Which is 20 lakhs into 12% comes to 2,40,000. So can I calculate the total IOBC? So total IOBC is equal to 48,000 plus 2,40,000. Am I right, sir? Total comes to 2,80,000. But as per section 24B, this will be restricted to how much lakh? 2 lakh. And I am assuming that assessee is traveling through the optional tax regime. Otherwise, this much calculation will be waste. Correct? Fantastic to the core. I am going through the answer and checking what is happened. Computation of income from house property of Mr. Ramesh. Sir, GAV is nil. Because for a self-occupied property, GAV is always nil. Less deduction under section 24B. There is no concept of LT bar MT and all. NAV will be nil. 24B, interest paid on borrowed capital, 20 lakh to 12% come to 2,40,000. Right? That is the current year interest. Then pre-construction interest, we all know that 2,40,000 is the last year interest. That can be claimed over a period of 5 years. So 48,000 rupees is the share of 1/5 of interest. So total 2,80,000 is there. But as per second proviso to 24B, interest deduction will be restricted to, so loss under the head income from house property to Ramesh will be 2 lakhs. Are you comfortable? Since Ramesh is fully self-occupied property, no confusion, only 24B consequences are there. Now coming to Suresh, is having 2 floor, my dear lovable students. One is ground floor and what he is doing with the ground floor is the question. With the ground floor is what doing? Self-occupied property, and let out property is first floor. So self-occupied property and let out property. What is the SFT? 1,500 SFT and 1,500 SFT. That means proportion is 50-50. Correct? So if you see gross annual value less LT bar MT paid by the owner, you will get the answer as net annual value less deduction under section 24A. less deduction under section 24B, which is interest on, you will get answer as income from house property, right? Actually, what has happened is the first 1500 SFT throughout 12 months it was self-occupied, correct? So GAV will be nil, LT bar MT will be nil, NA will be nil, 24A will be nil, you will be having only IOBC, correct? My dear lovable students, what is the IOBC? 12 lakh rupees is a loan. Yes, sir. This 12 lakh comprised of actually date of taking loan is 1/7/2023. That means 23-24. Our year is 24-25, correct? So again, I have to calculate the interest on what capital? So interest on borrowed capital classified into two categories. Number one, prior period interest and also the current year interest. Am I right, sir? With regard to prior period interest, what is the date of taking loan? 1/7/2000 and when they have completed the construction 30/2000, even though it has been completed on 36/2024, always we should end with 31/3. So it should end with, my dear lovable students, to 31/3/2024. That means only 23-24 is there. That too 7, 8, 9, 10, 11, 12. 1, 2, 3. How much month? 9 months is the prior period interest. What is the amount of loan? Tell me quickly. 12 lakhs into rate 10% into 9 divided by 12. Comfortable? So 12 lakhs into 10% into 9 divided by 12 comes to 90,000 is the share of prior period interest. Correct? But this has to be claimed over a period of 5 years. So 90,000 divided by 5 comes to 18,000 is the share of interest that can be claimed in financial year 24-25, correct? But in 24-25, the property is classified into two categories. Number one is SOAP 50% and what? That means for SOAP 9,000 will be the allowable interest and for LOP 9,000 rupees will be the allowable interest. Are you understanding? That is total interest which you can claim will be 18,000. But in this year 9,000 and 9,000. Look at here, man. Look at the working and clearly understand. Computation of deduction under 24B. Interest on what capital? Borrowed capital. You tell me, current year interest I am calculating. I have not calculated as working. No, straight away I am putting. What is a loan? 12 lakhs into rate 10% comes to 1 lakh. Out of this 1,20,000, 50% of the house is SOAP. 50% of the house is, that's why, sir, 60,000 for ground floor and 60,000 for first floor. Comfortable? Coming to pre-construction interest, man. 12 lakh into 10% into 9 by 12 come to total. This 90,000 cannot be claimed in one shot. 90,000 has to be claimed in. So divided by 5 come to 18,000. But during our year, 9,000 is ground floor and 9,000 is. So total deduction under 24B will be 69,000. What, man? That's what this 69,000 has been written. Now, ground floor, is it self-occupied? GA will be nilla. LT bar MT cannot be claimed as deduction. NAV will be nilla. 30% of NAV will be nilla. Just now we computed the IOBC, 69,000 loss. So income from house property, 69,000. Are you following? Coming to the first floor, man. Actually, what happened to the first floor was, sir, from 1/4/2024, when the construction has been completed, 36/2024. That means for April, May, June, 3 months it was under construction. Am I right? Then from 36 you let out the property, correct? For, sir, till 31/12/2024, correct? So 7, 8, 9, 10, 11, 12. How much months? 6 months actually this property was let out property. Then for the next 3 months you itself start using the self-occupied property, correct? So this period you don't consider, my dear lovable students. But this period, what actually happened? Out of 6 type, what type this is? This is partly self-occupied and partly let out. Even one day you let out a property, you have to treat it as a let out property. But there is a big twist in the question. The big twist in the question is, if you see, my dear lovable students, they have given fair value. Fair value is how much lakhs per annum? 1 lakh. Municipal value is 72,000 per annum, correct? So fair rent is equal to 1 lakh and municipal value is equal to 72,000. Are you all really with me? Actually, this 1 lakh is for 12 months and municipal value is for, actually this 3 months property itself is not there. Then I have to convert this into 9 months. Are you all really with me? Because only property got birthday of last 9 months. So 1 lakh into 9 by 12 comes to 75,000 is the applicable fair rent. Then 72,000 into 9 by 12 comes to 54,000 is the applicable fair rent. Are you all really with me? That means, my dear lovable students, now I have to compare that expected rent for the whole year or let out for actual rent for the let out period, whichever is. For that, I have to check fair rent or municipal value, whichever is higher. 75,000 or 54,000, 75,000 is the higher, correct? Is standard rent details given in the question, not given in the question? Skip step number 2. Or actual rent received or receivable for 6 months, you have lettered for 15,000. So 15,000 into 6 comes to 90,000. You tell me 75,000 or 90,000, whichever is higher. That's why GAV is 90,000. Are you able to appreciate? Here, don't say that vacancy is there. Here, there is no vacancy because first 3 months property are under construction. Last 3 months property has been self-occupied. There is no question of what at all, vacancy at all. So, can you reduce LT bar MT? Yes. Here, one of the beautiful, another twist is there in the question. Municipal tax by Ramesh 8,000. Put it on dustbin because entire first house has been self-occupied. But Suresh, out of 8,000, 50% is self-occupied and 50% is let out. Only 4,000 can we claim it as a deduction. Don't reduce entire 8,000. You will be getting NAV on you put 30%. Already we finalized IOBC. You will get income from house property. Again, that is a loss. These are the working note and notes. Computation of GAV of the first floor of Suresh house. First floor, if a single unit of property, in this case, first floor of Suresh house is let out for some months and self-occupied for the other months, then the expected rent of property shall be taken into account for determining the annual value because expected rent for the whole year or actual rent received for the expected rent shall be compared with the actual rent. Whichever is higher shall be adopted as the annual value. In this case, actual rent shall be the rent for the period for which property was let out during the year. Expected rent is higher of fair render. What value? This should be considered for how much month? 9 months. Since the construction of property was completed only on 36/2024. Are you able to appreciate, sir? So expected rent is 75,000. How you got? Sir, fair rent totally for entire 12 months 1 lakh. Into 9 by 12 will be 75,000. Municipal value 72,000. Into 9 by 12 will be 54,000. So actual rent is 90,000 because 15,000 per month for 6 months from July to December. So GAV will be 90,000 being the higher of expected rent of 75,000 and actual rent of 90,000. Are you able to appreciate? Coming to illustration number 2. So good question, illustration number 1. You try by your own and if you go wrong, you check it. You are required to compute the income from house property for assessment year 25-26 of Mrs. Rajnikant from the house property of P in Haryana. That's it. Municipal value of the property is how much? 7,50,000. Very important information. Fair rent of the property is how much? 6,30,000. And standard rent is how much? 7,20,000. Right, sir. Property was let out for 80,000 per month for the period April to November. What happened after November? Tenant vacated the property. And Mrs. Rajini used the house for what occupation? Self-occupation. Again, this is also from partly self-occupied, partly let out. Rent for the month of October and November could not be realized from the tenant. We have to check that rule 4 condition are what or not. Tenancy was bona fide, but the defaulting tenant was in occupation of another property of the assessee. Rule 4 condition has not been. That means even though you don't receive rent for October and November, still you are liable to pay tax. Paying rent regularly, she paid municipal tax at the rate of during the year and paid interest of 50,000 during the year for the amount borrowed towards repair of the house property. Simple question, normal question, house property question. First, you have to apply the timeline, my dear lovable students. 12 months totally are there. Out of the 12 months, there is a split. First, how much months? Property was let out for 80,000 per month from April to November, correct? So, till November 2024. That means April, May, June, July, August, September, October, November. How much one? It's a game of 8 months and 4 months. 8 months, this property was a let out property with a rent of 80,000 into 8 months comes to 6,40,000 is the actual rent received. This period 4 months is a self-occupied property, my dear lovable students. No need to check the genuinity of the vacancy and all, because there is no what at all, vacancy at all. So tell me, fair rent or municipal value. What is fair rent? 6,30,000. Look at the question and participate, man. 6,30,000. What is the municipal value? 7,50,000. You have to take whichever is higher. So fair rent or municipal value, whichever is. So 7,50,000 or standard rent is there. How much is the standard rent? 7,20,000 is the standard rent, right? Whichever is lower. So the expected rent is equal to 7,20,000. My dear lovable students, if there is any vacancy, I have to go and check. Correct? Here there is no what at all. This house property will fall under which category of house property? This is partly self-occupied. If it is partly self-occupied and partly let out, still it has to be treated as a let out property. Then GAV is equal to expected rent for the whole year. The expected rent for the whole year is 7 lakh or actual rent received for the let out period 6,40,000, whichever is. Actually inside this 6,40,000 unrealized rent is there, but rule 4 condition has not been. Hence the GAV is equal to 7,20,000. If you come, man, GAV, look at here, man, I have finalized the gross annual value as 7,20,000. Once you get GAV, everything is pakka. GAV is 7,20,000. Can you reduce LT bar MT? How much is the LT bar MT percentage given in the question? 12%. So what into what? 7,50,000 into 12% comes to 90,000. NV is 6,90,000. 6,90,000 into 30%. So 1,89,000. Am I right? 6,30,000 into 30% will be 1 lakh. Now interest on borrowed for repair. It is fully allowed because this is a let out property. In case of let out property, sir, loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition. Such concepts and all not applicable. So entire 50,000 can we claim it as a deduction. You will get the answer as income from house property. Are you comfortable? I'm moving to the last question from our revision series. Mr. Kushal is a resident but not ordinarily resident in India. Sir, if an assessee is a resident and ordinarily resident, global income is taxable in India. If an assessee is a resident but not ordinarily resident, only if the income is received in India, it will be taxable in India. During the assessment year 25-26, he furnishes the following information regarding his income or expenditure pertaining to his house property for the previous year 24-25. He owns 2 houses, no problem. 2 is allowed. One in New York and other in Ahmedabad. No issue at all. House in New York is let out there and rent of $5,000 per month. The entire rent is received in India. Since you are a resident but not ordinarily resident, since the income is received in India, the entire income will be taxable in India. He paid property tax of $1,250. Can we claim it as a reduction? LT bar MT, whether you paid in India or, and severage tax of $750 there. LT bar MT, local tax. This severage tax may be local tax of that country. Correct? INR 81 has been given. So 1,250 plus 750 comes to how much? 2,000 total into what? 81 comes to 1,62,000. The house in Ahmedabad is self-occupied. No problem. 2 houses can be taken. He had taken a loan of 30 lakh to construct the house on 1st September 2019 at what? 10%. The construction was completed on 31st May 2021 and he occupied the house on 1st June. The entire loan is outstanding on 31st March. Property tax paid in respect of second house is 2,800. Put it on dustbin because that house is a self-occupied property. LT bar MT cannot be claimed as a commuter income chargeable under the heading income from house property in hands of the Kushal for assessment year 25-26. If he has opted out of the default tax regime under 115 BAC, then they are entitled to claim deduction under section 24B. Are you able to appreciate? Modalla, I will be finding out the let out property in New York. How much rupees is the GAV per month? $5,000 into 12 into 81 comes to 48,60,000. Are you all really with me? Less municipal tax or local tax paid. Total $1,250 plus 750. Sir, total $2,000 into conversion rate what? 81 comes to total 1,62,000. Will you get NAV in Indian currency? which come to 46 lakh 90,000. Adoda 30% comes to 14 lakh 9,400. There is no IOBC has been specified in the question. You get the income from what property? House property. But income from self-occupied property in Ahmedabad, since it is SOP, GA will be nil, LT/MT cannot be claimed, NAV will be nil, 30% will be not applicable, but you can claim IOBC alone. But for that IOBC, you have to calculate the prior period interest and the current year interest. You tell man, for the prior period interest and the current year interest, when the loan has been taken. Now, interest on housing loan for construction of self-occupied property allowable as deduction under 24. Interest for the current year, they themselves said that no principal has been repaid. What is the amount total? 30 lakhs. So 30 lakh into 10% comes to 3 lakhs. Sir, there itself answer over because it should be restricted to. But for the completion of answer will show everything. Pre-construction interest from the date of taking loan 1/9/2019. Always pre-construction interest will close on 31/3/2021. Correct? So you are having 1920 and 2021. Correct? But 1920 you are having only 6 months because September, October, November, December, January, February, March 7 months. Because it is from 1/7/19. So September means from September if you count 7 months. Yes, sir, because September, October, November, December, January, February, March. And 2021, you will be having 12 months, correct? So 12 plus 7 comes to 19 months is the total. Are you all really with me? That's why they have given 19 divided by 12. So 30 lakhs into 10% into 19 by 12 comes to 4,75,000. But this 4,75,000 cannot be claimed in one shot. It can be claimed only in. So divided by 5 comes to 95,000, correct? So 3 lakh plus 95,000 comes to total 3 lakh. But that 3,95,000 will be restricted to, that's what they have written here as 2 lakhs. So you are getting loss from house property, correct? My dear lovable students, you are having income from one house in outside India. New York house, you are having income of 32,88,000 and self-occupied property in Ahmedabad, loss of 2 lakhs. So the net income from house property, 30,88,000. Are you all really with me? Since Mr. Kushal is a resident but not ordinarily resident in India, for assessment year 25, income which is inter alia received in India shall be taxable in India, even if such income has accrued or arisen by virtue of provisions of Section 5. Section 5 is the scope of total income comfortable. Accordingly, rent received from house property in New York would be taxable in India since such income is received by him in India. That's it with regard to the Super 3 question, past examination question of income from house property. Are you able to connect the provision into the question? If yes, sir, redo all the 3 questions. We are done with the marathon of the income from house property also. Sir, very, very, very happy morning to all. Sir, I'm going to start the marathon of a brilliant, beautiful, fantastic topic called as profits and gains of business or profession. Very important chapter at the CA inter level. Sir, chapter PGBP for our classroom discussion classified into 5 categories. Number 1, deduction. Number 2, disallowance. Number 3, procedural aspects. Number 4, presumptive taxation. And number 5, 43 series. What this chapter is altogether dealing is the profit and loss account. My dear lovable students, sir, for a businessman or a professional, he will be having a profit and loss account. In the profit and loss account, what are the expenses can be debited? For example, to salary, to rent, sir, to salary expenses. Like that, you will be having lot of expenses. Can salary be debited to P&L account? Yes, sir. Can rent be debited to P&L account? Yes, sir. Can salary expenses be debited to P&L account? No, sir. So, whatever item which are allowed to be debited to P&L account is called as deduction. Is called as what? What are the items should not be debited to P&L account but wrongly be debited to P&L account? Because of that, our net profit as per P&L would have been come down. Hence, it has to be added back. This is called as disallowance. This is called as, that's what our discussion is all about. The first one is deduction, then disallowance. Right. Section 28 is a charging section. I will come at the end to section 28. Section 29 is a computational section. How to compute the profits and gains of business or profession. Section 30 is expenditure relating to building. Section 31, expenditure relating to plant, machinery and furniture. First of all, understand, my dear lovable students, whether you are conducting either business or profession, you need a building. Because by sitting in roadside, you can't conduct the business or profession, right, sir? So that's what section 30 is starting, that expenditure relating to building. Expenditure relating to building in section 30, they are explaining that if you are incurring these expenditure for the purpose of building, that can be debited to P&L account. Number one, we are going to talk only about the special case. For example, there is a building and that building has been partly used for business and partly for others. For example, in one building, you are sitting for residential purpose and you are using the same building for the purpose of business. If it is 50-50, only 50% of the rent can be debited to P&L account. Are you really with me? So, proportionate part of expense attributable to business use is allowed as a deduction. Whereas, you have taken a building for rent for the purpose of business or profession. You have subletted that building to some other person. Then, sir, you will be paying rent to the main landlord. For example, 1 lakh rupees is what you are paying. And since you have subletted, you will be getting rental income. 40,000 rupees is the rental income. Then 60,000 will only be allowed as a deduction as per section 30. Now, assume there is a building and you are the owner for that building, my dear lovable students. If that is the case, then if assessee being the owner of the premises, or if the premises of the firm, partnership firm, is held by one of the partner in this circumstance, sir, no notional rent allowed as deduction. That means in exam, how they will test it? No, sir, they will say that there is a sole proprietor, Mr. X, and Mr. X is the owner of the building. And in the P&L account, they will say that to rent has been given. I myself can't pay rent to myself, correct? So it will never be allowed as a. That means if you are the owner of the building and sir, notional rent will not be allowed as a deduction. I myself can't pay rent to myself. So if that amount debited to P&L account should be added back. But if there is a partnership firm, for example, 3 partners are there, partner A, partner N and partner M, my dear lovable students. And partner N is the owner of building. In that building only partnership firm is conducting the business. Then the partnership firm can pay rent to the partner. That is allowed under the Income Tax Act. Rent payable to partner to the extent reasonable and not excessive is allowed. That means what is the carrying point? Simple. If there is a sole proprietorship, if that sole proprietorship should not pay rent to the sole proprietor. But if there is a partnership firm, they can pay rent to the partner. Now, coming to the repair. There is a building, my dear lovable students. For that building, you are incurring repair. Only revenue repair will be allowed as a deduction under section 30. And assessee should be the owner of the building. For example, if I am the owner of the building, it is my responsibility to take care of the repair. But if I am a tenant who has to undertake the repair as per the agreement, in the rental agreement, they said that being a tenant, you are the person who are supposed to incur the repair. Then tenant will only incur the repair. Then tenant can debit that as an expense in his P&L account. If tenant is claiming it as an expense, such expenditure should not be claimed as by the owner. Only if the owner spend that money, that can be claimed as a deduction. Even if the assessee occupy the premises otherwise as a tenant or owner. Even though I am not a tenant, I am not an owner, I have taken some place for lease for some time. Sir, even then if you are incurring the repair expenses, that can be debited to P&L account. Then coming to the last one, other expenses. If you are having a building, you have to pay land revenue, local tax, municipal tax, insurance and all. That and all can be debited to P&L account and can be claimed as a deduction. One line summary of the entire discussion before the day of examination is, you may be either owner or tenant. If you yourself are the owner, in the P&L account, rent should not be debited. Correct? If you are a tenant, rent can be debited and it will be allowed as a deduction. If you are the owner, if you pay the rent and taxes, then it can be allowed as a deduction. If you are a tenant, because of the rental agreement, owner said that you are the person who are supposed to pay the rent and taxes, then that will be allowed as a deduction. If you are an owner and paying the insurance for the property, that can be debited to P&L account. Being a tenant, as per the rental agreement, tenant is the person who are liable to pay insurance, that can be claimed as a deduction. Sir, if you are the owner and if you are incurring revenue expenditure, that can be claimed as a deduction. As per the rental agreement, even though I am the tenant, I am supposed to incur the revenue expenditure, that can be debited to P&L account. Sir, you may be either owner or the tenant. Capital repair, capital expenditure you incurred should be added to the what of the asset cost of the asset, and it will not be allowed as a deduction. That's it with regard to the first section called as section 30, expenditure relating to building. So we are not talking about wala wala kola kola. We are talking only about the relevant things. What section 30 is talking that if one building is there partly for business, partly for personal, the expenses relating to the personal will not be allowed as a deduction. Are you really with me? Sir, if there is one building, my dear lovable students, sir, you are subletting that building, then you will be paying some amount to the original owner and you will be getting some amount from the subtenant. The net only will be allowed as a deduction. If you are the owner of a building, you may be either sole proprietor or partnership firm. Sole proprietor, notional rent is not allowed. Partnership firm, sir, rent can be paid by the partnership firm to the partner. That is allowed. Repair, only revenue repair is allowed. Generally, in order to claim repair as an expenditure, you should be the owner. But if you are a tenant and as per the agreement, still if you have to incur the repair, that will be allowed as a reduction. If you incur any other expenses like local tax or municipal tax, land revenue, municipal taxes, insurance, if you really incurred, that can be debited to the P&L account. That's it, the story of section 30. Come on. So now you are having a building. All the special cases of the building has been done. With building alone, we can't do business or profession. We need plant and machinery inside the building. Right, sir? That's why the next section is section 31, expenditure relating to plant, machinery. And the same thing will be followed, man. You may be either owner of that plant and machinery or you may taken that for rent. If you are the owner of the plant and machinery, sir, you yourself can't pay rent for the plant and machinery. So it will not be allowed. So how it will be tested in examination? They will be giving a P&L. In that P&L account, they will say that rent paid to owner, sir, because of this net profit will be reducing, should be added back. Now, insurance, sir, whether it is paid by the owner or tenant, can be claimed as deduction. Revenue repair, whether it is paid by the owner or tenant, can be claimed as deduction. Capital expenditure, whether you are either owner or tenant, it will not be allowed as a deduction. Are you all really with me? That's it, my dear lovable students, with regard to section 30 and section 31. So you are having a building, and inside that building, you are having plant, machinery, and furniture. That's what section 30 is talking about. Building. Section 31 is plant, machinery, and furniture. Now, if you are having building and plant, machinery, and furniture, surely, obviously, it will get depreciated. That's what section 32 is, depreciation. Right, sir? Under the Income Tax Act, we are having 4 types of depreciation. Number 1, depreciation at SLM method. This is applicable to power sector undertaking. This is applicable to, my dear lovable students, if you are a power sector undertaking, sir, assessee in the Income Tax Act classified into 2 categories. Number 1, power sector undertaking, and other than power sector undertaking. What Income Tax Act is saying that if you are a power sector undertaking, you have given an option. The option is either you can travel through the straight line method or you can travel through the WDV method. It is at your ishtam. But other than power sector undertaking, only WDV method is there. There is no concept of straight line method at all. Are you all really with me? So, this power sector undertaking can travel through either SLM method, or if they are traveling through straight line method, then 32 subsection 1 class 1 will be applicable. If they are traveling through WDV method, 32 subsection 1 class 2 will be applicable. And even under WDV method, 32 subsection 1 class 2 will be applicable. That means straight line method means 32 subsection 1 class 1. Only one person can travel through straight line method, that is power sector undertaking. And 32 subsection 1 class 2 is WDV method, all SSC, even including the, and if you are traveling through the WDV method, not the straight line method, you are entitled to claim the depreciation, which are covered under 32 subsection 1 class 2A. That's what additional depreciation under 32 subsection 1 class 2A. And if power sector undertaking adopted straight line method, then terminal depreciation concept will be applicable under 32 subsection 1 class 3. So technically there are 3 types of depreciation. Number 1, normal depreciation, additional depreciation, terminal depreciation. That normal depreciation itself is of 2 categories. One is straight line method and the WDV method. Straight line method is applicable only to power sector undertaking, whereas WDV method is applicable to both power sector undertaking and other than power sector undertaking. Comfortable? So 32 subsection 1 class 1 is straight line method, 32 subsection 1 class 2 is WDV method, and this will be provided as per the income tax rules. And additional depreciation 32 subsection 2, 32 subsection 1 class 2a, which is 20% of the actual cost. If someone is asking how much additional depreciation you will get, 20% of the. Now coming to the terminal depreciation. This concept is applicable only to what sector undertaking who adopted the what method. That means if a power sector undertaking adopted WDV method, this concept will not be applicable. So terminal depreciation will be applicable only to power sector undertaking who adopted the. Fine. I'm going to talk about, sir, part number 1, which is normal depreciation. We understood that there are different types of depreciation are there in the Income Tax Act. Number 1 is talking about the normal depreciation. Sir, in order to claim the normal depreciation, assessee should satisfy, which is nothing but section 32, which is 3 plus 2 is equal to 5. So 5 conditions should be satisfied. First of all, you should be the owner of the asset. If you are not the owner of the asset, then how you can claim the depreciation? Number 2, sir, you are having an asset. That asset should be used for the purpose of business or profession. That asset should be used for the purpose of. When I have to use the assets, sir, that too in the relevant previous year. And that asset should form part of eligible class of asset. And section 50 should not be applicable. That means in order to apply section 32, there is a section called as section 50. That section 50 is in capital gain chapter. Are you all really with me? This section 50 should not be applicable. That means if section 50 applies, 32 will not be applicable. If 32 apply, 50 will not be applicable. Don't worry, we will have a comparison. Are you all really with me? So basically 5 conditions should be satisfied. Assessee should be the owner of the asset. Asset should be used for the purpose of business or profession. That too in the relevant previous year. Asset should form part of eligible class of asset. Section 50 should not be. Sir, I understood everything except what do you mean by eligible class of asset? Number 1, tangible asset and intangible asset. That means asset should be either tangible asset or. The important thing is they are having a list for the tangible asset and the intangible asset. For example, if you are asking me tangible asset, building, are you all really with me? Building is a tangible asset. Plant and machinery is a tangible asset. Furniture and fittings is a. In the list of tangible asset, if you see, land will not be there. Sir, even though land is tangible, it is not a depreciable asset. It is not a depreciable asset. Because in order to claim depreciation, my dear lovable students, cost of the asset minus scrap value divided by life. This life concept is not there for the land because land is having indefinite life. So this formula will not work. That is why land is not a depreciable asset. Some people used to say that land is an appreciable asset. Let it be there, but every land is not an appreciable asset. Sir, certain lands are even depreciable asset, but we don't have the time frame to write off that depreciation. That's why land is not a depreciable asset. So what I'm trying to say to you is, even though land is a tangible asset, which has not been listed by the Income Tax Act, so tangible asset means already one list has been given, like building. If you are having a building, my dear lovable students, that building, if it is for residential purpose, 5%. If it is for general purpose, 10%. Temporary structure, 40%. Comfortable? General plant and machinery, 15%. General furniture and fittings, 10%. These are special items where 40% is the rate of depreciation, like aeroplane. That is also a tangible asset. Air pollution control equipment. That is also a tangible asset. Books is a tangible asset. Computer is a tangible asset. And windmill is a. For these and all, we are ready to provide you depreciation at the rate of 40%, my dear lovable students. You heard about motor vehicle, sir, car and all. Sir, used in the business of running them on hire. In the sense means Ola or Uber. If car is used by Ola or Uber, then it is 30%. Other than those used in business of running on the hire, I am having car which is not going to be used for Ola, Uber. General business purpose, I am using a car. Then the rate of depreciation is. These are the major tangible assets, my dear lovable students. And intangible assets such as, sir, know-how, patent, copyright, trademark, license, franchisee, or any other assets of similar nature other than goodwill. Other than, for all the intangible asset, 25% is the rate. 25% is the. These important things will not be given in the question. This we know. For example, books, how much percent? 40%. Sir, computer, how much percent? 40%. Aeroplane, how much percent? Plant and machinery, general. Ola, Uber, car, 30%. Other than Ola, Uber, this understanding we should be having, that itself is more than enough. And if you want a detailed list of, sir, ICAI study material which I have given for building, furniture and fitting, plant and machinery, and we are having ships, sir, we are having intangible asset, then That's it. Sir, you can go for the detailed list. But that and all is not minute question will not be coming. What is important? I've put it as graph and I've revised. Come on. Sir, in Income Tax Act, we are following 180 days concept. We are following. Okay, sir, I understood that for plant and machinery, the general rate is 15%. Am I right, sir? For example, from 1st of April till 31st of March, we are having 365 days. Am I right, sir? What Income Tax Act is saying that if you purchase an asset and put to use an asset in the same previous year for more than 180 days, for example, sir, after April, after May, on June month, on 15th of June, you are purchasing an asset and you are put to use an asset. Hello, sir. From 15th of June till 31st of what? March. You are what the asset man using the asset. If that is the case, my dear lovable students, have you put to use for more than 180 days? Yes, sir. Then you are entitled to claim the entire 50%. That is full rate of depreciation will be provided. For example, you purchase an asset only on, sir, 15/1. For example, 15th of January, 15/1/2025. Assume that day itself you have purchased and put to use the asset. Sir, from this date to this date, will it be more than 180 days or less than 180 days? Less than 180 days, my dear lovable students. Then you are entitled to claim only 7.5%, which is nothing but 50% of the 15%. One example I have said as 15%. For all the assets, that will be the matter. Are you all really with me? So where asset purchased and put to use in the what year? Same previous year. You have to check whether you put to use for more than 180 days or less than or equal to 180 days. If it is less than 180 days, half the rate of depreciation. If it is more than or equal to 180 days, you are entitled to get. Look at the big art of the Income Tax Act. Even if it is equal to 180 days, you are entitled to claim the full rate of depreciation. Are you all really with me what I am talking to you? Now I am moving to the next concept, man. Very simple concept. Enjoy the concept. For example, there is a place called as ANM classes. Have you heard about ANM classes? You know one thing, my dear lovable students, ANM classes is now situated in Nungambakam. In that Nungambakam, we are having ground floor, we are having first floor, and we are having third floor also. Are you all really with me? But in order to accommodate the students, we don't have space. So what I said to the owner that, owner, please construct one more floor by removing this rooftop, and you construct like this and please add one more floor. Then you put some roofing. Are you all really with me? He said that I don't have money, sir. I don't have that much money to do that. I said that no problem, sir. I'm having lot of money. I will construct that part by spending 30 lakh. You tell me this entire building is not ANM classes building. We have taken for rent, and as per section 30, that rent can be debited to P&L account. Now I am incurring, for example, sir, 50 lakh rupees to construct an additional floor. Are you all really with me? You tell me as per section 32, in order to claim depreciation, assessee should be the, I am not the owner of this floor, but I have spent 50 lakh. What Income Tax Act is saying that? Where an assessee is carrying on business or profession in a building. ANM class is doing business or profession in a particular building, in respect of which he hold a lease or right of occupancy. Yes, we are having the tenancy right. Sir, any capital expenditure is incurred by assessee on the construction of any structure or by way of renovation or extension or improvement to the building, then the assessee will be treated as the owner for such capital expenditure. Then for the purpose of claiming depreciation under section 32, this floor, I will be treated as the owner. Sir, actually I am not the owner, sir. If I go and say to the owner that I am the owner, then he will beat me, sir. Are you really with me? But what Income Tax Act is saying that for the purpose of claiming depreciation, because we are having condition that assessee should be the, sir, there is an exception to the condition. This is the exception called as deemed building. What building? Fantastic to the course. Sir, now coming to a very important topic, hot topic of the PGBP called as, sir, unabsorbed depreciation. What depreciation? What happened in the profit and loss account? I calculated the depreciation as per the rate specified in section 32 and I debited that depreciation in the P&L account. Okay. Because of debiting that depreciation in the P&L account, I don't have net profit, my dear lovable students. I'm ending up with net loss. I'm ending up with what PGBP, profits and gains of business or profession chapter, is saying that if you are having loss from income, loss from PGBP, profits and gains of business, or in the current year, yes, I am having net loss, then what PGBP provisions are saying, set off and carry forward provisions are saying that try to knock off that loss. Try to knock off that loss against any head of income. Against what? Except salary. Against any head of income. Except you are not supposed to knock off against salary. I will tell you because why the logic. Logic is very simple. You will be having income from salary. We have already completed the marathon of the salary, right? Sir, when you do even 10,000 crore question from salary, any one of the question from salary will be having negative figure. Will there be any negative figure? No, sir. There will never be loss under the head what? Salary. Always we will be having what? Profit. So, a salaried employees, what they started doing, no? They go to job from morning 10 to 5 o'clock. Are you all really with me? And evening when they come to home, they started Pani Puri shop. Are you all really with me? And they said that I am running a business. And whoever you see, these people always having a what? Loss from the what? Business. And always they will be having profit from the salary. So government come up with a rule that, sir, any loss from the business can be set off against any head of income except salary. Are you all really with me? This is the current year adjustment. Sir, for example, I am having a net loss, sir. This net loss totally 10 lakh. It's because of the depreciation debited in the P&L account. And I am having income from house property, sir. I am having capital gain, sir. I am having income from other sources, sir. But that income altogether put together 8 lakh. So can I set off this 10 lakhs with that 8 lakh? Yes, sir. Perfectly allowed, sir. But still, how much lakh is there? 2 lakh is there. This is called as unabsorbed depreciation. This is called as, because to the extent of 2 lakh in the current year, I don't have income to absorb. That is why it is called as unabsorbed depreciation. This unabsorbed depreciation of how much lakh? 2 lakh can be carried forward to next financial year. To next year. For infinite period. For how much period? And it can be set off against any head of income except salary. In next year, sir, you can set off any head of income except salary. Then when you see year number 2, just now we were dealt with year number 1. Now when you see year number 2, my dear lovable students, for year number 2, year 2 depreciation will be there. Am I right, sir? Year number 2, sometimes, sir, year 2 depreciation will be there. In year number 2, year 1 carry forward business loss will be there. In year number 2, year 1's unabsorbed depreciation will be there. Are you able to appreciate what I am talking to you? What, sir, they are saying that in year number 2, first claim the second year depreciation, because first you have to finalize the profits and gains of business or profession. If this is positive, then you can set off the brought forward business loss. That is the second priority, brought forward, because this is having a time period of maximum how many years? 8 years. If you are having still profit, you can set off the unabsorbed depreciation. The reason or the logic is the unabsorbed depreciation anyway will be having infinite period. So give the last priority to set off. That's what they are explaining here. I will read it and I will match it. Sir, current year depreciation can be set off against current year PGBP, accepting a and balance under any head of income except, fine, sir. Sir, set off against depreciation to the extent not set off in the previous year. It will be called as from here onwards unabsorbed depreciation shall be carried forward for set off against what? PGBP and any head of income except time period for carry forward. For how much period? Unabsorbed depreciation can be carried forward how? Indefinitely. Even if business or profession is discontinued. And return of income. This is one important point. Unabsorbed depreciation can be set off even if return is not filed within 139 subsection 1 time limit. Sir, there is no precondition that you have to file the return on time to carry forward the unabsorbed depreciation. Automatically it will get carried forward. So in year number 2, what will be the order of set off, sir? Sir, current year depreciation, first you have to set off. Current year depreciation means year 2 depreciation. Then brought forward business loss you have to set off because that is having a time period of. Then brought forward depreciation because that does not have a time period. This is the order of set off in year number 2. Can I proceed? So we understood that if you incur any capital expenditure, my dear lovable students, you are entitled to claim depreciation under section 32. But what 48 subsection 3 is saying that in order to enjoy depreciation under section what? 32, sir, you should not buy the asset in more than 10,000 rupees or 35,000 rupees as the case may be. Anyway, 35,000 is applicable to GTA, Goods Transport Agency. So that provision will not be attached here. But if you are purchasing an asset for more than 10,000 rupees, then you are not entitled to claim depreciation under section 32. That means in every question, you can see that asset has been purchased by way of what paycheck? Account paycheck. If the asset has been purchased by way of account pay check or account pay bank draft or electronic clearing system or such other electronic mode as may be prescribed, then only you are entitled to claim depreciation under section 32. Comfortable? These are the important points you have to take care for the normal depreciation. I will be quickly 1 or 2 minutes. I will come back to the normal depreciation. In order to claim the normal depreciation, assessee has to satisfy 5 conditions. Assessee should be the owner of the asset. Asset should be used for the purpose of business or profession, that too in the relevant previous year. Asset should form part of eligible class of asset, and section 50 should not be applicable. Everyone will be having a doubt that what is eligible class of asset? Eligible class of asset classified in 2 categories, tangible asset and intangible asset. Tangible asset again classified in 3 categories, building, plant and machinery, furniture and fittings. The building generally you have to check that is it a residential building 5%, general building 10%, temporary structure means you will close it very small. So 40%. Generally plant and machinery 15%. Generally furniture and fittings 10%. These are tangible asset at a higher rate called as 40%. So the maximum rate of depreciation under the income tax will be 40%. Like aeroplane, air pollution control equipment, books, computer, windmill. These are motor vehicle. Again, these are tangible asset, my dear. You have to check that whether it has been used for Ola Uber 30%, other than Ola Uber 15%. Intangible asset means we can't see, we can't touch, we can't feel. Such as know-how, patent, copyright, trademark, license, franchisee or any other assets of similar nature, sir, except goodwill. They're specifically saying that for goodwill, we are not ready to provide depreciation. General rate will be 25%. All this we have done, my dear lovable students. We are following 180 days concept. If any asset has been acquired and put to use for less than 180 days, you are entitled to claim depreciation, full rate of depreciation. And more than 180 days or equal to 180 days, you are entitled to claim full depreciation. Less than 180 days means half the rate of depreciation. Am I right, sir? We are following deemed building concept, sir. If you are in a building, if you are incurring any capex expenditure for the purpose of furtherance of the business, then that building will be deemed to be you are the owner and you can claim depreciation under section 32 is what our discussion. Set off and carry forward, sir. Current year, the depreciation or business loss can be set off against any head of income except salary, and you can carry forward to the next year for set off in any head of income except salary. That is called as unabsorbed depreciation. But in year number 2, you will be having year 2 depreciation. First, you knock off that. You find out the second year PGBP, then you can knock off the carry forward, brought forward business loss, then you can knock off the unabsorbed depreciation. This is the order of set off. And the last very important point, in order to claim deduction or depreciation under section 32, asset should not be purchased in a single day to a single person in excess of 10,000 because provisions of 40A subsection 3 will be applicable. I'm moving into the additional depreciation 20% of the what cost, actual cost. This is covered under 32 subsection 1 clause 2A. The primary important thing you have to understand is, in order to enjoy the additional depreciation, my dear lovable students, you have to travel through the WDV method. Are you all with me? Basically, what this section is talking about is, if you are, my dear lovable students, mainly in the manufacturing sector or production of any article or thing or generation or distribution of power, as a boost or horlicks to these people, what they are saying, these people, since they are engaged in manufacturing, they will be heavily invest in plant and machinery. Correct, sir? And what government is saying that if you are acquiring new plant and machinery, what plant and machinery? New plant and machinery, you can debit depreciation in the what account, man? P&L account. This will be as per 32 subsection 1 class 1. Sir, class 2, are you all really with me? Because class 1 will be applicable only SLM to what sector undertaking? That's what I said, class 1 or class 2 as the case may be. Are you all really with me? But in addition to the normal depreciation, for example, if you are incurring 100 crore rupees to purchase a plant and machinery, anyway you will be claiming 15%. Are you all really with me? The balance will be what? 85%. In addition to this 15%, on this 100 crore, you can claim a depreciation of 20%, which is nothing but 100 crores into 20%, 20 crores. That means in the profit and loss account, you can debit to additional depreciation 20 crore. This is a one-time benefit. This is a, every year you can claim additional depreciation, but every year you can claim normal depreciation. So my dear lovable students, assessee should be invest in new plant and machinery. If it is second-hand plant and machinery, you are not entitled to get the additional depreciation. Number 2, assessee should be engaged in the manufacturing or production of any article or thing or generation or distribution of power. So this is the additional benefit given by the government to people who are in the manufacturing sector. Am I right, sir? My dear lovable students, this point is very important, sir. Additional depreciation would be allowed to an assessee only if he exercise the option out of the shifting out of the default tax regime. That means only if you travel through the optional tax regime, you are entitled to claim the additional depreciation. Otherwise, you are not entitled to claim the, because it's an additional benefit. No additional benefit are available under the default tax regime. If it is not allowable when the assessee pays concessional rate of tax under the default tax regime under section 115. And this is another very important point we have to keep in your mind. Sir, not only for the normal depreciation, 80 days will be applicable. What they are saying is, if you have acquired an asset and put to use an asset for less than 180 days, even the additional depreciation of 20% will be restricted to 50%, come to how much percent? 10% in the current year. That means, and I am having a short of 10%, the remaining 10% can be claimed in the, with me. That's what they're saying. If the asset is acquired and put to use for less than 180 days, in that year, additional depreciation is restricted to 50% for that previous year. Then the balance 50% in the succeeding previous year. Are you all really with me? My dear lovable students, for these 5 assets, you are not entitled to claim additional depreciation. Number 1, ship or aircraft. With ship or aircraft, you can't manufacture anything. Ship or aircraft are just transportation vehicle. So you are not entitled to claim the additional depreciation. Next one, second hand plant and machinery. You have to mandatorily invest in the new plant and machinery. And if you are installing the plant and machinery in office premises, because in office premises, production will not happen. Am I right, sir? On residence, because residence, you will only sleep. Why you need the additional depreciation? You are not entitled. But residential building is entitled for normal depreciation at the rate of 5%. Just now we discussed, right? And office appliances or what transport vehicle? Road transport vehicle. Sir, office appliances are not for the purpose of the production, because it's not factory appliances. It is office appliances. Or road transport vehicle means road is outside the factory, not the inside the factory. So you are not entitled to claim the additional depreciation. Or any plant and machinery for which the entire cost has been allowed as a deduction under any other section. For example, you purchased a plant and machinery, my dear lovable students. 100% of the has been under section 35, expenditure on scientific research, or under section 35 AD, that is specified business. Then don't ask additional depreciation. No, not only additional depreciation, normal depreciation itself will be 0, because the entire cost has become 0. On what will you be calculating the depreciation? Can I proceed, sir? That's what the important things with regard to that. That's it with regard to the second topic of discussion, also additional. Coming to the third topic of discussion, called as terminal depreciation and balancing charge. I will be discussing 2 concepts at the same time, my dear lovable students. Just listen to a quick example. We will be quickly summarizing. For example, there is a power sector undertaking. If the power sector undertaking decided to travel through the straight line method, then 32 subsection 1 class 1 will be applicable. Are you all really with me? So they are not going to travel through the WDV method. Assume the cost of asset is equal to 60 lakh. There is a power sector undertaking decided to travel through the straight line method. Bought an asset worth rupees how much lakh? 60 lakh. Assume the method of depreciation is equal to straight line method, I already told. And the rate of depreciation is equal to 8.24%. My dear lovable students, whatever rate we have studied, it is under the WDV method. We have never studied any rate under the SLM method. No need to study, because it will be given in the question. Are you really with me? Assume that in year number 1, they have used that asset. Then year number 1, 60 lakhs into 8.24% comes to how much, man? 4,94,400 will be the depreciation debited to P&L account as per section 32 subsection 1 class 1. Can I proceed, sir? And year number 2, also the same depreciation, because the method is straight line method. So same 60 lakhs into 8.24% comes to 4,94,400. Sir, the 32 subsection 1 class 1. Like it goes till the life is getting over. Am I right, sir? In order to have concept, I am having a small change, my dear lovable students. What I am saying that at the year number 3, at the start of year number 3, actually the original cost of the asset was how much lakh? Actually 4,94,400, you claim it as depreciation in year number 1, that's D1. And 4,94,400, you have claimed it as depreciation under D2. Are you all really with me? That means, my dear lovable students, 60 lakhs, sir, minus 4,94,400 minus 4,94,400 comes to 50 lakh 11,200 is the book value or carrying value or ledger balance as on the start of the third year. Are you all really with me? If they use that asset even in third year, we will provide again depreciation same amount, correct? So just to teach you more concept, I'm assuming that they are not using the asset, they are selling the asset, my dear lovable students, with a different selling price. So sale price is equal to and sale price is equal to, if sale price is equal to, for example, 35 lakh, how much lakh? If sale price is equal to 55 lakh, if sale price is equal to 62 lakh, I will be coming to case number 1, case number 2 and case number 3 separately. What case number 1? You tell me what is the book value, my dear lovable students? 50 lakh 11,200 is the book value. This asset, if they have sold for how much lakh? 35 lakh. 50 lakh 11,200 minus 35 comes to 15 lakh 11,000. Actually, this is loss on SOFA, sale of fixed asset. Am I right, sir? Actually, generally in accounts, in our profit and loss account, we will debit that to loss on SOFA, which comes to 15 lakh 11,200. But in tax P&L account, this cannot be debited because this is not a revenue expenditure, this is a capital expenditure. In tax, only revenue expenditure will be allowed, right? So in order to convert this capital loss into a revenue expenditure, tax has introduced a concept called as 32 subsection 1 clause 3 called as terminal depreciation. What depreciation? Terminal means at the end. Whatever at the end, if you are having loss, don't debit to P&L account as loss on sale of fixed asset. To the P&L account, you have to debit that to terminal depreciation under section 32 subsection 1 clause 3, which is 15 lakh 11,200. Can I proceed, sir? Now, my dear lovable students, this terminal depreciation is applicable only to power sector undertaking who are adopting straight line method. Sir, that too, they sold one of the asset at a loss. That loss, don't call it as loss. That loss will be called it as terminal depreciation under section 32 subsection 1 clause. Coming to situation number 2, my dear lovable students, assume the book value is equal to 50 lakh 11,200 and the sale price is equal to how much lakh? 55 lakh. Are you all really with me? Profit or loss? Profit. Because 55 lakh selling price minus 50 lakh 11,200 comes to 4 lakh 88,800 is a profit. Are you really with me? Now there is a problem. You know one thing, man. As per the definition of the capital asset in the chapter capital gain, capital asset means any property held by an assessee, whether or not connected with his business or profession. So any property is a capital asset. That means this plant and machinery is also a capital asset. If you sell the capital asset, capital gain should come. Are you all really with me? Then that capital gain should be taxable under the head capital gain. So this profit of 4,88,800 should be treated as either short-term capital gain or. So now the PGBP is asking a one valid question. In the profit and loss account, you have debited to depreciation year number 1. You have debited in depreciation in year number 2. So when you are having expenses, you are debiting that expense to the P&L account. But your income, instead of, sir, crediting to the P&L account as by income and reducing the burden in the PGBP, you are going to the other head called as capital gain. That is not allowed. We will not allow. Are you all really with me? That's why a new concept has been introduced in the Income Tax Act called as by balancing charge. By what charge? Under 41 subsection 2. That means this 4,88,800 should be credited to the what account only? P&L account only. As what charge, man? Balancing charge. Are you all really with me? So technically what is happening now? In the first year, I have claimed depreciation to the extent of how much, 4,94,400. And second year also. So first year 4,94,400. Second year also I claimed 4,94,400. Total comes to 4,94,400 plus 4,94,400 comes to 9,88,000. This is the total deduction I have claimed under the head PGBP. Am I right, sir? Out of this 9,88,800, I have reversed the PGBP as called as what charge? Balancing charge. As 4,88,800. Can I proceed? So that net deduction I claimed under the PGBP is how much lakh? 5 lakh. This I claimed as deduction under 32 subsection 1 class 1. Are you all really with me? As the what depreciation? Normal depreciation. Sir, can I proceed, sir? Which is nothing, sir. What is the original cost of the asset? Original cost of the asset is 60 lakh, 60 lakh. And in case number 2, you have sold that asset for how much lakh? 55 lakh. So 60 minus 55 comes to 5 lakhs. That's what you have claimed it as deduction under section 32 subsection 1 class 1. Can I proceed? I'm moving into case number 3, my dear lovable students. Assume the book value is equal to 50 lakh 11,200 and you are having sale price of 62 lakhs. You tell me the profit or loss. Profit. So total profit is equal to 60 lakhs minus 50 lakh 11,200. Right, sir? So the total profit is equal to 11 lakh 88,800. Are you all really with me? So what 41 subsection 2 is saying that, sir, if you have treated the profit under the head capital gain, I will be separate because you claim deduction under the head what? PGBP. Under the head PGBP, you have claimed deduction or depreciation for total 2 years of 9,88,000. What 41 subsection 2 is saying that to that extent you have to reverse only under the head PGBP. Then only it will balance. It only balance. That is why it is called as balancing charge. That's why 11,88,800 should be classified into two category. 9,88,800 should be treated as what charge? Under section 41 subsection 2. Can I proceed, sir? My dear lovable students, 11,88,800 minus 9,88,800 comes to 2 lakhs should be taxed under the head capital gain. Under the head, you just check, man, what is the selling price? 62 lakh. What is the original cost of the asset? Over and above the original cost, 2 lakh should be taxable under the head capital gain. And we are having section 50A. When I am accumulating, sir, capital gain, I will be appropriating time. I will be consolidating. Come on. Now you read it. Everything I've done. Applicability to power sector undertaking, adopting SLM method. That is, sir, terminal depreciation is a concept applicable only to a power sector undertaking who are adopting SLM method. So assessee can be classified into two categories. You may be power sector undertaking or other than power sector undertaking. Sir, if you are having power sector undertaking, you are having the option to either follow SLM or WDV only for the tangible asset. Because if it is intangible asset, always only one method is there, WDV method is there. Comfortable? If they follow SLM, individual asset system will be applicable. Individual asset system in the sense means if you sell one asset itself, you have to see the profit or loss. Are you really with me? Then, my dear lovable students, if you are not following the straight line method, if you are following the WDV method, sir, always WDV method for the other assessee other than power sector undertaking or including power sector undertaking, and block system will be applicable. In the sense means once one asset has been sold, we will not get tensed. Once the entire block has been sold, we will see profit or loss. Balancing charge, we just now discussed 41 subsection 2. Till the cost of the asset, original cost of the asset, whatever profit you are having will be taxable under the head PGBP, and over and above the original cost will be taxable as capital gain. That's it. Part number 3 also comes to an end. Coming to part number 4, man, what is WDV? Return down value. Yes. Sir, if other than power sector undertaking or including power sector undertaking, instead of traveling through the SLM method, they may travel through the WDV method. Once you are traveling through the WDV method, what is the, sir, WDV? How to calculate the WDV? That is handled in 43 subsection 6. What they are saying is, take the WDV of the block in the immediately preceding previous year. In the last year, what was the WDV? In that, less depreciation actually allowed in the immediately preceding previous year. Last year, how much depreciation actually allowed? You will get the WDV of the block at the beginning of the previous year. You will get the opening WDV. Comfortable? Then add actual cost of the asset acquired during our year, which is 24-25 previous year. How much asset you have acquired? How much asset you have acquired? You will be getting subtotal. If you sold any asset, you have to reduce less asset sold, discarded, demolished or destroyed, because it will reduce the block value. Or if there is any slum sale, as per section 50B, this will be discussing in the chapter capital gain. So that will also reduce the block value. You will be getting WDV for the block. From there, reduce the normal depreciation, and from there, reduce the additional depreciation, my dear lovable students. Are you all really with me? That's it with regard to that. And you can go through this basic question, how to compute the WDV concepts and all. This is what the theory part from this area. Sir, are you able to appreciate or understand what we are talking about? Part number 5, I'm going to revise. Sir, taxation of grant or subsidy from government. You would have heard about AS12 government grant. Sir, if any grant has been received from the government, you have to just check that whether that grant is a revenue grant or the capital grant. Are you able to with me? If it is revenue grant, it should be credited to the what account? P&L account. And if it is capital grant, my dear lovable students, it should be reduced from the what of asset. And after you reduce from the cost of asset, you will be getting the balance value. Are you all with me? Only on that you are entitled to claim the depreciation under section 32. That's it. This is what we are discussing. Come on. Sir, if the subsidy received for acquiring an asset, you got a subsidy from the government to acquire the asset, it shall be deducted from the actual cost of an asset. This is what first types of subsidy. This type of subsidy is called as what? Capital receipt. Or any other subsidy or waiver of loan or government grant from government or any authority body will be taxable under the head what? PGBP. Or the revenue subsidy, my dear lovable students, should be credited to the P&L account. Whereas capital subsidy should be reduced from the cost of the asset. Or any subsidy or grant received by trust or institution as corpus fund from central government shall not be treated as income. Sir, if the subsidy itself is in the name of corpus, corpus means liability. It will form part of capital. Sir, if anything is form part of capital, should not be credited to the what account, man? P&L account. All other subsidies should be credited to the P&L account. So you have to technically analyze that. ரொம்ப simple. Whether the grant is a revenue grant or the capital grant. If it is a revenue grant, credited to the will be taxable under the PGBP. If it is a capital grant, it should be reduced from the cost of the asset. Are you able to live with me? If the grant is in corpus, should not be credited to the P&L account, should go to the balance sheet, liability side. If loan taken for acquisition of an asset is waived, then amount waived shall be reduced from the actual cost of an asset. For example, 10 crore rupees I have, sir, taken a loan. Bank said that 2 crore we are waiving. Then we would have debited the asset account debit to loan account 10 crore rupees. Now 2 crore, bank said that no. So loan account debit to asset account, we have to pass a journal entry for the 2 crore. And above provision not applicable to LPG subsidy or other subsidy which is for welfare of an individual. Sir, you know, your home also they will be getting subsidy. Some gas subsidy they will be getting. We are not talking about that. That and also not be credited to the P&L account because that is personal subsidy, not the business subsidy. Are you able to appreciate, sir? A very important slot we are going to talk about called as part number 6, capital gain in case of depreciable asset, section 50. Section what? What section 50? You should have a perfect clarity with regard to section 50, my dear lovable students. Sir, we discussed that there are two types of assessee. Assessee classified into two categories. Number 1 is power sector undertaking and other than power sector undertaking. Correct, sir? With regard to power sector undertaking, they are having an option of either SLM method or WDV method as the case may be. If they follow SLM method, then individual asset system will be applicable. What is individual asset system? If you sell one asset, then itself you have to see profit or loss. It is exactly like our accounts. Whereas with regard to WDV method, written down value method, I am linking here because other than power sector undertaking are only having one option called as what method? WDV method. How this WDV method or section 50 will be working, be with me and enjoy that very important concept for your examination. An expected area for examination. For example, sir, you are having opening WDV of 50 lakh. Opening WDV, you are having 50 lakh. And purchases are there. 10 lakh rupees is the purchases. So I can say that subtotal is equal to 60 lakh. Subtotal is equal to, my dear lovable students, you are selling some asset, less sales is equal to, for example, 20 lakh rupees sales you have made. Then amount eligible for depreciation. Amount eligible for depreciation. 60 minus 20 lakhs comes to 40 lakh. On this 40 lakh, you will reduce the normal depreciation. And on this 40 lakh, you will reduce the additional depreciation. My dear lovable students, you will reduce the normal and the additional depreciation and you will find out the closing WDV. Correct? What section 50 is saying that like this and all you should not think. This is not the way in which you are supposed to proceed. What they are saying is ரொம்ப simple. You are having originally 50 lakh. Sir, you are having, you purchased 10 lakh. Total comes to 60 lakh. Out of 60 lakh, you sold 20 lakh. Still you are having 40 lakh. So you will be claiming depreciation on this 40 lakh. Don't do that. Analyze, sir, both the asset and also the value. If this is 50 lakh rupees value, this comprise of 10 asset. How many asset? And this 10 lakhs comprise of 12 asset. Total how many asset? 12 asset, total 12 asset. Sir, how many asset you sold? If you sold the entire 12 asset, that means block cease to exist. That means block cease to exist. In that patram, in that block, nothing is there. If nothing is there, how you will be providing depreciation under section 32? So situation number 1, I am saying that out of this 12 asset, I sold 3 asset. I sold so still I am having 9 asset with me. So you tell me, is asset is there? Yes, sir. For that asset is value is there, then section 32 will be applicable. Then section 32 will be, section 50 will not be applicable, because there is an asset and that asset is having, think of a situation, man, my dear lovable students, this is a base situation. I'm giving you the advanced situation. Situation number 2. Situation number 2. Same 50 lakh, same 10 lakh, total comes to 60 lakh. And I am selling 20 lakh. There is no doubt about it. Sir, I'm selling 20 lakh. Sir, how many assets are there in the opening? Tak, tak. 10 asset. How many asset purchased? Total asset with me. Assume I sold the entire 12 asset. Then how many assets are there? But I'm having value of 40 lakhs. I'm having value of 40 lakh. You tell me asset is there? No, sir. Sir, without asset, with value, what I can do? Then what section 50 is saying that I will be applicable and section 32 will not be applicable. Because in order to apply section 32, first of all, who should be there? Asset should be there. And that asset should be having, if this, how many conditions satisfied? 2 conditions are satisfied. Then only section 32, 2. Are you all really with me? So you are not entitled for depreciation under section what? 32. Come on, come to the next scenario I will give you, my dear lovable students. Sir, opening WDV is 50 lakh, purchases are 10 lakh, total come to 60 lakh. You sold some asset for 80 lakh. That means how much is the block value? 20 lakh. Block cease to exist. Are you all really with me? You know one thing, you are having 10 asset, you purchased 2 asset, total 12 asset, you sold only 3 asset. Still how many assets are there? 9 assets are there. Sir, you are having asset, but you don't have the value. That means section 32 will not be applicable. Section 32 will not be applicable. Section 50 will be applicable. Are you able to appreciate? That means in order to attract section 32, 2 conditions should be satisfied. There should be asset and there should be value. There should be asset and there should be value. Are you able to appreciate what I am talking to you? Yes, sir. So, what section 50 is saying that? With this background, you understand clearly. In case of depreciable asset, if the capital asset is a depreciable asset, it will always be short-term capital asset or short-term capital gain or long-term short-term capital gain or short-term capital loss. If the asset is a depreciable asset, the gain will always be short-term capital gain or short-term capital. Why, sir? What is the logic? I will tell you in the capital gain chapter. Now you leave it, because otherwise it will be equal to explaining capital gain marathon than the PGBP marathon. Section 50 is saying that you check 2 things where all the assets are transferred. Look at here. I gave an example. Out of 12 asset, all 12 asset has been transferred. That's it. Game over. Then section 50 will be applicable. There is no role for section 32 because block cease to exist. Then you have to check whether the consideration is less than the what value? Block value. Here the block value is 60 lakh. Correct? You sold for how much lakh? 20 lakh. So is the 20 lakh less than 60 lakh? Yes. So 60 lakh minus how much lakh? 20 lakh. There is a loss of 40 lakh. You call this loss as short-term capital loss. Can I proceed? Sir, I sold all the assets, sir, for a value more than the what value? Block value. What was the block value? 60 lakh. 60 lakh. Assume you sold for 80 lakh. There is a gain of that gain. You should call it as short-term capital gain. Are you able to appreciate? Sir, I have not transferred all the assets, sir. I have transferred only some of the assets, sir. If one or some of the asset has been sold more than the what of the block, value of the block, then it is a short-term capital gain. Sir, if one or some of the asset has been sold, one or some of the asset has been for less than the what value? Block value, still asset will be there, still value will be there, then section 32 will be applicable, section 50 will not be applicable. Are you all really with me? I'm personally recommending to go through the Singhania and Co question, which is a very important question for the coming examination, because that question will teach you how to apply section 32 and 50. Don't miss that for examination, my dear lovable students. Very important question. Come on, coming to the last part of the PGBP section 32 depreciation, 43 subsection 1 actual cost in certain cases. Nothing. You go here and see, we have just now studied what is a format of 43 subsection 6. 43 subsection 6 is explaining what is the format of WDV, correct? Which is saying that WDV of block in the immediately preceding previous year. Less depreciation actually allowed and add what cost of asset? Actual cost of. What do you mean by actual cost of asset? How much I should add to my block is explained in 43 subsection 1. 43 subsection 1 is a section which is talking about the actual cost. Are you able to connect where we have to use this 43 subsection 1? Yes. Generally, if you are purchasing an asset for 10 lakh rupees is the actual cost. For this asset, if you get any Gautam Gambhir government grant, then 2 lakh rupees should be reduced. The balance 8 lakh rupees will be the net cost. That's what just now we have discussed. Are you all really with me? My dear lovable students, sir, we are having various special circumstances or various special case. That's what explained in various explanation. I will tell you one by one. Sir, for example, there you have purchased an asset for scientific research. You know that section 35 is there, expenditure on what research? If you purchase an asset for scientific research, 100% of the cost of the asset, you will claim it as deduction under section. After the scientific research is over, what Elon Musk is doing that is going to introduce that asset for the normal business, general business. Are you really with me? If he introduce in the general or normal business, then it should be added in the 43 subsection 6 block value, right? What Income Tax Act is saying that since already the entire cost has been allowed as a deduction, you have to add only the number that is still now I'm having 10 asset. Now I'm introducing one asset. It should become 11. And the value should be nil, which is nothing but actual cost, whatever it may be, less deduction available under section 35 will be the actual cost. So automatically, always it should be what? 0. Number 2, man, explanation number 1. The next is circumstance. No need to explain. Remember the explanation number and all. Remember the concept. Sir, you are a CASA grant. For example, CASA grant is having lot of building. Sir, they were having one building at the Nungambakam. What they are feeling that, wow, this is a fantastic building. If we lose this building, we won't get building like this. So we will convert this building as our corporate office at Nungambakam. So stock in trade converted into what asset? Now that building should be included in the block of the asset. Am I right, sir? Then fair market value on the date of transfer on today. What is the fair market value of the building? Should be the cost of the asset. Then asset acquired by way of gift or inheritance. I got a plant and machinery from my Mamanaru saying that you keep this plant and machinery. Then WDV in the hands of the what owner? Previous owner. In the hands of the Mamu, what was the cost? Will be the actual cost as per 43 subsection 1. If asset has been acquired at a higher price with a view to claim higher depreciation. For example, the actual value of an asset is 5 lakh. But to my friend, I'm saying that, Macha, you sell me at 500 lakh. He's saying that, hey, Nada. I'm saying that, hey, you sell, man. I can book at 500 lakhs and I can depreciation at a higher rate. Are you able to appreciate, sir? Sir, explanation number 4 is saying that assets 1 belong to the assets used for business, now transferred and reacquired back. Abdina, I was having a plant and machinery. I was using this plant and machinery for my business. Sir, I was actually claiming depreciation also. So cost of asset less depreciation, I will be getting WDV. Am I right, sir? This asset has been transferred to my friend. And I am repurchasing or reacquiring by them. So when I giving him 50 lakh was the WDV, but I reacquired at 500 lakh just to increase the cost price. So what Income Tax Act is saying that WDV at the original transfer. What is the WDV at the original transfer? 50 lakh. Or reacquiring price. How much reacquiring price? 500 lakhs. Whichever is lower. Whichever is what? That means what is whichever is lower? 50 lakh. That means you have to record as NSR 50 lakhs in the original cost as if no transfer and retransfer has been happened. Explanation number 4a. Asset acquired by assessee from person who claimed depreciation and leased back to him. Instead of repurchasing from him, I am releasing back. For example, I was having a plant and machinery, Mr. A. I sold to B. Instead of repurchasing from B, I am taking lease from B to A. Then what they are saying that WDV of the transfer at the time of transfer to the assessee. When I sell, what was the WDV in the books of A should be the actual cost. That means by doing all this, sir, fraud transaction, cost should not increase is what the intention of 43 subsection 1. Comfortable? Explanation number 5, a very important example because it is there is an illustration in ICAI. Building used for private use. There was a building, my dear lovable students, this building has been used for the private use. Subsequently brought into the what? Business. The only difference is this building is not a stock in trade like CASA grant. It's it's a general residential building, but that has been brought to the business. Then cost of purchase of the building, less notional depreciation. Why notional depreciation? Since that building has been used for personal purpose, I would have not claimed any depreciation. So from the cost, you reduce notional depreciation as if depreciation has been claimed. You will be getting the WDV, my dear lovable students. Are you all really with me? Then you are having explanation number 8. What it is saying, asset acquired out of what fund? Borrowed fund. You've taken a loan and you have acquired an asset. Simple. Sir, till the date of asset put to use, whatever interest you have paid should be capitalized. After the asset is put to use, you debit to the P&L account and can be claimed it as deduction under 36 subsection 1 class 3. That will be discussing under 36 section. Now, asset acquired subject to levy of excise duty, custom duty where Senware credit is availed. Simple. You purchase an asset by paying GST. That is a blocked credit. It should be included in the cost of the asset. It is a available credit. It should not form part of the cost. So duty where credit is allowed, not form part of the what cost? Actual cost. Subsidy or grant from government. Simple. If that grant or subsidy is related to asset, should be reduced from the actual cost of the asset. An asset brought into India by a non-resident or foreign company for business. Sir, instead of resident is bringing the asset, a non-resident bought an asset from outside India. Simple. Actual cost of the asset, less notional depreciation. You will get the WDV. The same format or formula somewhere we saw. Actual cost, notional depreciation format or formula somewhere we saw. In building, explanation number 5 we saw. Are you remembering? But there the difference is, sir, that notional depreciation should be provided at the rate on the year of conversion. When you are converting on the year of conversion, what is the rate? That rate should be applied. But here, notional depreciation on the rate of acquisition. Acquisition. That is when the asset has been acquired on that year, what rate is prevailing? Sir, by using that rate, you have to provide the depreciation and transfer of 35 AD asset. We know that 35 AD is specified business by way of 47 transaction, nothing. Because you would have already claimed the deduction under section 35 AD. Then, sir, nil will be the cost of the asset. This is what a brilliant and a beautiful summary of brilliant section called as section 32. So if you see what is section 30, expenditure relating to building. So you are having a building, what and all expenditure can be debited to P&L account. And if that building, if you use it for anything, what you can do. What is section 31? Inside the building, you are having plant, machinery and furniture. If you are having building and plant, machinery and furniture, surely you will undergo depreciation under section 32. This is the first slot of the discussion. Are you comfortable? Now I am starting with section 33, AB, tea, coffee and what? Rubber. So we are starting with section 33, AB, tea, coffee and rubber. What this section mainly talking about is, sir, you should have the basic idea of the agriculture income, my dear lovable students. If a assessee is having agriculture income, the entire agriculture income is exempt under section 10 subsection 1. But if you are having income from tea, or if you are having income from coffee or income from rubber, my dear lovable students, this is not 100% agriculture income. So provisions of section 10 subsection 1 will not be applicable. For that, we are having rules. The rules are covered in rule number 7A, rule number 7B and rule number 8. Rule number 7A is applicable to rubber. That means if you are having rubber plantation, what these rules are saying that treat 65% of the income as agriculture income and 35% as the business income. Whereas if you are having coffee, classify the coffee into two categories, normal coffee and the abnormal coffee. That means if you are doing only the basic activities such as curing, then it will be called as normal coffee. Curing, grounding, roasting, boosting, Horlicks, etc. Then it is called as abnormal coffee. It's a normal coffee. Generally you are doing only grounding, curing. That means more agriculture activity will be there. So the more person has been devoted to the agriculture and less person has been devoted to the business purpose. But abnormal coffee means lot of commerciality will be there. That's why agricultural percentage is little less as compared to the business percentage or as compared to this. But if it is tea, my dear lovable students, rule number 8 will be applicable. 60-40 will be the tea. 60% will be the agriculture income and 40% will be the business income. So this is a very important area for examination. Especially this question, Mrs. Vivita question, please go through because that question, same question may be repeated for the exam. That's what section 33, AB, tea, coffee and rubber content is all about. I'm continuing with section 35, expenditure on scientific research. Another very important section, my dear lovable students, what the background of section 35, expenditure on scientific research in the sense means. For example, if you take, sir, you have to keep on improving. That is called as research is all about, right? So if you are in the field of natural and applied science or agriculture, animal husbandry, fisheries, or medicine, etc., you will be undergoing lot of research activities. So there are two ways in which you can do the research. There are two ways. Sir, either you can do the research in-house itself, that is inside the business itself, you can spend money, sir, find out some new things, that is called as research is all about. Or contribution to outsiders, you are contributing to some others, generally 99%. In-house research will be related to your business, but contribution to outsiders will not be research related to your business. For example, COVID came, we are having various research associations are there. Various research associations tried their level best to find out the COVID shield and the Covaxin. Am I right, sir? In order to find out such a medicine or vaccine, they need lot of money for the research purpose. So what government is saying that being a businessman, out of your total profit, if you are contributing some lakhs to the various research association, that is contribution to outsiders, and that can be claimed as a PGBP deduction under section 35. But we are having a different altogether route called as default tax regime. What default tax regime is saying that this expenditure are not directly related to the business. So if you are traveling through the default tax regime, contribution to outsiders will not be allowed as a deduction. But optional tax regime is saying that both in-house research and contribution to outsiders are entitled for the deduction. Okay, fine. So expenditure on scientific research basically classified into two categories: before commencement of business and the after commencement of business. Sir, in-house research again classified into two categories: before commencement of business and the... Sir, once it is before commencement of business, you have to understand that. Clearly understand, my dear lovable students, I have not started the business. So before I start the business, I am first going to do the research. Sir, once I get some result from the research, with that result only, I will start as business. Are you understanding? So in order to do that research, I may incur either revenue expenditure or capital expenditure. If I am incurring revenue expenditure, as per Income Tax Act, I am entitled to claim deduction under 35 subsection 1 clause 1. And capital expenditure under 35 subsection 1 clause 4. Sir, revenue expenditure, for example, salary excluding perquisites and material, 100% deduction you are entitled to claim. So what the act is saying that if you are incurring salary expenditure, perquisite is not allowed. If you are incurring raw material expenditure, that is allowed. Other than salary, which is human resources, other than raw material, any other revenue expenditure, no deduction will be allowed under section 35. But before commencement of the business, I am, sir, not only incurring the what expenditure, revenue expenditure, I am incurring the... Analyze the capital expenditure. Are you buying any land for scientific research? No deduction will be allowed. Because for land, even we are not providing depreciation under section 32. Am I right, sir? Sir, are you constructing building for research purpose? Yes, 100% of the deduction can be claimed as a deduction. And for others, are you purchasing any plant and machinery? 100% of the amount can be claimed as a deduction. Sir, but you said that, sir, before you start the business, you can incur expenditure for the purpose of scientific research. If I am incurring expenditure 100 years before, will you allow it as a deduction? No, maximum 3 years back will be allowed as deduction, incurred within 3 years immediately preceding the commencement of the business. Once the business has started, after the research, then before research, you don't know whether the research will be successful or not. But after commencement of the business, you can say that, sir, whether the business you are going to set up as company or other than company, then it will not be expenditure based, then it will be assessee based. That's why we are classifying into company and other than company. Comfortable? If the assessee has started as a company, for company 35 subsection 2AB, separate provisions are there. But now every provisions are one and the same. Every section is giving only 100% deduction. But earlier, for company 150 or 200% weighted deduction was there. That's why separate section came into existence. Are you really with me? You have to check that whether the expenditure is a revenue expenditure or... If it is a revenue expenditure, 100% will be allowed as deduction under section 35 subsection 2AB. Whereas if it is capital expenditure, you have to analyze whether it is land, building or others. Sir, as per, very important point for exam, as per 35 subsection 2AB, sir, land and building are not allowed as deduction. But building is allowed as deduction under 35 subsection 1 clause 4. Are you able to appreciate the difference? But other capital expenditure like plant and machinery will be allowed as deduction under 35 subsection 2AB. 100% can be claimed as a deduction. With regard to other assessee, my dear lovable students, that means other than company, for them 35 subsection 2AB provisions will not be applicable. You have to check that whether it is revenue expenditure, or if it is revenue expenditure, 35 subsection 1 clause 1, 100% deduction will be applicable. If it is capital expenditure, you have to analyze that whether it is land, building or others. Land means no deduction, building means 100% deduction, and others means 100% deduction. Are you able to appreciate, sir? Simple. I am consolidating, sir. Section 35 is expenditure on what research? Scientific research. Classified into two categories: in-house research and contribution to outsiders. In-house research, I can incur that expenditure either before commencement of business, or if I am incurring before commencement of business, I have not at all started the business. So I don't know whether the business is company or other than company. So I will analyze only the expenditure, whether the expenditure is a revenue expenditure, or if the expenditure is a revenue expenditure, check salary, raw material, fully allowed. Other than salary, raw material, not allowed. That's it. Capital expenditure, land, building or others. Land, no deduction. Building, 100% deduction. Others, 100% deduction. That's it. But with regard to after commencement of business, you have started the business. Analyze the assessee, whether the assessee is a company or other than company. If the assessee is a company, they also incur revenue expenditure or capital expenditure. If they incur revenue expenditure, 100%. Capital expenditure, analyze land, building or others. Land not allowed, building not allowed as per 35 subsection 2AB, but allowed as per 35 subsection 1 clause 4. And others, 100% allowed as per 35 subsection 2AB. With regard to other assessee, my dear lovable students, revenue expenditure and capital expenditure. Revenue expenditure, 100% deduction under 35 subsection 1 clause 1. Capital expenditure, land, building, others. Land, no deduction. Building, 100% deduction. And others also 100% deduction. This is where we are standing. Now, contribution to outsiders. First point you should take care is, this is allowed only under the what tax regime. If you are traveling through the default tax regime, there is no concept of contribution to outsiders at all. So this may be tested in examination as a question. If you are contributing to an approved research association or ICU, that is institute or college or university, my dear lovable students, if it is scientific research, 100% deduction under 35 subsection 1 clause 2. That is, you are contributing to a approved research association or institute or college or university for scientific research, 100% will be the deduction. For social and statistical research, 100% will be the deduction under 35 subsection 1 class 3. Sir, if you are contributing to IIT, National Laboratory or University for scientific research, 100% deduction under 35 subsection 2AA. And to approved Indian company engaged in research and development, that means you are contributing to an Indian company. Sir, for the purpose of scientific research, 100% deduction under 35 subsection 1 clause 2A. That means I can contribute to approved research association or institute, college or university. For the purpose of scientific research means 100% deduction. Social or statistical research means 100% deduction. Section is changing. Scientific research means 35 subsection 1 clause. Social or statistical research means 35 subsection 1 clause. IIT, National Laboratory, University, scientific research means 100% deduction under section 35 subsection 2AA. Whereas approved Indian company engaged in research and development, scientific research means 100% deduction under 35 subsection 1 clause 2A. Comfortable, sir? So in order to enjoy the contribution to outsiders, you should mandatorily travel through the optional tax regime and not the default tax regime. This is a one-line summary before the day of examination. According to me, if you see this chart, entire thing should come into your brain. Section 35 classified into 3 categories. Yes, 3 should be classified into 3. That's why 35 subsection 1, 35 subsection 2A, 35 subsection 2AB. And 35 1 again classified into 1, 2, 3, 4, 5 because 35. So 3 has to be classified into 3 and again 5. What is 35 subsection 1 clause 1? Revenue expenditure. Come on to the last. 35 subsection 1 clause 4, capital expenditure. 35 subsection 1 clause 2, scientific research. 35 subsection 1 clause 2A, scientific research to approved Indian company. 35 subsection 1 clause 3, social and statistical research. 35 subsection 1 clause 4, capital expenditure. To 35 2AA, if you are contributing to IIT, National Laboratory or 35 subsection 2AB is what? Company. This 35 subsection 1 clause 2, clause 2A, clause 3 and clause 2AA will be available only if you are traveling through the optional tax regime and will not be applicable if you are traveling through the... Are you all really with me? Sir, one small highlight is there, man. Sir, you are purchasing a plant and machinery, for example, for 10 lakh for the purpose of scientific research. As we all know that if you are incurring a capital expenditure for the scientific research, 100% of the capital expenditure can be claimed as a deduction. That means in the profit and loss account, instead of traveling through section 32 route, you are traveling through section 35 route. Am I right, sir? You will be debiting the cost of asset 10 lakh in one shot, because 100% of the expenditure can be claimed as a deduction. After the scientific research is over, what you are doing, you are selling that asset for 8 lakh. You are selling the asset for. Then what PGBP is asking, that when you are claiming deduction, you claim it under the head PGBP. But if you are selling, if you tax this 8 lakh under the head capital gain, that will be anyayam. Are you all really with me? That's what by sale of asset under 41 subsection 3, we are having another deemed section. That is how we are having 41 subsection to what charge? Balancing charge. The same way, sir, we are having 41 subsection 3 deemed profit lead to what? PGBP. So, one line summary of the entire discussion. Sir, have you purchased any asset for scientific research? Yes, sir. And you are dashed the asset, selling of the asset. Sir, that asset has been sold after being put to use for the other business. That means after the scientific research is over, you brought that asset to the normal business. Then that should be included in the block. If it has to be included in the block, provisions of 43 subsection 6 will be applicable. Correct? And section 50 shall apply, lead to what gain? Capital gain in future. Are you able to connect? No, sir. I have not introduced that to the normal business, sir. I sold immediately after the scientific research is over. That is sold without being used for other purpose. Then 41 subsection 3 will be applicable. It will lead to deemed profit under the head 41 subsection 3. Can I proceed, sir? These are the most important things, my dear lovable students. In that, in ICAI, question number 2 is there. Mandatorily go through question number 2 before your examination, because that question is dealing with the various default tax regime and the optional tax regime computation. I am coming to section 35 AD, which is specified business, my dear lovable students. What the government is saying, that if you are having the guts, if you are having the dill, if you are having the dairyum, you start 14 specified business, because this business general people can't start. You will be incurring lot of capital expenditure. Those capital expenditure don't travel through section 32 route. You can travel through section 35 AD route, and we are ready to provide you 100% of the deduction, my dear lovable students. And this section, sir, in case of individual, HUF, AOP, BOI and AJP, sir, in order to claim deduction under section 35 AD, first of all, you should come out of the default tax regime. First of all, you should travel only through the, and that too, you should opt section 35 AD. If you are traveling through the optional tax regime, you have to say that I don't want 32 route, I want 35 AD route. Then only you can travel through 35 AD route. So what is this section is all about? What is this package is all about? This package is simple. Assessee can claim 100% deduction on the what expenditure? Capital expenditure under section 35 AD instead of 32 depreciation, sir, if we undertake the below specified business. So what is the game? It's a game between two people. Either game vis-a-vis section 32 depreciation normal route, or section 35 or 35 AD route. We are having two alternate route, or either you can travel through 32 route or 35 or 35. My dear lovable students, sir, these are the 14 specified business. You start with the cold chain facility. What facility? Warehousing facility for agricultural produce, warehousing facility for sugar, warehousing facility for and honey and bee wax. These are the 14 specified business. Or you start housing project by a part and parcel of slum redevelopment. You go and redevelop the slum. Or affordable housing, that is you construct houses where everyone will be able to buy those houses. It's not like 10 crore rupees flat, it should be less than 45 lakhs. And hotel of 2-star or above, construct a hotel of 2-star or above. Or fertilizer plant, go and help the farmers. Hospital of at least 100 bed and semiconductor wafer fabrication. Or sir, put infrastructure like road, highway, project, etc. And inland container depot, cross-country pipeline network for distribution like natural gas or crude oil, and slurry pipeline for transportation of iron ore. If you are starting this 14 specified business, surely you will be incurring lot of capital expenditure. All das capital expenditure. In the year of commencement of business itself, you are entitled to get 100% deduction. Are you really with me? Actually, what this has happened, sir, from 1/4/2009 Finance Act onwards, They started introduce 111 business. Actually, they have not set the entire business in 1 year. So in 2009, they come up with 3 business for 100% reduction. In 2010, they come up with another 3 business. 2011, they come up with 2 business. 2012, they come up with 3 business. 2014, they come up with another 2 business. And on or after 2017, they have come up with, sir, 1 more business. Now they stop adding the 14 specified business because anyway it is not available under the default tax regime. It will be available only under the optional tax regime. So if you are having the dill to start the 14 specified business, my dear lovable students, you will surely be incurring the capital expenditure. For that capital expenditure, don't travel through section 32 route. You can travel through section 35 AD route, which is saying that 100% of the capital expenditure can be claimed as deduction in one shot. But this section is saying that for goodwill, you are not entitled to claim because, sir, know-how, patent, copyright, trademark, license, franchisee or any other assets of similar nature other than goodwill. Sir, there is no 32 route for goodwill. So the same way 35 AD route are also closed. Are you all really with me? Financial instruments like shares and securities. Shares and securities are capital asset. Go and ask the short-term capital loss or short-term capital gain. Don't come and beg before deduction under 35 AD and land. We don't like land. There is no depreciation for land even under section 32. And there is no deduction even under 35 also. Sir, even under 35 AD also land is outside. So, pavam land, nowhere deduction under any of the section. Sir, Income Tax Act don't like land. Are you really with me? If you purchase, but if you sell, they like a lot. Are you really with me? Capital gain will get attracted. Now, 40A subsection 3 is saying that what we have discussed is if you have incurred any capital expenditure except GIL means goodwill, instrument and land, 100% of the capital expenditure you are entitled to claim it as a deduction. But that capital expenditure should not be incurred in a single day to a single person more than 10,000 rupees, my dear lovable students. If you are incurring more than 10,000 rupees, our section 32 is blocked. The same way section 35 AD is also blocked. You are not entitled to claim deduction under section 35 AD. If you want to enjoy section 35 AD, you are not supposed to claim deduction under section 10 AA, or you are not supposed to claim deduction under chapter 6A under the heading C, which is nothing but 80 IA to 80 RRB. Under these sections, you are not supposed to claim deduction because under any one of the section you claim deduction. In the act, so many sections will be there. If you are claiming deduction under all the section, it will lead to double or triple deduction. Are you all really with me? So this is what the deduction part. And set off and carry forward of loss. Very important point for examination. Loss from one specified business, because you are having 14 specified business are there. You may end up with loss in one specific business. Why there is loss? Because the building cost, instead of claiming depreciation, if they enter 100%, if you are debiting to the P&L account, surely first or second year it will lead to what only? Loss only. Sir, one specified business can be set off against the profit from the another specified business. Are you all really with me? Sir, I don't have any other specified business at all to set off the loss. Then unabsorbed loss can be carried forward for infinite period under section 73A. Then that loss can be what forward? Carry forward. This hotel point not much relevant for interlevel. So I am continuing. Sir, in order to enjoy deduction under section 35 AD, what are the general condition I should satisfy? Nothing. Should not set up or split or reconstruct an existing business. Already if you are having a business, don't split the business into two categories and say that I have started a new specified business which is entitled for 35 AD. Then we are not ready to provide you deduction. Number 2, should not set up a transfer of second-hand plant and machinery for other purpose. If you set up this 14 business, everything should be new plant and machinery. Don't use second-hand plant and machinery. You may ask a question, sir, I am going to invest 1,000 crore rupees project. In that you are saying that there should not be any second-hand plant and machinery at all. Government is saying that if the out of this 1,000 crore rupees, 200 crore rupees, that is up to 200%, 20% second-hand plant and machinery, we don't have any problem. But the remaining 80%, that is 800 crores, should mandatorily be the new plant and machinery. Sir, second-hand plant and machinery does not include if any asset has not been used in India till now, it will be fresh. Sir, imported to India for the first time, it will be fresh. No depreciation is claimed by assessee, it will be fresh. In order to enjoy deduction under 35 AD, first of all, you should maintain books of accounts. That books of accounts should be audited by a chartered accountant. And if you claim deduction under section 35 AD, that particular asset, except GIL, should be held for a period of 8 years. That means within 8-year period, you are not supposed to sell it. Some people, what we will do, within that 8 year, they will sell. Sometimes the asset itself will get damaged or destroyed or demolished. Are you agree with me? Then, since you claim deduction under the head PGBP, that receipt should be taxable under the PGBP. It will be taxable under section 28. That is a charging section. Whereas if the asset has been used for any other business other than what business? Specified business. For example, if you are having specified business and if you are having non-specified business, my dear lovable students, you claim deduction under the specified business under section 35 AD. And my dear lovable students, you have shifted or transferred to a non-specified business, then provisions of 35 AD subsection 7b will be applicable. So one line summary of the entire discussion is deduction under 35 AD subject to 40A3. Yes, sir. 35 AD for specified business, you may incur either capital expenditure or for section 35 AD and revenue expenditure, there is no link at all. Because if you are incurring any revenue expenditure before commencement of the business, no 35 AD deduction, because 35 AD is talking only about the capital expenditure. So the revenue expenditure is governed by the remaining section, which are 30 to 38. Even if it is after commencement of business, no 35 AD, it is governed by other section, that is 32. Whereas if it is capital expenditure, if it is before commencement of business, 100% deduction will be available in the year of commencement. Whereas after commencement of business, 100% deduction when it is incurred. Whenever you are incurring, you can claim it as a deduction. That means one line summary, 35 AD will be applicable only for the capital expenditure and not for the revenue expenditure. This is a very important point which may be tested in examination, my dear lovable students. Sir, if you are in specified business under section 35 AD, if you purchase that asset and if you claim deduction, for the next 8 years, you are not supposed to sell the asset. Correct? Within this 8 years, sometimes the asset got demolished, destroyed, discarded, or what? Transferred. Sir, the income should be taxable under the head profits and gains of business or profession under 28 clause 7. 28 is the charging section. Sir, how much will be taxable under PGBP? Either the sale price or the what compensation? Insurance compensation shall be taxable under PGBP. But, sir, I have not sold outside. I have used inside. That means from the specified business, I have transferred to the non-specified business. If that is the case, my dear lovable students, provisions of 35 AD subsection 7b will be applicable. What is that provision, sir? You are saying for the third time. Nothing. You would have already claimed a deduction under 35 AD. Yeah? Assume you have already claimed deduction under 35 AD for 50 lakh in the last year. Actually, you have to hold that asset in the specified business for next 8 years. But in the current year, you have moved from the specified business to the, let me ask you a question. Last year, if that asset has been used for non-specified business instead of specified business, how much depreciation you can claim? 10% depreciation you can claim. So 5 lakh rupees, that means last year, instead of claiming 5 lakh rupees as depreciation, you have claimed 50 lakh rupees as deduction. So extra deduction will be how much? 45 lakh. This will be taxable under the head what? PGBP. That means you have moved the asset from the specified business to the, so in the specified business, for example, you are having two business, my dear lovable students, very quickly presenting in a chart, specified business and the non-specified business. In non-specified business, you already claimed deduction under 50 lakh under section 35 AD. Then you are not supposed to move this asset for how many years? But next year itself, you have shifted from the specified business to the, then what 35 AD subsection 7b is saying that if this asset has been used in the non-specified business instead of the specified business, you would have claimed 5 lakh rupees as depreciation or deduction. That means out of this 50 lakh, 5 lakh rupees is allowed. Then extra 45 lakh should be treated as what income? Deemed income. Under section 35 AD subsection 7b. Can I proceed, sir? But my dear lovable students, sir, in the non-specified business, a new asset is coming. A new asset is coming. Am I right, sir? Since a new asset is coming to the non-specified business, actually in the block of the asset as per 43 subsection 6, we have to include this asset, correct? For that, the value of the asset will be how much lakh? 45 lakh. So this 45 lakh will be treated as deemed income in the specified business and will be added to the block value in the non-specified business. And in the non-specified business, you can claim this 45. On this 45 lakh, you can claim depreciation as the computed as the case may be. Are you all really with me? This is what. So one line summary. Now you will be able to appreciate and understand. Sir, if you have purchased an asset for section 35 AD and you are transferring either to the specified business or to the what specified business? Non-specified business. If you are transferring to a specified business, Transferring to a, so you used under specified business, and from one specified business you transfer to the other specified business. No treatment will be there. But to a non-specified business, my dear lovable students, within how many years? 8 years. This is the provision. What is the provision? Provisions of 35 AD subsection 7B will be, which is nothing but amount of deduction claimed under 35 AD earlier. How much lakh? 50 lakh as per our example. Less notional depreciation allowable under 35 AD. How much lakh? 5 lakh. 50 lakhs minus 5 lakh, 45 lakh will be treated as deemed income. Am I right, sir? This is the story in the what business? Specified business. But according to the non-specified business, one new asset is coming into picture. So it has to included in the block value as per added to the block as per 43 subsection 6. Am I right, sir? So what is the actual cost of the asset? 50 lakh. Whatever notional depreciation allowables are 5 lakh. 50 lakhs minus 5 lakhs comes to 45 lakh. This 45 lakh should be taxable, should be added to the block value as per 43 subsection 6. Are you really with me? Once you claim deduction under section 35 AD, depreciation under section 32 will not be available. Since you are reversing 45 lakh in the specified business, that 45 lakhs can be added to the block value in the non-specified business. And on that 45 lakh, you can claim depreciation, no problem at all. Are you all really with me? A very important point, man. If you are having loss from one specified business, can be set off against profit from another specified business. In this, sir, this line is very important. Whether or not later qualified for section 35 AD deduction. Sometimes that profit specified business in the year, in this current year, may not be entitled to claim deduction under 35 AD. Still no problem. Still no problem. There is no need that they should be travel through 35 AD at all. These are question number 1. ICAI study material question, mandatorily solving question before your examination. Then question number 2, mandatory question, very important question because 35 AD subsection 7B provisions they will be asking. And question number 3, sir, with this background, if you are able to appreciate or understand, you will be paka. Coming to this next section called as 35D, amortization of what expenses. Before you start a business, you will be incurring lot of starting expenses. That's what preliminary expenses, such as feasibility study, project report, etc., market survey expenses, engineering services, drafting and printing of memorandum of association or articles of association, legal fee you have to pay to wakil, lawyer and all, and expense relating to public issue of shares and debenture like the articles of association, prospectus charges, all those stuffs, and other expenses as may be notified by the what? CBDT. If you add all these, sir, literally these expenses will come huge. In the year of start of the business, if all the expenditure has been debited to what account? P&L account, my dear lovable students. In the first year, surely you will be having loss. So what 35D is saying that if you are having preliminary expenses, in the year of commencement of business, don't debit the entire expense to the P&L account. You can amortize it over how many years, man? 5 years. How this will be tested in examination? Very simple, sir. For example, they will be giving a P&L account and they will say that preliminary expense is total 5 lakh. So only 1/5 is allowed as a deduction. So extra 4 lakh is there in the P&L account. That means you should add back how much lakh? That's it with regard to section 35D. So preliminary expense can be incurred either by Indian company or other than Indian company. If it is incurred by what company? Indian company, you have to restrict the preliminary expenses. Only to this extent preliminary expense will be allowed, such as 5% of the cost of the project or 5% of the capital employed, whichever is higher. So 5% of the what of the project? Cost of the project, and 5% of the capital employed, whichever is higher. Whichever is higher or actual expenditure, whichever is what? Lower. This is the quantum or limit. First you have to finalize this. You will get an answer. That answer divided by 5 will be the allowable deduction. Whereas if the companies other than Indian company, only 5% of the cost of the project or actual expenditure, there is no concept of capital employed, because capital employed concept will be there only for the company, will not be there for other than company. Generally, what is cost of the project? It is amount invested in the fixed asset of the new project or extension of setup. Sir, cost of the project is nothing but the balance sheet. Sir, how much you invested in the fixed asset? That's it. What is capital employed? Nothing but share capital plus debenture plus long-term borrowing for new project or extension or setup of new unit minus reserves and surplus and shall not form part of the capital employed. These are these things. Then 35D, DA, VRS. If you are an employer, you will be paying huge amount to the employee as VRS. The same provisions will be applicable. What they are saying is don't claim entire VRS in one shot. Claim the VRS in how many shot? 5 shot. That's what 1/5 of the amount. How this will be tested in examination, my dear? They will be giving that, sir, to VRS 10 lakh. Can entire 10 lakh be debited to P&L? No. Only 1/5 will be allowed. 1/5 means how much? 2 lakh. That means how much extra debited to P&L? 8 lakh. So 8 lakh should be in the back, added back when you are calculating. Are you all really with me? This is with regard to section 36. I'm coming to the end of the deduction part, other deduction. I took lot of effort in Income Tax Act. I am saying section 30 is applicable only for building. Section 31 is applicable only for plant, machinery and furniture. 32 is what? Depreciation. Like that, for every expenses, if I start allot one section number, it will go up to 1000, correct? So what Income Tax Act said that I am coming for other deduction. Section 36 is what? Other deduction. Classified into 3 category, applicable to all assessee, applicable to employers, and entity based deduction. Hello sir. Applicable to all assessee means, you just think in a business, stock is the most important thing. You will be paying stock insurance. That can be debited to what account? So in the profit and loss account, you can debit that to what insurance? Stock insurance. Sir, in order to run the business, you will borrow the money, correct? Sir, if you borrow the money, you will pay interest. So that interest on borrowed capital can be debited to, and bad debts can be debited to P&L account. Security transaction tax and commodity transaction tax can be debited to P&L account. So these 5 items, sir, you may be any assessee, individual, HUF, AOP, BOI, AJP, BJP, partnership firm, company, whoever may be. If you are incurring these 5 expenditures, should be debited to, such as stock insurance, interest on borrowed capital, bad debt, security transaction tax, and I have explained one by one item: stock insurance, interest on borrowed capital, sir. Then below that, sir, bad debts is there. Then we are having, sir, security transaction tax and commodity transaction tax. That I will come once again after I complete the disallowance part, because section 36 and disallowance are connected. So allow me to proceed. Next one, applicable to employers. Applicable to, if you are employer, you can debit these 6 expenses in the profit and loss account. Number 1, health insurance of the employee. You can, as an employer, you can pay health insurance for the employees. So in the profit and loss account, you can debit what insurance, man? So to health insurance can be debited to P&L account by an employer. Next one, bonus or commission to employee. So you will pay bonus or commission to an employee. That can be claimed as a deduction. Now, employer's contribution, employer's contribution, employer's contribution. I am contributing on behalf of the employee. That means it's an expenses for me. To where I am contributing? To the recognized provident fund or approved superannuation fund. To a pension fund referred under section 80 CCD or approved what fund? Gratuity fund. These 3 are employer's contribution. So to employer's contribution, to how many places? 3 places, my dear lovable students. Number 1, place number 1 is the recognized provident fund or approved superannuation fund. Second place is notified pension scheme under section 80 CCD. Third place is approved gratuity fund. Approved gratuity fund. So if an employer is putting money on behalf of the employees to these 3 places, it is purely an expense to the employer. That can be debited to what account? P&L account. Sometimes employee also may contribute to RPF or approved superannuation fund. Sir, once the employer deducted that amount, first it has to be treated as income. That is, by income should be credited to the what account? P&L account. Are you all really with me? And once the employer pays that deducted amount to the respective account within the respective time, that can be claimed as a deduction to employee's contribution to the various fund. Are you able to appreciate or understand what I am talking to you? I will come health insurance of employees, bonus or commission paid to employees, employers contribution to RPF or employers contribution to notified pension scheme. And sir, we are having employers contribution to approved gratuity fund. We are having employees contribution to RPF or approved superannuation fund. Definition of income, everything I will come. And the last one is entity based deduction. These are not applicable to everyone. These are applicable to some specific special entities like discount on zero coupon bond. For example, this is applicable only for these people, like issued by infrastructure capital company, infrastructure capital fund, infrastructure debt fund, public sector company, scheduled bank. If these people, my dear lovable students, are issuing zero coupon bond, then the difference can be amortized over the P&L account. And expenditure on promoting what planning, this is applicable only to a company. This will be given in our examination. For example, P&L account will be given as to promoting what planning? Family planning. Sir, for a sole proprietor, promoting family planning cannot be claimed as a deduction. So it should be added back while calculating profits and gains of business or profession. This in detail, I will come at the appropriate time after the disallowance part. Now, the last section called as section 37, general deduction. Yes, sir. Sir, even in 36, I tried my level best to list the expenditure with the section number. But still in a business, it is not getting over. Many expenses are coming. So, I have introduced a section called as section 37 called as what deduction. I said that if an expenditure is not covered under 30 to 36, for example, depreciation is there. For depreciation, only section 32 is there. That deduction don't claim under 37. There is an expenditure. For example, advertisement is there. Take an example. For advertisement 30 to 36, there is no specific section, right, sir? So, it should not be covered under 30 to 36. And expenditure should not be what in nature? Capital nature. It should not be what in nature? It should be wholly and exclusively for the purpose of what or what? It should not be unlawful expenditure, illegal payment are not allowable. And CSR expenditure is not allowable. If you are satisfying this many conditions, such as, sir, an expenditure should not be covered under 30 to 36. Yes, advertisement is not covered under 30 to 36. And it is not a revenue, it is not a capital expenditure, it is a revenue expenditure. It is not a personal expenditure because I have not advertised myself, I have advertised the business. And that advertisement expenditure is wholly and exclusively for the purpose of business or profession. It is not unlawful, it is allowed. It is not illegal, it is legal, sir. And it is not a part of 135 of the Companies Act. It is not a CSR activity. Hence, that expenditure can be claimed as deduction under section 30. Brilliant to the core. And the last section called as 38, asset used for both business and personal. What asset used for business and personal is saying that where a building, we already studied that building section 30, machinery, plant or furniture under section what? 31. Or, sir, it is not exclusively used for what or what? Business or profession. For example, there is a building you are partly using for business, partly used for residence. Or there is plant, machinery or furniture, partly used for business and partly used for personal. Then section 38 is saying that deduction under 30, 31, 32. Deduction under 30, 31, 32 will be restricted to the amount applicable to the business. For example, sir, 30, 31, 32 expenditure 60% only if you are using the building for the business. Only 60% of the expenditure can be claimed as a deduction. Remaining 40% should be in the back, added back. Are you able to appreciate or understand? That's it, my dear lovable students, with regard to the first slot of the PGBP called as deduction. Tell me, what is section 30? Expenditure relating to. What is section 31? Expenditure relating to. What is section 32? What is section 33 AB? What is section 35? Expenditure on scientific research. What is section 35 AD? Specified business. These are actually alternate route for section 32, correct, sir? Then we are having section 35D, which is preliminary expenses, which can be claimed over a period of 35D, VRS. It can be claimed over a period of, and we are having 36 other deduction, and 37 general deduction, and 38 asset used for both business and personal. This is the scheme of deductions under the head profits and gains of business or profession. Are you able to appreciate? Sir, these are the items which can be debited to P&L account. But there are certain items which cannot be debited to P&L account, called as what? Disallowances. Called as what? Sir, if these items has been debited to P&L account, we will add back because of debiting these items in the P&L account, net profit has been reduced. Are you all really with me? Such as disallowance classified into three categories: 37 subsection 2B, 40A series and 43B. What 37 subsection 2B is saying that in your profit and loss account, you are debiting contribution to political party. Contribution to what party? You just tell me paying salary and contribution to political party are one and the same? No, because if you pay salary only, you can exist. But if you are, even though you are not contributing to a political party, you can run the business, right, sir? So this is not an operation expenses. This is not a PGBP expenses. So if you are contributing to a political party and if that has been debited to P&L account, should be in the back. As per 37 subsection 2B, comfortable. Under 40A series, we are having two category, my dear lovable students. 40 small a series and 40. What 40 small a series is saying that? Romba simple, sir. Come on. Sir, in your profit and loss account, you will be debiting to rent. In your profit and loss account, you will be debiting to salary. In your profit and loss account, you will be debiting to expenses like printing. Sir, in your profit and loss account, you will be debiting expense number 1, expense number 2 and expense number 3. Are you all really with me? And various so many expenses. Just analyze that whether this payment has been made to a non-resident or resident. Are you all really with me? For example, I paid rent to a non-resident. and I have claimed it as a deduction. What Income Tax Act is saying that if you make any payment to a non-resident, you are liable to deduct TDS. Check, have you deducted TDS? Or deducted TDS has been credited to the central government. If you have done any of the mistake that I have not deducted the TDS or deducted TDS has not been paid to the credit of the central government, then 100% of the expenditure debited to P&L account should be added back. Or my dear lovable students, sir, I paid all these expenses to a resident on which TDS is liable to be deducted. No TDS has been deducted or deducted TDS has not been paid to the credit of the central government. That means TDS provisions has not been complied. Then 30% of the expenditure debited to P&L account should be added back. That means you just see the debit side of the P&L account. You just check that whether the payment has been made to a resident or non-resident. Non-resident TDS consequences are there. Then 100% disallowance. Resident, 30% should be added back. Are you all really with me? That's what 40A clause 1 payment to resident. That means if you make any payment to resident on which TDS is liable to be deducted, no TDS has been deducted or deducted TDS has not been paid to the credit of the central government, 100% of the expenditure should be back. As per 40A subsection 1A, payment to resident. If you make any payment to resident on which TDS is liable to be deducted or deducted TDS has not been paid to the credit of the central government, then 30% of the expenditure debited to P&L account should be back. Sometimes certain people will debit, sir, to income tax. To what tax, man? Sometimes last year paid income tax in the P&L account. Sir, I am going to find out how much is the income tax payable. Sir, income tax payable ke income tax current ke current should be back. Added back as per 40A subsection 2. Payment on account of tax levied on profit should be back. Again, actually, they're repeating one more item. Salary payable outside India. That means you paid salary to a non-resident on which TDS is liable to be deducted. No TDS has been deducted or deducted TDS has not been paid to the credit of the central government. 100% of the salary debited to P&L account should be 40A subsection 3. Because when they explain 40A subsection 1, they miss to say salary. So they come up with another section called as 40A subsection 3. Or my dear lovable students, if you are an employer, you will contribute to provident fund. Example, recognized provident fund. Correct? Yes, sir. Sir, if you contribute to recognized provident fund from your pocket, it is an expense. That's what just now we discussed that. As per section 36, subsection 1, clause 4, that can be claimed as a. But the employee may withdraw fund money from the recognized provident fund within 5 years. If that is the case, he can't enjoy exemption under section 10, subsection 12. This we already discussed in the salary chapter, correct? Then this recognized provident fund should deduct TDS under section 192A. That we'll be discussing at the appropriate time in the salary TDS chapter. Comfortable? But if this recognized provident fund does not have the facility to deduct the TDS, they can't deduct the TDS. It is such a recognized provident fund. If an employer is contributing to a recognized provident fund, then it will not be allowed as a deduction under section 36, subsection 1, clause 4. It should be disallowed under 40A clause 4. Look at here, man. 40A clause 4. Any contribution to a provident fund where there is no facility for deducting TDS under 192A, then 100% of the contribution debited to P&L account should be added back. And next one, tax paid on perquisite on behalf of employee. You would have heard about 1010cc in the salary chapter. Tax on non-monetary perquisite. That tax will not be treated as perquisite in the hands of the employee. But it is an expense for the employer because he is only paying from his pocket. Correct? That cannot be claimed as a deduction. That means that amount debited to P&L account should be back. Basically, these are the things. Quickly, we will go through 40A clause 1, payment to a non-resident. That means if you are making payment to a non-resident, which is IFRS, I stands for interest, F stands for fees for professional or technical services, R stands for royalty, S stands for any other sum. Sir, if you are liable to deduct TDS has not been deducted or deducted TDS has not been paid to the credit of the central government, how much percent disallowance? 40A 1A is saying that payment to a resident. My dear lovable students, if you are making any payment to a resident, any sum, not IFRS and all, any sum on which TDS is liable to be deducted, no TDS has been deducted or deducted TDS has not been paid to the credit of the central government, then 30% will be the disallowance. Are you able to appreciate, sir? Then my dear lovable students, 40A subsection 2, income tax debited to P&L account. In the profit and loss account, if you debit income tax, it should be back. So payment on account of tax levied on profit, any income tax paid should be added back. Sir, salary payable outside India, either to a non-resident or salary payable outside India, sir, on which TDS is liable to be deducted, no TDS has been deducted, or deducted TDS has not been paid to the credit of the central government, then how much percent disallowance? 100% disallowance. Are you with me? Sir, contribution to provident fund, employer's contribution to PF. If you are an employer, if you are contributing to a provident fund on which TDS deduction facility is not arranged in order to deduct TDS under section 192A, then 36 subsection 1 clause 4 deduction will not be available. It should be added back. 100% disallowance under 40A clause 4. Comfortable, sir. As an employer, sometimes you may pay tax on non-monetary perquisite. That tax on non-monetary perquisite is an expense for the employer. But even though it is an expense, it should not be debited to what account? So tax on non-monetary perquisite actually paid by an employer referred under 1010cc, 100% should be disallowed. Are you all really with me? So 40 small a series can be classified like this: payment to non-resident, payment to resident taxes and fees. 40 small a series, payment to non-resident, 40A subsection 1, which is nothing but IFRS. 40A subsection 3, which is nothing but salary. Payment to resident, 40A subsection 1A, which is any sum, my dear lovable students. Taxes and fees, 40A subsection 2, income tax. 40 subsection 4, provident fund where the facility for deduction has not been arranged. 40A subsection 5, tax on non-monetary perquisite. Are you able to appreciate or understand what I am talking with you? This is the story of the 40 small a series, my dear lovable students. That means, sir, disallowance classified into 3 categories: 37 subsection 2B, 40A series, and 43B. 37 subsection 2B, expenditure incurred for advertisement in the political party debited to P&L account should be 40A series classified into 2 categories: 40 small a series and 40 big A series. 40 small a series again classified into 3 categories: payment to non-resident, 100% disallowance; payment to resident, 30% disallowance; taxes and fees debited to P&L account, 100% disallowance. Are you really with me? Coming to 40 big A series, my dear lovable students, 40 big A series is 40A subsection 2, related party transaction. What transaction, man? That is what related party transaction is saying, that this is a new set of fraud a businessman will be doing. In order to reduce the net profit in the books of accounts, they will show that they have made expenses to a related party which is higher than the market price. For example, I am paying rent to my own wife. I am paying salary to my own wife. Actually, my wife is working in my concern. Sir, 10K is the general salary. Hello, sir. But I am paying intentionally 15K. Sir, if someone is asking, I am saying that yes, she is my wife. I will pay whatever I want. My intention is to increase the expenses and to reduce the profit. So 15K minus 10K, what's the gap? 5K. So government is saying that this is my income tax. I will add back whatever I want, even though it is your wife. Are you all really with me? So this 5K will be added back as per 40A subsection 2. That's why this is called as related party transaction. What party transaction? Because myself and my wife are related party. Only if 2 parties are there, then only you can relate with each other. That is why it is 40A subsection 2. That is, if an assessee incur any expenditure as payment made to specified or related person, which is excessive or unreasonable portion, should be disallowed. This is the highlight for examination. Only excessive or unreasonable portion will be disallowed, not the 100%. Are you all really with me? For these people are relative. Generally, we know for individual families, the relative. For company directors is the relative. HUF, the members of the HUF is the relative. For partnership. For partnership firm, partners are the relative. That understanding is more than enough. Nothing more. Don't break your head. Come on. 40A subsection 3. The another way to reduce the profit by a businessman is writing of the bogus expenses, such as they will write it as to rent, to salary, to wages, and all these payment would have never made in account payee check, or account payee bank draft, or electronic clearing system, or any other electronic mode as may be what prescribed, just to increase the expenses and to reduce the profit. What businessman will do, you know, they will be writing some bogus expenses. So what the Income Tax Act has done, they have introduced one section called as 40A subsection 3. They said that in a single day to a single person, like Rajinikanth, they said that in a single day to a single person, if you are making payment more than 10,000 in general cases or 35,000 in case of GTA, that entire expenditure should be in the back, added back. That's what they are saying. If an assessee incur any expenditure in aggregate more than 10,000 in a single day to a single person, rupees 35,000 in case of payment made to transporter for plying, hiring or leasing of what carriage? Goods carriage. This is nothing but GTA, goods transport. otherwise than by account pay check or account pay bank draft or electronic clearing system, then 100% will be the disallowance under section 40A subsection 3. But here, every time I can't make the payment in, sir, account pay check or account pay bank draft or electronic clearing system or such an electronic mode as may be, I need some exception. That exception are covered in Rule 6DD from the examination point of view. This is very important area. Like, sir, if you are making payment to bank or government, you can pay crores and crores also in cash. They don't have any problem because the recipient is a bank or recipient is a government. Like if you are making payment to RBI or banking company, make whatever you want in cash. In SBI, make whatever you want in cash. Any cooperative bank, make whatever you want in cash. Any primary agriculture credit society, LIC or government, you can make even 10,000 crores also in cash. Provisions of 48 subsection 3 will not be applicable. If you are making payment for agriculture, payment made for agriculture or forest produce, produce of animal husbandry, fish or fishery product, produce of horticulture, apiculture, products manufactured without, very important, that point has to be taken, aid of power in cottage industry. Basically, if you are making payment to a farmer, sir, you can make whatever amount in cash. Provisions of 48 subsection 3 will not be applicable. These are specific exemption they have given. Payment made in a village or town with no banking facility. In any village or town, now there is no banking facility, and if you are making payment, 48 3 provisions will not be applicable. Retirement benefits like 10, 10, 10, 10, A, 10, 10, A, 10, 10, B. If you are making the payment up to 50,000 rupees cash, no problem. Above 50,000, it should be account pay check. Salary to employee temporarily posted in a place. For example, generally I am working in Chennai, but now I moved to Mumbai and now I am working in ship, and I am in Mumbai for more than 15 days. I am due to get my salary. I can get the salary in cash, no problem at all. If you are making payment to a commission agent or payment by authorized dealer of foreign exchange, then irrespective of the amount, you can pay in cash. There is no problem, my dear lovable students. And these are just instrument like the letter of credit, telegraphic transfer, debit card, credit card, adjusting entry, and bill of exchange. Like, sir, you are swiping in debit card, credit card, issuing check, letter of credit, you are putting adjusting entry, receivable, payable, you are adjusting. Then provisions of 40A subsection 3 will not be applicable. Generally, Rule 6DD is an exception to 40A subsection 3. Whatever cases mentioned in Rule 6DD, if you make in cash also, disallowance will not be applicable. Fine, fantastic to the core. The another quick way to increase the expenses and to reduce the profit by a businessman is to create a provision. They will just create provisions. Are you already with me? That's what they will be doing, to provision for what? Gratuity. What government is saying that if you are not contributing really to the approved gratuity fund, and if you are just creating a provision, then that provision should be added back. So employer's contribution to gratuity, provision created shall be disallowed. But no provision is created, really an employer is contributed, only actual payment allowed under 36 subsection 1 clause 5. Because in 36B classified into 3 category, applicable to all SSE, applicable to employers, and if you are contributing to unrecognized fund, if an employer is contributing not to a recognized fund, to a unrecognized fund, sir, employer's contribution to unrecognized fund should be added back as per 40A subsection 9. These are the 40 biggest series, my dear lovable students. 40A subsection 2, related party transaction. Over and excessive above payment should be added back. 40A subsection 3, cash payment exceeding 10,000 or 35,000 as the case may be. 100% of the cash payment should be added back. 40A subsection 7, provision for gratuity should be added back. 40A subsection 9, if you are contributing to an unrecognized fund instead of, sir, recognized fund, 100% of the expenditure debited to P&L account should be added back. The last concept from the disallowance part is 43B. What that 43B is saying that, my dear lovable students, romba simple. For example, okay, fine. If I debit any expenditure in the P&L account, TDS 12 will be there. If I debit any expense in the P&L account, cash payment should not be there. If I deduct any expenditure, I cannot create a provision. Correct? Provision for gratuity should be added back. So what certain people started doing in order to increase the expenses and to reduce the profit? Sir, they have debited, my dear lovable students, for example, to expense payable. To expense payable, it will be expense payable. Okay, so in the P&L account, they will debit to expenses. That's it. Simple. They will be debiting to expenses. And if you look at the balance sheet liability side, it will be expense payable, which is a payable on 31st of March. And after March, April will come, May will come, June will come, and July for certain people. And August will come, September will come, and October will come for certain people. They have to file their return of income under section 139 subsection 1. Can I proceed? Even on either this date or this date, is this payable or still payable? Because it is really not payable. Are you really with me? So what Income Tax Act said that if an item has been debited to P&L account on during the previous year, and if it is payable on 31st March, and if that is still payable on the date of filing the return of income, we will add it back as per section what? 43B. What are the items you will add back? These items should be really paid. That means these items you can claim it as deduction on actual payment basis. That is cash basis, not the accrual basis. Any tax, duty, cess or fees payable, because tax, duty, cess or fees payable we are liable to pay to the government. To government itself you are keeping pending and you are claiming it as a deduction. 43B is saying that I will add it back. Or interest payable to a scheduled bank. You borrowed money. Interest payable to a scheduled bank, or interest payable for public financial institution or what? NBFC. From these people you have borrowed money either from scheduled bank or public financial institution or NBFC. Then if that interest is still payable on the date of filing the return of income, it should added back. Now employer, sir, leave salary payable to employees. Leave salary just debited to P&L, but it's still payable on the date of filing the return of income. Should be added back. Bonus or commission payable to employees. Chumma you have debited to bonus or commission, but it is still payable on the date of filing the return of income. Should be added back. Or employer's contribution. Here need your attention. It is not employee's contribution. There is no relationship between employee's contribution and the employer's contribution. This is talking only about the employer's contribution. Employer's contribution to, sir, provident fund or approved superannuation fund or any fund for the welfare of the, if you are liable to pay any amount to Indian Railway, because if you go to railway station and all, you can see the various advertisement hoardings, boardings and all. So business people have to pay money for that hoardings, boardings. Sometimes they will just debit the expense to the P&L account and they will never make the payment to the Indian Railway. What government is saying that they are also part and parcel of the government. First make the payment, claim it as deduction. Otherwise it will be in the back. As per 43B. And any sum payable by assessee to a micro, small and medium enterprises. If you are liable to make the payment to micro, medium, small and enterprises, and if you don't make that payment within the due date specified in the Micro, Medium and Small and Enterprises Act, it should be added back. Because since you are not making the payment on time, this micro, medium, small and enterprises are affecting at large. So section 43B is ensuring that you are making the payment to the micro, medium and enterprises on time. So this is the duty or job of section 43B, my dear lovable students. So technically speaking, disallowance classified into three categories. Number 1, 37 subsection 2B, 40A series and 43B. Sir, this is very important from the exam perspective because, sir, in your P&L account, try to picturize if you debit advertisement expenses to political parties should be in the back. 40A series classified into 2 categories, 40 small a series and 40 big A series. 40 small a series classified into 3 categories. Payment to non-resident, 100% disallowance. Payment to resident, 30% disallowance. Any taxes and fees, specified taxes and fees debited to P&L account, 100% disallowance. Comfortable? 40 big A series, 4 sections are there. 40A subsection 2, 7, 3 and 9. 40A subsection 2 is related party transaction. 40A subsection 3 is cash payment exceeding 10,000 or 35,000 as the case may be. 40A subsection 7 is provision for gratuity. 40A subsection 9 is contribution to unrecognized fund. 43B is deduction on actual payment basis, such as any tax, duty, cess or fees payable, interest payable to scheduled bank, interest payable to financial institution, bonus or commission to employee, leave salary to employee, employees contribution for any fund for the welfare of the employees, amount payable to railway authorities, or any sum payable to micro, small and medium enterprises. These are the list. This has to be made it as 43B or 40B. One more section is there. At the inter level, this time for the coming examination, it is mandatory question, my dear lovable students, because of amendment in the profits and gains of business or profession. Without studying this question, this area, if you are going to exam, it will be a national based. 40B, which is applicable only to partnership firm. For example, if the assessee is a partnership firm, my dear lovable students, they will be having profit and loss account, right? In that profit and loss account, sir, 2, interest on capital and remuneration to partners. These two things can be additionally allowed to a partnership firm. For example, if I am a sole proprietor, rent is allowed. For partnership also, rent is allowed. But for sole proprietor, interest on capital is not allowed. For a sole proprietor, remuneration to partners is not allowed. But for a partnership firm, these two conditions, these two expenses are additionally allowed. What they are saying that a partner will be contributing capital. For example, ANM, three partners are there. Three partners, they will be contributing capital. In the liability side of the balance sheet, capital 1 lakh, 2 lakh and 3 lakh. For this 1 lakh, 2 lakh and 3 lakh, you can pay interest on capital, but at maximum 12%. For example, this interest on capital 15% debited to what account? P&L account. Over and above 12%, that is extra 3% should be back, added back. Clarity? That's it. Now, remuneration to partners. You assume in the profit and loss account of a partnership firm, if the entire net profit you are claiming it as remuneration to what? Partners, then sir, the net profit will become zero. So there should be a limit for the remuneration to partners. It is based upon book profit. It is based upon what? That book profit calculation has been changed. That was I have given in the red. I will tell you. Now remuneration to a non-working partner. A remuneration to whom you should give? Only to a working partner. If a partnership firm paid remuneration to a non-working partner, should be back. Remuneration to a working partner, not authorized by the deed. No, sir. I paid only to a working partner. But where it is there in the deed, pa? Because every partner should accept that this partner is ready to get or entitled to get remuneration. Otherwise, it should be back. Sir, remuneration working partner or interest to a partner authorized by the deed. Yes, it is there in the deed, but relates to a what period? Earlier period. Sir, now only deed come into existence. Sir, before this date only, the remuneration to partner has been debited to P&L account. Will not be allowed as a deduction. Should be back. Added back. Are you all really with me? That means, my dear lovable students, sir, remuneration interest to any partner in excess of how much percentage per annum? 12% per annum. Because the maximum interest allowed will be 12%. If you debit 14%, that 2% should be added back. And remuneration to a working partner, it is based upon book profit. Now, on the first 6 lakh, first what? Earlier, it was 3 lakh. Leave the 3 lakh. I don't want that number. Now, only focus on the new number. On the first 6 lakh of book profit, or in case of loss, statutory limit of 3 lakh or 90% of the book profit, whichever is higher. And on the balance of book profit, 60% of the book profit, there is no change. So, they have come up with a formula, first 6 lakh and the balance. First 6 lakh, statutory limit of 3 lakh or 90% of the book profit, whichever is higher. On the balance of book profit, 60%. You have to mandatorily go through question number 1. You have to mandatorily go through question number 2. It is mandatory. Are you all really with me? Before the examination and answer has been given, there you can apply the book profit, my dear lovable students. Now, since we have completed the deduction and the what? Disallowance. Now, quickly 5 to 7 minutes, I can attach with section 36. Because section 36 classified into how many category? 3 category. Applicable to all SSE, applicable to employers and entity-based deduction. Sir, applicable to all SSE, 5 items are there. Number 1, what insurance? Stock insurance. Sir, don't buy or this and all. Just have one read. Are you a businessman? For you, is stock very important? Will you take insurance for stock? That stock insurance is an expense to you. Debited to the. That's it. Amount of premium paid in respect of insurance against risk or damage used for the purpose of business or profession will be allowed as deduction. That's it. Now, interest on what capital? Borrowed capital. Just now studied 43B. As per section 43B, sir, if any money has been borrowed from scheduled bank or public financial institution or NBFC, how many people? 3 people. That's why 36 subsection 1 clause 3. If you borrow money from 3 people, it should be paid before filing the return of income. Otherwise, if you debit it to P&L account, should be back. So, what 36 subsection 1 clause 3 is saying? That amount of interest paid. Sir, for what? For what interest? For the capital borrowed. What you done with that capital for the purpose of business or profession will be allowed as deduction under section 36 subsection 1 clause 3. But 36 subsection 1 clause 3 is subject to 43B. Sir, can I proceed, sir? That question you can go through. Now, a bad debt question. Simple. In order to claim bad debt as a deduction, bad debt should actually be debited in the P&L account. That means return off in the books of accounts is mandatory in nature. For example, if you are preparing P&L account, you should write off that to bad debt. Otherwise, will not get bad debt as a deduction. Because you only know what and all debtors are good debtors and bad debtors. I don't know. So if some debtors has become bad, you have to mandatorily write off them in the what of accounts? Books of accounts. Otherwise, we will not provide you the deduction. And number two, my dear lovable students, if it is irrecoverable in the sense means sometimes there is an income, this has not been shown in the books of accounts. But as per ICDS, Income Computation Disclosure Standard, I disclose this as an income and I pay tax. But in future, this has become irrecoverable. This has become bad debt. Then, since I have not shown that as in my books of accounts, my dear lovable students, I can't write off. But the first condition is in order to claim bad debt, you should return off. But I have paid tax as per ICDS. So what they are saying, even though you have not written off in the books of accounts, if you paid tax for an income as per the ICDS, still it can be claimed as a bad debt. Are you all really with me? So the first one, bad debt. In order to claim deduction under section 36 subsection 1 clause 7, bad debt should be actual bad debt related to sales. Why sale? Because if it is sale in the P&L account, you would have shown sale as an income. First declare it as an income, then you write off, then it is allowed. But related to a loan, loan means it's a balance sheet item. Sometimes you would have given loan to some person and that person would have run with some other person. That loan not recoverable cannot be debited to P&L account as bad debt because you have not declared that loan as an income. It is not allowed. And provision for bad and doubtful debts should be added back in the profit and loss account. If someone is debiting to provision for what? Bad and doubtful debts should be added back because only actual bad debt is allowed. Provision for bad and doubtful debts is not allowed. Coming to security transaction tax, it's very simple. Sir, in the profit and loss account, if you are showing by security income, that is by selling the security, if you are showing income under the PGBP, then STT paid can be claimed as a deduction. That's it. That is a condition. Simple. An amount equal to STT paid by the assessee. You paid STT in respect of taxable security transaction for a taxable security entered into the course of his business during the previous year. If income from such taxable securities included under what head? PGBP. Then STT paid can be claimed as a deduction. Whereas 36 subsection 1 clause 15 is subject to 43B. Why? Because any tax, duty, cess or fees payable, first point, sir, any tax, so security transaction tax. If it is still payable on the date of filing return of income should be added back. Coming to the commodity transaction tax, the same. If the income from commodity transaction tax has been credited to what account? P&L account, that is by income from commodity transaction tax. Then, sir, commodity transaction tax can be debited to what account? P&L account. But that commodity transaction tax is subject to 43B. That's it, game over. Now coming to employer. If you are an employer, you will be paying health insurance for the employee. That health insurance paid is an expenditure for employer. It can be debited too. That's it. Sir, you will pay bonus or commission to employee. That bonus or commission to employees is an expense to the employer. It can be debited to the, but it should be subject to 43B because in 43B list, we are having bonus or commission to employees, leave salary to employees, employers contribution to any fund for the welfare of the. Now, I'm coming to the contribution. Actually, 4 contribution are there. Employers contribution. Then number 2 is what? Employers contribution. Number 3 is what? Employers contribution. And number 4 is employees contribution. Comfortable? Going to talk about the first contribution, employers contribution. If you are an employer, you can contribute up to the recognized provident fund or approved what fund? Superannuation fund. Then it will be allowed as a deduction. But it is subject to 43B because if you don't contribute on or before the date of filing the return of income and if that expenditure has been debited to P&L account should be back. This cross reference you should be able to appreciate. Sir, I am an employer, sir. I paid pakka, sir. I paid pakka on time before filing the return of income. Then in the profit and loss account to contribution to various fund can be claimed as deduction. Either under section 36 subsection 1 class 4 or under section 36 subsection 1 class 4A. Sir, but to the recognized provident fund there is no TDS facility. Then it should be added back under section 40A subsection 4. Are you all really with me? Sir, it is not a recognized provident fund. It's an unrecognized provident fund. Should be added back as per 40A subsection 9. Sir, I contribute to recognized provident fund only. But I have not contributed within the due date for filing the return of income should be added back as per 43B. Every dots are you able to connect. Now the second one, Sir, if an employer is contributing to a notified pension scheme under section 80 CCD, even that is also a expenditure for the employer, because he is contributing on behalf of the employee. That should be debited to the what account? P&L account. This is another amendment in PGBP. Earlier 10% of salary only allowed, but now it has been raised to 14% of salary. But this is subject to 43B, because it should be contributed within the due date specified under 139 subsection 1. Then only you are entitled to claim the deduction. Comfortable? Sir, I can contribute as an employer, I can contribute 14% of salary. My dear lovable students, what do you mean by salary? Salary means basic salary plus DA, but allowances and perquisites should be put it on dustbin. Since this question has undergone an amendment, immediate below question, mandatorily you should go through, my dear lovable students. If as an employer, I may contribute to approved what fund? Gratuity fund. Sir, if I really contribute to approved gratuity fund, it will be allowed as deduction under 36 subsection 1 class 5. But it is subject to what B? 43B. That means I should make the payment on or before the filing return of income. But that's what. Look at here. If you are a good boy, then deduction under 36 subsection 1 class 5. But to that approved gratuity fund, TDS facility has not been arranged, disallowance under 40A clause 4. Sir, I am just creating a provision for gratuity, then disallowed under 48 subsection 7. Sir, it is not a approved gratuity fund. It is an unapproved gratuity fund. Then it should be disallowed under 48 subsection 9. Sir, I just put it as a provision. I have not paid before filing the return of income. Disallowance under 43B. Are you able to appreciate? Now, I have done with the employer's contribution. Coming to the employer, this section first of all saying that if 100 rupees is the salary, employer will deduct 10 rupees and balance only 90 rupees he will pay. First of all, this 10 rupees should be treated as income by employee's contribution 10. And if this 10 rupees has been paid to the respective account, then that 10 rupees can be debited to what account? That means nullify. It will get nullified. Sir, if you are a bad boy, after deducting from the employee, if you don't pay to the respective fund, automatically this 10 will not come, debit 10 will not come, only credit 10 will come. It will be treated as ultimate revenue of the employer in the current year. Are you all really with me? The main important point is for this employee's contribution, 43B time limit is not applicable, because 43B time limit is extended time limit. Are you all really with me? That is a benefit to the employer. That benefit will not be available. Sir, that benefit will be available only to the employer, not to the employee. Because here employer is not putting the money to the respective account from his pocket. He is collecting and paying. So it should be paid within the time limit specified under the respective act, not as per the ishtam of the employer. Are you able to appreciate, sir? These are general notes, sir. Now, discount on zero coupon bond, not that much relevant, which is very simple. If you want, I can say, if a bond has been issued for 2,500 today, and it is going to be ready for 1 lakh. So today you give me 2,500. After 25 years, I will give you 1 lakh rupees. This is called as deep discount bond. There is a deep discount. So company has to repay 97,500 rupees extra. This has to be written off in the P&L account over a period of 25 years. This is called as prorata amount of discount. This prorata amount should be debited to P&L account. So every year, my dear lovable students, 97,500 divided by 25 comes to 3,900 can be debited to P&L account as discount on zero coupon bond. With regard to promotion of family planning, nothing. This is the highlight. This should be incurred by a company. Anyway, at inter level, we don't have company assessee. So what they will be doing, my dear lovable students, they will be giving you a P&L and they will say that promotion of what planning? Family planning debited to what account? P&L account should be in the back, because only for individual this is allowed. So only for company this is allowed. For individual this should be in the back. So anyway we will get only individual question. And in P&L account, if there is promoting expenditure for family planning, it should be in the back, added back. That's it. We have tallied that part of the deduction and the disallowance. Are you comfortable? So chapter PGBP classified into 5 category. Number 1, deduction. Number 2, disallowance. Number 3, procedural aspects. Number 4, presumptive taxation. And the last one, 43 series. Yes. As we understood that, chapter PGBP classified into 5 category. Number 1, deduction. Number 2, disallowance. Number 3, procedural aspects. Then, presumptive taxation and 43 series. mainly deduction is talking with regard to the what are the items that can be debited to P&L account and what are the items that cannot be debited to P&L account. Items that can be debited to P&L account is called as deduction. Item that cannot be debited to P&L account is called as disallowance. Correct? My dear lovable students, sir, in order to find out what are the deduction and disallowance, first of all, you have to maintain the books of accounts, correct? Then only you'll be having P&L account. That's what section 44AA compulsory maintenance of books of accounts. What 44AA is saying that who and all have to compulsory liable to maintain books of accounts. For that purpose, 44AA classified into two categories. 44AA subsection 1 and 44AA subsection 2. 44AA subsection 1 compulsory maintenance of notified books of accounts by 12 notified professionals. That means if you are 12 people such as law, medicine, accountancy, architecture, interior decorators, technical consultancy, authorized representative, film artist, IT professional, company secretary, engineers and other notified professional. If you are any one of the 12 notified professional, then you are supposed to maintain the notified books of accounts. So first of all, you should be a 12, one among the 12 person. Then you have to maintain notified books of accounts. What is notified books of accounts? Like cash book, journal, ledger, carbon copy of bills or original bills. That means what 44AA subsection 1 is saying that if you are 12 notified professionals, you are supposed to maintain notified books of accounts if the total gross receipts or turnover exceeds 1,50,000 in all the three immediately preceding previous years. For example, with regard to the current year, just go back to the three immediately preceding previous years. In all the three immediately preceding previous years, if the gross receipts or turnover is more than 1,50,000, then in the current year, you are compulsory liable to maintain notified books of accounts as per 44AA subsection 1. That's it. Sir, this year only I started business, sir. Then how I will see the last 3 years? No need. For new setup or profession, gross receipt should be more than 1,50,000 in the year of setup. That's it, my dear lovable students. Coming to 48 section 2, other assessee to maintain books of accounts. That means you are not 12 notified professional. You are other than 12 notified professional. If you are other than 12 notified professional, check. Are you an individual or HUF? Maybe. If yes, if your total income exceeds 2,50,000, compulsory liable to maintain books of accounts. Is your gross receipts exceed to 25 lakh, compulsory liable to maintain books of accounts. Other than individual or HUF. Then if your total income exceed 1,20,000, compulsory liable to maintain books of accounts. Sir, gross receipts or turnover is more than 10 lakh. Sir, compulsory liable to maintain books of accounts. These three are presumptive taxation. For example, if you are traveling through 44AE, 44BB and 44BBB, and if you are declaring an income which is less than presumptive rate, then you are compulsory liable to maintain books of accounts. Sir, you are traveling through 44AD and two conditions should be satisfied for these two. Number one, your total income should be more than basic exemption limit. And also, you are declaring a profit which is less than the deemed profit. If these two conditions has been satisfied, look at here, where the assessee claimed income lower than the what profit. That means you are not declaring either 6% or 8% as the case may be. And the income exceed the maximum amount not chargeable to tax. And the income exceed the basic exemption limit. If dual condition has been satisfied, you are compulsory liable to maintain. Same condition here, assessee covered under 44 ADA, where the assessee claimed income lower than the deemed profit and income exceed the maximum amount not chargeable to tax, then you are compulsory liable to maintain books of accounts. If you are liable to maintain books of accounts, either under section 44AA subsection 1 or 44AA subsection 2, and if you are not maintaining books of accounts, penalty will be under section 25,000 under section 271A. Penalty will be 25,000 under 271A. Go through this ICAI study material question, which will give you pakka clarity. That's it. 44AA, compulsory maintenance of books of accounts comes to an end. Now coming to 44AB, compulsory tax audit. Sir, who is compulsory liable to do tax audit? You check. Are you a business or profession? If you are business, my dear lovable students, you are having two limits are there, up to 1 crore or up to 10 crore, up to 1 crore or up to 10 crore. So my dear lovable students, if the turnover exceeds 1 crore or 10 crore, as the case may be, you are liable to maintain, you are liable to do tax audit. When, sir? If the total receipts or turnover or gross receipts exceeds 1 crore or 10 crore in the previous year, as the what may be, case may be. Sir, when sir 1 crore, when sir 10 crore? General limit is 1 crore. But if the cash receipt is within 5% and the cash payment is within 5%, then instead of lower limit of 1 crore, you can apply 10 crore, my dear lovable students. That's what the 10 crore applicability, relief on turnover limit. So generally 1 crore, but if your cash aggregate of all amount received in cash does not exceed, or aggregate of all amount paid in cash does not exceed, then turnover limit will be 10 crore instead of 1 crore. Simple. If you are in profession, no 1 crore, 10 crore split and all, there is only one limit of how much lakh? 50 lakh. If the turnover exceeds 50 lakh, you are compulsory liable to do tax audit. Now again the same presumptive taxation people. You are covered under 44AE, 44BB, 44BBB, and you are declaring an income lower than the deemed profit, then you are compulsory liable to do tax audit. You are covered under 44AD cases. Two conditions should be satisfied for this too. If you are declaring an income less than the deemed profit and your income is more than basic exemption limit, you are compulsory liable to do tax audit. Sir, if you are liable to do tax audit as per these provision, and if you are not doing tax audit, then penalty is liable under section 271B. It's come to 0.5% of the turnover or 1,50,000, whichever is lower. Are you really with me? That's it. Now we are having deemed profit, my dear lovable students. One is 41 subsection 1, remission or cessation of, which is saying that in your profit and loss account, you claimed a deduction. For example, to purchases, you have claimed. In that purchases, you are having credit purchases, my dear lovable students. But the creditor has given you a discount. That discount received should be credited to what account? P&L account. This is what remission or cessation of what liability? Because creditor is a trading liability, and if he has waived something, that should be treated as an income, because that creditor you are claiming it as a deduction under the head PGBP. Balancing charge already we discussed. This is applicable to power sector undertaking who adopted SLM method, sold an asset character at a profit up to the cost of the asset will be treated as balancing charge. 41 subsection 3 already done. Sale of asset used for what research? That means after you purchase an asset for scientific research, after scientific research, immediately if you sold the asset without bringing to the normal, then my dear lovable students, 41 subsection 3 provisions will be applicable. 41 subsection 4 is bad debt recovered. Sir, my dear lovable students, as per 36 subsection 1 clause 7, in case of every SSC, bad debts can be debited to P&L account. But subsequently in future, you may recover the bad debt. That should not be taxable under IFOS. That should be taxable under PGBP. Are you really with me? And profit from discontinued business. Sometimes when business will be there, that business may be discontinued and you will be having income. For example, bad debts recovered you may get, or sale of asset for scientific research, or balancing charge, or remission or cessation of trading liability. Before you tax these income, if there is any brought forward business loss of that discontinued business, against this income, set off the brought forward loss and still balance income is there, only that has to be taxed under the head PGBP. For example, there is a discontinued business, 60,000 rupees loss I am carry forwarding. Then I am having a bad debts recovered of 1 lakh. Then knock off this 60,000 and 1 lakh and balance only 40,000 will be taxable. We have heard about what is balancing charge, sale of asset for scientific research, recovery of bad debt, profit from discontinued business, etc. That's it with regard to, sir, PGBP order 3 parts. That is PGBP classified into 3 category. Number 1, deduction. Number 2, disallowance. And number 3, procedural aspects. This is what route number 1 of the PGBP. If you want to travel through the normal route, you have to follow deduction, disallowance and procedural aspects. Sir, this itself is taking 2.5 hours to 3 hours, sir. Such a big route, sir. I am not interested to follow this route, which is P&L route. I don't want. I don't want deduction. I don't want disallowance. I don't want procedural aspects. I am not such a good boy. I am not interested to follow all this. Don't worry. We are having presumptive taxation, the another route. This is the route number 2 of the PGBP. Nothing. You just check. Are you a businessman? Are you a notified professional? Are you engaged in plying, hiring and leasing of goods carriage? If that is the case, take your turnover and apply some percentage of turnover, you will get the presumptive income. That's it. What 44AD is saying that if an assessee is engaged in business, that is eligible assessee is resident individual, resident HUF, resident partnership firm, but not LLP, who has not claimed deduction under 10AA or 80IA to 80 RRB. That means if you are resident or sir partnership firm, but LLP provisions will not be applicable. You should not claim deduction under section 10A or 80IA to 80 RRB, then you are entitled to travel through presumptive taxation route. This is the second route. And next one, eligible business. What business you should do? You can do any business other than plying, hiring or leasing of goods carriage. Because for that business, we are having a separate section. So don't travel through 44AD. And your turnover should not exceed 200 lakhs. That means 2 crore. Your turnover should not exceed 2 crore. But, sir, all my cash receipts are within how much percentage? 5%. Then you can have the turnover up to 3 crores. So, the presumptive taxation turnover is either 2 crore or 3 crore as the, sir, what is the presumptive rate I should offer? Either 8% of the turnover or 6% of the turnover. Two conditions are satisfying. Condition number 1, you should receive the payment in account pay check, account pay bank draft, electronic clearing system or such other electronic mode as may be prescribed. Condition number 2, such realization should be happen on or before the due date for filing the return of income under section 139 subsection 1. And sir, if you are eligible to travel through presumptive taxation, you opted presumptive taxation, but you are not declaring 8% or 6% as the, if you are declaring less than 8% or 6%, then you are compulsory liable to maintain books of accounts under section 44AA and compulsory liable to do tax audit under section 44. The only problem is, for example, if your turnover is 1.8 crore, have it exceeded 2 crore? No. You are entitled to travel through the presumptive taxation. Assume entire turnover has been received by cash. So, into how much percent? You will be getting some answer. That is a deemed profit, correct? From that deemed profit, we can't reduce 30 to 38. That's what no deduction under section 30 to 38. Inside this 30 to 38, only 32 is there. So 32 is equal to depreciation. Are you all really with me? So if I travel through the presumptive taxation route, I can't claim depreciation as a deduction. But next year, I may travel through the normal route. So if I don't reduce the depreciation from the WDV which are prescribed under 43 subsection 6, my closing WDV will be more. So automatically next year opening WDV will be more. So next year I may claim more depreciation. So what act is saying that even though you are not entitled to claim deduction under 30 to 38, you can claim depreciation from the block value as if depreciation has been actually allowed. Are you all really with me? Sir, when I am supposed to pay the advance tax, pay the 100% of the advance tax in one installment on or before 15th of March. General people, normal route people, that is deduction, disallowance and procedural aspects will pay advance tax in 4 installment. You pay advance tax in 1 installment, that too on or before 15th of March. That's it. These are the important provisions of 44 AD, my dear lovable students. And one important thing you have to revise in 44 AD is, for example, financial year 24-25. Sir, in financial year 24-25, your turnover was 1.8 crore and you have declared 9%. Are you traveling through the presumptive route? Yes. So the year of adoption of presumptive income is 24-25. Then for the next 5 consecutive previous years, that is previous year 25-26, previous year 26-27, previous year 27-28, previous year 28-29, previous year 29 and 30. Are you all really with me? For these previous years, you should mandatorily travel through 44 AD itself. In this block of 5 years, For example, previous year 27-28, you come out of the presumptive taxation, then leave the year of exit. That year you put it on dustbin. But for the next 5 previous years, that is previous year 28-29, previous year 29-30, previous year 30-31, previous year 31-32, previous year 32-33, for these 5 years, for you, presumptive doors are closed. That means year of entry should be excluded without calculating year of entry next 5 years. Year of exit should be excluded without year of exit next 5 years. You are not entitled to enter and exit into the presumptive taxation. So that has been tested for question number 2, Praveen question. This is the last day revision question, mandatory question for examination. Don't leave this. This is there in the ICAI study material and we have discussed in the class. The provision what I told is this example which is there, question number 3. This is a ICAI example, a very good example, my dear lovable students. Sir, I am 12 notified professional, one of the 12 notified professional such as law, medicine, accountancy, architecture, interior decorators, technical consultancy, authorized representative, film artist and IT professional. Then if my turnover does not exceed 50 lakh, then I can travel through the presumptive taxation route. But if the cash receipts does not exceed 5%, then my turnover limit will be up to 75 lakhs. Are you really with me? What is the presumptive income to be offered? The turnover into 50%. Oh my God. There it was only 8 or 6% as the case may be. But 44 ADA, it is how much percent? And if you are eligible to travel through presumptive taxation under 44 ADA, and if you are not declaring minimum 50%, then you are compulsory liable to maintain books of accounts under section 44A and compulsory liable to do tax audit under section 44. The same advance tax rules, 100% of the advance tax is liable to be paid on or before 15th of March. Even though you are not entitled to claim deduction under 30 to 38, you can reduce the depreciation from the closing WDV to arrive at the closing WDV in the current year. That's what WDV of any asset shall be deemed to have been calculated as if eligible business has claimed and been actually allowed depreciation for each relevant assessment year. The last section from the presumptive taxation 44AE. Plying, hiring or leasing of what's carriage? Goods carriage. Nothing. You are a GTA. You are owning lorry, not more than 10 goods carriage at any time during the previous year. With that lorry, what you are doing, man? Plying, hiring or leasing of goods carriage. Either you are using the lorry for transportation of goods, you are hiring the lorry, giving the lorry for hire. Sir, what is the presumptive income? It is based upon whether the lorry is a heavy goods vehicle or other than heavy goods vehicle. If the lorry is a heavy goods vehicle, it is ton based, and other than heavy goods vehicle, month based. If it is ton based, 1000 per ton or part of the month, 1000 per ton per month or part of the month. If it is month, 7500 per month or part of the month. That's what they are saying. Heavy goods vehicle 1000 per ton. Other than heavy goods vehicle 7500 per ton. If you are having only less than 10 lorries and if you are not declaring the presumptive income, you are compulsory liable to maintain books of accounts under section 44AA and you are compulsory liable to do tax audit under section 44. But this is not like general route. You are liable to pay 4 equal installment as advance tax. And 30 to 38 deduction cannot be claimed, but 40B can be claimed if the assessee is a partnership firm. What is 40B? Which is nothing but interest on capital and remuneration to partners. Are you all really with me? Sir, very important point for examination. Income will be calculated even if vehicle is not put to use but owned by the assessee. I'm just owning. I have not put to use. Still, you are liable to pay 1000 rupees per ton or part of the ton or 7000 rupees per month or part of the month. That's it. Sir, even though 30 to 38 is not allowed as a deduction for the purpose of calculating closing WDV, you can reduce the depreciation as if depreciation has been allowed, claimed and allowed under this act. This is what the most important presumptive taxation sections called as 44 AD, 44 ADA and 44. My dear lovable students, 44 AD is presumptive taxation for businessman. 44 ADA, presumptive taxation for notified professionals. 44 AE, plying, hiring and leasing of goods carriages. That's it. The last slot from the PGBP coming to 43 series. 3 sections. I don't know where to discuss. That's why I kept here. Sir, 43B already discussed blocked section, deduction on actual payment basis. 43A, I will tell you, sir, you purchase an asset from a foreign country. You have to make the payment in foreign currency. But you are not going to pay enough. You will be paying after 6 months or 1 year. By that time, surely foreign exchange fluctuations will be there. That foreign exchange fluctuation should not be debited or credited to the P&L account, should be adjusted with the asset account is what 43A is talking about. 43CA is saying that if an asset is having land building or both, for example, you are having land building or both, and that land building or both is a stock in trade, basically CASA grant, and they are selling that land building or both for a value less than the stamp duty value, and the stamp duty value exceeds 110% of the consideration, then stamp duty value should be taken as the full value of consideration. So there are two types of stamp duty value you will be having. One is at the time of agreement or at the time of generally. Stamp duty value at the agreement will be less as compared to stamp duty value as on date of. You can take for the comparison purpose stamp duty value as on date of agreement, provided if the payment has been made by account pay check or account pay bank draft or electronic clearance system or such other electronic mode as may be. Otherwise, you can't take stamp duty value as on date of agreement. You have to take stamp duty value as on date of transfer is what the discussion is all about. Are you all really with me? That's it. The chapter PGBP classified into how many category? Number 1, deduction. Number 2, number 3, number 4, number 5. 43. Tell me what is section 28, section 29, section 30, section 31, section 32, section 33AB, section 35. Expenditure on. Sir, we'll be quickly moving into one question from the ICAI book back. Mr. Sivam, a registered trader of Cochin, gives you the trading and P&L account for the year ended 31st March. This is how the provisions has to be applied. Sales is there, closing stock is there, no problem. Opening stock purchase is there, GP is there. By income from UTI, this has to be taxed under IFOS. But this is credited to P&L account. Because of that, net profit would have been increased, so reduce it. Okay. Salary allowed, rent and rates allowed, interest on loan allowed, printing and depreciation allowed, printing and stationery allowed, postage and telegram allowed, loss on sale of share. This is a capital gain item, should be in a back. To other general expense, generally allowed. I have to read the notes. It was found that some stock were omitted to be included in the both opening and closing stock. If I include closing stock, GP increases, NP increases, so I have to add the closing stock. If I include opening stock, when my opening stock increases, GP reduces, so I have to reduce the opening stock. Salary includes 10,000 paid to brother. Brother is a related party, which is unreasonable to the extent of 2,000. As per 40A subsection 2, this 2,000 should be in a back. Whole amount of printing and stationery was paid in cash. Cash was one time to Mr. Ramesh. Printing and stationery is 23,200, which is more than 10,000. So as per 40A subsection 3, 100% it should be in the back. Depreciation in the P&L account is 1,05,000 was based on the following information. Sir, this 1,05,000 depreciation, my dear lovable students, if you see 1,05,000 depreciation, this should be added back because they have calculated as per their system. But as per Income Tax Act, opening value of plant and machinery as on 31/3 is 4,20,000. So opening WDV means it is more than 180 days. So 4,20,000 into 15% you are entitled to claim. A new plant falling under the same block of depreciation was bought on 70,000 on 1/7. 1/7 means July. July means more than 180 days. So even for this 70,000 also you can claim 15% depreciation because it is more than 180 days. Two old plant were sold on 50,000 rupees, man. That means you have to calculate the block value, correct? So opening block will be 4,20,000. Am I right, sir? Add purchases will be 70,000 minus sales will be how much? 50,000. You just think of it. What they are saying, a new plant falling, opening value of plant and machinery, how much plant comprised of they have not given, but new plant they have given. Only two old plant has been sold. We are assuming that still there are number in the block. Block does not cease to exist. Section 50 will not be applicable. Still section 32 will be. So 4,20,000 plus 70, my dear lovable students, basically opening 4,20,000, purchase 70, minus 50 comes to 4,00,000. Entire 4,40,000 represent the more than 180 days. You are entitled for how much percent? 15%. Comes to how much? 66,000. So, but the depreciation debited to P&L was, so 1,05,000 should be added back and 66,000 can we claim it as a while calculating the PGBP. And if you read the question, they are saying that Shivam, a retail trader. Trader means they are not engaged in manufacturing, not entitled for additional depreciation. So don't scratch your head for additional depreciation. Rent and rates include GST liability of 3,400 paid on 7/4/2025. 7/4 means next year April. No problem. It is before, on or before the date of filing the return of income. No disallowance is required. Other general expense include 2,000 paid as donation to a public charitable trust. That is not a business expenditure. That is a donation. Should be in a back. You are required to compute the profits and gains of Mr. Shivam under the presumptive taxation under 44 AD, which is nothing but turnover into 8% and profits and gains as per the regular provisions of the Act. Yes, exercise the option of shifting out of the default. Assume that the whole of amount of turnover received by account pay check, that means 44 AD will be taxable at 6%, not 8%. And use of electronic clearing system through the bank account during the year. So we have to calculate under two route. Simple. First the P&L route. You have to start with net profit as per P&L account. Correct? Sir, when you add the closing stock, profit will increase us. Sir, salary paid to brother, unreasonable amount should be added back. Printing and stationery cash, 100% should be added back. Depreciation has been debited to P&L. First, you have to add back depreciation and reduce depreciation as per section 32. Comfortable? Short-term capital loss, not a PGP item, but hence debited to P&L account should be in a back. Donation to charitable trust is not a business expenditure, should be in a back. Undervaluation of opening stock. If opening stock increases, profit reduces and should be reduced. Income from UTI should be taxable under the head income from other sources. Hence, it has to be reduced. Business income before depreciation total this much. The correct depreciation as per 32 is only this much. So you have to reduce only that much. Are you really with me? And the turnover given in the question is 1 crore 12 lakh 11,500. On this turnover, you have to apply 6% because entire money has been received by way of account pay check. You will be getting this much amount. They don't want comparison and all. They just want, sir, how to compute it. Are you really with me? This is one of the question to apply the provisions of the PGBP. I'm moving into illustration number 9. Second question. Mr. Raju, a manufacturer at Chennai. Manufacturer. That means they are entitled for, gives you the following: manufacturing, trading and P&L account, sales given, closing stock given, pakka, opening stock, purchase of raw material, manufacturing wages given, GP given, dividend from domestic company. This will be taxable under income from agriculture, will be taxable under IFOS, but it is fully exempt under section 10 subsection 1. Are you really with me? Sir, gross profit, administrative charges, SGST penalty should be added back because as per section 37, general deduction, it should not be infraction of law. It should not be a penalty, right? Should not be debited to P&L account. General expense, interest to bank, depreciation, net profit, okay, fine. Following are the further information. Administrative charges include 46,000 paid as commission to brother. Of the SSE, commission amount of market rate is only 36. So 10,000 rupees extra. This 10K should be as per 40A subsection 2. SSE paid 33,000 in cash to a transport carrier. No problem because GTA up to 35,000 is allowed. This amount is included in manufacturing expense. Assume that the provisions relating to TDS are not applicable. Then no problem, no consequences. Sum of 4,000 per month was paid as salary to a staff throughout the year, and this was not been recorded in the books of accounts. That means 4,000 into 12, 48,000 they missed to record, right? So this has to be debited to P&L account. If this has been debited, profit would have been reduced. Now manually you have to reduce the 48,000. Comfortable? Bank term loan interest actually paid is only how much? 20,000. And balance was paid only in November. That is after filing return of income. So as per 43B, 60,000, only 20,000 paid. So 40K should be in the back. As per 43B, because interest on borrowed capital should be added back. Housing loan principal repaid during the year was 50,000 and it related to residential property acquired by him previous year 23-24 for self-occupation, for soap. Interest on housing loan was 23,000. Housing loan was taken from Canara Bank. These amounts were not dealt with in the P&L account. Fine. Sir, as per what route the assessee is traveling, sir? Depreciation details and compute the income of Mr. Raju. Assume e-pay tax under the what tax regime? If he is traveling through default tax regime, 24B provision itself is not applicable. So put it on dustbin the information. And they clearly said that these items are not dealt with the P&L account. So nothing add or nothing less. Depreciation details has been given. Opening WDV 11,90,000. These are the addition, total 2 lakh. Total addition is 4 lakh. So out of 4 lakh, 2 lakh rupees is more than 180 days, means remaining 2 lakh will be less than. With this information given, we can calculate the depreciation. Whatever depreciation debited to P&L account should be added back, and whatever depreciation we calculated should be reduced. You can calculate easily the total income of the question. Are you able to appreciate and place the provisions? That's what this question. Go through the answer, mandatory, my dear lovable students. The last question from the entire discussion of PGBP. Mr. T is engaged in composite business of growing and curing, further processing coffee in Coorg, Karnataka. Is this normal coffee, abnormal coffee? Normal coffee. As per rule number 7B, for normal coffee, how much? 75% and 25%. Fine. Relevant information is given. They are having a car. That car is the only asset in that particular block. 3 lakh rupees is the WDV. There is a machinery. 15 lakh rupees is the WDV. Expense incurred for growing coffee is 3 lakh 10,000. Curing coffee is 3 lakh rupees. And sale value of the cured coffee is 22 lakh. So from the sale value, reduce the 3 lakh rupees and 3 lakh 10,000 rupees. Depreciation for 15 lakh rupees and depreciation for 3 lakh rupees. Right. Besides being used for agriculture operation, car is also used for what purpose? Section 38, asset used for both business and personal. Disallowance for personal use may be taken at how much percent? So you calculate the total depreciation of the car, which is nothing but 3 lakh into 15% comes to 45,000. Out of that, 20% are personal. That means only 80% will be allowed as a expenditure incurred for car running and maintenance are 50,000. Even this 50,000 should be classified into 20 and 80. 20% should be added back. Personal. Machine were used only in coffee curing business operation. So, section 38 provisions will not be applicable to the machine. Compute the income arising from the above activity. It is a very simple question. 22 lakhs is the sales. First, reduce the expense for growing because without growing, you can't cure it. Car expenses totally 50,000 are there, but only 80% is for business as per section 38. Depreciation on car totally 45,000 is there, but as per section 38, only 80% will be allowed, which is 36,000. Total cost of agriculture operation is this much. Once you cultivated the crop, you have to cure the crop, which is how much lakh? 3 lakh. So total cost is 5 lakh 25,000. So from the 22 lakh, if you reduce the total expense of 9 lakh 11,000, you will get the total composite income of 12 lakh 89,000. This answer you split into 75% agriculture income and 25% business income. That's what they have done. Are you able to appreciate? This is how you have to apply chapter PGBP, my dear lovable students. For that, under every provision, I have given the sufficient working questions along with answer, that to amended answer. So basically, we can say that chapter PGBP classified into 5 category. Number 1, deduction. Number 2, disallowance. Number 3, procedural aspect. This is one route called as normal route. Normal route of the PGBP. Next one is presumptive taxation. That is an alternate route of the PGBP. And 43 series is nothing. I don't know where I have to keep that. So I kept it as 43 series, the last miscellaneous provisions. Are you all with me? Actually, PGBP is technically classified into 2 categories. Only one is normal route and the alternate route. For normal route only, we know what are the item can be debited to P&L account called as. What are the item cannot be debited to P&L account called as. For this P&L account, first you have to maintain the books of accounts, which are as per the procedural aspects. Sir, alternate route is nothing but presumptive taxation. Are you all really with me? Once you connect with all this question, this document is freely available for download, my dear lovable students. And after every topic, if you sit and do this many questions, especially the book back, all the 10 questions, plus nearly 22 questions, 24 questions are there as illustration, which all are majority 99% ICAI illustration. If you sit and do one time, this chapter PGBP will be yours. Don't read it, see it. There is a difference of doing it. Sir, do it. I am wishing you all the very best for a gigantic, brilliant, fantastic, outstanding chapter, profits and gains of business or profession. With this, we can declare that the marathon of the PGBP comes to an end. Sir, very, very, very happy morning to all. So we are going to do a very quick marathon on capital gain and IFRS, my dear lovable students. A very important 2 topics for the coming examination onwards because of its huge amendments in the capital gains. Yes, the chapter capital gain has been amended like anything. How we are going to discuss? The first, we are going to talk about the introduction or the basics in the capital gain. As we all know that there are 5 heads of income. Number 1, income from salary. Number 2, income from house property. Number 3, profits and gains of business or profession. Number 4, capital gain. And number 4 is IFRS. These last 2 heads is our discussion. My dear lovable students, both the heads are predominantly talking about one asset called as capital asset. If you are transferring the capital asset, capital gain will come. If you are receiving the capital asset, IFRS may come. IFRS may come. So to understand these two chapters, one is capital gain and IFOS. Understand what is capital asset is priority. That's what definition of capital asset. That's what definition of. What is capital asset, sir? Capital asset means any property held by an assessee, whether or not connected to his business or profession. That means all the properties held by assessee are capital asset. That means as per the starting definition, everything is a capital asset. If everything is a capital asset, even stock in trade is also a capital asset. If stock in trade is also a capital asset, means if you sell the capital asset, sir, dash gain will come, capital gain will come. It should not happen like that. That's why first part of the definition is having 5 exceptions. These 5 things are not capital asset, my dear lovable students. Number 1, stock in trade. Number 2, personal effects of movable nature. Rural agricultural land. Gold bond issued by Government of India and special bearer bond. These 5 things are not capital asset. Sir, personal effects of movable nature means your shoe, your pant, your shirt, your specs are not what asset? Capital asset. But for personal effects of movable nature is having 7 exception. That means these 7 things are capital asset, even though it is personal effects of movable nature. Number 1, jewelry, archaeological collections, drawings, paintings, sculptures, any work of art, bullion, shares and securities, varadu. So this is the definition of the what asset? Capital asset. So first of all, an item should be a capital asset as per part number 1. One more part is there, my dear, part number 2. Even this is also a capital asset. Any security held by a foreign institutional investor. Any security held by a. So the assessee is FII, foreign institutional investor, in accordance with the SEBI guidelines. In accordance with the. That means a FII, whether for them security is a stock in trade, it will be a what asset? Capital asset. So for FII, always securities are capital asset and it will never go to PGBP is what our highlight. Are you really with me? And any ULIP, unit linked insurance plan. It should be issued on or after 1/2/2021. First of all, the date of issue should be on or after 1/2/2000, for which the provisions of 1010D is not applicable because 1010D is an exemption. If 1010D is applicable, it is exempted. Once it is exempted, it is not a capital asset. Right, sir? Sir, provisions of 1010D is not applicable. On account of annual premium or aggregate of annual premium exceeds how much? 2,50,000 rupees. So because of the reason that if the annual premium or aggregate of annual premium exceeds 2,50,000, it's a Brahmandamana ULIP. It is not a Sadharanamana ULIP. If it is a Sadharanamana ULIP, then it is exempt under section 1010D. Once it is exempt under section 1010D, it is not a capital asset. If it is a Brahmandamana ULIP, it is not exempt under section 1010D. If it is not exempt under section 1010D, it is a capital asset. Are you really with me? This is what the definition of the capital asset, my dear lovable students. We talked about the definition of the rural agriculture land. You tell me, is rural agriculture land a capital asset? No, sir. Then that means urban agriculture land is a. Sir, what is urban agriculture land? Sir, urban agriculture land is a land which is situated in urban area. Which is situated in? Sir, what is urban area? Urban area may be a municipality, cantonment board, which has a population of how much or more? Sir, Chennai, Greater Chennai Corporation, having a population of more than 10,000 or less than 10,000. That means this is an urban area, not a. So if you are having any agriculture land in urban area, it's an agriculture land. Hence, it is a what asset? Capital asset. In the following area within the distance measured aerially, that means, my dear lovable students, here is the cantonment board or here is the local authorities there. Sir, here, from here, they are saying that up to this area also we will treat it as what area? Urban area. Sir, this is an urban area. There is no doubt about it. Urban area சுத்தி பத்தி இருக்கிறது என்ன ஏரியா தான்? Urban area தான். For example, up to how many kilometers? 2 kilometers. So distance from area referred above up to 2 kilometers. If the population according to last census is more than 10,000, because here itself covered 10,000. More than 10,000 up to how much lakh? 1 lakh. Sir, my kilometer up to how much kilometers? 6 kilometers. More than 1 lakh up to how much lakh? 10 lakh. Up to 8 kilometers. Sir, more than 10 lakh. So from the municipality or cantonment board, from here you are traveling to 9 kilometers. That's it. It is not an urban area. It is a rural area. So any land you are having at 9 kilometer distance, then such land is not a capital asset, because that land is situated in rural area. Means any area which is not an urban area. Urban area means any area which is not a rural area. Are you really with me? Yes, sir. So that's it. These are the examples we have already done. So what this chapter is saying, that first of all there should be a capital asset. Have you understood what and all are capital asset? That capital asset should be transferred. That capital asset should be. So there should be a capital asset and you should transfer the capital asset, my dear lovable students. Sir, what and all will amount to transfer? If you are doing 7 activity or transaction, then that will be amount to transfer. What are the 7 activity or transaction? Number 1, sale. I am loving, with interest I am selling that, or I am exchanging, or relinquishment of any asset. So sale, exchange or relinquishment of asset will be treated as transfer. Extinguishment of any rights therein. For example, I am having a capital asset, I am saying that this capital asset is no more mine. It is a transfer. Compulsory acquisition under any law. Government is putting the capital asset. Then it is a transfer. You can't argue that, oh, I don't love it, I don't like it. Conversion of capital asset into stock in trade. That's what 45 subsection 2. Conversion of capital asset into what in trade? Stock in trade. Compulsory acquisition is what? 45 subsection 5. Compulsory acquisition of land and building. Are you really with me? Or any transaction, you are entering into any transaction which allowing the possession of the immovable property, which help you to get the possession of the immovable property, is a transfer. Or any transaction enabling enjoyment of the immovable property permanently is a transfer. As we all know that zero coupon bond are capital asset. If you are maturing zero coupon bond or redeeming zero coupon bond, it will also be transfer. That means 7 activities or transaction will tantamount to transfer as per section 2 subsection 47. That's why 7, 2 subsection 47. 7 activities or transaction will be treated as transfer. So there should be a what asset? Capital asset. And that capital asset should be, then automatically what gain will come? Capital gain will come. That capital gain may be short-term capital gain or long-term capital gain, my dear lovable students. Are you really with me? Sir, whether the capital gain is a short-term capital gain or long-term capital gain depends upon period of holding. Depends upon that period of holding is explained in section 242A. Period of holding is explained in section 242A. For example, if you are holding more than the statutory limit, then the asset is a long-term capital asset. If the asset is a long-term capital asset, the gain will be long-term capital gain. Whereas, if you are holding for less than the cutoff date, then the asset is a short-term capital asset, then the gain will be short-term capital gain. From here onwards, the real game starts because of the amendment. What 242A, for the purpose of period of holding, the act is asking that, have you transferred before 23/7/2024? That is a cutoff date for capital gain. 23/7. 7 means July. July 23rd. Hello, sir. Have you transferred, made the transfer before 23rd/7/2024 or after 23/7/2024? So, from 1/4/2024 till 23rd of July, we are having one capital gain provision. On or after 24/7, my dear lovable students, 23/7, sir, we are having new capital gain provision. So this I am going to call throughout the marathon as old capital gain provision and new capital gain provision. Comfortable? If the transfer has been made before the cutoff date, can you say what is the cutoff date? 23/7/2024. For the purpose of what of holding? Period of holding, we classify capital asset into 3 categories. Financial asset, unlisted shares and land and building, other capital asset. Comfortable? For financial asset, period of holding is equal to how much month? If you are holding more than 12 months, long-term capital asset. Less than 12 months, short-term capital asset. My dear lovable students, for unlisted shares and land and building, period of holding is how much month? 24 months. And for other capital asset, 36 months was the period of holding. But after amendment, that is, if your transfer is making after 23/7/2024, we don't have this category. This has been deleted. We are having only financial asset and other than financial asset. Financial asset means period of holding more than 12 months. Other than capital asset, period of holding is equal to 12 months, 24 months. Are you really with me? Sir, what are the financial asset? Question arises. Listed shares are financial asset. Units of UTI, units of equity oriented fund, and zero coupon bond. These are the financial assets. So in exam question, my dear lovable students, what first you have to check is whether the transfer happened, whether before the amendment date or after the amendment date. If it is before amendment date, for the purpose of period of holding, we classify capital asset into three categories. Number one, financial asset. Number two, unlisted shares and land and building. Number three, other asset. But if the transfer has been happened after the amendment date, there are only two categories of capital assets are there, financial assets and other than financial assets. Comfortable? So let me ask you a question. You try to apply and answer me. Before amendment, listed shares, what is the time limit? 12 months. After amendment, listed share, 12 months. Before amendment, unlisted share, 24 months. After amendment, before amendment, land and building, 24 months. After amendment, land and building, 24 months. Comfortable? Before amendment, debenture will fall under financial asset, unlisted shares, or other capital asset. Other capital asset. Debenture will fall under other capital asset. So for debenture, the time limit was 36 months. But after amendment, if you are transferring, 36 months concept itself has been deleted. That's what the amendment is all about, right? So the time limit for the period of holding will be 24 months. Clarity? What are the four financial assets? Can you say listed shares, units of UTI, units of equity oriented fund, units of zero coupon bond? That means basically 3 units and 1 share. Are you all really with me? That's it. Sir, as per section 50AA, there is an amendment. I will come to 50AA at the appropriate time of discussion. That's it, man. And how to compute the period of holding, I will teach you at the appropriate time, because these are various circumstances. That various circumstances we will be discussing at the appropriate time. Come on. So there should be a what asset? Capital asset. That capital asset should be transfer. Because of the transfer, we will be getting that capital gain, may be either short-term capital gain or long-term capital gain. Comfortable? Whether the capital gain is a short-term capital gain or long-term capital gain depends upon period of holding. Comfortable? For the purpose of what of holding? Period of holding. We have to check that whether the transfer has been happened before amendment date, or if it is before amendment date, capital asset classified into 3 categories. Number 1, financial asset, unlisted shares and land and building, other asset. But after amendment, it is not 3 classification, it is only 2 classification. Number 1, financial asset, other than financial asset. Can I proceed? Sir, this capital gain head is a special head. It's not like salary. Every month you won't get capital gain. Correct? Every month you won't get capital gain like IFHP. PGBP, every month sale will be there. IFOS also, every month interest revenue will be there. But once in a while only capital gain you will get. If you transfer the capital asset, only what will come? Capital gain. So section 48, section is a 8-step approach. This is how you have to calculate the capital gain, my dear lovable students. This is equal to section 29. Section 48 is equal to section 29. Because how to compute the PGBP we have discussed in section 29. Am I right? Because section 28 is a charging section and section 29 is a computational. How to compute the capital gain is covered in section 48. Section 48 is asking one question. Have you transferred the capital asset before amendment data? After amendment data? If it is before amendment date, that is before 23rd of July 2024. Because for our examination, only from 1/4/2024 till 23/7/2024. If the transfer has been happened between these date, my dear lovable students, you have to check that full value of consideration for how much rupees you really sold the capital asset. Less what for the transfer? Expenses for the transfer. Sir, in order to transfer, have you incurred any expenses? You will get what consideration? You can reduce either cost of acquisition or index cost of acquisition or cost of improvement. Or what is cost of acquisition? What is cost of improvement? This we have discussed in section 55 of the Act. Are you all really with me? You will be getting either short-term capital gain or you will be getting exemption under section 54, 54B, 54D, 54EC and 54F. You will get taxable short-term capital gain or taxable. This is a historic amendment in the entire Income Tax Act. If you are transferring a capital asset after amendment date, you are not entitled for the benefit of indexation, my dear lovable students. You are not entitled for the, then the computation will be full value of consideration, less expense for transfer. You will get answer as net consideration, less cost of acquisition, or that means even if you are transferring a long-term capital asset, even after holding the specified period of holding, benefit of indexation will not be. From 1961, this is not the procedure. But for our examination, even though the asset is a long-term capital asset, we are saying that you are not entitled to claim the benefit of. So less cost of acquisition or index cost of acquisition. You will get short-term capital gain or long-term capital gain. From that, you can reduce exemption under section 54, 54B, 54D, 54EC and 54F. Taxable short-term capital gain and taxable. So this is a remarkable amendment. If you are transferring before amendment date, you can enjoy the benefit of indexation. But after amendment date, sir, even though the asset is a long-term capital asset, you are not entitled for benefit of indexation, right? For what and all benefit of indexation can be availed? First of all, you have to ensure that the transfer has been happened before the, if it is before the amendment date, sir, you can take for cost of acquisition also indexation can be enjoyed, and cost of improvement also indexation can be. For example, I purchased a residential house property. You tell me, is residential house property a capital asset? Yes, sir. I purchased a residential house property. That is called as what of acquisition? Cost of acquisition, because I purchased. I constructed 2 additional rooms there. Sir, it is called as cost of improvement. How to compute the indexed cost of acquisition? Take the cost of acquisition divided by CII in the year in which the asset is first held by the assessee. That means the assessee means the person who are getting the asset in which year he got the asset first. Or if that asset has been received before base year, that is on or, sir, before 1/4/2001, whichever is what, later. So you have to take a CII. You have to take a, of the first year of the asset is held by the what? Assessee. For example, first time asset is held by the assessee on 1980. On 1980, we don't have CII. Look at here. Our CII starts only on 1/2. That's why, or 1/4/2001, whichever is. So for any capital asset acquired before base year, always the denominator will be 100, because 100 is the base year. Can I proceed? Into CII of the year of transfer. Generally in our examination, we will get the transfer year as our year, which is 24-25, come to 363. Can I proceed? That's it. With regard to indexed cost of improvement, you have to check how much money you spend. That's what cost of improvement. Divided by CII of the year of improvement take place. In what year you have incurred the improvement? Andha varshatoda CII. For example, 10-11 you have incurred the improvement. Divided by 160 into year of transfer. 363 is the CII of the year of transfer. Comfortable? Look at this, man. If the cost of acquisition is before what year? What is the base year? 1/4/2001. Then cost of the asset to assessee or fair market value as on 1/4/2001 will be the what of acquisition. That means any assessee acquired a capital asset before base year, you can take either actual cost of acquisition or fair market value as on 2001, whichever is higher. Sir, if you have incurred cost of acquisition after what year? Base year. Actual cost of acquisition will be the cost of acquisition. Comfortable? CII has been given, and I already highlighted that if transfer of capital asset has been happened after the amendment date, which is, sir, after 23/7/2024, all this benefit of indexation concept will not be applicable. Comfortable, sir? So first of all, there should be a what asset? Capital asset. So this capital asset should be transferred. Because of the transfer, you should end up with a capital gain. This capital gain may be either short-term capital gain, or it depends upon what of holding. For the purpose of period of holding, you have to check that whether the transfer has been done before the amendment or transfer has been done after the amendment. If it is before the amendment, capital asset classified into 3 category. If it is after amendment, capital asset classified into 2 category. Can I proceed? Sir, how to compute the capital gain is what question? That has been handled by section 48. Even section 48 is answering one question. Is the transfer happened before the amendment or after amendment? If it is before amendment, if the asset is a long-term capital asset, you are entitled to claim benefit of indexation. That is, instead of cost of acquisition, you can take index cost of acquisition. Instead of cost of improvement, you can take index cost of improvement. Comfortable? Whereas if the transfer has been happened after amendment, on or after amendment date, sir, the benefit of indexation concept, we put it on dustbin. We don't want the benefit of indexation, even though the capital asset is a long-term capital asset. Comfortable? This is what the introduction or the basics of the capital gain. Yes, sir. Sir, we understood that how to compute the capital gain that is governed by section 48. Section 48 is an 8-step approach. Am I right, sir? Full value of consideration is step number 1. That is a hero. Generally, full value of consideration means actual selling price. But what this chapter capital gain is saying that, but in certain circumstances, I will not adopt full value of consideration as the actual selling price. That is what deemed consideration. What consideration? In this area, we are not talking about all the capital asset, my dear lovable students. We are talking only about the high value capital asset. What capital asset? High value capital assets such as land, building or both. High value capital assets such as unlisted share. And high value capital assets such as other asset. Other capital asset. What this area is saying that if you are transferring land, building or both, my dear lovable students, you can transfer this land, building or both either as stock in trade or you can transfer the land, building or both as capital asset. Think of a situation of CASA grant. If you are owner of the CASA grant, my dear lovable students, for you the land, building or both is a stock in trade. If you are yourself not CASA grant, other than CASA grant, if you are having land, building or both, it is a capital asset. What is the problem? Many people are transferring land, building or both. And they are transferring less than the stamp duty value. Less than the... And when they are calculating the capital gain, they are saying that I have not even received stamp duty value. I will be declaring a full value of consideration which is less than the what duty value. Government is saying that that game we don't want. If you are transferring any, sir, land, building or both for a value less than the stamp duty value, for a value, then stamp duty value should be deemed as the what value of consideration. That's what the provision we are going to discuss. This land, building or both may be stock in trade. Maybe then PGBP head will be applicable. And if the land, building or both is a capital asset, then capital gain head will be applicable. If it is PGBP, my dear lovable students, provisions of 43CA will be applicable. And if it is capital gain, provisions of 50C will be applicable. So the parallel section for 43CA is 50C and parallel section for 50C is 43CA. So that's why I'm going to talk about both the section. Actually, this section is related to PGBP and this section is related to capital gain. Comfortable? If you are selling any land, building or both as what in trade? Stock in trade. Sir, what is the asset you are going to sell? Land, building or both. And that land, building or both is a dash in trade. So first I am going to talk about CASA grant. Then the head applicable to the CASA grant will be PGBP. And the section applicable will be 43CA. Sir, I am having land, building or both, not in a sir, stock in trade. It is a what asset? Capital asset. Then dash gain will come. Capital gain will come. Then section 50C will be applicable. Simple one line summary. What is the asset you are having? Land, building or both. Is it a stock in trade? 43CA will be applicable. PGBP will be applicable. Sir, what is the asset you are having? Land, building or both. Is it a capital asset? Capital gain will be applicable. 50C will be applicable. Both the section are saying same provision. Sir, both the section are saying that if you are selling land, building or both for a value less than the stamp duty value. For example, stamp duty value is equal to 5 crore. Stamp duty value is equal to, you are selling that, the actual selling price is 3 crore, my dear lovable students. So you are selling for a value less than the what duty value? Stamp duty value. This is condition number 1. Sir, for a land, building or both, the stamp duty value set by government is 5 crore, but you are selling only for 3 crore. This is condition number 1 has been satisfied. And condition number 2, this what duty value? Stamp duty value. exceeds 110% of the consideration. So 3 crore into 110 percentage comes to 3.3 crores. Are you all with me? Is the stamp duty value 5 crore more than 3.3 crore? Condition number 2 also satisfied. If both the condition has been satisfied, when you are calculating PGBP, sale price will not be 3 crore. Sale price will be 5 crore. If you are calculating capital gain, full value of consideration will not be 3 crore. Full value of consideration will be 5 crore. So if an assessee is transferring what? For a value less than the stamp duty value, that is what condition number 1. That means if the actual selling price is more than stamp duty value, my dear lovable students, 43CA, 50C provision itself will not be applicable. And if the stamp duty value exceeds how much percent of consideration? This is the second condition, 110% of the consideration. Then stamp duty value should be adopted as the full value of consideration for the purpose of capital gain as per section 50C, and sale price for the purpose of PGBP as per section 28 as the case may be. Are you able to appreciate, sir? So this is what section 43CA and 50C is all about, my dear lovable students. Can I proceed? Sir, there are 2 types of stamp duty value are there. Sir, for example, if there is a property, assume you are going to purchase a flat. Okay. Sir, your CASA grant, assume your CASA grant, you will sell the flat, or you are normal person, sir, then also you may sell land, building, or both. Sir, today, my dear lovable students, there will be one stamp duty value. Today there will be one what duty value? Stamp duty value. Are you really with me? Sir, today's what duty value? Stamp duty value will be less. Today you entered into an agreement, my dear lovable students. After 6 months or 1 year or 2 year only you are going to transfer the property. So that's what stamp duty value as on date of transfer. Generally, stamp duty value as on date of agreement will be less than the stamp duty value as on date of transfer. Everyone will love to take stamp duty value as on date of what? Agreement, for comparison purpose, for taxability purpose. What Act is also saying that you can take stamp duty value as on date of agreement, provided if the advance has been paid by account pay check, account pay bank draft, electronic clearing system, or such other electronic mode as may be. That means 2 stamp duty value will be there. One is stamp duty value as on date of agreement, stamp duty value as on date of. Sir, assessee can take stamp duty value as on date of, provided if the advance has been paid by way of what pay check, or what pay bank draft, or electronic what system, or such other electronic mode as may be. That's it. 2 section done. One is section 43CA and 50C, which both are talking about what? Land, building, or. I'm coming to the next capital asset you are transferring, high value capital asset, which is nothing but unlisted shares. Sir, listed shares means it will be covered under the recognized stock exchange. So you can't sell as per your wish. But this unlisted shares is the area where next highest cheating is happening. So government said that, are you transferring unlisted share for a value less than the fair market value? Then when you are calculating the capital gain, fair market value will be deemed to be the full value of consideration. That's it, game over. Sir, where an unquoted shares, unquoted means unlisted shares, being a capital asset, that should not be your stock in trade, man. Unlisted shares should be a capital asset. Then only capital gain will come. No. Is transferred for a consideration less than what market value? So, if it is land, building, or both, stamp duty value. Hello, sir. For unquoted share fair market value, then such fair market value shall be deemed to be full value of consideration for computing what gain? That means government's view is if you are transferring capital asset, dash gain will come. Capital gain will come. If you are transferring land, building, or both, and if you are saying that my sale price is less than the stamp duty value and stamp duty value exceeds 110% of the consideration, we will never ready to accept the actual selling price as the either selling price or full value of consideration as the case may be, as per section 43CA or 50C as the case may be. Comfortable? The another area where the cheating is happening with regard to the unlisted share, The people start selling unlisted share and they are saying that my selling price is less than what market value. So section 50 CA is saying that if the capital asset transferred is an unlisted share for a value less than the fair market value, then fair market value should be treated as the full value of consideration. Now coming to the other capital asset, not land building or both, or unlisted share, or including land building or both, or unlisted shares, after you transferring the capital asset, you are saying that you are having Alzheimer's. You forget what is the full value of consideration. Government is saying that don't worry, you may forget, we will never forget. Because we have to get the capital gain. Sir, when sale consideration is not ascertainable or cannot be determined, don't worry, fair market value of such asset as on date of transfer shall be the full value of consideration. This section 50D is not only applicable to land building or both. This section 50D is not only applicable to unlisted share. Let it be any capital asset, my dear lovable students. Sir, if it is determinable, actual selling price. If it is not determinable, fair market value. That's it with regard to the next deemed consideration section also. So what and all? 43CA, 50C, 50CA, 50D, 50. Let me ask you a very simple example to proceed the things further. Sir, you are having a residential house property. You are having, not Casa Grande. Is residential house property capital asset? When you transfer the residential house property, dash gain will come. The stamp duty value of the residential house property notified by the government is 5 crore. Hello, sir. And my dear lovable students, you have received, since you are transferring the capital asset, you have received an amount of 3 crore. So in your hand, capital gain will come or IFOS will come? Capital gain will come. Can we calculate capital gain? As per section what 8? 48. Full value of consideration. Sir, always full value of consideration is surrounded by deemed consideration. Are you all really with me? What full value of consideration concept is saying that if you are transferring land building or both for a value less than the stamp duty value, is the actual selling price less than stamp duty value? And the stamp duty value should be more than 110% of the consideration. Is second condition also satisfied? Then full value of consideration will not be 3 crore, full value of consideration will be 5 crore. This is what the provisions of FTC. Comfortable? You are saying that, sir, I only know the pain of selling this property for how much crore? 3 crore. Nobody is ready to buy this property for 3 crore. Sir, government has wrongly fixed the stamp duty value of how much crore? 5 crore. In this area, stamp duty value should only be 2.5 crore. I sold for how much crore? 3 crore. For me, deemed consideration concept itself should not be. That means you are having a remedy under section 55A, reference to the valuation officer. Reference to the, because that is the person who will put the stamp duty value. You can go and say that if the assessee is not happy with the stamp duty value, you are saying that stamp duty value will not come for 5 crore. This is a wrong figure determined by whom? Government. Don't think that government will not make mistake. The value determined by the government is wrong. Because of that wrong determination, I am, sir, here dying. Because unnecessarily I am liable to pay what gain? Capital gain. Please revise that value. Then assessee can approach the AO, assessing officer. So assessee can approach the what? AO. Then AO will approach the VO. What officer? Valuation officer. Under section what? A? 55A. Now the VO will determine the value. Now you have gone and cried before AO. AO have gone and cried before the VO, saying that 5 crore is not the what duty value. Assessee is crying, please, please, please take care of his crying. Now VO is saying that please, NSR, stop asking him to cry. The stamp duty value is not 5 crore, it is 7 crore. Are you all really with me? Valuation officer is saying that நெஞ்சில் அடிச்சு அளவு சொல்லு. ஏன் இப்படி லைட்டா எழுதிட்டு இருக்கான்? So my dear lovable students, if it is more than what duty value, stamp duty value, immediately assessee will say that, எனக்கு தெரியும், அப்பவே தெரியும், AO will be right, stamp duty value will be correct only, unnecessarily I came to the valuation officer, please sir, his value put it on dustbin. The full value of consideration will be what duty value. Now, if the valuation officer is saying that the value less than the what duty value, stamp duty value. For example, the valuation officer is saying example 2 crore. He will not say like that. Immediately don't take 2 crore as a full value of consideration because you really received. That's why the value determined by the VO, which is 2 crore, or actual consideration, whichever is higher, should be adopted as the full value of consideration. Right, sir? Generally, when you will go to the AO and AO will run to the valuation officer. For example, sir, what is the stamp duty value? 5 crore. Is what the value determined by the government. Right, sir? But you are feeling that this is not 5 crore. This is 4 crore 99 lakh 99,999. Sir, there is a difference of how much rupees? 1 crore. 1 rupees. Just 1 rupees. You are saying that, sir, I am crying here. I want to go to the valuation officer. AO will say that, don't cry, please solve. For this and all, you can't go to the fair market value as per the AO. That is, opinion more than the value claimed by assessee. That means there should be a minimum difference of 15% claimed by the assessee. Assessee should say that, sir, your value and my value, there is a difference of 15%. This is in value. Or in amount, 25,000 rupees, there should be minimum difference. Not 1 rupee difference. Minimum 25. Whichever is lower. Either percentage wise, it should be 15%, or amount wise, 25,000. Whichever is. Any one of the conditions satisfied, AO will take you to the valuation officer. Having regard to the nature of the asset and other relevant circumstances, it is necessary to do so. He will take you to the what officer, man? Valuation officer. Sir, what is a one-line summary of the deemed consideration? Step number 1 is full value of consideration, my dear lovable students. These are the sections 43CA, 50C, 50CA and 50D, right? You tell me, under 43CA, what are the assets to be transferred? Land, building or both? As what in trade? Here, land, building or both? As, here what asset you should transfer? 50D, what asset you should transfer? All asset, where the sale consideration is not ascertainable. Comfortable? Here, condition number 1, for a value less than the what duty value? For a value less than the stamp duty value? For a value less than the fair market value? Here, value itself is not applicable. Am I right? Condition number 2, one more condition is there. Stamp duty value should be more than 110% of the. And here also, stamp duty value should be more than 110% of the. Second condition is not applicable to 50CA and 50D. Can I proceed? If 2 conditions has been satisfied, when you are calculating 43CA, that is PGBP, sale price is equal to what duty value? If 2 conditions are satisfied, when you are calculating capital gain, full value of consideration is equal to what duty value? Sir, if 1 condition has been satisfied, when you are calculating capital gain, full value of consideration is equal to what market value? Sir, if, sir, you transferred capital asset, but you are saying that full value of consideration is not determinable, then fair market value as on date of transfer will be the full value of consideration. Can I proceed, sir? That's it with regard to the deemed consideration. Slot 5 section, man. 43CA, 50C, 50CA, 50D, 55A. I'm coming to start with section 45 series. That is a charging section. You know, my dear lovable students, we are having how many X of income? We are having salary, house property, PGBP, capital gain and IFRS. Section 15 is the charging section for salary. Section 22 is the charging section for house property. Section 28 is the charging section for PGBP. Section 45 is the charging section for capital gain. And section 56 is the charging section for IFRS. My dear lovable students, 45 is classified into 4 categories. 45 is classified into 45 subsection 1, 45 subsection 1A, 45 subsection 2, 45 subsection 5. These are the interrelated standards. 45 subsection 1 is the charging section, basic section. Charging section. And this section is saying that first of all, there should be a capital asset. First of all, there should be a. Sir, I don't have a capital asset at all. Then don't check this head at all. First of all, you should be a capital asset. We already completed the definition of the capital asset as per 2 subsection 14. Comfortable? Sir, what I have to do with that capital asset? You should transfer that. Such capital asset should be transferred. Such capital asset should be. So first of all, you should be a, and capital asset should be, because of transferring that, you should have profits and gains. Because of the transferring that, you should have. Immediately when we hear the word profits and gains, we will assume that profits and gains of business or profession. No, even this profits and gains should also be taxable under the head what gain? Such profits and gains will be taxable under the head capital gains. Comfortable? Generally, the year of taxability is the year of transfer. Generally, in which year you have transferred the capital asset, that year you are liable to pay the capital gain. Comfortable? When you are calculating the capital gain, section 48 is the computational section. These points you should take care. What is step number 1? Full value of consideration. What is generally full value of consideration? Actual selling price. Actual received subject to what consideration? Every question you have to check that. Have you transferred land building or both? Have you transferred unlisted share? Have you transferred other capital assets where the full value of consideration is not determinable? If it is land building or both, you have to check that. If an asset is transferred in land building or both for a value less than the stamp duty value and stamp duty value exceeds 110% of the consideration, then stamp duty value should be adopted as a full value of consideration. Have you transferred unlisted share for a value less than the fair market value, then fair market value should be adopted as the full value of consideration. Have you transferred any long-term capital asset for which, sir, do you have Alzheimer's with regard to full value of consideration, then fair market value should be adopted as the full value of consideration. Generally, actual selling price is the full value of consideration. Generally. But it is always subject to deemed consideration. Sir, if the asset, you have to see, man, sir, asset, when you have transferred the asset before amendment date or after amendment date. If it is after amendment date, whether it is short-term capital asset or long-term capital asset, no benefit of indexation. Are you all really with me? But if it is before amendment date, my dear lovable students, you have to classify the asset into two categories, which is short-term capital asset and the long-term capital asset. If the asset is a short-term capital asset, you have to reduce only the cost of acquisition or cost of improvement. Whereas if it is long-term capital asset, indexed cost of acquisition and indexed cost of improvement. This much truth is there because of the amendment. Are you really with me? My dear lovable students, when you are calculating the capital gain, sir, benefit of indexation will be available if the asset is a long-term capital asset. That too, if the transfer has been happened before the amendment date. That too, you are entitled to get the benefit of indexation only till the year of transfer. Am I right? Now comes to the what of holding, period of holding. Generally, whether it is before amendment or after amendment, from the date of purchase of the what asset, capital asset, till the transfer of the transfer, till the date of the transfer, you can calculate the what of holding, period of holding. And sir, what is the cost of acquisition or index cost of acquisition? The purchase cost of the capital asset will be the what of asset, cost of acquisition. And if the asset is a long-term capital asset, and if you are transferring before amendment, you can take index cost of acquisition. Comfortable? Sir, generally the gain will be taxable in the hands of the person who are transferring the what asset? Capital asset. So what 45 subsection 1 is saying that there should be a capital asset and that capital asset should be transferred. Because of the transfer, you should have profits and gains. Such profits and gains will be taxable under the head capital gain, and year of taxability is equal to year of transfer. Able to appreciate? But these three sections are against 45 subsection 1. For example, sir, you are having a capital asset. For example, is plant and machinery a capital asset? Yes, sir. That plant and machinery has been destroyed or damaged. Destroyed or? Then insurance company will pay you compensation. Let me ask you a question. Sir, if a capital asset has been destroyed or damaged, in the year of destruction, sir, you have relinquished the right of the asset. You have extinguished the right of the asset. Then the right over the asset, who will be having? Insurance company will be having. In the year of destruction, will the insurance company pay you the money? No, sir. Sir, they may give the money or they may take 1 or 2 years. Are you really with me? So, year of destruction is equal to year of transfer. But that is not equal to year of receipt of money. Then, if you are saying that in the year of destruction, pay the capital gain as per 45 subsection 1, I have to take a loan and I have to pay the capital gain. So, I can't follow 45 subsection 1. I need exception. That's why 45 subsection 1A has been created. Are you really with me? What 45 subsection 1A is saying that there should be a what asset. There you can mark plant and machinery. There is a plant and machinery. Is plant and machinery capital asset? Because any property held by an assessee, whether or not connected with his business or profession, is a capital asset. And such capital asset should be damaged or what? Destroyed. that plant and machinery has been damaged or destroyed. How, sir? Because there is a fire in the premises. Pushpana fire. Come on. Because of the reason specified in 45 subsection 1A, நீயாவே கொளுத்தி போடக்கூடாது. Because of these reason, there is natural calamity, riot or civil disturbance, accidental fire explosion, action taken by enemy or action taken to combat an enemy. Because of these reasons, that plant and machinery has been damaged or destroyed. Damaged or destroyed. But I am a very, very, very happy person because such capital asset already insured. And insurance company should what? Compensate. Insurance company should compensate. That means instead of selling outside the capital asset, sir, insurance company is going to pay me the full value of consideration. If I sell the capital asset, my dear lovable students, since the plant and machinery is a depreciable asset, section 50 will be applicable. Computation of capital gain in case of depreciable asset. I have not transferred or sold the capital asset. I have, sir, damaged or destroyed the capital asset. Who is going to compensate? Will this year they will compensate? No, sir. So 45 subsection 1 will not be applicable. 45 subsection 1A will be applicable. Are you all really with me? So the year of taxability will not be the year of transfer. Year of taxability will be the year of receipt of compensation. Year of receipt of? Okay, man. Sir, either the insurance company may give me cash. May give me, or they may give me new asset. New plant and machinery they may give. Right, sir? So what is the one line story here? You were having a plant and machinery. Yes, sir. This plant and machinery has been used for the purpose of business or profession. After 3 or 4 years, my dear lovable students, suddenly, one fire came, man. Are you really with me? This plant and machinery has been destroyed or damaged. Destroyed or? This is the year of transfer. But year of taxability is not equal to year of transfer. Can I? After 2 years or 3 years, you will receive money from the insurance company. Am I right? Sir, the year of receipt of compensation is the year of taxability. Can I? That means really capital gain arises in this year. But government, because of their big heart, is saying that don't pay capital gain in this year. Because if we ask you to pay the capital gain in this year, my dear lovable students, you have to go and take a loan. நீயே தீ பிடிச்சிருக்குன்னு சொல்லி மன கஷ்டத்தில் இருக்க. இதுக்கிடையில நீ என்ன கெயின் கட்டணும்னு சொன்னா நாசமா போன்னு சொல்லுவ நீ. So government is acting like a good boy, saying that we are understanding your pain. Don't pay capital gain in this year. Pay capital gain in the year when you are receiving compensation from the. That's it. That's what 45 subsection 1A. So I am not going to calculate capital gain here. I am going to calculate capital gain here. Now, what is the full value of consideration? If the insurance company given consideration in cash, means consideration value is equal to cash. If they give 5 lakh, 5 lakh is the full value of consideration. Sir, they have gave me a new plant and machinery, sir. Then take the fair market value of the new plant and machinery. If these rules and regulations are not there, you will say that, sir, my plant and machinery has been destroyed and I got new plant and machinery. Hello? Hello? That means what is the full value of consideration is not determinable. Don't worry. Section 50D will be applicable. What is the full value of consideration? Take the fair market value of the asset received. Are you all really with me? Indirectly, they incorporated 50D into the provision. And next one, benefit of indexation. You tell me, if the asset is a long-term capital asset, before amendment, will you take benefit of indexation? You are taking benefit of indexation till the year of calculation. Government is saying that. Because capital gain is only up to this. Only the payment of capital gain deferred. Calculation is not deferred. You are not entitled to enjoy the benefit of indexation till the year of receipt of compensation from the insurance company. Am I right? And period of holding. Sir, from the date of purchase of the asset till the date of till that only date only you can take the NSR period of holding. Because after this period you don't have the what asset at all. That capital asset has been taken over by the insurance company. Comfortable? And cost of acquisition or index cost of acquisition, sir, you know for what price it has been purchased. That purchase price of the capital asset can be taken as the cost of acquisition. But if that asset is a depreciable asset, WDV should be reduced while calculating the capital gain as per section 50. Comfortable? Sir, it is taxable in whose hands, sir? In the insured person's hands, sir. Because only insured person will get the money, no. He will be having the money, no. Letting pay the capital gain. That's what 45 subsection what? 1A. So it is against 45 subsection 1. Because 45 subsection 1 is saying that year of taxability is the year of transfer. 45 subsection 1A is saying that year of taxability is not the year of transfer. Year of taxability is the year of receipt of compensation from the insurance company. Comfortable? Sir, assume that you are having 5000 kg of jewelry in your home. Hello, sir. Immediately don't ask me a question, then why I am coming to study CA. My dear lovable students, when this jewelry is there in your home, is it a capital asset or stock in trade? Capital asset. Are you all really with me? Immediately you are having a thought that you are going to start a jewelry shop. You keep your name, man. For example, I am going to start a jewelry shop called as ANM Jewelers. Are you all really with me? Yes, sir. ANM Jewelers. I am having 5000 kg jewelry in my home. Example only. I am taking that 5000 kg of jewelry from my home and I am keeping that jewelry in the shop. Are you all really with me? When it was in home, it is a dash asset. Now it is in shop, it is a what? Sir, conversion of capital asset into stock in trade is a transfer as per 2 subsection 47. Correct? Now where the jewelry is? Shop. Now I will be, sir, selling that jewelry from shop. If I sell, PGBP will come. Sir, if I keep the jewelry in shop, today itself the jewelry will sell. No, sir, but transfer happened today itself. If government is asking me to pay the capital gain today itself, I have to go and take a loan from bank to pay the capital gain tax. Correct? So government is indirectly giving an option that don't pay the capital gain today. Pay the capital gain in the year of sale. Because in the year of sale, my dear lovable students, you will be getting income. At that time, pay the tax. Sir, you purchase 5000 kg of jewelry. You really purchased for example, 50 lakhs. Very long back, because at that time and all jewelry was NSR very cheap. Hello. And when you keep the jewelry in the shop, will it be 50 lakh or the value increase? It become 500 lakhs. Are you really with me? Sir, that day itself you sold, you took some extra time. Sir, when you sell the jewelry, it has become 750 lakh. Are you really with me? From the date of purchase of jewelry till the date of keeping the jewelry in the shop, then only it is capital asset. From the date of kept in the shop till the date of sale, it is a stock in trade. That means what they are saying is this gap, which is 500 lakhs minus 50 lakhs, comes to 450 lakhs will be taxable under the head capital gain. And this gap, 750 lakhs minus 500 lakhs, what is the gap? 250 lakh will be taxable under the head PGBP. Are you all really with me? Nothing, man. You really purchased for how much lakh? 50 lakhs. You really sold for how much lakh? 750 lakhs. That means 750 lakhs minus 50 lakhs is equal to 700 lakhs is a total profit. Am I right? This 700 lakh will not be taxable under one head of income. It will be taxable under capital gain and what? That is capital gain 450 lakh will be taxable and PGBP 250 lakhs will be taxable. 450 plus 250 comes to 700 lakhs is the total taxability. That means if you are converting a capital asset into stock in trade, always the income will be taxable under how many heads of income? That's why 45 subsection 2 income should be taxable under 2 heads of income. Comfortable? Come on, conversion of capital asset into what in trade? Stock in trade. There should be a what asset? Yes, jewelry. In my home, I was having jewelry. Such capital asset should be converted into what in trade? I have to take the jewelry from my home and I have to keep in my, sir, shop. Such conversion is a transfer under section 2 subsection what 7? 47. always this income will be taxed under two heads of income. What is capital gain and what? PGBP. And year of taxability is the year in which the converted asset is sold. Comfortable? How to compute the capital gain, sir? At the time of conversion, dash gain will come. But don't pay the capital gain that time. You can defer the capital gain and you have to sell only at the time of sale. Sir, full value of consideration is equal to fair market value as on date of conversion. Look at here. What was the fair market value as on date of conversion? 500 lakh. Less cost is what cost? Actual cost. For how much rupees you purchase? 50 lakhs. So 500 minus 50, 450 lakhs will be taxable as capital gain. Comfortable? But at the time of sale, what will come? PGBP will come. What is the selling price? Actual sales value. For how much rupees you are selling in the shop? 750 lakhs. So that you have to take as a selling price. Minus fair market value as on date of conversion. Comfortable? So here, from this point to this point only capital gain will come. But you calculating capital gain on this point. Are you all really with me? Adhikin benefit of indexation cannot be enjoyed till the year of sale. Benefit of indexation can be enjoyed only till the year of conversion. So full value of consideration. What is the full value of consideration? Fair market value as on date of conversion. Why? Because since I am taking the jewelry from home and keeping in the shop, I am not getting any money immediately. So I have to take the fair market value. So indirectly I am taking deemed consideration. But this deemed consideration is not covered in the above deemed consideration. Are you really with me? Benefit of indexation till the date of conversion of capital asset into what in trade? That means benefit of indexation will be available only till this date. Are you really with me? Period of holding, sir. From the real date of purchase of the jewelry till the conversion of capital asset into what in trade? Only this period you are supposed to take the period of holding. This period should not be included. Comfortable? And cost of acquisition or cost of improvement. Purchase cost of the capital asset. And it is taxable in the hands of the transferor. Comfortable? That's it, my dear lovable students. The second exception also comes to an end. 45 subsection 2, conversion of capital asset into. Coming to 45 subsection 5, compulsory acquisition of land and building. Compulsory acquisition of? Sir, you were having a capital asset, sir. Your capital asset is land, building or both, sir. Are you really with me? Sir, this land, building or both has been compulsory acquired by the government of India. For what purpose, sir? To put an NH highway, sir. Are you really with me? They said that we want this land, building or both to put NH highway, to extend NH highway. You tell me, if government take land, building or both as compulsory acquisition, today itself will they give consideration? Why pay Raja? Chance sale. You know, for this land, building or both, this is your land. The ground value in your area is 5 crore. Government said that we are taking your land, building or both. That time itself you said that please don't take. Because this is my land, building or both. Because here only your house property is there. Are you really with me? Yes, sir. But still government putting it on. And you are saying that I don't have any istam. Government saying that. That's why we amended the definition of the transfer. In the definition of transfer as per section 2 subsection 47, compulsory acquisition under any law is also a transfer. Are you really with me? Okay, sir. Fantastic, sir. For this, government gave you a consideration of 2 crore. The generally ground value 5 crore, but government gave only 2 crore. I love you, the government. Ganda. Gand. I am supposed to get 5 crores, but I got only. Surely I will give, sir, give a case against the government. And I will say that, pour out home. Are you really with me? And government, after certain number of years, 5 years, 10 years or 15 years, to my son or sons, as the case may be, they will say that, yes, you are correct. You are entitled to get the additional compensation. What? Additional compensation of 3 crores. That they are giving after 15 years, my dear lovable students. I am saying to the government that you gave me only how much crore? This is original compensation. This is, and you are going to give me 3 crore after. If this 3 crore, if you give me 15 years before, I would have put an FD. From that FD, I would have got what? Interest. Are you really with me? So you should not pay me 3 crore. I want additional compensation plus interest on enhanced compensation. Interest on. So these are the components, man. 3 components will be there, my dear lovable students. Number 1, original compensation. Number 2, enhanced compensation. Number 3, interest on enhanced compensation. Are you really with me? What is the original compensation? 2 crores. What is the enhanced compensation? 3 crore. Assume interest on enhanced compensation is 2.5 crore. Are you all really with me? Is this interest? Generally, if you get an interest, my dear lovable students, it will be taxable under the header. The same way, sir, it will be taxable under IFOS, under section 56, subsection 2, class 8. Class 8. Are you all really with me? This will be taxable. And when you are taxable interest on enhanced compensation, you can reduce a flat deduction of how much percent? 50%. As per 57 class 4. Are you all really with me? The remaining amount will be taxable under the head income from other sources. Whether you incurred the expenditure, whether you don't incur the expenditure, it's like 30% flat ad hoc as per IFHB. The same way, 50% you can claim. 50% you can claim. So what is that? Taxing section 56 subsection to class 8. 8. What is the 50% of 8? That's why 57 class 4, they are giving deduction, sir, as per 57. You can correct it. You can go and check in the IFOS. You will be getting the right answer. Sir, both this original compensation and enhanced compensation will be taxable under the head what? Capital gain. Under section 45 subsection 5. Hello, sir. Sir, why, sir, 45 subsection 5? Enna pudingitanga. 45 subsection? Compulsory acquisition of land and building. That's why this charging section they kept. Are you really with me? Sir, why, sir, 45 subsection 1A? Because tee pudike my plant and machinery pochda. And they give new asset. A stands for asset. 45 subsection 1A, they will give you asset. Correct? 45 subsection 2, conversion of capital asset into stock in trade. Always the income will be taxed under 2 heads of income. That's why 45 subsection 2 comfortable. 45 subsection 5, compulsory acquisition of land and building. Comfortable. Sir, they gave me only 2 crore. You tell me, happy or sad or ganda? Kolla gandul irukkan, kollama vidamata. That's why I gave to the case. This 2 crore, government said that we will pay you 20 lakh for 10 installments. Are you all really with me? Kudukkarade 2 kodi. Adume 20 lakhs for. And government is saying that there should be a capital asset. Do you have land building or both? Such capital asset should be pudungano. Compulsory acquisition. Are you really with me? Now the government is going to pay me compensation. What compensation? What compensation? Is it an income to me or expense to me? That income should be taxable under the head capital gain. For that, government has to deduct TDS under 194 ELA because love is absent. Are you all really with me? They will be deducting TDS under 194 LA because pudungrangada, love is absent ra. Are you all really with me? And this original compensation, sir, of how much crore? 2 crore. And enhanced compensation of 3 crore will be taxable under the head capital gain. Sir, when the original compensation will be taxable? Whole amount is taxable. How much crore? In the year of what received? First year received. First I received only 20 lakh. Still full value of consideration will be 2 crore. Comfortable. Whereas enhanced compensation, when only it will be taxable? Year of actual receipt. Because even God knows. God don't know that whether I will get the enhanced compensation or not. எப்போ வருதோ அப்ப என்ன கட்டினா போதும். முன்னாடியே அட்வான்ஸ் டாக்ஸ் எல்லாம் நீ கட்ட வேண்டிய அவசியம் இல்லை. Are you all really with me? Now, sir, how to compute the capital gain? Full value of consideration is the value of compensation received. How much crore? 2 crore or 5 crore as the benefit of indexation. Sir, I purchase land and building, sir. It is pudungal by the government, sir. Yes, sir. After compulsory acquisition, this is the year of compulsory acquisition, sir. Yes, sir. That year itself compensation will come. Original compensation itself will not come. Correct? Yes, sir. Sir, this is the year of transfer, sir. But I received the compensation only after 3 years, sir. If government is asking that year of taxability is the year of transfer, this year I have to pay the capital gain. Ille naale, sir, mana varthathil irukkan nanu. ஏன்னா என் வீடு பக்கத்துல இருக்கிற லேண்ட் அண்ட் பில்டிங் நீ புடிங்கிட்டு போயிட்ட. கரெக்ட். அது வெளியே வித்திருந்தா எனக்கு எத்தனை கோடி வந்திருக்கும்? 5 கோடி வந்திருக்கும் கிரவுண்டுக்கு. அதுக்கு நீ கொடுத்ததே 2 கோடி. அதுவும் வரல. அதுவே 10 இன்ஸ்டால்மெண்டா தான் கொடுக்க போற. 3 வருஷத்துக்கு அப்புறம் தான் வரப்போகுது எனக்கு. அப்ப இப்பவே என்ன கட்டுன்னு சொன்னா டாக்ஸ் கட்டுன்னு சொன்னா ஹலோ சார் மைக்ல நான் எதுவும் சொல்லல. கமான். Fantastic to the core. So benefit of indexation will be available till the date of what acquisition? Only for this period you are entitled to enjoy the benefit of indexation. This period you are not entitled to enjoy the benefit of indexation. From period of holding also, from the date of purchase till this date only you are entitled to enjoy the period of holding. Cost of acquisition you would have really purchased that and it is taxable in the hands of the original holder of the what asset, capital asset, because in that guy only capital gain arises comfortable. And in future you may get the what compensation. If the court award enhanced compensation that is higher than the original, such enhanced compensation is taxable in the year of receipt. Very important point, man. When you calculate or when you tax the original compensation, you would have taken full value of consideration, which is how much crore? 2 crore. Am I right? Less what of acquisition? Is the cost of acquisition of this land building or both? 100% of the cost of acquisition you would have reduced against the original compensation itself. In future you are getting enhanced compensation of 3 crore. Less again if you reduce cost of acquisition it will be a double deduction. So always the cost of acquisition against the enhanced compensation will be nil. Logic, are you able to appreciate? And sir, interim compensation taxability. Sometimes sir, look at here. How much original compensation you received? 2 crores. Are you happy, sad? You would have gone to the court. Court said that please give a enhanced compensation of 20 crore. Government is asking that. Court, good morning. We already gave 2 crore. We are able to give only 3 crore. Now government is gone against the court. So against this interim order, government is saying that we can't pay how much crore? 20 crore. We are going to the Supreme Court. And Supreme Court will pass the final order. Supreme Court will pass the... So, interim compensation taxability means an interim order has been passed by High Court. High Court said that how much crore should be given as compensation? Not taxable in the year of receiving, but taxable in the year of determining the dash compensation. So if there is any interim compensation received, don't pay the tax in the year of receipt of the interim compensation. Pay the tax only in the year of the receipt of the final compensation. Reduction in the what compensation? Enhanced compensation. In future, if the compensation is later reduced by a court, tribunal, authority, capital gain of that year are recomputed. So sometimes 3 crore rupees is the capital gain additional compensation. I would have paid capital gain for 3 crore. Am I right? In after 1 or 2 year, government is coming and saying that 3 crore is extra paid. You have to return back 50 lakh. Okay, I have to return back 50 lakh and I have to recalculate the capital gain. If I paid extra, government will refund the money also. And what is the death of the transferor? If the transferor dies before receiving what compensation? Sure, this will happen in India. Because original compensation first we will get. After how many years, sir, we will get enhanced? Don't know. By that time the owner would have died. Then the amount is taxable in the hands of the recipient. Generally, it will be the legal heirs, his son, daughter, etc., etc. So, in their hands, taxability will come. So, 45 subsection 1 is saying that year of taxability is the year of, whereas 45 subsection 1A is saying that year of taxability is not the year of transfer, it is the year of receipt of consideration from the 45 subsection 2 is saying that year of taxability is not the year of transfer, it is the year of conversion of capital asset into 45 subsection 5 is saying that year of transfer is not the year of transfer. It is the receipt of compulsory compensation for compulsory acquisition of land and building. That's it with regard to the 45 series, which is 45 subsection 1, 45 subsection 1A, 45 subsection 2 and 45 subsection 5. Are you all really with me? Yes, sir. So till now we understood that there should be a capital asset and that capital asset should be transferred. Because of the transfer, sir, profits or gains will come. And this profits or gains will be taxable under the head capital gain. Correct? Sir, section 47 that is transaction not regarded as transfer. Transaction not regarded as? Sir, even though if you are having a capital asset, you have transferred the capital asset from one person to another person. What Income Tax Act is saying that it will not be regarded as transfer. It will not be regarded as. Sir, if it is not a transfer, capital gain will not come, right, sir? So section 47, sir, you have to understand conceptually that we have classified into two parts, part number 1 and part number 2. Part number 1, 47 clause 1, which is applicable to HUF, which is applicable to what 47 clause 1 is saying that in this transaction, two parties are there. One is HUF and other is the members. Sir, HUF is having a capital asset. HUF is having a, sir, assume I am the HUF, you are the member. I am giving that capital asset to you. So transfer of capital asset by whom? HUF. To whom? Members. Either at the time of total or partial partition. We are going to split the HUF. At that time, whatever capital asset I am having, I am giving to you. So transfer of capital asset by an HUF to its members will not be regarded as transfer. That means in the hands of HUF, capital gain will not come. That's it. My role, dandanaka, done. Coming to your place, you are the member. Have you received the capital asset? If you receive the capital asset, there is no question of capital gain. But there is a question of IFOS. At the time of receipt of capital asset, IFOS will not come because under section 56 subsection 2 clause 10, we are having a proviso. Under that proviso, we are having non-applicability. That's saying that certain 47 transaction, you are not liable to pay the IFOS. So because of proviso to 56 subsection 2 clause 10. Now capital asset is with me or capital asset is with you? With you. That means if you are selling that capital asset in future, dash gain will come. Capital gain will come. How to compute that capital gain is what the computation. So in future, if you are transferring the capital asset, dash gain attracted, capital gain attracted. At that time, sir, you have to calculate the capital gain like this. What value of consideration will be the real selling price for which you sold the capital asset, right? Less, if there is any expense for transfer, you have to minus it. You will get the net consideration. Can I proceed? You have to reduce the cost of acquisition. You tell me, have you paid anything to me at the time of receiving capital asset? No, because transaction is not regarded as transfer. So whatever cost of acquisition of the previous owner, who is the previous owner? HUF, can be enjoyed by yourself. That's what cost of acquisition is, cost of acquisition of the previous owner as per 49 subsection 1. Sir, from whom the period of holding will be counted? Period of holding will be counted from the HUF. That means this is what the transaction has happened. There is a capital asset. Sir, this is HUF and this is member. This capital asset has been purchased by the HUF. At the time of total or partial partition, this capital asset has been transferred to the member. And now the capital asset is with the member. In future, the member is selling the capital asset for the purpose of determining the period of holding. You can count the period of holding from the what owner? Previous owner. From this date till this date, you can take the period of holding. Are you really with me? So period of holding should also be from the previous owner as per 242A. Now benefit of indexation. Sir, there is a contradiction in the Income Tax Act. Income Tax Act is saying that for the indexed cost of acquisition divided by CII of the year of first held by the assessee. Here the assessee is the member. The asset is first held by the assessee in this year. Are you able to appreciate? So if you take the denominator only in this year, then my dear lovable students, indexed cost of acquisition reduces, then capital gain increases. So there is a person called as Manjula Jesha. He asking to a Bombay High Court that you are saying that transaction is not regarded as transfer. That is why you are allowing me to enjoy the cost as cost to the previous owner. That is why you are allowing me to enjoy the period of holding from the, then the benefit of indexation should also be from the previous owner and not from the current owner. So the benefit of indexation can be enjoyed from this year and not from this year is what the Manjula Jesha benefit of indexation is also from the previous owner as per Manjula Jesha. Comfortable? So one line summary of the entire discussion is as per 47 clause 1, transfer of capital asset by a HUF to its members will not be regarded as transfer. In the hands of the HUF, that's its story over. But we are analyzing the members. Member actually first they have to get the capital asset. At the time of receipt of capital asset, no IFOS because of proviso to 56 subsection 2 class 10. Lifelong, if they are holding the capital asset, no capital gain. But if you are transferring the capital asset, dash will come, capital gain will come. How you will calculate the capital gain? Full value of consideration is the actual selling price subject to deemed consideration. If there is any expense for transfer, you can reduce it. You will get the answer as net consideration. Am I right? Sir, cost of acquisition is cost to the period of holding should be reckoned from the benefit of indexation as per Income Tax Act, actually from the current owner, but as per Manju can be taken from the. That's it with regard to 47 clause 1. I am moving into the next clause. 47 clause 3, donor to donee. Donor to amendment area, expected area for examination. Sir, in the hands of transferor, that is donor. Transfer of capital asset by way of gift or will or inheritance by an individual or HUF will not be regarded as. For example, my dear lovable students, I am having a capital asset. Assume this is a capital asset. I am transferring this capital asset to you either by way of gift or by way of will or by way of inheritance will not be regarded as transfer in the hands of the transferor, and that is dash or dash, individual or HUF. Earlier by any person, gift or will or inheritance was exempted, but only now individual or HUF is exempted. Are you really with me? So there are two parties are there. Number one, donor and donee. So the person who are giving the gift is called as donor. I am having capital asset. Sir, transfer of capital asset by way of what or what or what? Gift or will or what you should check. Who's the person who are giving the gift? Is he an individual or HUF? Yes, then will not be regarded as transfer. Is it other than individual or HUF? Sir, it will be regarded as transfer. Because now restriction has been introduced for 47 clause 3. Comfortable? Now you are the donee. You are the what? I am discussing from the angle of the donee. Come on. Are you receiving capital asset? Check. Have you covered under the proviso to 56 subsection 2 clause 10? That means have you received the capital asset from a relative on occasion of marriage or will or inheritance? Hello sir. Or death of the donor, or registered charitable trust under section 12AB, or 1023C series organization, or private trust, or such other as may be prescribed section 47. Hello sir. Sir, on occasion of your marriage, I have given the capital asset. Then you fall under proviso. Once you fall under proviso to 56 subsection 2 class 10, then 56 subsection 2 class 10 will not be. Then at the time of receipt of capital asset, no NOS. Because of proviso to 56 subsection 2 class 10. If that capital asset, if you are holding for lifelong, then there is no capital gain. Because you just received the capital asset, not transferred the capital asset. Comfortable? But my dear lovable students, assume you are selling in future. At the time of receipt, have you suffered IFOS? No sir. Because you fall in proviso. If you fall in proviso, section will not be applicable. Comfortable? Then at the time of future sale, full value of consideration will be actual selling price. Expense for transfer, if any, can be reduced. Then the cost of acquisition is actually 0. Then you can take the cost of acquisition as cost to the as per 49 subsection 1. Period of holding should also be taken from the previous owner as per section 242A. And benefit of indexation can also be enjoyed from the previous owner as per Manjula Jesha. Comfortable? Assume the second scenario. You have not covered under the proviso to 56 subsection 2 clause 10. You really take myself, ANM. You are my students. Hello sir. We both are relative as per Income Tax Act? No sir. That's what I specifically asked. Immediately some emotional student will say that, yes sir. Sir, as per Income Tax Act? No sir. Are you going to get married? No sir. It's not your on occasion of marriage. Are you really with me? Yes sir. Sir, I am not going to write will or inheritance. I am not a registered charitable trust. I am not 1023C series organization. That means you have not fall under the proviso, the circumstance which are covered under proviso to 56 subsection 2 class 10. That means you will fall under IFOS. You will fall under? Under which section? 56 subsection 2 class 10, which is applicable to all SSC. All SSC may receive gift either by way of cash or by way of immovable property, or by way of other than immovable property. If it is by way of cash, if the aggregate amount of cash received exceeds 50,000, then the entire amount is taxable. Immovable property can be received either without consideration or inadequate consideration. Other than immovable property can be received either without consideration or inadequate consideration. Able to connect it. Since you have not fall under proviso, you will fall under IFOS 56 subsection 2 class. Then at the time of receipt of capital asset, what will get attracted? That means I have not paid any capital gain, but you paid IFOS, my dear lovable students. That means chain break. That means chain. That means, sir, I were having a capital asset, right? I gifted that capital asset. As per 47 clause 3, there is no capital gain in my hands. But since you have not fall under the proviso, you fall under what OS? IFOS. Now the capital asset is with you. In future, if you sell the capital asset, dash gain attracted. Then, for you, my dear lovable students, you can't enjoy my cost of acquisition. You can't enjoy my period of holding. You can't enjoy my benefit of indexation. In order to enjoy that, chain should not break. Here, what has been breaked? Hence, my dear lovable students, sir, when you sell in future, dash gain attracted. Cost of acquisition, have you suffered the stamp duty value under IFOS? That can be taken as a cost of acquisition. Why are you taking the cost of acquisition of the previous owner? Because you itself paid tax under NOS, IFOS. NOS, IFOS. Are you really with me? That means 49 subsection 1 will not be applicable. What is 49 subsection 1? Cost of acquisition is cost to the previous owner because he is the first person. That is why 49 subsection 1. When I give this capital asset, have you fall under proviso? No, sir. No, sir. That means you fall under what OS? And you suffered the stamp duty value of the property under IFOS. Am I right? That means you paid tax under the head IFO. Yes, that's why 49 subsection 4. 4 words are there. Are you really with me? If it is previous owner, first person, 49 subsection 1. IFO. Yes, 49 subsection 4. Sir, period of holding. This period will not be considered. Period of holding should be from the receipt of capital asset under 242A. This period only we will consider. Manju will not be applicable. Benefit of indexation will be first held by the assessee. You are the assessee. Can I proceed? That's it with regard to, sir, 47 subsection, sir, clause 3. Can I proceed, sir? 2 clauses we have done. 47 clause 1, HUF to the members. 47 clause 3, donor-donee relationship. For donor, always no capital gain. Whether you fall under proviso, not fall under proviso, is not my problem. But donee, he may fall under proviso. If he fall under proviso, no IFOS. If he don't fall under proviso, there is IFOS. If IFOS is there, in future, sir, check will not be applicable. That is previous owner, previous owner, previous owner. That is what check will not be. Coming to a transaction between holding company to subsidiary company. Very simple, man. There are 2 parties in this transaction. One is holding company and other is subsidiary company. My dear lovable students, if you are transferring capital asset by a holding company to the subsidiary company, will not be regarded as what? Transfer. For example, I am the holding company. You are my subsidiary company. I am having a capital asset. I am selling or transferring the capital asset to you. No need to pay capital gain by the holding company. Are you really with me? In the hands of the subsidiary company, in your hands, have you received any capital asset? Yes, sir. At the time of receipt of capital asset, no what OS? That is because of proviso to 56 subsection 2 clause 10. Are you really with me? Now the capital asset is with the subsidiary company. They may sell that in future. So this is the timeline, man. Sir, this is with regard to holding company. They transfer to the subsidiary company. In future, they sold the capital asset. Am I right? So when you calculate the capital gain for the subsidiary company, full value of consideration is the actual full value of consideration. Less expense, whatever you can reduce it. You will get the net consideration. Less what of acquisition is cost to the what owner? Who is the previous owner? That's what cost of acquisition is, cost to the previous owner. Period of indexation, not only this period, but also this period. That is period of holding from the what owner? Previous owner. As the chain break, the chain continuing. Then Manju will be applicable. Benefit of indexation will not from this year. Benefit of indexation will be from this year. Clarity? That's it, my dear lovable students. But in order to enjoy 47 clause 4, you tell me 47 clause 4 will be enjoyed by holding company or subsidiary company? Holding company. First of all, subsidiary company should be an Indian company. Subsidiary company should be I am the holding company. I am having capital asset. I will be transferring the capital asset to the subsidiary company. If this subsidiary company is a foreign company, asset will go out of India. If subsidiary company is an Indian company, inside India only the asset will sutti vandige, correct? So, asset should not go out of India, point number 1. And subsidiary company should be wholly owned subsidiary company. Subsidiary company should be, that means 100% share capital of the subsidiary company should be held by the holding company. Hello, sir. Let me ask you a question. Sir, do you have sharta? Do you have panta? In pant pocket, you are having 100 rupees. Take the 100 rupees from the pant pocket. Keep in the shirt pocket. What is the increase in cash balance? 0 increase. So if 100% share capital is held by the holding company, sir, there is no difference between holding company and the subsidiary company. So from pant pocket, if I transferring money to the shirt pocket, why are you asking me to pay capital gain? That's why 47 clause 4 is saying that transfer of capital asset by a holding company to the subsidiary company will not be regarded as transfer. Oh, abdi varingla. Yes, sir. And capital asset should be transferred as what asset? Capital asset should not be transferred as stock in trade because provisions of 45 subsection 2 will be applicable. Conversion of capital asset into what in trade? That's it with regard to 47 clause 4. Coming to 47 clause 5, you are the subsidiary company. I am the holding company. Every time why I alone have to transfer the capital asset, you also having a very good capital asset. I said that I love you, the capital asset. Transfer of, so there are two parties are there. One is subsidiary company and the what company? Holding company. Transfer of capital asset by a subsidiary company to the holding company will not be regarded as. So in your hand, don't pay capital gain. Why? Because, sir, you and me are one and the same. Because 100% of the share capital of the subsidiary company is held by the holding company. Pan pocket to shirt pocket. Are you all really with me? Now, as a subsidiary company, holding company, whether I will receive the capital asset or transfer the capital asset. Receive the capital asset. No NOS, IFOS. Because of proviso 56 subsection 2 clause 10. Now, the capital asset is with me. If I am holding this for lifelong, no capital gain. But if I am transferring in future, dash gain will come. At that time, full value of consideration is the actual selling price subject to deemed consideration. If you are having any expense for transfer, you can reduce it. You will get the net consideration. Then cost of acquisition. I have not paid anything. Sir, cost of acquisition is cost of acquisition to the, as per 49 subsection. Period of holding will be reckoned from the previous owner as per section 242. Benefit of indexation will be from the previous owner as per Manjula. In order to enjoy 47 clause 5 by the subsidiary company should satisfy 3 conditions. Number 1, holding company should be I should be in India. Otherwise, asset will go out of India. That is not allowed by the Income Tax Act. Holding company should hold 100% share capital of the subsidiary company. I should hold 100% of your share capital. That means you and me are one and the. And capital asset should be transferred as, should not be transferred as stock in trade. Comfortable? Are you all really with me? But for these two clauses alone, who are these two clauses, man? 47 clause 4 and 47 clause 5. There is a futuristic condition. There is a, either the holding company will transfer the capital asset to the subsidiary company, or subsidiary company will transfer the capital asset to the holding company. The recipient, the recipient may be either holding company or should not convert into stock in trade for a period of next year. How many years? That means for a minimum period of 8 years, the recipient should hold it as dash asset itself. Should not be converted into. And subsidiary company should be wholly owned subsidiary for a period of how many years? 8 years. I should not sell the share capital of the subsidiary company for the next 8 years. Neeyu nanu onnu da. Are you all really with me? That's it. 47 clause 5 also done. Done. Coming to 47 clause 6. Amalgamating company to the amalgamated company. Hello, sir. Have you heard about amalgamation AS 14? Yes, sir. Sir, AS 14 is what? The amalgamation. Two companies will be there in amalgamation. Correct? One is amalgamating company and amalgamated company. Right? This amalgamating company is the company who are going to die. Ennappa? And amalgamated company is the company who are going to live. Ennappa? That's why this company is going to die. That's why amalgamating money adikidhu pathiya. Sethu poran. Right, sir? So, how the tax treatment should be discussed, man. No, man. Certain students will be having doubt. Who is amalgamating? What is amalgamated? Come on. Even I was having when I'm studying. Come on. So, amalgamation of Indian company in the hands of amalgamating company, in the hands of amalgamated company, and in the hands of what holder? Shareholder. Come on, man. Sir, at the time of amalgamation, all the assets and liabilities of the amalgamating company should become the assets and liabilities of the amalgamated company. Yes, sir. So, all the assets of which company will be transferred to the... Actually, capital gain should come to me. What Income Tax Act is saying that transfer of capital asset by amalgamating company to the amalgamated company at the time of amalgamation will not be regarded as a thing. You happily die, don't pay capital gain. Hello. But in order to enjoy this 47 clause 6, three conditions should be satisfied. Amalgamated should be an. Then only asset will be within India. And all the assets and liabilities of the amalgamating company should become the assets and liabilities of the amalgamated company. Comfortable. And at least 75% of the shareholder of which company should become shareholder of the amalgamated company. Hello, sir. Now, in the hands of amalgamated company, have they received capital asset or transferred capital asset? At the time of receipt of capital asset, no IFRS because of proviso to 56 subsection 2 class 10. Sir, if they holded that capital asset for lifelong as a treasure, then capital gain will not come. But Timur Budichi, in case in future, if they transfer na dash gain will come. At that time, chak will be applicable. Cost of acquisition will be cost of acquisition from the period of holding should be from the previous owner as per 242A, and benefit of indexation should also be from the previous owner as per Manjula. Now I am going to talk about the shareholder. Two companies was there. Sir, you were a shareholder of the amalgamating company. What happened to that company? Died. That means all the shares you are having become valueless. Correct? Now it is zero value. Correct? That means if you are keeping still the shares of the amalgamating company, there is no value for that. Hello, sir. Put it on dustbin. Hello. You have extinguished the rights. You have relinquished the rights. The shares of the amalgamating company. To compensate that, you will give the shares of the amalgamated company. Correct? Actually, this is a transfer under section 2 subsection 47. But what the Income Tax Act is saying that amalgamating, we don't collect any tax. Amalgamated, we don't collect any IFRS. Even shareholder, you also enjoy. Deva, Ichko. You give the shares of Ting company, get the shares of that company, we will not ask any capital gain as per section 47 clause 7. Comfortable. Sir, no capital gain. So will you ask any IFRS? No IFRS also because of proviso 56 subsection 2 clause 10. Comfortable? If the shares of the amalgamated company is holded by the shareholder for lifelong, there is no capital gain at all. But if he is selling that in future, dash gain attracted. With cost of acquisition is cost to the previous owner sollade. Cost of acquisition is the shares of the amalgamating company. You have purchased really shares of amalgamating company, yeah? By paying some amount, that amount you take it as cost of acquisition. You really purchase the shares of amalgamating company, yeah? From that date, you can take the period of holding. Sir, you have really purchased the shares of amalgamating company, yeah? Sir, from that year, you can enjoy the benefit of indexation. Comfortable. This is what the part 1 of section 47. Can I move into the part number 2, my dear lovable students? Sir, there is a big company. You know, the big company's name is ANM. Hello, sir. Which were having 3 units, my dear lovable students. Unit A, Unit N and Unit M. Unit N is, sir, second unit. They are feeling that they are not able to see the unit M. They want to demerge unit M. They want to demerge unit M. What, man? Demerge. What M? Unit M. And they want to start a separate company called as M Limited. So, all the assets and liabilities of unit M has been transferred to M Limited. Has been transferred to. So, since all the assets and liabilities of the M has been transferred to the M Limited, actually capital gain should attract in the hands of ANM. Correct? What 47 clause 6b is saying that transfer of capital asset by a demerged company. Sir, who is the demerged company? ANM. To the resulting company, new company. Who is the new company? M Limited will not be regarded as transfer. So, Income Tax Act is saying that you happily demerge. You happily demerge. You convert the ANM Limited into M Limited. We don't have any problem. At that time, if you want, you can transfer the capital asset from ANM Limited to M Limited. We will not ask what gain. Capital gain. It is, sir, will not be regarded as transfer in the hands of the demerged company. As per 47 clause 6b. 6 is amalgamation. Are you really with me? 6b. B. Because ANM Limited was a big company. Are you really with me? Sir, only a big company can demerge. That's why 6b, demerged company to the resulting company. Correct? Now, who is the resulting company? M Limited. They will receive the capital asset or transfer the capital asset. Receive the capital asset. Right, sir? At the time of receipt of capital asset, no NOS. Because of proviso 56 subsection 2 class 10. If M Limited is holded the capital asset like a treasure in their lifelong, no capital gain will come. But in future, if they transfer the capital asset, dash will come. At that time, capital gain attracted. Then chak will be applicable. Online students, chak means previous owner. Because last time when I put the video, some students were asking that what is the meaning of chak. So cost of acquisition is cost of acquisition of the previous owner as per 49 subsection 1. Period of holding should be reckoned from the previous owner as per 242A. Benefit of indexation should be from the previous owner as per Manjula Jesha. This is the most important part in the demerger. Earlier you were holding the shares of ANM Limited, right, sir? They have demerged to become M Limited. Now ANM Limited has become AN Limited. Are you really with me? And new company called as M Limited. So this AN Limited is called as demerged company and M Limited is called as resulting company. Are you really with me? If you holded the shares of ANM Limited before demerger, that shares will be having some value. Correct? Now M get out. The company is only AN Limited. So the value of the ANM Limited share would have reduced. It's not like amalgamation. It will not become zero. Because amalgamating died. But ANM not died. Now they are only having A and N. Correct? So for the reduction of the value, they will get shares of what limited? M Limited. M Limited. So as a shareholder, originally they were having only shares of ANM Limited. Put it on dustbin. They will be having shares of AN Limited. Now, the share value of AN Limited would have reduced because of what merger? Demerger. In order to compensate that, shareholder will get shares of what limited? M Limited. That is a what company? Resulting company. So, as a shareholder, if it is amalgamation, they will be having shares of amalgamating, ting. Put it on dustbin. Get the shares of taddi. That's it. Game over. But in a demerger, already they were having shares of ANM. Put it on dustbin. Get the shares of AN Limited and get the shares of M Limited. So both capital asset will be there in your hand. If you sell shares of AN Limited, capital gain will come. If you sell the shares of M Limited, capital gain will come. Comfortable? So what Act is saying that as a shareholder, you subscribed the shares of what limited? After that, they demerged. For that, what you can do? Then this ANM Limited has become the shares of AN Limited, and you are having shares of M Limited, correct? When you sell the shares of AN Limited, capital gain will come. When they sell the shares of M Limited, capital gain will come, right? Have you really purchased shares of M Limited? No, you really purchased only ANM Limited. Assume the cost of acquisition of ANM Limited you purchased is 10 lakh. You purchased this. At that time, the net worth of ANM was 10 crore. Hello, sir. And they have demerged one of the unit. Which unit? M. The net worth of the M was 4 crore. How much crore? So, after demerger, out of 10 crore, 4 crore would have gone out. So 6 crore will be the net worth of AN. So now the 10 lakhs cost of acquisition has to be bifurcated between shares of AN and shares of M. Can I? What is the total cost of acquisition? 10 lakhs. Total cost of acquisition is 10 lakhs into what is the net worth of M Limited? 4 crores. What is the net worth of ANM before demerger? 10 crores. So 10 lakh into 4 crores divided by 10 crore comes to 4 lakhs is the cost of acquisition of the shares of M Limited. Are you really with me? What is the total cost of acquisition? 10 lakh. Out of that 4 lakh is the cost of acquisition of the resulting company. That means 10 lakh minus 4 lakh, 6 lakh is the cost of acquisition of the. Now, think from the angle of the shareholder, my dear lovable students. Shareholder already holding shares of ANM Limited. This has become less in value. To compensate that, they will get the shares of M Limited. At the time of receipt of shares of what company? Resulting company. Will not be regarded as transfer in the hands of the what holder. As per 47 clause 6D, 6 na amalgamation, 6B na big company, that is in the hands of the demerger company. Sir, 6D means D stands for demerger. Because of demerger only shareholder got the share. That's why as per 47 clause 6D, it will not be regarded as transfer. Sorry sir, there is no capital gain. Will IFRS attract? No. Because of proviso 56 subsection 2 and 10 clause 10. Now, the shareholder is having shares of what company and what company? Resulting company and sir, at the time of future transfer, if we sell the shares of demerged company, capital gain will come. Sell the shares of resulting company, capital gain will come. Sir, dash gain will get attracted. Cost of acquisition should be determined as per 49.2C and 49.2D. That only I explained as 49.2C and 49.2D. Look at here. What is 49.2C in case of what merger? Cost of acquisition in the dash company, resulting company, which is A into B by C. What is A? Cost of acquisition of shares held in the what company? What was the total cost of acquisition? 10 lakh. Can I proceed? Net book value of the asset transfer in a demerger. to the resulting company, how much crores they gave? 4 crore. C, net worth of the demerged company, that is aggregate of paid up share capital and general reserve, appear in the books of the demerger immediately before demerger. Before demerger, what was the total net worth? That means 10 lakh into 4 crore divided by 10 crore comes to 4 lakhs is the apportioned cost of acquisition of the shares of resulting company. You tell me, you really originally purchased which company share? ANM Limited, which is before demerger. How much you paid? 10 lakh. But now in your hand, ANM company share is there and resulting company share is there. Which is the new share? Resulting company. Have you purchased resulting company? No. Do you know the cost of acquisition of resulting company? No. So we have to see the cost of acquisition. That's why 49.2C. Please see resulting company, new company. Are you all really with me? Then my dear lovable students, sir, total 10 lakhs is the what of acquisition? Cost of acquisition. From that, I understand that 4 lakh is the cost of acquisition attributable to the resulting company. So 10 minus 4 is the cost of acquisition of the demerged company. Clarity. That's why 49.2D. D stands for demerged company. That's it. Are you all really with me? That's it with regard to the, sir, 49.2C and 2D. Sir, whether you sell the shares of demerged company share or resulting company share, period of holding should be reckoned from the date of acquisition of the what company? Demerged company. Benefit of indexation should be from the year of acquisition of the shares of the demerged company. Can I proceed? That's it, man. Now I'm moving into the next quick, sir, items. Capital asset. Sir, government securities. What security? For example, the bond or debentures will be issued by government. I am the government of India. Hello, sir. I am, sir, government of Tamil Nadu. I need fund. I am going to borrow money. I am going to what? I am going to issue, sir, bond. I am going to issue debenture. Transfer of what security? Carrying periodic payment of interest by non-resident to another non-resident. That means there is one non-resident situated outside India. He give money to the government. He is transferring that bond or debenture to another non-resident outside India. It will not be regarded as. That's what 47 clause 7B. B stands for borrowing. Government has borrowed money from one non-resident. He is having debenture or bond. That bond is transferring outside India to another non-resident, will not be regarded as transfer. Come on, man. Redemption of sovereign what bond? Gold bond. Don't buy physical gold. Sir, if you buy more physical gold, automatically the demand for the physical gold increases. That's what 47 clause 7C. C stands for chain. Don't put chain. Please invest in the paper gold. Are you all really with me? If you invest in paper gold by an individual, there is a lock-in period of 8 years. After 8 years, if you redeem that gold bond, nothing will be taxable. Capital gain will be exempted. Are you really with me? Or if you are having lot of physical gold, you can convert this physical gold into paper form. Or when your daughter's marriage came, you can give this paper form and get back the physical gold. This is called as conversion of gold into electronic gold receipt. Or vice versa, will not be regarded as transfer as per 47 clause 7D. Are you all really with me? That's it. Then transfer of specified capital asset. If these asset, number one, any work of art, you have, sir, drawn some Mona Lisa painting or archaeological, scientific or your art collection, old collection, your old ICAI study material and all. Sir, any book, any manuscript, drawing, painting, photograph, print. If these capital assets are sold to government, no capital gain. Because consideration itself is paying by government. Are you going to pay capital gain to back to government itself? No. University, no capital gain. National Art Gallery, no capital gain. National Archives, no capital gain. Or any such other public museum or institution as may be notified by the government. If these capital asset transfer to these places, will not be regarded as transfer. Are you really with me? Now I am going to talk about conversion. Sir, you really purchase bond, you really purchase debenture, you really purchase debenture stock, you really purchase deposit certificate in a company, but it has been converted into share of debenture of that company. It will not be regarded as transfer. So you really purchased original asset, but it has become new asset. Correct? At the time of receipt of the new asset, no IFOS because of proviso 56 subsection 2 clause 10. But at the time of future transfer, when you transfer the new asset, capital gain will come. Yes, sir. Which is cost of acquisition is cost of acquisition of the what asset? Original asset. Period of holding should be reckoned from the original asset. And benefit of indexation depends upon the new asset, because the new asset may be shares or debentures. If shares, you can take benefit of indexation if you transfer before amendment date. But debenture proviso 4 is saying that for bonds and debenture, there is no benefit of indexation except capital index bond and sovereign gold bond. Are you remembering? That's why I've written as depend on the new asset. Because if the new asset is bond or debenture, you are not entitled for benefit of indexation. Comfortable? That's it, man. Now, sir, I really purchase preference shares of a company, sir. But that preference shares has been converted into equity shares, sir. This will not be regarded as any transfer by way of conversion of preference shares into equity share of that company will not be regarded as transfer. So what is the original asset you have subscribed? Preference shares. But it has been converted into, will not be regarded as transfer. Now in your hand, equity shares are there. At that time, no IFOS because of proviso 56 subsection 2 clause 10. Can I proceed? But in future, when you are selling equity share, dash gain attracted. Cost of acquisition is cost of the preference share. Period of holding should be reckoned from the period of holding of the preference share. Benefit of indexation should be from the year of acquisition of the preference share. All should be going back. Are you all really with me? Sir, the last one. 47 clause 16. What mortgage scheme? For example, if there is an individual senior citizen, if they are having any residential house property, and that residential house property has been given for mortgage, my dear lovable students, and bank has given loan or monthly installment to this senior citizen, sir, that will not be regarded as transfer. That will not be regarded as. So any transfer of capital asset in a transaction of reverse mortgage under a scheme made and notified by central government will not be regarded as transfer in the hands of individual senior. This loan amount, monthly amount received by the senior citizen will not be treated as income as per section 1043. Are you all really with me? That means that income will not be taxable under IFOS, my dear lovable students. These are the various clauses under 47. Transaction not regarded as transfer. If these transactions are not regarded as transfer, no need to pay dash gain at all. Are you all really with me? I believe that your preparations are going very well and good, my dear lovable students. This is a very quick. This is a very quick recall, my dear lovable students, for the TDS, TCS and advanced tax, which is a 4 to 5 mark area for examination. What TDS is saying that this many sections are there. Section 192, 192A, 194D, 194G, 194H, 194I, 194IA, 194IB, 194LA, 193, 194, 194A, 194K, 194C, 194M, 194B, 194BA, 194BB, 194DA, 194J, 194N, 194P, 194Q and 194R. Sir, I am moving into the first family called as salary family. What family, man? Salary family. Just listen for the next 1.5 hours. That itself will give you a lot of idea about TDS, TCS and advanced tax. Sir, salary payment, what they are saying this. Are you an employer? Yes, sir. You will make salary to the employee. It's an expense to the employer and income to the employee. Correct? Employer has to deduct TDS under section 192. Are you really with me? During the course of employment, employee will deposit the money in the employee's provident fund account. Employee's EPF account, basically recognized provident fund account. We already discussed in the salary chapter that there are 4 types of provident fund are there. Statutory provident fund, public provident fund, recognized provident fund and recognized provident fund. Right, sir?
if an employee is depositing money in the recognized provident fund, அப்ப employee எங்க காசு போடுறாங்கன்னா recognized provident fundல காசு போடுறாங்க. ஓகேவா? அந்த recognized provident fundல காசு போட்டாங்கன்னா withdraw பண்ற டைம்ல 10 subsection 12 fully exempted. ஆனா கண்டிஷன் ஒண்ணே மட்டும் சாட்டிஸ்ஃபை ஆகணும். என்ன கண்டிஷன் சாட்டிஸ்ஃபை ஆகணும்னா அந்த ரெகனைஸ்ட் ப்ரொவிடென்ட் ஃபண்ட்ல 5 இயர்ஸ் அங்க கேஷ் அங்கேயே இருக்கணும். Are you agree with me? So there is a lock-in period of how many year? எம்ப்ளாயி 5 இயர்ஸ்க்குள்ள ரெகனைஸ்ட் ப்ரொவிடென்ட் ஃபண்ட்ல இருந்து பணத்தை வித்ட்ரா பண்றதா இருந்தா செக்ஷன் 10 சப்செக்ஷன் 12 எக்ஸம்ஷன் என்ஜாய் பண்ண முடியாது. ஹலோ சார், அப்படி எக்ஸம்ஷன் என்ஜாய் பண்ண முடியாதுன்னா அது இன்கமா ட்ரீட் பண்ணுவாங்களா? அது இன்கமா ட்ரீட் பண்ணாங்கன்னா இந்த அத்தாரிட்டிஸ் ப்ரொவிடென்ட் ஃபண்ட் அத்தாரிட்டிஸ் என்ன பண்ணணும்னா டிடிஎஸ் பிடிக்கணும். Are you agree with me? எந்த செக்ஷன்ல டிடிஎஸ் பிடிக்கணும்னா 192A ல டிடிஎஸ் பிடிக்கணும். இந்த A ஓட ஃபுல் ஃபார்ம் தான் அக்யூமுலேட்டட் பேலன்ஸ் இன் தி ப்ரொவிடென்ட் ஃபண்ட் அக்கவுண்ட். சொல்ல பார்க்கலாம். அக்யூமுலேட்டட் பேலன்ஸ் இன் தி ப்ரொவிடென்ட் ஃபண்ட் அக்கவுண்ட். ரைட் சார்? அப்ப கரெக்டா அழகா அண்டர்ஸ்டாண்ட் பண்ண. இப்ப நம்ம we are very nearing to examination. இந்த டைம்ல போய் என்னன்னா வந்து கான்செப்சுவலி கிளியரா அண்டர்ஸ்டாண்ட் பண்ணேன்னா burden of preparation will reduce. Right sir? ஒண்ணுல ராஜா, am I an employer? Am I paying salary to you? If I pay salary to you as an employer, I am liable to deduct TDS under section 192. அவ்வளவுதான் matter. Okay. Sir, during the course of employment, will you deposit money in the provident fund account? If that fund is a recognized provident fund and if you withdraw money within 5 years, that income will not be exempted under section 10 subsection 12. Then my dear lovable students, that provident fund authority have to deduct TDS under section 192A. Are you able to appreciate? Sir, in TDS always there is a concept called as threshold limit. What limit? Because if I pay salary to you, my dear lovable students, if the amount of salary is less than basic exemption limit, you will not pay tax at all. Correct? If I deduct TDS, it will be a disturbance for you. That is why there is a concept of threshold limit in the act. Sir, the threshold limit for deduction of tax at source is a what exemption limit? Basic exemption limit. That means if the salary amount exceeds the basic exemption limit, which is either 2.5 lakhs or 3 lakh as the case may be, is entitled to deduct TDS. Employer is entitled to deduct TDS. Here the payment or aggregate of payment exceed 50,000. Here the payment or aggregate of payment exceed 50,000. That means you are withdrawing from a, my dear lovable students, you are withdrawing from a recognized provident fund account. Within how many years? 5 years. That means without providing the continuous service for a 5 years, withdrawing money from the recognized provident fund, right? If you withdraw money from the PF account, that income will be taxable under the head salary, right? Under the head salary, we are having default tax regime and the optional tax regime, right? Under the optional tax regime, my dear lovable students, what is the standard deduction under 16 subsection 1A? 50,000. That's why they are saying that if the payment or aggregate of payment exceed 50,000, then the PF authorities are liable to deduct TDS. Are you agree with me? Yes, sir. Sir, if it is more than 50,000 rupees, sir. Sir, actually only in this finance act, they made 50,000 and 75,000. Earlier, under both the route, it was just how much rupees, man? 50,000. So, there they have amended. Here, they have not amended. Are you agree with me? அப்ப நான் எம்ப்ளாயரா, நான் உனக்கு salary pay பண்றேனா, நான் உனக்கு salary pay பண்ணேன்னா நான் என்ன பிடிக்கணும்? TDS பிடிக்கணும். Provided salary basic exemption limit exceed ஆச்சுனா. கரெக்ட்டா? நான் ஒரு provident fund authority-யா, நான் accumulated balance in provident fund நான் உனக்கு பே பண்றேனா, நான் என்ன பிடிக்கணும்னா டிடிஎஸ் பிடிக்கணும். கரெக்டா? எப்ப டிடிஎஸ் பிடிக்கணும்னா if the amount exceed 50,000. that's it, game over. come on. யாரு சார் பேயர்? ஒண்ணும் இல்ல சார், எம்ப்ளாயர் தான் சார் பேயர். அதுக்கு மேல நீ மண்டை பிச்சுக்க வேண்டிய அவசியமே இல்லை. எனி பர்சன் ரெஸ்பான்சிபிள் ஃபார் பேயிங் எனி இன்கம் சார்ஜபிள் அண்டர் த ஹெட் வாட்? salary ஹெட்ல இன்கம் சார்ஜ் ஆகணும்னா யாரு தான் பே பண்ணுவா? எம்ப்ளாயர் தான் பே பண்ணுவா. அப்ப செக்ஷன் 192ல டிடிஎஸ் பிடிக்க வேண்டிய ஒரே ஒரு ஆள். And inga yaar sir 192 ல trustees of the EPS scheme, sir EPF scheme or any authorized person under the scheme. அந்த provident fund act ல trustees இருப்பாங்க இல்லையா, provident fund authorities இருப்பாங்க இல்லையா, அவங்க தான் என்ன பிடிக்கணும் சார்? யாரு சார் பேயி பிசாசு? பேயி பிசாஸ் யாரா இருக்கணும்னா இண்டிவிஜுவலா இருக்கணும். அந்த இண்டிவிஜுவல் எம்ப்ளாயியா இருக்கணும். இண்டிவிஜுவலா இருக்கணும். இங்கேயும் அதே தான் சார், இண்டிவிஜுவலா இருக்கணும். அந்த இண்டிவிஜுவல் எம்ப்ளாயியா இருக்கணும். இதுதான் பேயி பிசாசு. கரெக்டா? What is the rate of TDS, sir? Average rate of income tax. சொல்ல பார்க்கலாம். என்ன டாக்ஸ்ல டிடிஎஸ் பிடிக்கணும்னா average rate of income tax. ஒண்ணுடா ராஜா, average rate of income taxனா, ஹலோ சார், tax payable divided by total income into 100. Tax payable divided by total income into 100. சொல்ல பார்க்கலாம். Tax payable divided by எனக்கு டோட்டல் இன்கம் ஃபார் எக்ஸாம்பிள் 12,75,000 இருக்குன்னு வெச்சுக்கோ. 12,75,000 டாக்ஸ் பேபிள் வருமா? இல்ல. அப் டு 10 lakh rupees 1,12,500 தானே வரும். 10 lakhsக்கு மேல 30% டாக்ஸ் வருமா? அப்படின்னா 2,75,000க்கு 30% பிளஸ் 1,12,500 போட்டேன்னா டோட்டல் டாக்ஸ் பேபிள் எவ்வளவு வருது? 1,95,000 வருது. அப்ப I am going to pay a tax of 1,95,000 for a total income of 12,75,000. That means the average rate of tax is equal to 15.29%. அப்ப 15.29% தான் என்ன பிடிக்கணும்? ஏன்னா இந்த ரேட்ல நீங்க என்ன பிடிச்சீங்கன்னா டிடிஎஸ் பிடிச்சீங்கன்னா நாளைக்கு கரெக்டா அவனோட டாக்ஸ் பேயபிளும் டிடிஎஸும் மேட்ச் ஆயிடும். அதோட ரிலேவித்துமே அப்ப அவனுக்கு ரீஃபண்டோ டாக்ஸ் பேயபிளோ பண்ண வேண்டிய. பட் இங்க 10% on the premature taxable withdrawal. In case premature 5 வருஷத்துக்கு முன்னாடி அவர் என்ன பண்ணிட்டார்னா வித்ட்ரா பண்ணிட்டார்னா செக்ஷன் 192A ல மை டியர் லவபிள் ஸ்டூடண்ட்ஸ் எத்தனை % டிடிஎஸ் பிடிக்கணும்? 10% டிடிஎஸ் பிடிக்கணும். எத்தனை % டிடிஎஸ்? சார் எப்ப சார் டிடிஎஸ் பிடிக்கணும்? அட் த டைம் ஆஃப் பேமெண்ட். எப்ப நீங்க salary பே பண்றீங்களோ அப்ப டிடிஎஸ் பிடிச்சா போதும். 192A எப்ப சார் டிடிஎஸ் பிடிக்கணும்? சார் எப்ப நீங்க பே பண்றீங்களோ அப்ப நீங்க டிடிஎஸ் பிடிச்சா போதும். ரைட்டா? Are you really with me? Appa this is salary family. Salary family is a payment family. Salary family is a. That's it, my dear lovable students. Sir, appa sollu what is section 192? TDS on salary. What is 192? TDS on salary. What is 192A? Accumulated balance in provident fund account. Accumulated balance in. Okay man, question number 1 க்கு வரேன்னா Mr. A the employer pays gross salary including allowance and monetary perquisite amounting to how much? 7,30,000 to his what manager? General manager. So his employer is paying salary to employee. Yeah. Besides, the employer provides non-monetary perquisite to him, whose value is estimated at 1,20,000. Idillam avarku non-monetary perquisite like RFA, motor car, movable asset, concessional loan, sir, other perquisite ellame employer kudukranga. The general manager is exercising the option to shift out of the what tax regime and pay tax under the optional tax regime as per the normal provisions of the act. General manager is saying that I am not interested to travel through the default tax regime. I am going to travel through the optional tax regime. What is the tax implication in the hands of Mr. A? The employer and general manager and the employee. Right, sir? Appa what is the gross salary? Sollu paakalam 7,30,000 already given in the non-monetary perquisite 1,20,000. Right? This may be rent-free accommodation. This may be motor car. We don't know. Some amount they themselves valued and given. Can I proceed? So what is the subtotal, my dear lovable students? 8,50,000. Is he going to travel through the optional tax regime or the default tax regime? As per section 16 subsection 1A for optional tax regime 50,000 can be claimed it as a deduction. So the taxable salary will be how much lakh? 8 lakhs. Can I calculate the tax liability? Yeah. For 8 lakh rupees, is he going to travel through the normal route dane? Up to 2.5 lakhs nil. 2.5 lakhs to 5 lakhs at the rate of 12,500. 5 lakhs to 8 lakhs na gap 3 lakh. 3 lakh oda 20% comes to. Evlo sir? 60,000. Correct? Sir, 3 lakhs oda 20% 60,000. So 60 plus 12,500. 72,000. என்ன சார் டாக்ஸ் லைபிலிட்டி எவ்வளவு போட்டுருக்காங்க? 75,400. Health and education says into 104% comes to 75,400. Right, sir? Can I calculate the average rate of tax, sir? What do you mean by average rate of tax? இப்போ நான் சொல்லி கொடுத்தேன் tax payable divided by total income into 100. That's it. What is the tax payable? 75,400. I will not take gross total income. I have to take the total income. 75,400 divided by 8 lakhs into 100 comes to 9.425%. Right, sir? அப்ப கதை கேளுங்க. Mr. A can deduct எவ்வளவு பிடிக்கணும் TDS? 75,400 at source from the salary of என்ன manager at the time of payment. ஏன்னா salary is a payment family. கரெக்டா? Alternatively, Mr. A can pay the tax on what monetary perquisite? Non-monetary perquisite. வேணும்னா ஏக்கு மிஸ்டர் ஏக்கு எம்ப்ளாயர்க்கே என்ன பே பண்ணலாம்னா இந்த non-monetary perquisite கொடுத்துருக்காருல்ல இந்த 1,20,000க்கு 9.425% 11,310 யாரே டாக்ஸ் கட்டிக்கலாம். மிஸ்டர் ஏ எம்ப்ளாயரே என்ன கட்டிக்கலாம்? டாக்ஸ் கட்டிக்கலாம். அப்ரிஷியேட் பண்ற டாக்ஸ் ஆன் என்ன மானிட்டரி பெர்க்விசிட், நான் மானிட்டரி பெர்க்விசிட். அப்படி எம்ப்ளாயர் எம்ப்ளாயிக்காக என்ன கட்டுறதா இருந்தா இந்த கட்டின டாக்ஸை P&L அக்கவுண்ட்ல 11,310 டெபிட் பண்ண கூடாது. should be என்ன back added back as per 40 small a subsection 5. are you really with me? அதாவது any tax on non monetary perquisite debited to P&L account should be என்ன back, and this tax amount will not be treated as perquisite in the hands of the employee under section 1010 cc tax on non monetary perquisite. ஞாபகம் இருக்கா? எஸ் சார். இன்கேஸ் அப்படி எம்ப்ளாயரே அந்த நான் மானிட்டரி பர்க்விசிட்டுக்கு என்ன கட்டுறதா இருந்தா, டாக்ஸ் கட்டுறதா இருந்தா 75,400 டிடிஎஸ் பிடிக்க வேண்டிய அதுல இருந்து 11,310 ஆல்ரெடி டாக்ஸ் கட்டியாச்சு இல்லையா? அப்ப 75,400 மைனஸ் 11,310 comes to 64,090 என்னவா பிடிச்சா போதும், டிடிஎஸ்ஸா பிடிச்சா போதும். ரைட் சார். இங்க கதை பாருங்க, இந்த பாயிண்ட் என்ஜாய் பண்ணுங்க. இஃப் மிஸ்டர் ஏ பேஸ் டாக்ஸ் ஆஃப் 11,310, யார் மிஸ்டர் ஏ? எம்ப்ளாயர். அப்படி எம்ப்ளாயர் டாக்ஸ் ஆன் நான் மானிட்டரி பர்க்விசிட்டுக்கு என்ன கட்டிட்டாருன்னா the same is not a deductible expenses as per 40A. that means that amount is an expense to the employer. ஆனா அத P&L அக்கவுண்ட்ல அவர் டெபிட் பண்ண கூடாது. the amount of tax paid towards non monetary perquisite by the employer however is not chargeable to tax in the hands of employee as per section 1010 cc. அது எம்ப்ளாயி கையில பர்க்விசிட் ஆவும் ட்ரீட் ஆவாது. கம்ஃபர்டபிளா? question number 2 க்கு வா. Mr. Shawarma, an employee of Mrs. ABC Limited since 10/4/2021, resigned on 31/3/2025. That means within 5 years resign pantara. Yes sir. And withdraw 60,000 being the balance in the N account man EPF account. அப்ப employee provident fund account withdraw பண்ணிருக்காரா? Discuss with reason whether the provisions of chapter 17b தான் TDS are attracted, and if so what is the net amount receivable by payee Mr. Shawarma is the question. Hello sir. Have we served for more than 5 years? No. So it's a premature withdrawal. Then and the amount of withdrawal exceed 50,000 then PF authority have to deduct TDS at the rate of 10%. அப்ப 60,000 க்கு 10% TDS பிடிச்சாச்சுனா 6,000 போச்சுனா 54,000 தான் வருங்க பாரு. net amount receivable by Mr. Shawarma is 54,000 being tax deducted at source. appreciate பண்ண முடியுதா? Sir, that's it my dear lovable students. Two sections comes to an end. Number 1 என்ன and என்ன 192 and 192A. What is 192? TDS on salary. What is 192A? Accumulated balance in provident fund account. Right sir? What is the threshold limit for 192? Basic exemption limit. What is the threshold limit for 192A? 50,000. correct? What is the rate of TDS for 192? Average rate. What is the rate of TDS for 192A? 10%. இதுக்கு மேல நீ எதுவுமே எக்ஸாம் கேரி பண்ண வேண்டிய அவசியம் இல்லை. அருள் ரிலேவித்துமே சார் இடையில ஏதோ எழுதிருக்கு, அது எழுதுவாங்க, புக் எழுதுறவங்க அப்படி எழுதுவாங்க, நீ டென்ஷன் ஆகாது. அருள் ரிலேவித்துமே this is what the take away from the TDS CCS and advanced tax. Next one, TDS on what or what? brokerage or என்ன சார்? கமிஷன். பல டைப் ஆஃப் brokerage or கமிஷன் இருக்கு சார். அருள் ரிலேவித்துமே இங்க பாரு சார், 194D இருக்கு, 194G இருக்கு, 194H இருக்கு. உயிரோட இருக்கியா? 194D என்னன்னா இன்சூரன்ஸ் கம்பெனி கேள்விப்பட்டிருக்கியா? இப்ப இன்சூரன்ஸ் கம்பெனில பல டைப் ஆஃப் இன்சூரன்ஸ் இருக்கு. ஜெனரல் இன்சூரன்ஸ் இருக்கு, லைஃப் இன்சூரன்ஸ் இருக்கு. கரெக்டா? இப்ப ஜெனரல் இன்சூரன்ஸ் ஒரு இன்சூரன்ஸ் ஏஜென்ட் வராரு, அவர் என்ன சொல்றாருன்னா, சார் தயவு செஞ்சு இன்சூரன்ஸ் எடுங்க சார், லைஃப் வந்து அன்சர்டன் சார், நாளைக்கு என்ன நடக்கும்னே சொல்ல முடியாது சார், நீங்க இப்ப ஜாலியா இருக்கீங்க, நீங்க நாளைக்கு என்ன வேணா உங்களுக்கு நடக்கலாம் சார், இப்படி எல்லாம் சொல்லி பயமுறுத்த வாய்ப்பு இருக்கு. கரெக்டா? ஆனா இந்த இன்சூரன்ஸ் ஏஜென்ட்ஸோட ஸ்பெஷாலிட்டி என்னன்னா நல்லா ட்ரெஸ் போட்டு வருவாங்க. நல்லா அதான் 194D வரும்போது நல்லா என்ன போட்டு வந்தாங்கன்னா ட்ரெஸ் போட்டு அழகா பேசுவாங்க சார். அப்படியே நம்மள இன்சூரன்ஸ் எடுக்க வச்சிருவாங்க சார். அதுக்கு இன்சூரன்ஸ் கம்பெனி கிட்ட இருந்து அவங்களுக்கு என்ன வரும்னா கமிஷன் வரும். கரெக்டா? எஸ் சார். தட்ஸ் an income for them. எஸ் சார். so insurance company have to deduct TDS. have to deduct. இப்போ சம்டைம்ஸ் சில ஏஜென்ட் என்ன பண்ணுவாங்கன்னா லாட்ரி விற்பாங்க சார். தமிழ்நாட்டில் லாட்ரி இல்லை சார், ஆனால் கேரளாவில் லாட்ரி இருக்கு சார். கரெக்டா? கேரளாத்தில் லாட்ரி விற்கிற யாரை நீ பார்த்தாலும் அவங்க எப்படி விற்கிறாங்கன்னு உனக்கு தெரியாது. ஏன்னா நீ கேரளா போனதில்லை, நான் போயிட்டு வந்திருக்கேன், அங்கிருந்தா நான் வந்திருக்கேன், அதனால எனக்கு தெரியும் அவங்க எப்படி விற்பாங்கன்னா ஜி 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 லாட்ரி வாங்க ஜி, லாட்ரி வாங்க ஜி, லாட்ரி வாங்க ஜி. ஹலோ சார், எப்படி லாட்ரி விற்பாங்க சொல்லி காட்டுப்பாங்களா? ஜி 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 லாட்ரி வாங்க ஜி, லாட்ரி வாங்க ஜி, லாட்ரி வாங்க ஜி. ஹலோ சார், அதனால தான் 194Gல என்ன பிடிக்க சொல்றாங்கன்னா டிடிஎஸ் பிடிக்க சொல்றாங்க. அறிவல் ரயில்வே தமிழ் சார். 194H இப்போ ஃபார் எக்ஸாம்பிள் நான் உனக்கு ஒரு ஹெல்ப் பண்றேன் சார். என்ன பண்றேன் சார்? அதுக்கு தான் சார் நீ எனக்கு brokerage or கமிஷன் தர, அதனால தான் 194Hல டிடிஎஸ் பிடிக்க சொல்றாங்க. கரெக்டா? அப்ப நல்ல ட்ரெஸ் போட்டு வந்தா, 194D சார் லாட்டரி வித்தா 194G சார் நல்ல என்ன சார் ஹெல்ப் பண்ணா 194H சார் இன்சூரன்ஸ் கமிஷன் என்ன கமிஷன் லாட்டரி கமிஷன் என்ன கமிஷன் சார் brokerage or கமிஷன் brokerage or சார் threshold லிமிட் என்ன தெரியுமா இவங்க தான் என்ன ஃபேமிலினா brokerage or கமிஷன் ஃபேமிலி என்ன ஃபேமிலி brokerage or commission family நாலே threshold limit more than 15,000 அப்படி சொல்லுங்க சார் எல்லாருக்கும் ஒரே ரேட்னா எங்களுக்கு எவ்வளவு ஜாலியா இருக்கும் கரெக்டா 15,000 ரூபாய்க்கு மேல நீங்க வந்து இன்சூரன்ஸ் கமிஷன் பே பண்றீங்களா 15,000 ரூபாய்க்கு மேல வந்து நீங்க லாட்டரி கமிஷன் பே பண்றீங்களா 15,000 ரூபாய்க்கு மேல வந்து ஜெனரல் brokerage and கமிஷன் பே பண்றீங்களா TDS புடிங்க அரோல் ரிலீவ் வித் மீ எஸ் சார் சார் பேயர் ரெண்டு பேர் இருப்பாங்க சார் ஒன்னு பேயர் ரெண்டாவது பேயி பிசாசு கரெக்டா பேயர்னா யாரு பே பண்ணும் பேயர்னா 194D சார் அது என்ன கமிஷன் இன்சூரன்ஸ் கமிஷன் ரெண்டு பேர் இருப்பாங்க ஒன்னு வந்து இன்சூரன்ஸ் கம்பெனி இருப்பாங்க ரெண்டாவது யாரு இன்சூரன்ஸ் ஏஜென்ட் இருப்பாங்க யாரு யாருக்கு பே பண்றத பத்தி பேசிட்டு இருக்கோம் இன்சூரன்ஸ் கம்பெனி இன்சூரன்ஸ் ஏஜென்ட் பே பண்ற பத்தி பேசிட்டு இருக்கோம் அப்ப பேயர் யாரா இருக்கணும் இன்சூரன்ஸ் கம்பெனியா இருக்கணும் அவ்வளவு அதுக்கு மேல நீ எதுவும் படிக்கவே வேணா படிச்சு பார்த்துக்கோ இங்கிலீஷ்ல சொல்லியிருப்பாங்க எனி பர்சன் ரெஸ்பான்சிபிள் ஃபார் பேயிங் எனி இன்கம் பை வே ஆஃப் ரெமுனரேஷன் ஆர் ரிவார்டு ஃபார் சொலிசிட்டிங் ஆர் ப்ரொக்யூரிங் இன்சூரன்ஸ் பிசினஸ் நீங்க இன்சூரன்ஸ் பிசினஸ் யார் எடுத்துட்டு வர்றாங்களோ அவங்களுக்காக நீங்க யார் பே பண்றாங்களோ அவங்க தான் என்ன கம்பெனி இன்சூரன்ஸ் கம்பெனி கரெக்டா next one sir any person responsible for any income by way of remuneration or by whatever name called on any ticket lottery ticket அப்ப lottery company will pay to the lottery agent அப்ப இங்க பேயர் யாரா இருக்கணும்னா lottery company அப்ப 194D ல பேயர் யாரா இருக்கணும் இன்சூரன்ஸ் கம்பெனி 194G ல பேயர் யாரா இருக்கணும் lottery company இந்த H நீ கரெக்ட்டா புரியலனா உனக்கு அடி வாங்கும் இங்க பார்க்கலாம் இங்க வா நான் சொல்றத கேளு in case of 194H 194I 194J 194A 194C 194R 194 hijacker சொல்லு அப்படி கரெக்ட்டா சொல்லு hijacker சொல்லு புரியுதா சார் இன் கேஸ் ஆஃப் திஸ் செக்ஷன் அதாவது தெளிவா வா 194H 194I 194J 194A 194C 194R காதுல கேட்காத வாயில சொல்லு ரெடி 1 2 3 ஷாட் 194H 194I 194J 194A 194C 194R இன்னொரு வாட்டி அழகா சொல்லு 194H 194I 194J 194A 194C 194R அழகா எனக்காக இன்னொரு வாட்டி லாஸ்ட் டைம் ரெடி 1 2 3 ஷாட் 194H 194I 194J 194A 194C 194R 194H brokerage or commission 194H 194I rent 194I 194J fees for professional or technical services fees for professional or technical services 194A interest other than interest on securities interest other than interest on securities சொல்லு interest other than 194C payment to contractor or subcontractor payment to 194R sir perquisites 194R is what perquisites 194R is what அப்ப இதெல்லாம் செக்ஷன் சொல்ல பார்க்கலாம் 194H 194I 194J 194A 194C 194R repeat once again 194H 194I 194J 194A 194C 194R what they are saying கரெக்டா ப்ரொவிஷன் புரிஞ்சுக்கோ ஒரே ஒரு ப்ரொவிஷன் தான் இந்த எல்லா செக்ஷனுக்கும் காமன் ப்ரொவிஷன் என்ன சொல்றாங்கன்னா if the assessee is individual or HUF assessee யாரா இருந்தா and in the immediately preceding previous year does not exceed 1 crore in case of business or 50 lakhs in case of profession does not exceed 1 crore in case of business or 50 lakhs in case of profession அப்ப யார் அசசி யாரு இண்டிவிஜுவல் ஆர் HUF இருந்து இந்த immediately preceding previous yearல business பண்ணி turnover 1 crore தாண்டல profession பண்ணி 50 lakhs தாண்டலேனா இந்த current previous year hijacker என்னது hijacker HIJACR இதுக்கு TDS பிடிக்க வேண்டிய அவசியம் இல்லை TDS ப்ரொவிஷன்ஸே அப்ளை ஆகாது அப்போ அசசி யாரா இருந்தா இண்டிவிஜுவல் ஆர் HUF இருந்து immediately preceding previous yearல turnover 1 crore so 50 lakhs so exceed ஆவலேனா நீ சோட்டா வாலாவா படா வாலாவா சோட்டா வாலா அப்படின்னா கரண்ட் இயர்ல நீ ஹைஜாக்கருக்கு டிடிஎஸ் பிடிக்க வேண்டிய இவ்வளவுதான் மேட்டர் இருக்கு. ஹலோ சார், அப்போ is this a benefit available in the act? Yes sir, this benefit is applicable to only யாருக்கு or யாருக்கு? அப்ப எப்படி படிக்கணும்ங்க பாரு, பேயர் எனி பர்சன். என்னது இந்த பிராக்கெட் அப்படியே விட்டுரு, ரெஸ்பான்சிபிள் ஃபார் பேயிங் கமிஷன் ஆர் brokerage. நீ கமிஷன் ஆர் brokerage பே பண்றியா? 194H ல என்ன புடி? டிடிஎஸ் புடி. 194H ஹைஜாக்கருக்குள்ள இருக்கா? எஸ் சார். ஆனா அதுல ஒரே ஒரு பேயருக்கு மட்டும் எக்ஸ்க்ளூஷன் இருக்கா? யார் அது? இண்டிவிஜுவல் ஆர் HF. இங்க பாரு சார், அதர் தேன் யாரு or யாரு? இண்டிவிஜுவல் ஆர் HF whose total sales, gross receipts or turnover from business or profession does not exceed 1 crore or in case of a business and 50 lakhs in case of profession during the immediately preceding previous year. கரெக்டா? அப்ப ஜெனரலா யாரு சார் பேயரா இருக்கணும்? எனி பர்சன், நீ யாரா வேணாரு. எனி பர்சன் who are paying brokerage or commission is liable to deduct TDS under 194H. ஆனா நீ ஒரு யாரு இல்ல யாரா இருக்க, இண்டிவிஜுவலா HCF இருக்க. ஆனா இமிடியட்லி preceding previous yearல என்னோட டர்ன் ஓவர் எத்தனை கோடி தாண்டல? 1 crore தாண்டலேனா 44AB பதிலா டாக்ஸ் ஆடிட் பண்ண வேண்டாம். அதான் மேட்டர். 50 lakhs தாண்டலேனா 44AB பதிலா டாக்ஸ் ஆடிட் பண்ண வேண்டிய அப்படின்னா நீ சோட்டா வாலா. கரெக்டா? சோட்டா வாலாக்கு கரண்ட் இயர்ல டிடிஎஸ் ப்ரொவிஷன்ஸ் அட்ராக்ட் ஆக வேண்டிய, அதுக்கு கவர்மெண்ட் உயிர் எடுக்கிறாங்க. எப்படி உயிர் எடுக்கிறாங்கன்னா, எல்லா டிடிஎஸ் சாப்டரே அப்ளை ஆகலன்னு சொல்லல, சில பல செக்ஷன்கள் அப்ளை ஆகல. அதோட ரிலேட்டமே அது என்ன செக்ஷன்ங்கற ஷார்ட்கட் நான் கண்டுபிடிச்சிருக்கேன். 194H, 194I, 194A, 194C, 194R. அப்ப இதே ப்ரொவிஷன் எல்லாம் அங்க இருக்கும். வா போய் பார்த்துட்டு வரலாம், வா என் கூட வா. 194I ல வா, பேயர்ல பாரு 194I. ஏன்னா நம்ம கோட் வேர்ட் என்ன? ஹைஜாக்கர். கரெக்டா? அங்க பாரு, எனி பர்சன் பிராக்கெட் விட்டு ரெஸ்பான்சிபிள் ஃபார் பேயிங் ரெண்ட். நீ ரெண்ட் பே பண்றியா? என்ன புடி? டிடிஎஸ் புடி. எந்த செக்ஷன்ல? 194. Other than an individual or HF whose total sales, gross receipts or turnover from business or profession carried on by him do not exceed 1 crore in case of business or 50 lakhs in case of profession during the immediately preceding previous years. Comfortable? இப்ப H முடிச்சாச்சு, I முடிச்சாச்சு. J க்கு வரலாமா? பேஜ் நம்பர் கொஞ்சம் சொன்னா சௌகரியமா இருக்கும். J க்கு கொஞ்சம் சொல்றீங்களா? 194J எந்த பேஜ்ல இருக்கு? 194J பேஜ் நம்பர் 157 இருக்கா? எஸ் சார், வாங்க சார். பேஜ் நம்பர் 157க்கு வாங்க சார். 157ல CUM தான் இருக்கு. ஓகே சார், உங்க புக்குக்கு என் புக்குக்கு டிஃபரன்ஸ் இருக்குன்னு நினைக்கிறப்போ கீழே இருக்கலாம் சார். ஒரு செகண்ட் சார், தா வரேன் சார். தா சார் 194J. என்ன சார் 194J? ஃபீஸ் ஃபார் ப்ரொஃபஷனல் டெக்னிக்கல் சர்வீசஸ். கரெக்டா? கரெக்டா? நீ சிஏ தானே படிக்கிற? சிஏ பாஸ் ஆவியா? சிஏ பாஸ் ஆனா உன்னை ப்ரொஃபஷனல்னு சொல்லுவாங்களா? சிஏ பாஸ் ஆனதுக்கு அப்புறம் நீ ஆடிட் பண்ணேனா உனக்கு ஃபீஸ் வருமா? அந்த ஆடிட் ஃபீஸுக்கு 194Jல டிடிஎஸ் புடிச்சு தான் பேமெண்ட் வரும். கரெக்டா? அப்படி நீ ஒரு ப்ரொஃபஷனல் ஆகணும்னா ஜெயிக்கணும்டா மாறா. என்ன பண்ணணும்? 194J ஜெயிச்சாதான் ப்ரொஃபஷனல். அருள் ரிலீவ் வித் மீ. இந்த மேதானே அவன் என்ன சொல்றான்னா, எனி பர்சன் யாரா வேணா இருக்கட்டும், ஓகேவா, அதர் தேன் யாரு or யாரு? இண்டிவிஜுவல் ஆர் HF in case of fees for professional technical service paid or credited individual or HF whose sales, gross receipts or turnover from business or profession exceeds எத்தனை crore in case of business or 50 lakhs in case of profession. கரெக்டா? எஸ் சார். அப்ப என்ன சொல்றான்னா 194 இதுலயும் அப்ப ஹைஜாக்கர்ங்கற ப்ரொவிஷன் அப்ளை ஆகுது. in case of an individual or HF whose turnover in the immediately preceding previous year does not exceed rupees 1 crore or 50 lakhs in case of profession, sir, in the current previous year no need to deduct TDS for hijacker. 194H பார்த்தாச்சு, 194 I பார்த்தாச்சு, 194J பார்த்தாச்சு. இப்போ 194A க்கு வரலாமா? என்னது 194A? இன்ட்ரெஸ்ட் அதர் தேன் இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டி. சொல்லுங்க, இன்ட்ரெஸ்ட் அதர் தேன் இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டி. ஏன் ஒரு இன்ட்ரெஸ்டே இல்லாம சொல்றீங்க? இன்ட்ரெஸ்டோட சொல்லுங்க. இன்ட்ரெஸ்ட் அதர் தேன் இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ் சொல்லுங்க பார்க்கலாம். அதுல போய் பேயர் எங்கன்னு கண்டுபிடிங்க 194A any person other than individual or HUF whose total sales, gross receipts or turnover from the business or profession do not exceed in case of business or profession 50 lakhs in case of profession. கரெக்டா? அப்ப இங்கேயுமே ஹைஜாக்கர் ப்ரொவிஷன் அப்ளை ஆகுதா? 194H, 194I, 194J, 194A. இப்ப நான் 194C க்கு வரட்டுமா? C stands for contractor or subcontractor, right? C stands for contractor or subcontractor. Tell me, contractor or subcontractor, correct? Sir, யாரு சார் பேயர்? சென்ட்ரல் கவர்மெண்ட், ஸ்டேட் கவர்மெண்ட், லோக்கல் அத்தாரிட்டி, சென்ட்ரல், ஸ்டேட், ப்ரொவிஷனல் கார்பரேஷன், கம்பெனி, ஃபர்ம், ட்ரஸ்ட், ரெஜிஸ்டர்ட் சொசைட்டி, கோஆபரேட்டிவ் சொசைட்டி. பண்ணாட ஆல் அசைன் சொல்ல வேண்டியதானே? கரெக்ட். அதெல்லாம் விடு, மேட்ருக்கு வா. சார், இண்டிவிஜுவல் ஆர் HUF whose total sales, gross receipts or turnover from business or profession exceeds 1 crore. அதாவது எக்ஸீட் ஆனா டிடிஎஸ் பிடிக்கணும்னு சொல்றான். அப்ப எக்ஸீட் ஆகலைனா இங்க பாசிட்டிவ் அசம்ப்ஷன் கொடுத்திருக்கான். Are you with me? Yes sir. In case of business of 50 lakhs, in case of profession during the immediately preceding previous year. அப்போ ஒரு இண்டிவிஜுவல் ஆர் HUF ஓட டர்ன்ஓவர் இமிடியட்லி preceding previous yearல 1 crore or 50 lakh எக்ஸீட் ஆனா மட்டும் என்ன பிடிச்சா போதும். இல்லனா 194C ல டிடிஎஸ் பிடிக்க வேண்டிய. அப்ப 194H, 194I, 194J, 194A, 194C, 194R. கரெக்டா? H எந்த இன்கத்துக்கு அப்ளை ஆகும்? brokerage or commission. ஏனா ஹெல்ப் பண்ணாதான் brokerage or commission வரும் இல்லையா? 194I எந்த இன்கத்துக்கு அப்ளை ஆகும்? ரெண்ட். உன் கண்களை வாடகைக்கு விடாதே. கரெக்டா? எஸ் சார். 194J ஜெயிக்கணுமாரா? fees for professional or technical services. கரெக்டா? 194A interest other than interest on securities. 194C payment to contractor or இப்ப நான் 194R க்கு வர்றேன். 194R நமக்கிட்ட என்ன சொல்றாங்கன்னா perquisite. என்னது? அதுல R ஸ்ட்ரெஸ் பண்ணணும் நீ. ஓகேவா? perquisite அதான் R. perquisite சொல்ல பார்க்கலாம். Any person other than an individual HUF whose sales or gross receipts or turnover do not exceed 1 crore or NSR in case of business or 50 lakhs in case of profession during the immediately preceding previous year. Again they have applied hijacker. புரியுதா? Simple. In case of an individual HUF whose turnover in the immediately preceding previous year does not exceed 1 crore in case of business or 50 lakhs in case of profession in the current previous year, hijacker provisions will not be applicable. புரியுதா? இப்போ நான் அங்கங்க போகும்போது ஒரு வாட்டி ஹைஜாக்கர் சொல்ல வேண்டிய அவசியம் இல்லை. அதனால தான் நான் எல்லாத்தையும் கம்ப்ளீட் பண்ணிட்டேன். இப்போ நான் ரெண்டாவது ஃபேமிலிக்கு சந்தோஷமா வரேன் சார். சார் நான் ரெண்டாவது ஃபேமிலி எதில் நிற்கிறேன்னா சார் brokerage or கமிஷன் நிற்கிறேன். கரெக்டா? திரும்பி வா. 194D என்ன கமிஷன்? இன்சூரன்ஸ் கமிஷன். 194G லாட்டரி கமிஷன். 194H brokerage or கமிஷன். கரெக்டா? இவங்களோட நல்ல விஷயம் என்னன்னா த்ரெஷோல்ட் லிமிட் எல்லாருக்குமே ஒன்று தான். மோர் தேன் 50,000. 15,000 ரூபாய்க்கு மேலே போனால் என்ன பிடிச்சா போதும்? டிடிஎஸ் பிடிச்சா போதும். 194Dல பேயர் யாரா இருக்கணும்? இன்சூரன்ஸ் கம்பெனியா இருக்கணும். 194Gல பேயர் யாரா இருக்கணும்? யாரா வேணா இருக்கணும். 194Hல பேயர் யாரா இருக்கணும்? யாரா வேணா இருக்கலாம். கரெக்டா இல்லையா? சார் ஐபிஎஸ் விஜய் கூட இருக்கலாம். ரைட்டா? ஆனா யாரா இருக்க கூடாதுன்னா இன் கேஸ் ஆஃப் இண்டிவிஜுவல் ஆர் HUF in the immediately preceding previous year whose turnover does not exceed 1 crore or in 50 lakhs in case of professional இருக்க கூடாது. ரைட்டா? பேய் யாரா இருக்கணும் சார்? பேய் பிசாசு. 194D சார் ரெசிடெண்டா தான் இருக்கணும். யாரா தான் இருக்கணும்? 194G எனி பர்சன் ஸ்டாக்கிங், டிஸ்ட்ரிபியூட்டிங், பர்ச்சேசிங், செல்லிங் ஆஃப் என்ன டிக்கெட் அப்படின்னா ரெசிடெண்டாவும் இருக்கலாம், நான் ரெசிடெண்டாவும் இருக்கலாம். ஹலோ சார், நீ ரெசிடெண்டா சார் ஜின்னு கூப்பிட்டு நான் ரெசிடெண்டா வாடா போடா பண்ணாடான்னு சொல்லுவியா? சொல்ல முடியாது. எல்லாரும் மரியாதையா தான் சொல்லணும். கரெக்டா இல்லையா? யார் நீ ஜின்னு கூப்பிடுவேன்? ரெசிடெண்டானாலும் நான் ஜீன் தான் கூப்பிடுவேன், நான் ரெசிடெண்டா இருந்தாலும் நான் ஜி தான் கூப்பிடுவேன். ரைட்டா? 194 என்ன சார்? H யாரா தான் இருக்கணும்? ரெசிடெண்டா தான் இருக்கணும். Are you really with me? வா ராஜா. சார் ரேட் ஆஃப் டிடிஎஸ் ராஜா. சார் இங்க பாரு சார், பச்சை நிறமே பச்சை நிறமே மேலே வர போகுது நிறமே. கண்டிப்பா வந்துடும் அமெண்ட்மெண்ட். Are you really with me? எஸ் சார். சார் 194D இருக்கா? சொல்லுங்க ஐயா. எஸ் சார். எத்தனை பர்சன்ட் டிடிஎஸ்? 5%. இஃப் த பேய் இஸ் அ நான் கார்பரேட் ரெசிடென்ட். நான் கார்பரேட் ரெசிடென்ட்னா அதர் தேன் கம்பெனி. Other than company இருந்தா 5%. Sir 10% if the payee is a domestic company. தம்பி பேயர் இல்லை, பேயை பார்க்கணும். பேயை பாரு. பேயி பிசாசு கம்பெனியா இருந்தா 10%, பேயி பிசாசு அதர் தேன் கம்பெனியா இருந்தா 5%. புரியுதா? 194G இருந்துச்சா, முன்னாடி 5% இருந்துச்சு. எல்லாரும் என்ன சொல்லிட்டாங்கன்னா லாட்டரி கமிஷனுக்கு 5% ரொம்ப அதிகமா இருக்கு, ஏதாவது பண்ணுங்கன்னு சொன்ன போது நம்ம எக்ஸாம்க்கு சார் 2% மாத்திட்டாங்க. அருள் ரிலிவித்துமே அது ஒரு கட் ஆஃப் டேட்டோட 30th செப்டம்பரோட. கவலைப்படாது, ஒரு ஒன்றுக்கும் ஒரு டேட் வராது, எல்லாத்துக்கும் ஒரு டேட் தான் வரும். அருள் ரிலிவித்துமே அப்ப 30th செப்டம்பர் வரைக்கும் 5%, 30th செப்டம்பருக்கு மேல 2%. அருள் ரிலிவித்துமே 194H முன்னாடி எல்லாம் ஹெல்ப் பண்ணா 5%. அருள் ரிலிவித்துமே இப்பெல்லாம் 2 பேர் யாரும் ஹெல்ப்பே பண்றது இல்லை. அருள் ரிலிவித்துமே முன்னாடியில ஹெல்ப் பண்ணும்போது கை கொடுத்து ஹெல்ப் பண்ணுவாங்க. எத்தனை பர்சன்டேஜ்? 5%. இப்பெல்லாம் 2 பேர் யாரும் ஹெல்ப்பே பண்றது இல்லை. அதனால எத்தனை பர்சன்ட் வச்சுட்டாங்கன்னா 2% வச்சுட்டாங்க. கவர்மெண்ட் ஃபீல் பண்றது என்னன்னு புரியுதா? ஆர் able to appreciate? This will surely be tested in examination, man. Up to the cut off date 5% and beyond that 2%. Comfortable? எப்ப சார் TDS பிடிக்கணும்? டிடக்ட் பண்ண வேண்டிய டைம் ஆஃப் டிடக்ஷன். salary ஃபேமிலினா at the time of payment. எப்ப பே பண்றியோ அப்ப பிடிச்சா போகும் TDS. கரெக்டா? ஆனா brokerage or commission family na at the time of credit or at the time of payment whichever is earlier. சொல்லு, at the time of credit or at the time of payment whichever is earlier. சொல்லு, at the time of credit or at the time of payment whichever is earlier. உயிரோட இருக்கியா? வா நம்ம ஸ்ரீமதி விஜயாவை போய் ஒன்று பார்த்துட்டு வரலாம். கொஸ்டின் நம்பர் 1 இருக்கு, பார்க்கலாமா? ஸ்ரீமதி விஜயா, விஜயா இண்டிவிஜுவல் HUF proprietor of Lakshmi Enterprises made turnover of 210 lakh during the previous year 23-24. That means her turnover in the immediately preceding previous year exceeds 1 crore. Hijacker benefit will not be applicable. Ayya, you are not a chota wala. Amma, you are a bada wala. You are liable to deduct TDS. Our turnover for the year ended 31/3/2025 was 90 lakh. Current previous year 90 lakh தான் இருக்காமா. சாரே நாங்க current previous year பார்க்க மாட்டோம் சாரே, நாங்க immediately preceding previous year தான் பார்ப்போம் சாரே. அம்மா லாஸ்ட் இயர்ல நீங்க என்ன இருந்திருக்கீங்க? படாவாலாவா இருந்திருக்கீங்க. ரைட்டா? Yes sir. Decide whether provisions relating to deduction of tax excess are attracted for the following payment made during the financial year. Purchase commission to one agent 25,000 more than 15,000 on 36/2024 before amendment towards purchase made during the year. Yes sir. Since assessee is an individual or HUF in the immediately preceding previous year, sir, turnover exceeds 1 crore, provisions of 194 actually will be applicable. Yes sir. TDS has to be deducted at the rate of 5% since the payment has been made before the amendment. அழகே 4 மார்க் கொஸ்டின் பேப்பர்ல இருக்க போது ஏன் விட்டுட்டு வரணும் நீ? அருள் ரிலீவித்துமே என்ன நோவுது உனக்கு? ஒன்னும் நோவாது. ஏன்னா உட்கார்ற கேட்கிற ஓகே முன்னாடி இப்படி இருந்துச்சு இப்படி ஆச்சு, அவ்வளவுதான் போட்டாச்சு ஸ்ரீமதி விஜயாவை. கமான். Since Srimati Vijaya's turnover from business was how much lakh? 210 lakhs in the immediately preceding previous year. She is liable to deduct tax at source in previous year 24-25 irrespective of her turnover being only 90 lakhs in the financial year 24-25. Comfortable? Tax at the rate of 5% has to be deducted under 194H in respect of purchase commission of 25,000 to an agent for purchase made during the year. Since the same exceeds the threshold limit of 15,000 for non-deduction of tax at source, they are under comfortable. I'm moving to the next family called as TDS on immovable property. TDS on immovable property. அப்போ உங்ககிட்ட ஒரு immovable property இருக்கா? அப்போ immovable propertyனா ஜெனரலா land building both யாராவது சென்னையில வீடு வச்சிருக்கீங்களா? சொந்தமா வீடு வச்சிருக்கீங்களா? லேண்ட் வச்சிருக்கீங்களா? இடம் வச்சிருக்கீங்களா? லேண்ட் பில்டிங் போத். இவ்வளவு பணக்காரர் இருக்கீங்க சென்னையில. ரைட் சார், ஃபென்டாஸ்டிக் சார். கமான் சார். அந்த வீடு நீங்க என்ன பண்ணலாம்னா ஐதர் ரெண்டுக்கு விடலாமா? சொல்லுங்க ஐயா. இல்லைன்னா அந்த லேண்ட் பில்டிங் ஆர் போத் அப்படியே விற்கலாமா? எஸ் சார், இதான் 2 விஷயங்கள். அது இல்லைனா சார் நீ ரெண்டுக்கு நீ போய் உட்காரலாமா? இல்லைனா சார் அதை கம்பல்சரி அக்விசிஷன் ஆஃப் லேண்ட் அண்ட் பில்டிங் பண்ணிக்கலாமா? சார் தெளிவாவா சார்? ஒன்னு நான் சொல்லி தரேன் சார். 194I 194 என்ன? ANM கிளாஸஸ் ஒன்னு கேள்விப்பட்டிருக்கியா? ANM கிளாஸஸ் இப்போ ஓன் பில்டிங்கா ரெண்டட் பில்டிங்கா? ரெண்டல் பில்டிங். அப்ப நம்ம ரெண்டு பே பண்றோமா? நம்ம ரெண்டு பே பண்ணோம்னா அது லேண்ட்லார்டுக்கு, யாரு வாடகை கொடுத்துருக்காங்களோ அவங்களுக்கு இன்கமா? அவங்க அதை IFHB காட்டுவாங்களா? அப்ப ANM கிளாஸஸ் என்ன பே பண்ணும்போது, ரெண்டு பே பண்ணும்போது 194I என்ன பிடிக்கணும்? TDS பிடிக்கணும். ரைட்டா? எஸ் சார். 194 194 என்ன? 194 என்ன? சொல்லுங்க. ஐயே சார் நீ ஒரு சார்ட்டர்ட் அக்கௌண்டண்டா? எஸ் சார். சார்ட்டர்ட் அக்கௌண்டன்ட் ஆனதுக்கு அப்புறம் நிறைய காசு இருக்குமா? பிச்சை எடுப்பியா? நிறைய காசு இருக்கும். நிறைய காசு இருக்கணும். கரெக்ட் தானே இல்லையா? அப்போ உங்ககிட்ட நிறைய என்ன இருக்குன்னா காசு இருக்குன்னா, ஹலோ சார், நிறைய வீடு வாங்குவியா நிறைய வீடு விப்பையா? வாங்குவேன். வாங்கினாதான் கெத்து. வித்தா ஊரே உன்னை பார்த்து என்ன சொல்லணும்? ஐயே வீட விக்கிறான் பாரு பண்ணாட. ஹலோ சார், ஹலோ சார். அப்போ நீ 194 என்னது? ஐயே. அப்போ ரெண்ட் பே பண்ணா 194 ஐ. 194 என்ன? ஐ. கண்களை வாடகைக்கு விடாதே. ஹலோ சார். அதான் ஜீன்ஸ் படத்துல பிரசாந்த் அப்பவே சொன்னான், கண்ணோடு காண்பதெல்லாம் தலைவா கண்களுக்கு சொந்தமில்லை. கமான் சார். 194 ஐ. கேள்விப்பட்டிருக்கியா? எஸ் சார். 194 ஐ ரெண்டு. ஜீன்ஸ் தானே இல்லையா? பிரசாந்த் தானே இல்லையா? ஐஸ்வர்யா ராய் தானே இல்லையா? எஸ் சார். 194 அது மட்டும் எல்லாம். எஸ் சார். 80 ஜே. ஓகே ரைட். எல்லாம் இருந்துச்சு. கமான். சோ 194 ஐ ரெண்ட். 194 ஐ என்ன? 194 ஐயே. 194 அப்ப பேமெண்ட் ஆன் டிரான்ஸ்ஃபர் ஆஃப் சர்டன் இம்மூவபிள் ப்ராப்பர்ட்டி அதர் than அக்ரிகல்ச்சர் லேண்ட். ஏன்னா ரூரல் அக்ரிகல்ச்சர் லேண்ட் கேபிட்டல் அசெட்டே கிடையாது. கேபிட்டல் அசெட்டே கிடையாதுன்னா வித்தா கேபிட்டல் கெயினே வராது. அதுக்கு டிடிஎஸ் பிடிச்சி நான் என்ன பண்ணுவேன்? அதனால ரூரல் அக்ரிகல்ச்சர் லேண்ட் வித்தேனா டிடிஎஸ் பிடிக்க வேண்டிய அவசியம் இல்லை. ஆனா அதர் than ரூரல் அக்ரிகல்ச்சர் லேண்டுக்கு என்ன பிடிக்கணும்? டிடிஎஸ் பிடிக்கணும். நீ சொல்லு பார்க்கலாம். செல்லர் இருப்பான், பையர் இருப்பான். கரெக்டா? செல்லர் தான் செல் பண்றான், பையர் தான் பை பண்றான். யாரு கன்சிடரேஷன் பே பண்றா? பையர். அப்ப பையர் டிடிஎஸ் பிடிக்கணுமா இல்ல செல்லர் டிடிஎஸ் பிடிக்கணுமா? பையர் தான் டிடிஎஸ் பிடிக்க முடியும். யார் கன்சிடரேஷன் பே பண்றாங்களோ எல்லா கேஸ்லயும் அவங்களால தான் டிடிஎஸ் பிடிக்க முடியும். கரெக்டா? அதனால தான் எம்ப்ளாயர் டிடிஎஸ் பிடிச்சான். அதனால தான் பிஎஃப் அத்தாரிட்டி டிடிஎஸ் பிடிச்சான். அதனால தான் இன்சூரன்ஸ் கம்பெனி டிடிஎஸ் பிடிச்சான். அதனால தான் லாட்டரி கம்பெனி டிடிஎஸ் பிடிச்சான். அதனால தான் பிசினஸ் மேன் டிடிஎஸ் பிடிச்சான். யாரு ரெண்டு பே பண்றாங்களோ அவங்க தான் 194 ஐல டிடிஎஸ் பிடிக்கணும். யார் இம்மூவபிள் ப்ராப்பர்ட்டியை வாங்குறாங்களோ அவங்க தான் என்ன சார்? டிடிஎஸ் பிடிக்கணும். ரைட்டா? எவ்வளவு சார் லிமிட்? த்ரெஷோல்ட் லிமிட் 2,40,000 இன் ஃபினான்ஷியல் இயர். சொல்லுங்க. 2,40,000 இன் ஃபினான்ஸ். ஒரு வருஷம் 2,40,000 ரூபாய்க்கு மேல நீங்க ரெண்ட் பே பண்றதா இருந்தா என்ன பிடிங்க? டிடிஎஸ் பிடிங்க. அது கம்மியா பே பண்ணீங்கன்னா டிடிஎஸ் பிடிக்க வேண்டிய 194 ஐயே. மோர் தேன் எவ்வளவு லேக்? அப்பா நீங்க விக்கிற வீடு 50 லட்சம் ரூபாய்க்கு மேல இருக்கணும். அப்ப ஹை வேல்யூ டிரான்சாக்ஷன் இருக்கணும் இல்லையா? எவ்வளவு லேக்ஸ்க்கு மேல? consideration for transfer or stamp duty value whichever is higher. Either அதோட cash consideration or என்ன duty value whichever is. சார் கேஷா 45 லட்சம் தான் சார் வருது. ஆனா ஸ்டாம்ப் டியூட்டி வேல்யூ 55 லட்சம் இருக்கு சார். டிடிஎஸ் பிடிக்கணுமா வேண்டாமா? எஸ் சார் பிடிக்கணும். ஏன்னா as per section 50C if an assessee transfer in land building or both for a value less than the stamp duty value and stamp duty value exceeds 110% of the consideration, then stamp duty value should be deemed to be the full value of consideration for the purpose of computation of capital gain. அங்க வச்சிருக்கான் பொசிஷன். அதனால தான் ஸ்டாம்ப் டியூட்டி வேல்யூ whichever is higher தூக்குறான். புரியுதா? ஏன்னா வேணும்னே நம்ம ஆள் என்ன பண்ணுவான்னா 49,99,999 ரூபான்னு கொடுத்துருவான். எதுக்குன்னா எத்தனை லேக்ஸ் வராம இருக்கு? 50 லேக்ஸ் வராம இருக்கு. அப்ப என்ன பிடிக்க கூடாது? டிடிஎஸ் பிடிக்க மாட்டான்னு சொல்லிட்டு அவ அதான் சொன்னா, நீ எவ்வளவு பே பண்றேங்க நான் பார்க்க மாட்டேன், நான் ஸ்டாம்ப் டியூட்டி வேல்யூ தான் பார்ப்பேன். ஆர் வில் வித் மீ பேயர் ஆல்ரெடி டிஸ்கஸ் பண்ணியாச்சு. கரெக்டா இல்லையா? 194 I is a part of hijacker family. இங்க வா IA க்கு வா any person being transferred. நீ யாரா வேணா இரியா other than the person referred to in section 194 L. என்ன 194 L கீழ டிஸ்கஸ் பண்ண போறோமா? For paying commission for compulsory acquisition of immovable property other than in agriculture land, rural agriculture land. Right sir? Sir payee பிசாசு யாராதா இருக்கணும்? resident. Are you really with me? ரெசிடென்ட். இது என்ன ஃபேமிலி? ரெண்டு ஃபேமிலி. என்ன ஃபேமிலி? ரெண்டு ஃபேமிலி. என்ன ஃபேமிலி? ரெண்டுனாலே ரெசிடென்ட். ஆர் யூ ரியலி வித் மீ? எஸ் சார். சார் ரேட் ஆஃப் டிடிஎஸ் ஆஹா எவ்வளோ பர்சன்ட் சார் டிடிஎஸ் பிடிக்கணும்? இங்க பாரு பார்க்கலாம். ஃபார் பிளான்ட் அண்ட் மிஷினரி அண்ட் எக்யூப்மெண்ட் நீ வாடகை கூட்டது என்னவா இருந்தா? பிளான்ட் அண்ட் மிஷினரி அண்ட் எக்யூப்மெண்டா இருந்தா 2%. எத்தனை பர்சன்ட்? For land and building, land அப்பர்த்து வீட்டு there to 10%. Are you with me? அப்ப plant and machinery na 2%, land அப்பர்த்து வீடா இருந்தா 10%. ஹலோ, land and building நாலே ஆக்ட் ஃபுல்லா 10% தானே? கரெக்ட் தானே? கரெக்ட். ஆமா சார். இப்ப லேண்ட் அண்ட் பில்டிங் வித்தா கேபிட்டல் கெயின் வரும்போது 10%. லேண்ட் அண்ட் பில்டிங் வாங்கினா ஐஎஃப்ஐஸ் வந்தா 10%. கரெக்டா? அப்ப டிடிஎஸ் எவ்வளவு பர்சன்ட் தான்? 10% தான். Are you really with me? இதேது 194 IA 194 IA என்ன வேல்யூ ஆஃப் டிரான்சாக்ஷன் மட்டும் தான் வரும். ஹை வேல்யூ ஆஃப் டிரான்சாக்ஷன் மட்டும் தான் வரும். 1% ஆஃப் த கன்சிடரேஷன் ஃபார் ட்ரான்ஸ்ஃபர் ஆர் ஸ்டாம்ப் டியூட்டி வேல்யூ whichever is higher, either the cash consideration or the stamp duty value whichever is higher. எவ்வளவு பர்சன்ட்? 1%. சொல்லு எவ்வளவு பர்சன்ட்? 1%. சொல்லு பார்க்கலாம். எவ்வளவு பர்சன்ட்? 1%. எவ்வளவு பர்சன்ட்? 1%. ஹலோ சார். எஸ் சார். எவ்வளவு பர்சன்ட்? 1%. ஹலோ சார். எவ்வளவு பர்சன்ட்? 1%. ஹலோ சார். எப்ப சார் நான் டிடிஎஸ் பிடிக்கணும்? அட் த டைம் ஆஃப் கிரெடிட் ஆர் அட் த டைம் ஆஃப் பேமெண்ட் whichever is earlier. அப்ப இதுக்கு அகைன்ஸ்ட் ஒன்னு salary family மட்டும் தான் இருக்கு. மிச்சம் எல்லாமே அட் த டைம் ஆஃப் கிரெடிட் ஆர் அட் த டைம் ஆஃப் பேமெண்ட் whichever is என்னதான்? earlier தான். ஒத்துக்குற நீ? சார் நேச்சர் ஆஃப் சார் அவ்வளவுதான் சார், முடிஞ்சு போயிடுச்சு சார். ஃபர்ஸ்ட் ஃபேமிலி முடிஞ்சு போயிடுச்சு சார். நம்ம வரலாமா? 194 ஐ பேரு 2 ஐஏ ட்ரான்ஸ்ஃபர் ஆஃப் சர்டன் இம்மூவபிள் ப்ராப்பர்ட்டி அதர் than அக்ரிகல்ச்சர் லேண்ட். ஓகே. த்ரெஷோல்ட் லிமிட் 194 ஐ 2,40,000. 194 ஐஏ 50 lakhs சார். பேயர் இங்க யாரா இருக்கணும்? எனி பர்சன் அதர் than an individual whose என்ன சார் turnover in the immediately preceding previous year does not exceed 1 crores or 50 lakhs as the case may be. கரெக்டா? ஐஏ யாரா இருக்கணும்? எனி பர்சன். அவ்வளவு போதும் சார். அதுக்கு மேல எல்லாம் தேவையே இல்லை. பேய் யாரா இருக்கணும்? ரெசிடென்ட். ரெண்டுனா ரெசிடென்ட். 2 ஃபேமிலி ரெசிடென்ட். 2 ஃபேமிலி ரெசிடென்ட். 2 ஃபேமிலிலடா 2 ஃபேமிலி ரெசிடென்ட். ஐ டோன்ட் ரிலீவ் வித் மீ. ரேட் ஆஃப் டிடிஎஸ் சார் 194 ஐல பிளான்ட் அண்ட் மிஷனரினா 2%. லேண்ட் அண்ட் பில்டிங்னா 10%. ஐஏ 1%. டைம் ஆஃப் டிடக்ஷன் எப்ப டிடிஎஸ் பிடிக்கணும்? at the time of credit or at the time of payment whichever is. ரைட்டா சார்? உங்ககிட்ட நான் பலவாட்டி கிளாஸ்ல சொல்லியிருக்கேன். நான் எங்கிருந்து சார் வந்திருக்கேன்? கேரளா. இப்ப நான் எங்க சார் இருக்கேன்? தமிழ்நாடு. எனக்கு சென்னையில ஓன் ஹவுஸா இல்ல ரெண்டட் ஹவுஸா? ரெண்டட் ஹவுஸ். இன்னும் என்கிட்ட ஓன் ஹவுஸ்ல ரெண்டு கொடுக்கவே காசு இல்லை. பின்ன ஓன் ஹவுஸ் பத்தி திங்கே பண்ண முடியாது. ஹலோ சார். இப்ப நான் ரெண்டட் ஹவுஸ்ல மந்த்லி ரெண்டு பே பண்றேனா? இந்த பே பண்ற மந்த்லி ரெண்டு இருக்கு இல்லையா, இது நான் ஏதோ ஒரு ஓனருக்கு தானே பே பண்றேன். கவர்மெண்ட் என்ன சொல்றாங்கன்னா, நான் அந்த ரெண்டு பே பண்ணா எனக்கு எக்ஸ்பென்ஸா, அது அந்த ஓனருக்கு இன்கமா? அவர் நாளைக்கு அந்த இன்கம் டிக்ளேர் பண்ணாம இருக்க என்ன இருக்கு? அதான் பேமெண்ட் ஆஃப் ரெண்ட் பை சர்டன் இண்டிவிஜுவல் ஆர் HUF பை சர்டன். அப்ப சில பல இண்டிவிஜுவல்ஸ் ஆர் சில பல HUF என்ன பே பண்ணாங்கன்னா, ரெண்டு பே பண்ணாங்கன்னா அந்த இண்டிவிஜுவல் ஆர் HUF என்ன பிடிச்சாகணும்? TDS பிடிச்சா. வாட் இஸ் த threshold limit for deduction சார்? more than 50,000 for a month or part of the month. ஒரு மாசம் 50,000 ரூபாய்க்கு மேல ரெண்டு பே பண்ணீங்கன்னா, நீங்க யாராவது இங்க வாடகைக்கு இருக்கீங்களா? சார் நான் வாடகை தான் சார் இருக்கேன், எங்க சொந்தமா வீடுல சார். சார் வாடகை தான் சார் இருக்கேன். ஹலோ சார், எவ்வளவு சார் மந்த்லி ரெண்டு? டக்குன்னு சொல்லு. 30,000. அப்படின்னா TDS பிடிக்க வேண்டிய அவசியம் இல்லை. ஏன்னா ஒரு மாசம் 30,000 தான் வாடகை கொடுக்குறாங்க. ஹலோ சார், இப்போ நான் சார் மாசம் 22,000 ரூபாய் தான் சார் வாடகை கொடுக்குறேன். நான் TDS பிடிக்க வேண்டிய என்ன இல்லை சார், அவசியம் இல்லை சார். ஒரு மாசம் சார் எவ்வளோ ருபீஸ்க்கு மேலே? 50,000 ரூபாய். என்ன முறைக்கிற வாடா? ஒரு மாசம் 50,000 ரூபாய்க்கு மேல ஐதர் யாரு ஒரு யாரு, இண்டிவிஜுவல் ஆர் HUF என்ன கொடுத்தாங்கன்னா ரெண்டு பே பண்ணாங்கன்னா, சார் இண்டிவிஜுவல்னா இண்டிவிஜுவல் தானே, HUFல குர்த்தா ஒருத்தர் இருப்பார், அவர் யார்? ஒரு பாஸ், ஹெட் ஆஃப் த ஃபேமிலி. கரெக்டா இல்லையா? அதான் IB. I stands for individual, B stands for boss. சிவாஜி the boss, head of the family. ஹலோ சார், அதனால தான் IBன்னு பேர் வச்சிருக்காங்க. ஏன்னா I stands for individual, B stands for boss. Boss is the கர்த்தா. அதோட வித் மீ. அதனால தான் இந்த செக்ஷன் யாருக்கு மட்டும் தான் அப்ளிகபிள்னா, இண்டிவிஜுவல் ஆர் HUFக்கு மட்டும் தான் அப்ளிகபிள். ரைட் சார். பேயர் யாரா இருக்கணும் சார்? யாரு சார் பேயர்? இண்டிவிஜுவல் ஆர் HUF. பேயர் யாராதான் இருக்கணும்? தெளிவா புரிஞ்சுக்கோ, கன்ஃபியூஷன் ஆகக்கூடாது. அதர் தேன் இண்டிவிஜுவல் HUF. ஓகேவா? whose sales or gross receipts or turnover sir exceeds 1 crore in case of business or 50 lakhs in case of profession. இங்க வா, உன்னோட immediately preceding previous yearல business turnover 1 கோடியோ இல்ல profession turnover 50 lakhs என்ன ஆச்சுனா, exceed ஆச்சுனா நீ 194 ஐல விழுந்துருவ. திருப்பி இன்னொரு வாட்டி சொல்றேன். In case immediately preceding previous yearல உன்னோட turnover 1 கோடிக்கு மேல என்ன ஆச்சுனா, exceed ஆச்சுனா நீ எதுல விழுந்துருவ? 194 ஐல விழுந்துருவ. ஐல விழுந்தா IB அப்ளை ஆகாது. ஐல விழுந்தா IB அப்ளை ஆகாது. ஹலோ சார், அப்ப if section 194 I என்னாச்சுனா அப்ளை ஆச்சுனா, அட்ராக்ட் ஆச்சுனா 194 IB அட்ராக்ட் ஆகாது. கம்ஃபர்ட்டபிளா? அதான் அவன் சொல்றான், நீ இண்டிவிஜுவலா சேஃபா இருக்கணும். ஆனா எந்த மாதிரி இண்டிவிஜுவலா சேஃபா இருக்கணும்னா சோட்டாவாலாவா இருக்கணும், படாவாலாவா இருக்கக்கூடாது. படாவாலாவா இருந்தா நீ எந்த செக்ஷன்லயே விழுந்துட்ட, 194 ஐலயே விழுந்துட்ட. 194 ஐல விழுந்தேன்னா ஐபில விழ வேண்டிய பேயி யாராதான் இருக்கணும், ரெசிடென்டா தான். 2 ஃபேமிலி ரெசிடென்ட் ஃபேமிலி, 2 ஃபேமிலி ரெசிடென்ட் ஃபேமிலி, 2 ஃபேமிலி ரெசிடென்ட் ஃபேமிலி. உயிரோடு இருக்கியா? வாடா 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 வாடா, பச்சை நிறமே மஞ்சள் நிறமே. அமெண்ட்மெண்ட் வா சார். இதுவரைக்கும் எத்தனை பர்சன்ட் சொல்லிட்டான்? 5% சொல்லிட்டான். இனிமே எவ்வளவு பர்சன்ட்? 2%. ஹலோ சார், அப்ப யாரு ஆர் யாரு, இண்டிவிஜுவலா HF? இதுவரைக்கும் 5%, இனிமே 2%. இதுவரைக்கும் 5%, இனிமே 2%. Are you really with me? எப்ப சார் நான் TDS பிடிக்கணும்? சார் at the time of credit of rent. எப்ப ரெண்ட் பே பண்றியோ அப்ப TDS பிடி. For the last month of the previous year, 31st மார்ச்சுக்கு TDS பிடிச்சா போதும். நீ பிசினஸ் மேன் மாதிரி மாசம் மாசம் TDS பிடிக்க வேண்டிய அவசியம் இல்லை. அப்ப 31st மார்ச் எப்போ வருஷம் முடியுதோ அப்போ ஒட்டுக்கா ஒரு வாட்டி என்ன பிடிச்சா போதும்னா TDS பிடிச்சா போதும். I don't really with me. சார் அதுக்கு நான் 31st டிசம்பருக்கே வெக்கேட் பண்ணிட்டேனே சார் அப்படின்னா லாஸ்ட் மந்த் ஆஃப் டெனன்சி. என்ன மந்த் ஆஃப் டெனன்சி? லாஸ்ட் மந்த் ஆஃப் டெனன்சினா அதுக்கு 31st மார்ச்சுக்கு முன்னாடி என்ன பண்ணிட்டேனா வெக்கேட் பண்ணிட்டேனா. எப்போ வெக்கேட் பண்றியோ அப்ப TDS பிடிச்சிட்டு வெக்கேட் பண்ணு. I don't really with me. Sir, as the case may be, or to account of the payee at the time of payment. Sir, நான் 1st of April full 12 மாசம் ரெண்டு அட்வான்ஸா கொடுத்துட்டேன் சார் அப்படின்னா எப்ப அட்வான்ஸ் கொடுக்குறியோ அப்பவே என்ன பண்ணிருனா TDS பிடிச்சிரு. ஹலோ சார், whichever is earlier. மூணு விஷயங்கள் ராஜா. ஒன்னு வருஷ கடைசியில 31st மார்ச்சுக்கு, இல்ல எப்போ வெக்கேட் பண்றியோ அப்போ, இல்ல எப்போ அட்வான்ஸ் கொடுக்குறியோ அப்போ. ஆரோல் வித் மீ. இப்போவா 194 LA. 194 என்னது? LA, compulsory acquisition of land and building, section 45 subsection 5 கேள்விப்பட்டிருக்கியா? என் வீட்டுக்கு ஃப்ரண்ட்ல சார் சம்டைம்ஸ் என்ன இருக்கும்னா ஒரு பெரிய லேண்ட் இருந்துச்சு, ஞாபகம் இருக்கா? கவர்மெண்ட் அதை கம்பல்சரி அக்வயர் பண்ணாங்கல்ல, ஒரிஜினல் காம்பன்சேஷன் என்ஹான்ஸ் காம்பன்சேஷன் கொடுத்தாங்கல்ல, அப்ப காரை சுயின்னு போயிடுச்சு, ஞாபகம் இருக்கா? அந்த இடத்த கம்பல்சரி அக்வயர் பண்ணும்போது என்னோட விருப்பத்தோட அக்வயர் பண்ணாங்களா இல்ல புடுங்குனாங்களா? லவ் இஸ் ஆப்சென்ட். இல்லைனா என்ன ஆப்சென்ட்? ஏன்னா கம்பல்சரி அக்விசிஷன் ஆஃப் லேண்ட் அண்ட் பில்டிங் என்ன ஆப்சென்டா இருந்துச்சு? லவ் ஆப்சென்டா இருந்துச்சு அப்படின்னா கம்பல்சரி அக்விசிஷன் ஆஃப் லேண்ட் அண்ட் பில்டிங்கா? எஸ் சார். சார் அமௌண்ட் ஆர் அக்ரிகேட் ஆஃப் அமௌண்ட் exceed 2,50,000 in a financial year. இங்க வா சார். ஆப்ஷனல் டாக்ஸ் ரெஜிம்ல பேசிக் எக்ஸம்ஷன் லிமிட் எவ்வளோ? 2,50,000. அது வரைக்கும் நான் டாக்ஸே கட்ட வேண்டிய, அதுக்கு மேல போனா என்ன கட்டணும்? அப்ப 2,50,000 வரைக்கும் லவ் இருக்கு. 2,50,000 மேல போச்சுன்னா என்ன இல்லை? அதனால தான் சார் த்ரெஷ்ஹோல்ட் லிமிட் 2,50,000 வச்சிருக்கான். ஆர் யூ ஏபிள் டு அப்ரிஷியேட் சார்? அப்போ இஃப் த கம்பல்சரி அக்விசிஷன் காம்பன்சேஷன் இஸ் அப் டு 2.5 lakhs அப்படின்னா TDS பிடிக்க வேண்டிய எவ்வளவு ருபீஸ் எக்ஸீட் ஆச்சுன்னா 2,50,000 எக்ஸீட் ஆச்சுன்னா என்ன பிடிக்கணும்? யாரு சார் பேயர்? எனி பர்சன் ரெஸ்பான்சிபிள் ஃபார் பேயிங் எனி சம் இன் த நேச்சர் ஆஃப் காம்பன்சேஷன். யாரா வேணா இருக்கலாம் சார். ஜெனரலா கவர்மெண்டா இருப்பாங்க சார். கவர்மெண்ட் ஆர் லோக்கல் அத்தாரிட்டி தான் நமக்கு தருவாங்க, ரைட்டா? 194 LA சார் என்ன அந்த ரெசிபியன் யாராதான் இருக்கணும்? டேஷ் ஃபேமிலி டேஷ், 2 ஃபேமிலி ரெசிடென்ட், 2 ஃபேமிலி ரெசிடென்ட், கரெக்டா? 194 LA பர்சன்டேஜ் 10%. 194 LA சொல்லு சார். இங்க பாரு, எப்ப சார் TDS பிடிக்கணும்? அட் த டைம் ஆஃப் பேமெண்ட். அப்ப இங்க அட் த டைம் ஆஃப் பேமெண்ட் ஆர் அட் த டைம் ஆஃப் கிரெடிட் whichever is earlier வராது, கரெக்டா? அப்ப அட் த டைம் ஆஃப் பேமெண்ட் ஆர் அட் த டைம் ஆஃப் கிரெடிட். அப்ப அட் த டைம் ஆஃப் கிரெடிட் வராது. ஏன் சார் அட் த டைம் ஆஃப் கிரெடிட் வரல? பிகாஸ் சம்திங் இஸ் ஆப்சென்ட். லவ் இஸ் ஆப்சென்ட். ஸோ ஒன் திங் ஷுட் பி ஆப்சென்ட், கரெக்டா? ஸோ ஒன் திங் இஸ் ஓன்லி பிரசன்ட். ஸோ அட் த டைம் ஆஃப் பேமெண்ட் எவ்வளோ புடி? TDS 10% புடி, கரெக்டா? சூப்பர் கொஸ்டின் ஒன்று கொடுக்குறேன் பாரு. டெஸ்ட் யுவர் செல்ஃப்ல அழகா என்ஜாய் பண்ணு ராஜா. Mr. X sells a house property in Bangalore as well as a rural agriculture land for a consideration of 60 lakh and 15 lakh respectively to Mr. Y on 1/8/2024. Before amendment தானே? வாராஜா முதல்ல Mr. X வந்து ஹவுஸ் ப்ராப்பர்ட்டி வித்திருக்காங்களா? அது இல்லாம ரூரல் அக்ரிகல்ச்சர் லேண்ட் வித்திருக்காங்களா? ஹவுஸ் ப்ராப்பர்ட்டிக்கு 60 lakhs, ரூரல் அக்ரிகல்ச்சர் லேண்ட் 15 lakhs. ரூரல் அக்ரிகல்ச்சர் லேண்டுக்கு TDS பிடிக்க வேண்டிய. He purchased the house property and land in the year 2022 for 40 lakhs and 10 lakh. இதை 40 லட்சம் ரூபாய்க்கு வாங்கியிருக்காங்களா 10 லட்சம் ரூபாய்க்கு வாங்கியிருக்காங்களா, கரெக்டா? ஸ்டாம்ப் டியூட்டி வேல்யூ on the date of transfer, that is 1/8/2024 was எத்தனை lakhs? Stamp duty value 85 lakhs, கரெக்டா? And 20 lakhs for the house property and a rural agriculture land respectively. Rural agriculture land, put it on examine the tax implication in the hands of Mr. X and Mr. Y, and the TDS implication, if any, in the hands of Mr. Y, assuming both Mr. X and Mr. Y are dash Indian. அப்பா செம்ம கொஸ்டின். ஏன் செம்ம கொஸ்டின்னா சார் அவங்க என்ன கேட்குறாங்கன்னா டாக்ஸ் இம்ப்ளிகேஷன் கேட்குறாங்க. என்ன கேட்குறாங்க? டாக்ஸ் இம்ப்ளிகேஷனா யாரு விற்கிறாங்களோ அவங்களுக்கு கேபிட்டல் கெயின் வரும், கரெக்டா? யாரு வாங்குறாங்களோ அவங்களுக்கு ஐஎஃப்ஓஎஸ் வரும், கரெக்டா? இந்த ரூரல் அக்ரிகல்ச்சர் லேண்டுக்கு ஒரு மண்ணும் வராது, கரெக்டா? ஆனா யாரு வாங்குறாங்களோ அவங்களுக்கு ஐஎஃப்ஓஎஸ் மட்டும் இல்ல டிடிஎஸ் கான்சிக்வன்சஸ் வரும், கரெக்டா? எஸ் சார். பார் சார், கரெக்டா புரிஞ்சுக்கு சார். இந்த ஒரு கொஸ்டின் புரிஞ்சேன்னா நீ டிடி பாஸ் சார். ஏன்னா கேபிட்டல் கெயின் இருக்கு, ஐஎஃப்ஓஎஸ் இருக்கு, டிடிஎஸ் இருக்கு. எதுக்கு போடுறேன்னு இல்ல, தெளிவா தெரியணும், ஓகேவா? டாக்ஸ் இம்ப்ளிகேஷன் தி ஹேண்ட்ஸ் ஆஃப் எக்ஸ். யார் எக்ஸ்? செல்லரா பையரா? செல்லர். அவனுக்கு என்ன கெயின் தான் வரும்? ஸ்டாம்ப் டியூட்டி வேல்யூ எவ்வளவு லாக்? 85 லாக். படுபாவி எவ்வளவு லாக்ஸ் வித்திருக்கான்? 60 லாக்ஸ் வித்திருக்கான், கரெக்டா? Is the actual selling price less than stamp duty value? And stamp duty value exceeds 110% of consideration? Yes sir. That means provisions of 50C will be applicable. Opening a par as per 50C, stamp duty value of the house property would be deemed to be the full value of consideration arising on transfer of property since stamp duty value exceeds 110% of the consideration received. Comfortable? Therefore, how much lakh? 45 lakh, which is nothing but what is the stamp duty value? 85 lakhs. எவ்வளவு கொடுத்து வாங்கி இருக்காங்க? Being the purchase price would be taxable as என்ன capital gain? ஏன்னா last year தான் வாங்கி இருக்காங்க. Holding period is less than 24 months. ஞாபகம் இருக்கா? If you hold a land building or both for a period less than 24 months, such a asset is a short term capital asset. Since a rural agriculture land is not an asset, capital asset, the gain arising on sale of such land is not taxable in the hands of Mr. X. Comfortable? அப்படின்னா ஃபர்ஸ்ட் விக்கிற எதுக்கு? ஹவுஸ் ப்ராப்பர்ட்டிக்கு என்ன வரும்னா கேபிட்டல் கெயின் வரும். ஆனா ரூரல் அக்ரிகல்ச்சர் லேண்டுக்கு என்ன வராது? இப்ப டாக்ஸ் இம்ப்ளிகேஷன் இந்த ஹேண்ட்ஸ் ஆஃப் மிஸ்டர் ஒய். மிஸ்டர் ஒய் வாங்குறாளா விக்கிறாளா? வாங்குறாள். வாங்குறாளுக்கும் கேபிட்டல் கெயினுக்கும் என்னவே இல்லை, சம்பந்தமே இல்லை. வாங்குறாளுக்கும் ஐஎஃப்ஐஎஸ்க்கும் சம்பந்தம் இருக்கு. எஸ் சார், he can receive gift either way of cash or way of immovable property or by way of இது immovable property without consideration, inadequate consideration. Inadequate consideration. If the difference between the stamp duty value and the consideration paid exceeds a higher of 10% of consideration or statute limit of 50,000, then the difference will be taxable. Provision ஞாபகம் வருதா? In case of immovable property is received for what consideration? The difference between stamp duty value and the actual consideration would be taxed under 56 subsection 2 N10. If such difference exceeds how much? 50,000 and 10% of the consideration. உயிரோடு இருக்கியா? Therefore, in this case, 25 lakhs. ஏன்னா எவ்வளவு பா stamp duty value? 85 lakhs. Minus how much lakhs? 60 lakh would be taxable in the hands of Mr. Y under section 56 subsection 2 class 10. Correctா? ஆனா அவரு சார் ரூரல் அக்ரிகல்ச்சர் லேண்ட் வாங்கி இருக்காரா? அது என்ன செட்டே கிடையாது. அப்படின்னா அதுக்கு என்ன ஓஎஸ்ஏ அப்ளை ஆகாது. Since agriculture land is not a capital asset, provisions of 56 subsection 2 clause 10 are not attracted in respect of receipt of NL land for inadequate consideration. Since the definition of property under 56 subsection 2 clause 10 includes only capital asset specified therein. புரியுதா? அப்ப வித்தவனுக்கு கேபிட்டல் கெயின், வாங்கினவனுக்கு ஐஎஃப்ஓஎஸ். வித்தவனுக்கும் வாங்கினவனுக்கும் ரூரல் அக்ரிகல்ச்சர் லேண்ட்னால எந்த பிரச்சனையும் கிடையாது, கரெக்டா? சார் இப்ப டிடிஎஸ் இம்ப்ளிகேஷன். சார் விக்கிறவனுக்கு டிடிஎஸ்ஸா வாங்குறவனுக்கு டிடிஎஸ்ஸா? வாங்குறவனுக்கு தான் டிடிஎஸ் வரும். ஏன்னா வாங்குறவன் தானே கன்சிடரேஷன் பே பண்ணும். எஸ் சார். அப்ப வாங்குறவன் சார் 50 lakhsக்கு மேல ஸ்டாம்ப் டியூட்டி வேல்யூ 50 lakhsக்கு மேல இருக்கிற ப்ராப்பர்ட்டியை வாங்கி இருக்கானா? அப்படின்னா மை டியர் லவபிள் ஸ்டூடெண்ட்ஸ், அவன் கட்டாயமா 184 1% என்ன பிடிச்சதா ஆகணும். Since the sale consideration and stamp duty value of the house property both are not less than 50 lakhs, Y is required to deduct tax at source 194 IA. The tax to be deducted under 194 IA would be 85,000. எப்படி 85,000? Stamp duty ஓல 1%, கரெக்டா? ஏன்னா கொடுத்த காசு இல்ல ஸ்டாம்ப் டியூட்டி வேல்யூ, whichever is. TDS provisions under 194 IA are not attracted in respect of transfer of rural agricultural land. இந்த மூணு பேரோட ஆங்கிளும் தெளிவா புரிஞ்சுக்கிட்டேன்னு வெச்சுக்கோ. டண்டனக்கா டன், உனக்கு கட்டாயமா சக்சஸ்ஃபுல் தான். Are you ready with me? வித்தவனுக்கு கேபிட்டல் கெயின், வாங்குறவனுக்கு ஐஎஃப்ஓஎஸ், வாங்குறவன் டிடிஎஸ் பிடிக்கணும், ரைட்டா? Coming to question number 2, man. Shall we solve this question? ABC Limited took on sublease a building வாடகைக்கு எடுத்துருக்கான். அப்ப ரெண்டு பே பண்ணுவானா? From Mr. J, an individual, with effect from 1/9/2024 on a monthly rent of எவ்வளவு per month? ஒரு மாசம் 25,000 ரெண்ட். 25,000 இன்டு செப்டம்பர் தான் வாடகை எடுத்துருக்கான். அப்ப செப்டம்பர், அக்டோபர், நவம்பர், டிசம்பர், ஜானு, ஃபெப்ரு, மார்ச் எவ்வளவு மாசம்? 7 months. அப்ப 25,000 into 7 comes to 1,75,000. Comfortable? It also took on higher machinery. அதெல்லாம் என்ன எடுத்திருக்கான்? machinery from J with effect from 1/10/2024 on higher charges of எவ்வளோ rupees per month 15,000. அப்ப 15,000 into 110 னா 10 11 12 1 2 3 அரை மாசம். எத்தனை மாசம்? அரை மாசம். Come on. ABC Limited entered into two separate agreement with Mr. J. 90,000 yes sir, 90,000 sir. Sorry Chudidar sir. Come on sir, 90,000. Come on sir. ABC Limited entered into two separate agreement with Mr. J for sublease of building and hiring of machinery. J என்ன பண்ணிருக்கானா பில்டிங்க்கு ஒரு தனி அக்ரிமெண்ட் போட்டிருக்கான் அண்ட் சார் மெஷினரிக்கு ஒரு தனி அக்ரிமெண்ட் போட்டிருக்கான். இதுல என்ன மேட்டர்னா ரெண்டும் ஒரே ஆள் கிட்ட தான் எடுத்திருக்கான். புரியுதா இல்லையா? The rent of building and higher charges of machinery for the financial year were நம்ம கால்குலேட் பண்ணி அசிங்கப்பட்டுறோம் 1,75,000 and 90,000 respectively which were credited by ABC Limited. இது ரெண்டையும் யார் பே பண்ணிருக்காங்கன்னா நம்ம ஆள் பே பண்ணிருக்காங்க to the account of Mr. J in his books of accounts as on 31/3/2024. Examine the obligation of ABC Limited with regard to deduction of tax at source in respect of rent and higher charges. My dear lovable students, புரியுதா? நான் என்ன கேட்கறேன்னா 194 TDS பிடிப்பீங்களா? நீங்க பிளான்ட் அண்ட் மிஷினரி வாடகைக்கு எடுத்தீங்கன்னா 2%, பில்டிங்கை வாடகைக்கு எடுத்தீங்கன்னா 10% பிடிப்பீங்களா? எப்போ பிடிப்பீங்கன்னா த்ரெஷோல்ட் லிமிட் 2,40,000 எக்ஸீட் ஆனா தானே பிடிப்பீங்க. அந்த 2,40,000 பிளான்ட் அண்ட் மிஷினரிக்கு தனியாகவும் சார் பில்டிங்க்கு தனியாகவும் பார்ப்பீங்களா இல்ல பிளான்ட் அண்ட் மிஷினரியும் சார் பில்டிங்கும் சேர்த்து 2,40,000 பார்ப்பீங்களா? புரியுதா கான்செப்ட்? புரியுதா? இங்க பாருங்க, as per section படிங்க, என் கூட படிங்க. as per section NI dealing with the deduction of tax at source from payment of rent, the rate of TDS applicable is 2% for யாருக்கு and 10% for building lease rent. புரிஞ்சுச்சா? The scope of this section include with its habit rent for machinery, plant and equipment, right தானே? So tax is required to be deducted at source from payment of rent by whatever name call. நீ என்ன பேர்ல வேணா பே பண்ணு ராஜா. under any lease னா இருக்கட்டும், sublease னா இருக்கட்டும், tenancy னா இருக்கட்டும், any other agreement or agreement for the use of building and machinery irrespective of whether such assets are owned or not by the payee பிசாசு. புரியுதா? The limit of 2,40,000 for என்ன deduction at source will apply to the aggregate. அதே மாதிரி சொல்ல பார்க்கலாம். aggregate to all the asset. ஒத்துக்கிற நீ? அப்ப நீ வேணா தனித்தனி 2 அக்ரிமெண்ட் போட்டிருந்திருக்கலாம். 1 பிளான்ட் அண்ட் மிஷினரிக்கு, 2 பில்டிங்க்கு. அப்ரிஷியேட் பண்ற நீ. ஆனா இருந்தாலும் நாங்க டர்ன் ஓவர் பார்க்கறதுக்கு அக்ரிகேட் டர்ன் ஓவர் தான் பார்ப்போம். இது என்ன ஐடிடி? அது மாருதி கரெக்டா? என்ன பே பண்ற? கேட்கல. இங்க வா. ரெண்ட் பே பண்ற. என்ன பே பண்ற? இங்க வா. என்ன மட்டும் பாரு. ஆர் ஸ்டாண்ட்ஸ் ஃபார் ரெசிடென்ட்டுக்கு மட்டும்தான் பே பண்ணணும். எக்ஸ்க்ளூடிங் நான் ரெசிடென்ட்டுக்கு பே பண்ணால் இந்த செக்ஷன் அப்ளை ஆகாது. அப்படி பே பண்ணும்போது டோட்டல் தான் நான் எடுத்துப்பேன். அந்த ரெண்டோட ஃபுல் ஃபார்மே அப்படி தான் வச்சிருக்கான். எனக்கு எல்கேஜிலேயே அதான் சொல்லி கொடுத்தான். ஏன்னா செக்ஷன் எது வேணா நீ செக் பண்ணி பார்த்துக்கோ. 194I செக் பண்ணி பார்த்துக்கோ, இல்ல 194IA செக் பண்ணி பார்த்துக்கோ, இல்ல 194IB செக் பண்ணி பார்த்துக்கோ, இல்ல 194LA செக் பண்ணி பார்த்துக்கோ. நாலுமே யாருக்கு தான் பே பண்ணணும்னா ரெசிடென்ட்டுக்கு தான் பே பண்ணணும். எக்ஸ்க்ளூடிங் நான் ரெசிடென்ட். யாருக்கு பே பண்ணக்கூடாது? நான் ரெசிடென்ட்டுக்கு பே பண்ணக்கூடாது. அந்த பேமெண்ட் நான் எப்பவுமே டோட்டலாக தான் பார்ப்பேன், அக்ரிகேட்டாக தான் பார்ப்பேன், அக்ரிகேட்டானவராக தான் பார்ப்பேன். அதான் ஃபுல் ஃபார்ம் ஆஃப் ரெண்ட். RENT. 2 ஃபேமிலி ரெசிடென்ட் ஃபேமிலி, 2 ஃபேமிலி ரெசிடென்ட் ஃபேமிலி, 2 ஃபேமிலி ரெசிடென்ட் ஃபேமிலி. இந்தியன் எக்கானமி சார், மிக்சர் எக்கானமி. கமான். யார் சொன்னாது? விஜய். எஸ் சார், தளபதி. கமான் சார். இன்னைக்கு தைப்பூசம் இல்லை சார், அதான் நானும் சொன்னேன். இல்லை சார், கமான். இஃப் டூ எல்லாம் கரெக்டாக ரெஃபரன்ஸ் எடுங்க. இதே மாதிரி டாக்ஸ்லி லாலி ரெஃபரன்ஸ் எடுத்தீங்கன்னா எங்கேயோ போயிடுவீங்க. ரைட் சார், கமான். கேன் ஐ? So the limit of 2,40,000 for tax deduction at source will apply to the aggregate rent of all the asset even if 2 separate agreement are entered into. நீ இதில் தப்பிக்கலாம்னு நினைச்சு 2 அக்ரிமெண்ட்ல என்ன என்டர் பண்ணா கூட மாட்டிக்கிட்ட பங்கு. டோட்டல் தான் நாங்க எடுத்துப்போம். 1 for sublease of building and another for hiring of machinery. Rent and hire charges under the 2 agreement have to be aggregated for the purpose of application of the threshold limit of 2,40,000. புரியுதா? In this case, since the payment for rent and hire charges credited to account of Mr. J, the payee பிசாசு aggregating to 2,65,000. This is more than 2 lakh. Tax is deductible at source under 194I. Tax is deductible at 10% on 1,75,000. And the 1,75,000 ki 10% pudicha podum. And 2% on 90,000. Ana, sir, that trend, that rate, that trend, that rate, that trend, that rate. But for the purpose of NSR threshold limit, we will see the aggregate turnover. Right, sir? I'm moving into question number 3. Can I? Very good question, sir. Normal question only, sir. Question number 3 will complete, sir. Question number 4 will complete, sir. Question number 5 will complete, sir. Fantastic, sir. 2-3 minutes we can over, sir. Very, very small area only, sir. You will be able to appreciate. Mr. A, a chartered accountant. Hello, sir. Employee as CFO in Google India Limited. Correct? Draws a salary of 5 lakhs per month. ஒரு மாசம் 5 லட்சம் ரூபாய். ஒரு மாசம் 5 லட்சம் ரூபாய். 5 லட்சம் into 12 போட்டா 60 லட்சம் ரூபாய். எவ்வளவு பிரியாணி சாப்பிடலாம்ல? Come on. Yes, taken an independent house. கண்டிப்பா நீ எல்லாம் independent house தான் இருக்கணும். From Mr. B with effect from 1st June 2024. 1st June ல இருந்து என்ன எடுத்திருக்காருன்னா வாடகைக்கு எடுத்திருக்காரு. With this information determine the amount of TDS under 194 IB. I stands for individual, B stands for boss takarta. For financial year 24-25 under the following situation. Right, sir? If the amount of rent is 40,000 per month, பிச்சைக்கார பையன். That is rent is less than 50,000. 194 IB attracted. அதான் ஃபர்ஸ்ட் கேஸ். TDS under 194 IB nil. உயிரோட இருக்கியா? Amount of rent is 55,000 per month. ஒரு மாசம் 55,000 ரூபாய் பே பண்றியா? அப்படினா TDS அட்ராக்ட் ஆகுமா? எஸ் சார். எவ்வளவு % சொல்லிருக்காங்க? எது வரைக்கும்? செப்டம்பர் வரைக்கும் 5% செப்டம்பருக்கு அப்புறம் 2% ஏதோ சொன்னாங்க இல்லையா? எஸ் சார். அப்ப இங்க பாரு சார், the amount of rent exceed 50,000 per month. In this situation 5% of the TDS on 5,50,000. இதுல ஃபுல்லா போட்டுருக்காங்க. ஆனா செப்டம்பர் வரைக்கும் எத்தனை %? 5%. செப்டம்பருக்கு அப்புறம் 2%. ரைட் சார்? அப்படிதான் நீ ஆன்சர் படிக்கணும். சார், if the amount of rent is 55,000 per month, நம்ம ஆளு CEO எவ்வளவு கொடுத்திருக்காருன்னா 55,000 கொடுத்திருக்காரு. But B does not furnish the pan. அந்த அடுப்படியில் இருக்கிற pan இருக்கு இல்லையா, சாஸ் பேன் கேட்டு கொடுக்கவே இல்லையாமா. ஹலோ சார், அப்படி பேன் கேட்டு கொடுக்கலனா 5% TDS பிடிக்க மாட்டேன். உனக்கெல்லாம் வேற வேட்டக்காரன் தான் வேணும்டா. ஆர் யூ வித் மீ? TDS 20% பிடிச்சி சாவடிப்பேன் நான். எத்தனை பர்சன்ட்ல? 20% பிடிச்சி சாவடிப்பேன் நான். ஆர் யூ வித் மீ? எஸ் சார். ஹலோ சார். எஸ் சார். அப்ப இங்க மேட்டருக்கு வா சார். அடுத்தது, if the amount of rent is 55,000 per month, இங்க பாரு, அதுல ஒரு 1000 கண்டிஷன் வர. மாசம் 55,000 ரூபாய் ரெண்ட். ஆனா மிஸ்டர் ஏ vacate the property by 31st July. 31st ஜூலைக்கே பையன் ஓடி போயிட்டான். எப்ப வந்தார் அவரு? ஜூன்ல. மொத்தமாவே ஜூனும் ஜூலை 2 மாசம் தான் இருந்திருக்காரு. கரெக்டா இல்லையா? எஸ் சார். ஜூன் ஜூலை மாதத்தில் ரோஜா பூவின் மாசத்துல ஓடி போயிட்டாரு. வெறும் ஜூன் ஜூலை மட்டும் இருந்து ஓடி போயிட்டாரு. மிஸ்டர் பி does not furnish the pan. இது கடையில் அது வேற. அப்ப 2 மாசம் இருக்கா? அப்போ ஒரு மாசம் 55,000 ரூபாய் ரெண்டா? 55,000 ரூபாய் ரெண்டுனா 1,10,000 ரூபாயா? இதுக்கு 20% போட்டேனா 22. அப்ப மேக்ஸிமம் ரெண்டு TDS will be deducted will be 22,000. உயிரோடு இருக்கியா? அடுத்ததுக்கு வா. In case Mr. A is carrying on profession of chartered accountancy. ஓஹோ, அவர் CA-வா இருக்காரு. Instead of employment, அவர் வேலைக்கு போறதுக்கு பதிலா. And his gross receipts from the practice for the year ended 31st March 2025 எவ்வளோ லேக்? 60 lakh. அப்படின்னா ஒரு 194 ஐல கவர் ஆயிட்டாரா? 194 ஐல கவர் ஆனா 194 ஐபில கவர் ஆக மாட்டாரு. ரைட்டா? ஐ அப்ளை ஆனா ஐபி அப்ளை ஆகாது. உயிரோடு இருக்கியா? In case if the payer is LLP, this section is applicable only to individual or HUF. கரெக்டா? LLP-க்கெல்லாம் இந்த செக்ஷனுக்கும் என்னவே இல்லை, சம்பந்தமே இல்லை. கரெக்டா? If the amount of rent is 55,000 per month, Mr. A vacate the property by 31st of December. Okay. Mr. A wish to deduct tax for all the month by December. All the month by December. Na 55,000 into தலைவர் செப்டம்பர் வரைக்கும் 5%, செப்டம்பருக்கு அப்புறம் 2%. அப்படின்னா எப்போ வந்தாரு வீடுக்கு? ஜூன்ல. அப்ப ஜூன் ஜூலை ஆகஸ்ட் செப்டம்பர் 4 மாசமா? அப்ப 55,000 into 4 into 5%. உயிரோடு இருக்கியா? ஜூனுக்கு அப்புறம் அது ஓகே 11,000. ஓகே. அதுக்கப்புறம் அடுத்த மாசம், அடுத்த எத்தனை மாசம்? 55,000 into இப்ப செப்டம்பர் முடிஞ்சு, அக்டோபர் நவம்பர் டிசம்பர் 3 months. 3 into 2% கம் டு 2 சேர்த்தா 3,300. 11,000 plus 3,300 comes to 14,000. இது தாராளமா ஒரு வெக்கேட் பண்ணும்போது TDS பிடிச்சிட்டு ரிமைன் இருக்கிற ரெண்டை மட்டும் கொடுத்துட்டு போனா போதும். ரைட்டா? அதில் முன்னாடி அதில் ஆன்சர் கொடுத்துருக்கிற 5% இருக்கும், அதை இக்னோர் பண்ணிக்கோ. அமெண்ட்மெண்ட் வந்தனால வித் அமெண்ட்மெண்ட் ரீட் பண்ணிக்கோ. ரைட் சார்? அது ஒரு கான்செப்ட் கொஸ்டின் தான், ICAI கொஸ்டின் கிடையாது. அதனால நான் அடுத்த கொஸ்டினுக்கு தாராளமாக நான் மூவ் பண்ணுறேன். ரைட்டா? மிஸ்டர் ஏ ஓன்ஸ் எ பில்டிங், ஒரு பில்டிங் வச்சிருக்காரு, situated என்ன டெல்லி, which is given on monthly rent of 75,000 to Mr. B with effect from 1/6/2024. Rent is paid by Mr. B on the first day of the every month. Goodbye hour. Discuss whether the TDS provisions are applicable for the financial year 24-25 in the following case. ஒரு கேஸா கொடுத்திருக்கார். Number 1, Mr. B is carrying on business having annual turnover of business amounting to 2.5 crores in the preceding financial year. Hello sir. Our building is used by him for his residential purpose. Hello sir. அப்ப யாரு சார் வாடகைக்கு விட்டுருக்காரு? மிஸ்டர் ஏ. யாரு சார் வாடகைக்கு எடுத்திருக்காரு? மிஸ்டர் பி. உயிரோட இருக்கியா? மிஸ்டர் பி பிசினஸ் பண்றாரு, அவரோட டர்ன் ஓவர் இமீடியட்லி ப்ரீசிடிங் ப்ரீவியஸ் இயர்ல 1 கோடி தாண்டிருச்சு, கரெக்டா? அப்படின்னா அவருக்கு 194I அப்ளை ஆகுமா? 194I பிசினஸ் பர்பஸ்க்கு அப்ளை ஆகும், நான் பிசினஸ் பர்பஸ்க்கு அப்ளை ஆகும். ஆர் யூ ரிலீவ் வித் மீ? எஸ் சார். நீ பிசினஸ்க்கு ரெண்டு பே பண்ணாலும் சரி, நான் பிசினஸ்க்கு ரெண்டு பே பண்ணாலும் சரி, 194I ல டிடிஎஸ் பிடிச்சுனா அதனால தான் 194I அட்ராக்ட் ஆனா 194I அட்ராக்ட் ஆகுதுன்னு சொல்றோம். அப்ரிஷியேட் பண்றியா? அப்ப இங்க வா, ஆன்சருக்கு வா. எல்லாரும் வாயை திறந்து படி, சும்மா இருந்தா ஒன்னும் புரியாது, வாயை திறந்து படி. In this case, since a turnover of B exceeds 1 crore, he is liable to deduct tax at source under 194I. Hence, the amount of tax to be deducted is 75,000. Can I proceed? ரெண்டாவது, sir, Mr. B is carrying on business having annual turnover of business amounting to 0.5 crore. 0.5 crore na 50 lakhs in the preceding financial year. That means hijacker will be applicable. அப்படின்னா நீ 194I ல TDS பிடிக்க வேண்டிய, நீ 194I ல மாட்டலைன்னா IA ல மாட்டுவியா? ஒரு மாசம் நீ வந்து 50,000 ரூபாய் ரெண்டு பே பண்றியா? அதனால நீ வந்து 194I ல விழாத்ததுனால 194IB ல செப்டம்பர் வரைக்கும் 5%, செப்டம்பருக்கு அப்புறம் in this case since the turnover of B does not exceed how much crore, he is not liable to deduct tax at source under 194I. However, Mr. B is required to deduct tax at source under 194. Tax is deductible at the time of payment தானே, or credit of the rent of the last month during the financial year 24-25, correct? Amount of tax deductible on 1st March. ஏன்னா 31st மார்ச்சுக்கு ரெண்டு பே பண்ற பழக்கம் கிடையாது, லாஸ்ட் எல்லா மாசத்தோட ஸ்டார்டிங்ல ரெண்டு பே பண்றீங்க, கரெக்டா? 75,000 into 10 மாசம் தானே வாடகை எடுத்துருங்க, into 5%. அது ஏன் 5%? 194IB ல ரேட் என்ன? 194IB போ, IB போ. $39 2024 வரைக்கும் தானே 5%. அதுக்கப்புறம் எவ்வளவு பர்சன்டேஜ்? So you have to change the answer accordingly. Are you really with me? Yes sir. I'm moving to the next question, man. XYZ Limited pays 50,000 rupees per month as a rent to Mr. Kishore for a building in one of its branches is situated. Discuss whether TDS provisions under 194I are attracted. Hello sir. ஏ ஒரு மாசம் 50,000 ரூபாய் ரெண்டு பே பண்ணேன்னா 50,000 12 போட்டா 6 லட்சம். Is 6 லட்சம் more than 2,40,000? அதனால கண்டிப்பா நீ 194I ல TDS பிடிச்சதா? Therefore, amount of tax to be deducted is 6 lakh into 10% come to 60,000. Comfortable? Sir, Mr. X a salaried individual pay rent of 55,000 per month. ஒரு மாசம் எவ்வளவு பே பண்றாங்க? To Mr. Y from June ல இருந்து பே பண்றாங்க. அப்படினா ஜூன், ஜூலை, ஆகஸ்ட், செப்டம்பர், அக்டோபர், நவம்பர், டிசம்பர், ஜானு, ஃபெப்ரு, மார்ச். எவ்வளவு மாசம்? அப்ப 55,000 into 10 comes to டோட்டலா 5,50,000 பே பண்ணிருக்காங்க. Is he required to deduct tax at source? கட்டாயமா. If so, when he is required to deduct tax? Only at the end of the லாஸ்ட் மந்த், அதாவது 31st மார்ச்சுக்கு டிடிஎஸ் பிடிச்சா போதும் இல்லையா? ஆல்சோ கம்ப்யூட் தி அமௌண்ட் ஆஃப் டாக்ஸ் டு பி டிடக்டட். நம்ம கம்ப்யூட் பண்ணிக்கலாம். would your answer change if Mr. X vacate the premise on 31st December? ஆமா, ஆன்சர் மாறும். ஏன்னா வெக்கேட் பண்ணேன்னா எந்த மாசம் வெக்கேட் பண்றனோ அந்த மாசம் தான் டிடிஎஸ் பிடிக்கணும். ஆல்சோ வாட் would be your answer if Y does not provide his PAN இல்லைன்னா 20% டிடிஎஸ் பிடிச்சிடும், ரைட்டா? Varaja, sir, since Mr. X pays rent exceeding how much? 50,000 per month in financial year 24-25 is liable to deduct tax at source at a percentage till 30th September. அழகா எழுதிருக்கான். இது amended answer. Are you really with me? செப்டம்பர் வரைக்கும் எவ்வளவு percentage? And thereafter 2%. The tax is to be deducted in the last month of the previous year 24-25, that is March, or in the last month of the tenancy if the property is vacated during the year. Since the property is not vacated during the year, has to be deducted from rent payable from March. அவன் vacate பண்ணாதனால எப்போ? மார்ச்ல என்ன பிடிச்சா போதும். If X vacated the premise in December, then tax of 7,700. ஏன்னா 55,000 into 7 months into எவ்வளவு percent? 2%. ஏன்னா அவ எப்போ வெக்கேட் பண்ணானா? டிசம்பர்ல வெக்கேட் பண்ணான்னு வச்சுக்குவேன். ஹலோ சார், சார் 2% தானே ஆஃப்டர் அமெண்ட்மெண்ட் டிடிஎஸ்? எஸ் சார். ஹாஸ் டு பி டிடக்டட் ஃப்ரம் ரெண்ட் பேயபிள் ஃபார் டிசம்பர். இன் கேஸ் Y does not provide PAN-னா அது எவ்வளவு பர்சன்டா மாறிடும்? 20%. அதாவது இங்க பாருங்க, நான் மொத்தமாவே 31st மார்ச்சுக்கு தான் டிடிஎஸ் பிடிக்கிறேன்னா செப்டம்பர் வரைக்கும் இருக்கிறதுக்கு 5%, செப்டம்பருக்கு அப்புறம் இருக்கிறதுக்கு 2%. நான் எப்ப டிடிஎஸ் பிடிக்கிறேன்னா டிசம்பர்ல நான் டிடிஎஸ் பிடிக்கிறேன்னா, ஹலோ சார், மொத்தமாவே எத்தனை பர்சன்ட் போட்டிருக்கான்? 2%. அப்போவும் அங்கே வந்து செப்டம்பர் வரைக்கும் என்ன வரணும் 5%. அதுக்கப்புறம் என்ன சார் அக்டோபர் நவம்பர் டிசம்பர் கரெக்ட் அந்த 3 மாசத்துக்கு 2%. இவன் மொத்தமாகவே எவ்வளோ பர்சன்ட் போட்டிருக்கான். இன் கேஸ் நம்பர் 1 திஸ் வுட் அமௌண்ட் டு 1,10,000. ஏன்னா என்னவே கொடுக்கலனா பேனே கொடுக்கலனா 20%. பட் த சேம் ஹாஸ் டு பி ரெஸ்ட்ரிக்டட் டு இங்க இது வந்து ஒரு அடிஷனல் பாயிண்ட் நான் சொல்லலை முன்னாடி. அதாவது பேனே கொடுக்கலனா 20% டிடிஎஸ் பிடிக்கணும். பட் த அமௌண்ட் ஆஃப் ரெண்ட் வில் பி ரெஸ்ட்ரிக்டட் டு லாஸ்ட் மந்த் ரெண்ட். லாஸ்ட் மந்த் ஒரு மாதம் வாடகை எவ்வளோ? இப்போ நீ பார்த்தேன்னா 55,000 ஒரு மாதம் வாடகை கொடுக்கணும்னா 10 மாசம்னா டோட்டலாக 5,50,000. அதோட 20% போட்டேன்னா 1,10,000 டிடிஎஸ் பிடிக்க வேண்டிய மாதிரி இருக்கா? இவ்வளோ டிடிஎஸ் பிடிக்க வேண்டாம். மேக்ஸிமம் இட் வில் பி ரெஸ்ட்ரிக்டட் டு எத்தனை மாதம் ரெண்டு? லாஸ்ட் மந்த் ரெண்ட். இன் கேஸ் நம்பர் 2 above this would amount to 77,000. என்ன 77,000னா அவன் தான் பாதியில் போயிட்டான், டிசம்பர்லேயே போயிட்டானே. அவன் 10 மாதம் இருக்குல்ல, 7 மாதம் தானே இருந்திருக்கான் இல்லையா? பட் த சேம் ஹாஸ் டு பி ரெஸ்ட்ரிக்டட் டு 55,000 பீயிங் த ரெண்ட் ஃபார் த மந்த் ஆஃப் டிசம்பர். அப்படி யாராவது ஓடி போகிறதா இருந்தால் லாஸ்ட் மந்த் என்னவோ அந்த லாஸ்ட் மந்த்துக்கான என்ன மட்டும் பிடிச்சா போதும்னா டிடிஎஸ் மட்டும் பிடிச்சா போதும். ரைட் சார். இன் திஸ் ஸ்லாட் வாட் எவர் செக்ஷன்ஸ் we have completed is section 192. What is section 192? TDS on salary. What is 192A? Accumulated balance in provident fund account. Right sir. அப்போ 192 TDS on salary, 192 accumulated balance in provident fund account. What is 194D? Insurance commission. What is 194G? Lottery commission. What is 194H? Brokerage or commission. What is 194I? What is 194IA? Payment on transfer of immovable property other than agriculture land. What is 194IB? Payment of rent by certain individual HF. What is 194LA? Compulsory acquisition of land and building. Right sir. In the coming slot, we will be completing about the TDS on interest or dividend. That is 193, 194, 194A and 194K. And 194C and 194M. Hello sir. And we'll be talking about the casual income and 194B Bhagya, 194BA and 194BB. Hello sir. I'm getting an idea on the TDS part from your heart. Anybody's there? Where is a grand clap? Sir, very, very, very happy morning to all. So we are doing the chapter TDS, TCS and advanced tax, my dear lovable students. In that we have completed section 192, section 192A. Section 192 is the TDS on salary. 192A is accumulated balance in provident fund account. Then we are having 194, sir, D, which is what commission? Insurance commission. 194G, lottery commission. 194H, brokerage or commission. Coming to the next family, 194I, rent. 194IA, transfer of certain immovable property other than agriculture land. 194IB, payment of rent by certain individual or HUF. And 194LA, compulsory acquisition of land and building. I'm moving into the next one, man. TDS on interest or dividend. The next family is TDS on interest or dividend, right? Section 193, section 194, section 194A and section 194K. These are the discussion. What is section 193? Sir, interest on securities. Interest on 194 is dividend. 194 is dividend. So tell me what is section 193? Interest on securities. You நீயே சொல்லு பார்க்கலாம். We are having CA foundation, CA inter and CA final, right? If you pass all the 3 level, it is a security in your life. That's why 193 interest on securities. Sir, if you see the alphabet, A stands for agriculture and art related services, B stands for bridge, C stands for cap, D stands for diplomatic mission கிடையாது, D stands for dividend. ஏன்னா 4வது alphabet D, dividend. அதனால தான் 194 dividend. Are you with me? அங்க அதுக்கு தகுந்த மாதிரி பேசிக்க வேண்டியதுதான். So section 193 is what? Interest on securities. And 194 is what? Dividend. And section 194A, sir, interest other than. Interest என்ன? ஜென்ரலா எல்லாருமே அதர் தேன் ஓ வச்சு தான் ஆரம்பிப்பாங்க. நான் ஏ வச்சு ஆரம்பிப்பேன். அதர் தேன். Are you really with me? Interest other than interest on securities. Right sir. Sir, income in units other than in respect of in nature of capital gain. உனக்கு units, for example, mutual fundல இருந்து dividend வருது. Units of mutual fund, units of UTI, அங்கிருந்தெல்லாம் உனக்கு என்ன வருதுன்னா dividend வருது, income வருது. அப்படின்னா 194Kல TDS பிடிப்பாங்க. சார், வாட்டர் எதுல? லிட்டர்ல தான் அளக்குவாங்க சார். சார், ஃபார் எக்ஸாம்பிள் தேங்காய் கிலோகிராம்ல அளப்பாங்க. கரெக்டா சார்? எஸ் சார், கிலோகிராம் அளப்பாங்க. நெக்ஸ்ட், இது மாங்காவா? மாங்காய் ஆல்சோ கிலோகிராம் ஒன்லி மேன். லிட்டர், கிலோகிராம், வேற ஏதாவது மெஷர்மெண்ட்? மீட்டர். ஓகே, ஹைட்டை மீட்டர்ல அளக்குவாங்க. கரெக்டா சார்? இது எல்லாமே யூனிட் சார். லிட்டர் இஸ் a யூனிட், கிலோகிராம் இஸ் a யூனிட் அண்ட் மீட்டர் இஸ் a யூனிட். ஸோ கே ஸ்டாண்ட்ஸ் ஃபார் கிலோகிராம், தட் இஸ் a யூனிட். கரெக்டா? அப்போ உனக்கு யூனிட்ல இருந்து என்ன வருதுன்னா இன்கம் வருதுன்னா 194 கேல என்ன பிடிக்கணும்? டிடிஎஸ் பிடிக்கணும். 4 செக்ஷன். ஒன்னு 193, 194, 194A, 194K. வாட் இஸ் 193? இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். வாட் இஸ் 194? டிவிடெண்ட். வாட் இஸ் 194A? இன்ட்ரெஸ்ட் அதர் than இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். வாட் இஸ் 194K? இன்கம் இன் ரெஸ்பெக்ட் ஆஃப் யூனிட்ஸ். ரைட்டா? அப்ப என்ன நடக்குதுன்னு ஒரு செகண்ட் நீ புரிஞ்சுக்கிட்டேன்னா அவ்வளவுதான், டிடிஎஸ் ஓவர், திஸ் ஃபேமிலி ஓவர். இங்க பாரு சார், 4 ரிட்டர்ன் செக்ஷன்ஸ், 4 செக்ஷன். நம்பர் 1 193, 194, 194A, 194K. நீ எங்க இன்வெஸ்ட் பண்றேனா டிபென்ச்சர்ல இன்வெஸ்ட் பண்ற. டிபென்ச்சர்ல இன்வெஸ்ட் பண்ணேனா உனக்கு இன்ட்ரெஸ்ட் வருமா? அதான் இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். நீ சொல்ற சார் டிபென்ச்சர்ல ரொம்ப ரிஸ்க் சார், நான் ஈக்விட்டி ஷேர்ஸ்லயும் பிரெஃபரன்ஸ் ஷேர்ஸ்லயும் இன்வெஸ்ட் பண்றேன் சார் அப்படின்னா 194 என்ன? டிவிடெண்ட். சார் நான் டிபென்ச்சர்லயும் இன்வெஸ்ட் பண்ணல, ஈக்விட்டி ஷேர்ஸ் அண்ட் பிரெஃபரன்ஸ் ஷேர்ஸ்லயும் நான் இன்வெஸ்ட் பண்ணல, நான் 194A நான் என்ன பண்ண போறேன்னா சார் லோன்ல இன்வெஸ்ட் பண்ண போறேன் சார். லோன்ல இன்வெஸ்ட் பண்ணாலும் எனக்கு இன்ட்ரெஸ்ட் வருமா? அதான் இன்ட்ரெஸ்ட் அதர் than இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். வந்திருக்கிறது இன்ட்ரெஸ்ட் தான், ஆனா செக்யூரிட்டிஸ் இன்ட்ரெஸ்ட் வரல, லோன் கொடுத்து இன்ட்ரெஸ்ட் வந்திருக்கு. சார் நான் யூனிட்ஸ்ல இன்வெஸ்ட் பண்றேன் சார், மியூச்சுவல் ஃபண்டோட யூனிட்ஸ், ஈக்விட்டி ஓரியன்டட் ஃபண்டோட யூனிட்ஸ், அப்ப எனக்கு வர்றதுதான் 194K. தட் மீன்ஸ் இந்த 4மே யாருக்கு வரும்னா இன்வெஸ்டாருக்கு வரும். இன்வெஸ்டாருக்கு வர ரிட்டர்ன் தான் இந்த செக்ஷன். ரிட்டர்ன் எதெல்லாம் ரிட்டர்ன் செக்ஷன்? 193, 194, 194A, 194K. What is 193? Interest on debentures, interest on securities. What is 194? Dividend. What is 194A? Interest other than interest on securities. What is 194K? Income in respect of units. Are you all really with me? சார் அவங்க என்ன சொல்றாங்கன்னா இந்த செக்ஷன் எல்லாம் உங்களுக்கு என்ன வருதுன்னா ரிட்டர்ன் வருதுன்னா சார் யார் அதை பே பண்றாங்களோ, யாரு சார் டிபென்ச்சருக்கு இன்ட்ரெஸ்ட் பே பண்ணுவா? கம்பெனி. கம்பெனி எத்தனை பர்சன்ட் டிடிஎஸ்? சார் யாரு டிவிடெண்ட் பே பண்றாங்களோ, யாரு சார் சார் டிவிடெண்ட் பே பண்ணுவா? கம்பெனி. எத்தனை பர்சன்ட் டிடிஎஸ் புடி? 10%. சார் இன்ட்ரெஸ்ட் அதர் than இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டி, யாரு சார் இன்ட்ரெஸ்ட் அதர் than இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டி பே பண்ணுவா? கம்பெனி. எத்தனை பர்சன்ட் டிடிஎஸ் புடி? 10% டிடிஎஸ் படி. சார் யூனிட்ஸ் மியூச்சுவல் ஃபண்ட் மாதிரி இருக்கிறவங்க சார் பே பண்ணுவாங்க. எவ்வளவு பர்சன்ட்? 10%. அப்போ 193 இருந்தாலும் 10%, 194 இருந்தாலும் 10%, 194A இருந்தாலும் 10%, 194K இருந்தாலும் 10%. இப்படி அழகா எல்லா செக்ஷன் இன்கம் டாக்ஸ் ஆக்ட்ல வச்சிருந்தா ஹானரபிள் ஃபைனான்ஸ் மினிஸ்டர் நாங்க எவ்வளவு நிம்மதியா இருந்திருப்போம். வேண்டுகோள். ஹலோ சார். அப்ப 193 இருந்தாலும் சரி, 194 இருந்தாலும் சரி, 194A இருந்தாலும் சரி, 194K இருந்தாலும் சரி, இது என்ன செக்ஷன்? இது எல்லாமே இன்வெஸ்டாருக்கு வர்ற ரிட்டர்ன். ரிட்டர்ன். கரெக்டா? இப்ப நீ எங்கேயாவது போற, ஊருக்கு எங்கேயாவது போற, என்னால இப்படிதான் சொல்ல முடியும், மைக் இங்க தான் வைக்க முடியும். ஓகேவா? ஊருக்கு நீ எங்கேயாவது போறேன்னா ரிட்டர்ன் ஆகுவே இல்லையா? ரிட்டர்ன் ஆகாம டாடா காட்டிட்டு போ. காட்டு டாடா காட்டு, டாடா காட்டு, 10% டாடா காட்டு. அதான் சொல்றான், ரிட்டர்னுக்கு எல்லாத்துக்குமே 10% சொல்றான். ரிட்டர்ன் ஆகும்போது நீ டாடா காட்டிட்டு தான் போவேன். எத்தனை பர்சன்ட் காட்டுற? 10%. அப்ப 193 10%, 194 10%, 194A 10% and 194K 10%. Can I enter into the section sir? என்ன சார் சொல்றாங்க சார்? 193ல என்ன பே பண்ணணும்? இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். 194ல டிவிடெண்ட் இன்க்ளூடிங் டிவிடெண்ட் ஆன் பிரெஃபரன்ஸ் ஷேர்ஸ், அது ஈக்விட்டி டிவிடெண்டா இருந்தாலும் சரி, and dividend includes dividend under 222A to 222F. இந்த F is an amendment, already we discussed. கரெக்டா? அங்க பைபேக் நடக்கும்போது டொமஸ்டிக் கம்பெனி பைபேக் பண்ணாங்கன்னா சார் இனிமே முன்னாடி 115Qல டொமஸ்டிக் கம்பெனில டாக்ஸ் ஆயிருந்துச்சு, இனிமே ஷேர் ஹோல்டர் கையில IFOSல அக்யூமுலேட்டட் ப்ராஃபிட்டா டாக்ஸ் ஆகுமா? அது எல்லாத்துக்குமே செக்ஷன் 194 வரும். சார் வாட் இஸ் த த்ரெஷோல்ட் லிமிட் சார்? அப்பா இங்க பாரு, more than 10,000 in a financial year in case of interest on 8% savings bond. அது அந்த டிபென்ச்சர் இல்ல பாண்ட் வந்து 8% சேவிங்ஸ் பாண்டா இருந்தா கட் ஆஃப் எவ்வளவு ரூபீஸ்? 10,000 ரூபாய்க்கு மேல இன்ட்ரெஸ்ட் பே பண்ணா டிடிஎஸ் புடி. 7.75% சேவிங்ஸ் டாக்ஸபிள் பாண்ட் with effect from 1/10/2024. floating rate savings bond 2020 taxable. ஹலோ சார், இந்த டேட்டுக்கு அப்புறம் floating rate savings bond என்ன பண்ணிட்டானாமா? taxable பண்ணிட்டானாமா. more than 5,000 in a financial year in case of interest on debenture issued by a company in which public are substantially interested. இங்க பாரு, bondனா 10,000, bondனா, debentureனா 5,000, debentureனா 5,000 சார் நோ threshold specified in any other case. பாண்டும் கிடையாது டிபெஞ்சரும் கிடையாதுன்னா நோ லிமிட். அப்ப எத்தனை threshold லிமிட் இருக்கு? 3. ஏன்னா 193னா பின்ன 3 threshold லிமிட் வரும், பின்ன 2 வரும். அதனால தான் பாண்ட்னா 10,000 ரூபாய்க்கு மேல சார் உனக்கு பாண்ட்ல இருந்து இன்ட்ரெஸ்ட் வருதுன்னா 10,000. இதே டிபெஞ்சர்ல இருந்து உனக்கு இன்ட்ரெஸ்ட் வருதுன்னா 5,000. பாண்டும் டிபெஞ்சர் இல்லாம வேற இருந்தாலும் உனக்கு இன்ட்ரெஸ்ட் வருதுன்னா nil. Are you able with me? 194ல என்ன சொல்றான்னா amount or aggregate of payment how much rupees? 5,000. 5,000 ரூபாய்க்கு மேல உனக்கு டிவிடெண்ட் வர்றதா இருந்தா 5,000 ரூபாய்க்கு மேல டிவிடெண்ட் வர்றதா இருந்தா என்ன பிடிக்கணும்? டிடிஎஸ் பிடிக்கணும். ஓகேவா சார்? நோ threshold in any other case. எப்போ தெரியுமா? இந்த 5,000 rupees threshold லிமிட் உனக்கு எப்போ அப்ளை ஆகும்னா மை டியர் லவபிள் ஸ்டூடெண்ட்ஸ் அதர் தேன் கேஷ்ல பே பண்ணா மட்டும்தான் அப்ளை ஆகும். நீ பே பண்றதே எதுலயா இருந்தா கேஷ்லயா இருந்தா நீ 1000 ரூபாய் பே பண்ணா கூட டிடிஎஸ் பிடிச்சி தான் கொடுக்கணும். ஆர் யூ ரிலேட் வித் மீ? பேயர் சார் இதெல்லாம் ஒன்றும் இல்லை சார். பேயர் ரொம்ப சிம்பிள் சார். 193ல பேயர் யாரா இருக்குன்னா எனி பர்சன் யாரா வேணா இருக்கலாம் சார். 194ல பேயர் யாரா இருக்குன்னா பிரின்சிபல் ஆஃபீஸர் ஆஃப் வாட் கம்பெனி? டொமஸ்டிக் கம்பெனி. பேயி யாரா இருக்கணும்? ரெசிடென்டா இருக்கணும். ஏன்னா அவன் தானே ரிட்டர்ன் ஆக போறான் இந்தியாவுக்கு. அதே மாதிரி தான் இங்கேயும் பாரு, பேயி ரெசிடென்டா இருக்கணும். அவன் தான் இந்தியா விட்டு வெளியே போய் இந்தியாவுக்கு வெளியே போறான். அவன் டாடா காட்டிட்டு போவான். 10 பேர்ல டாடா காட்டினானா அதனால தான் 10% டிடிஎஸ் பிடிக்க சொல்றான். ஆர் யூ ரிலேட் வித் மீ? Next one, sir. What is the time of deduction? Simple, sir. At the time of payment or at the time of credit, whichever is. ஆனா 194ல மட்டும் at the time of payment. 194ல என்னது? At the time of payment. Why, sir? At the time of payment. ஏன் சார் பேமெண்ட் டைம்ல டிடிஎஸ் பிடிக்கணும்? ஏன்னா ஃபைனான்சியல் இயர் முடிஞ்சதுக்கு அப்புறம் ஏஜிஎம்ல தான் டிவிடெண்ட் கொடுக்கறதே டிக்ளேர் பண்ணுவான். அப்ப 31st மார்ச்சுக்கே டிடிஎஸ் பிடிச்சி தொலைக்கணும்னா அவன் என்ன பண்ணுவான்? அதனால எப்போ டிவிடெண்ட் பே பண்றானோ அப்பதான் அவன் என்ன பண்ணணும்னா செக்ஷன் 123, 124 ஆஃப் த கம்பெனிஸ் ஆக்ட் எல்லாம் நீ டிவிடெண்ட் டிக்ளேர் பண்ணணும்னு மேண்டேட்டரி கூட கிடையாது. தேவைப்பட்டா டிக்ளேர் பண்ணுவேன், இல்லைனா ரீடைன் பண்ணிட்டு போயிட்டே இருப்பேன் நான். கரெக்டா? அப்போ பே பண்ணும்போது என்ன பிடிச்சா போதும். That's it, simple. அப்போ என்ன சார் இது நான் கேரி பண்ணும்? செக்ஷன் 193 என்ன சார்? இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். 194 என்னது? டிவிடெண்ட். எல்லா ரிட்டர்ன் செக்ஷனுக்குமே 10% தான் டிடிஎஸ். அப்ரிஷியேட் பண்ற. threshold லிமிட் 193ல either 10,000க்கு மேல இல்ல 5,000 மேல இல்ல நாட் அப்ளிகபிள். கரெக்டா? 194ல 5,000 ரூபீஸ்க்கு மேல. ரைட்டா? That's it, man. சார் பேயர் யாரா வேணா இருக்கலாம். 194ல டொமஸ்டிக் கம்பெனியா இருக்கணும். பேய் ரெசிடென்டா இருக்கணும். இது 10%. ரைட்டா? 193ல at the time of என்ன சார்? கிரெடிட் or at the time of payment, whichever is. 194ல எப்போ டிடிஎஸ் பிடிக்கணும்னா பே பண்ணும்போது டிடிஎஸ் பிடிக்கணும். கமிங் டு த நெக்ஸ்ட் 2 more sections, சார். 194A இன்ட்ரெஸ்ட் அதர் தேன் இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். நீ கம்பெனிக்கு லோன் கொடுத்துருக்க, கம்பெனி உனக்கு இன்ட்ரெஸ்ட் பே பண்றாங்க. அதான் இன்ட்ரெஸ்ட் அதர் தேன் இன்ட்ரெஸ்ட் ஆன் செக்யூரிட்டிஸ். ஐ டோன்ட் ரிலேட் வித் மீ. Coming to 194K, man, income on units other than in nature of what gain? Capital gain. Income on units other than in nature of what gain? Capital gain. Right up. Yes, sir. Threshold limit for deduction. Sir, எவ்வளோ சார் threshold limit? எங்க சார் கரெக்டா புரிஞ்சுக்கோ சார். Amount or aggregate of payment exceed 40,000. 40,000 ரூபாய்க்கு மேல நீ என்ன பே பண்ணா? இன்ட்ரெஸ்ட் பே பண்றேனா சார்? யாரு பே பண்றா தெரியுமா? பேங்கிங் கம்பெனி ஆர் கோஆபரேட்டிவ் சொசைட்டி ஆர் போஸ்ட் ஆஃபீஸ். அது வித் மீ. அப்போ பேங்க்ல நீ வந்து எஃப்டி போட்டிருக்க, உனக்கு அதுக்கு இன்ட்ரெஸ்ட் வருது. இல்ல கோஆபரேட்டிவ் சொசைட்டில நீ வந்து எஃப்டி போட்டிருக்க, அதுல உனக்கு இன்ட்ரெஸ்ட் வருது. இல்ல போஸ்ட் ஆஃபீஸ்ல நீ என்ன போட்டிருக்க? எஃப்டி போட்டிருக்க, உனக்கு அதுல என்ன வருதுன்னா இன்ட்ரெஸ்ட் வருதுன்னா பேங்க் உனக்கு 40,000 ரூபாய்க்கு மேல என்ன தரதா இருந்தா இன்ட்ரெஸ்ட் தரதா இருந்தா பேங்க் இஸ் லயபிள் டு டிடக்ட் இட். எஸ், கரெக்டா? ஆனா பேயி ரெசிடென்ட் சீனியர் சிட்டிசனா இருந்தா, ரெசிடென்ட் யாரா இருந்தா 50,000 ரூபாய்க்கு மேல போனா என்ன பிடிச்சா போதும்? டிடிஎஸ் பிடிச்சா போதும். ஏன்னா 80 டிடிபி 50,000 ரூபாய் வரை கிளைம் பண்ணலாம். அதனால தான் லாஜிக் அந்த மாதிரி. ஆர் யூ ரிலேட் வித் மீ? அதனால சீனியர் சிட்டிசன்னா 50,000 ரூபீஸ், அதர் தேன் சீனியர் சிட்டிசன்னா 40,000 ரூபீஸ். ரைட்டா? இப்போ நீ ஏஎன்எம் கிளாஸஸ்க்கு ஃபியூச்சர்ல லோன் தருவியா? எஸ் சார். ஏஎன்எம் கிளாஸஸ் கம்பெனியா சார்? ஏஎன்எம் கிளாஸஸ் பேங்கிங் கம்பெனியா? நோ சார். ஏஎன்எம் கிளாஸஸ் கோஆபரேட்டிவ் சொசைட்டியா? ஏஎன்எம் கிளாஸஸ் போஸ்ட் ஆஃபீஸா? அதனால மை டியர் லவபிள் ஸ்டூடெண்ட்ஸ் சார் மிச்சம் எல்லாருக்குமே 5,000 ரூபீஸ். மிச்சம் எல்லாருக்குமே. அப்போ ஒரு பேங்கிங் கம்பெனியோ கோஆபரேட்டிவ் சொசைட்டியோ போஸ்ட் ஆஃபீஸோ இன்ட்ரெஸ்ட் பே பண்றாங்கன்னா நார்மல் பர்சனா சூப்பர் சீனியர் சிட்டிசனா பாரு. நார்மல் பர்சனா இருந்தா, சூப்பர் சிட்டிசனா இருந்தா, சீனியர் சிட்டிசனா இருந்தா 50,000. வேற யாரா இன்ட்ரெஸ்ட் பே பண்ணாலும் 5,000. தட்ஸ் இட், கேம் ஓவர். 194K லிமிட் 5,000. தட் மீன்ஸ் ஜெனரலா இங்க பாரு ரிட்டர்னாலே 5,000 லிமிட், ரேட்னா 10%. அதோட வித் மீ எல்லாத்துக்குமே சார். 194A ஆல்ரெடி யாரு பேயர் யாருன்னு படிச்சிட்டோம். ஹைஜாக்கர் கரெக்டா இல்லையா? எனி பர்சன் அதர் than individual HUF whose turnover in the immediately preceding previous year does not exceed 1 crore in case of business or 50 lakhs in case of profession. Right? சார் இங்க 194k எனி பர்சன் ரெஸ்பான்சிபிள் ஃபார் பேயிங், எனி பர்சன். இதெல்லாம் நீங்க ஹைலைட் பண்ண வேண்டிய என்னவே இல்லை. நீங்க என்ன தெரிஞ்சுக்கணும்னா என்ன இன்கம், எத்தனை பர்சன்ட் டாக்ஸ், வாட் இஸ் த த்ரெஷோல்ட் லிமிட், தட்ஸ் இட். பேயி யாரா இருக்கணும், ரெசிடென்டா இருக்கணும். ஏய், இன்ட்ரெஸ்ட் ரிட்டர்ன் செக்ஷன்னாலே எல்லாமே என்னவா தான் இருக்கணும், ரெசிடென்டா தான் இருக்கணும். வாட் இஸ் தட் ரேட்? 10% at the time of credit or at the time of payment, whichever is earlier. At the time of credit or at the time of payment, whichever is. Can we try one question from the ICAI study material? Varaja, examine the TDS implication under 194A in the cases mentioned here under. On 1/10/2024, Mr. Harish, aged 45 years, made a 6 months FD of 10 lakh at 9% per annum with ABC Cooperative Bank. அப்படின்னா பேங்க் தானே பே பண்ண போகுது. அப்போ 1/10/2024 னா 10, 11, 12, 1, 2, 3 6 மாசம் FD போட்டிருக்காரா? அப்படின்னா 10 lakh into 9% into 6/12 எவ்வளோ இன்ட்ரெஸ்ட் வருதுன்னு டக்குன்னு சொல்லு. டக்குன்னு 45,000. Is it more than 40,000? 194A ல பேங்க் TDS புடிச்சுதான் ஆகணும். தம்பியோட ஏஜ் சீனியர் சிட்டிசன் கிடையாது, நார்மல் பர்சன் தானே. Fixed deposit matures on 31/3. ஆன்சர் படி எல்லாரும் வாயை திறந்தபடி. ABC Cooperative Bank has to deduct tax at source at the rate of எவ்வளோ percent? On the interest of rupees 45,000 under section 194A. Tax deductible at source under 194A from such interest is therefore 4,000. That's it. ஏன்னா 45,000க்கு ரிட்டர்ன் நாலே 10%, 45,000 10%, 4,500. ஏதாவது பிரச்சனை இருக்கா? On 1/6/2024, 16ல கணேஷ் aged 35 years made a 9 months FD. 3 FD போட்டிருக்கார் தலைவர். Of rupees எவ்வளோ lakhs each? 9 lakhsக்கு டோட்டலா FD போட்டிருக்கார். Carrying interest at the rate of with a Dwarka branch, Janakpuri branch and Rohini branch of XYZ Limited, a bank which has adopted CBS. CBS na என்ன? Core banking solution. Core banking solution na இப்போ for example SBI லே பல branch இருக்குல்ல, நுங்கம்பாக்கம் branch, கோடம்பாக்கம் branch, ஆதம்பாக்கம் branch எல்லாம் ஒரே SBI கீழ தான் வருது. அப்படினா நீ என்ன பண்ணணும்னா சார் பேங்க் வைஸ் பார்க்கணுமே தவிர பிரான்ச் வைஸ் பார்க்க கூடாது. அது TDS வராம இருக்கறதால தலைவன் தெரு தெருவா போய் FD போட்டுருக்கான். புரியுதா? எல்லாத்தையும் ஆட் பண்ணிக்கோ. எவ்வளோ லேக்? 9 lakh இன்டு எவ்வளோ பர்சன்ட்? 9% இன்டு எத்தனை மாசத்துக்கு FD? எவ்வளோ மந்த்ஸ் FD? 9 months. அப்ப இன்டு 9/12 எல்லாமே சேர்த்து சார் ஐயோ இன்டு 9/12 F28 2K மெச்சூர் ஆகுதாமா. அப்ப எப்போ போட்டிருக்காரு? 16க்கு. அப்ப 6, 7, 8, 9, 10, 11, 12, 1, 2 9 months தான். 9 months ஆல்ரெடி கனெக்ட் பண்ணி போட்டிருக்காங்க. ரைட். அப்போ 9 lakhs into 9% 9/12 comes to 60,750. இது 40,000 exceed ஆகுதா? உட்ரா 194A TDS. அப்ப XYZ bank has to deduct tax at source at 10% under 194A. Since aggregate interest on FD with the 3 branch of a bank is 60,750, which exceeds the threshold limit of 40,000. Since XYZ bank has adopted CBS, the aggregate interest credited or paid by all branch has to be considered. Since the aggregate interest of 60,750 exceeds the what exemption limit, tax has to be deducted at 10% under section 194A. Comfortable? I am moving to the next one, man. On 1/10/2024, Mr. Rajesh, aged how many years? 40 years. Started a 6 months recurring deposit. Recurring na FD. On 2 lakhs per month. At how much percent per annum? With PQR Bank. The recurring deposit mature on 31/3. அப்ப நான் interest calculate பண்ணும். Max எல்லாம் தெரியும் எனக்கு. என்ன தெரியுமா? First one. Sir, எப்போ FD போட்டிருக்காரு? எந்த மந்த்ல? அக்டோபர். அப்போ அக்டோபர், நவம்பர், இங்க வா, டிசம்பர், கரெக்டா? தென் வாட்? ஜானு, ஃபெப்பு, மார்ச்சு, கரெக்டா? 2 lakh. இப்போ அக்டோபர்ல FD போட்டார்னா இங்க வா, அக்டோபர், நவம்பர், டிசம்பர், ஜனவரி, பிப்ரவரி, மார்ச். எத்தனை மாசம்? 6 மாசமா? அப்படின்னா இன்டூ 8% இன்டூ 6/12. புரியுதா உனக்கு? இங்க இன்டூ 8% இன்டூ 5/12 into 8% into 4/12 into 8% into 3/12 இங்க into 8% into 2/12 into 8% into 1/12. ஒண்ணுல்டா ராஜா, அக்டோபர்ல FD போட்டேனா அடுத்த 6 மாசம் தானே FD வேலிடா இருக்கும். இதே இது நவம்பர்ல போட்டேனா 5 மாசம் தானே FD வேலிடா இருக்கும். அப்ப கால்குலேட்டர்ல 2 lakh into 8% into 6/12 comes to எவ்வளோ? 8,000. சூப்பர். 2 lakh into 8% into 5/12 6,666. Okay, next one. Sir, 2 lakh into 8% into 4/12 5333. இப்போ வேணா டிஃபரன்ஸ் பார்த்து எடுத்துக்கலாம். ஏன்னா ஒரே டிஃபரன்ஸா மைனஸ் ஆயிட்டே வரும். 2 lakh into 8% into 3/12 4,000. Sir, 2 lakh into 8% 2 by 12. 2667. Sir, 2 lakh into 8% 1 by 12. 1333. எல்லாத்தையும் M plus போடு. 8000 plus 6666 plus 5333 plus 4000 plus 2667 plus 1333. 27999 plus 1 ரூபாய் round of difference. 28,000. சொல்லு, இந்த 28,000 rupees 40,000 மேலையா 40,000 கீழையா? 40,000 கீழே. அதனால பேங்க் TDS பிடிக்க வேண்டிய. That's it, game over. Because it does not exceed the threshold limit. That's it, the family of the return family comes to an end. Done. Hello, sir. Section 193, 194, 194A and 194K. What is 193? Interest on securities. What is 194? Dividend. What is 194A? Interest other than interest on securities. What is 194K? Income in respect of units. Right? What is section 192? Salaries. TDS on salary. What is 192A? Accumulated balance in the provident fund account. What is 194D? Insurance commission. What is 194G? Lottery commission. What is 194H? Brokerage or commission. What is 194I? Rent. What is 194IA? Transfer of immobile property other than agriculture land. What is 194IB? Payment of rent by certain individual or HUF. What is 194LA? Compulsory acquisition of land and building. Now, to that family, we have added 193. What is 193? Interest on securities. What is 194? Dividend. What is 194A? Interest other than interest on securities. What is 194K? Income in respect of units. In the coming slot, my dear lovable students, we'll be talking about 194C and 194M and the further. Are you all really with me? Revise very clearly, my dear lovable students. Sir, in the coming slot, we'll be complete.